Hello everyone, how are you all? I hope you all are doing well. And first of all the very best to all of you for your examinations which you are going to write in the May 22. Myself, CA Rohit Grover. I'm your faculty for CA Final Advanced Auditing and Professional Ethics, which is paper number 3. And first of all, before starting anything, I would like you to get introduced with this subject called Advanced Auditing and Professional Ethics. How the CA Final paper number 3 examination have been asked by the ICAI in the last 4 to 5 attempts. What is the change ICAI has brought into this particular subject? What this rapid revision batch is all about, what is the duration of this rapid revision batch, and how we are going to cover it, and what we are going to cover it, and when you have, how much time you have to devote on this particular batch, right? So first of all, I welcome you all to this rapid revision batch for May 22 examinations as well as for the November 22 examination students as well. See, there is a great change has come in the, especially in the subject like advanced auditing and professional ethics. The first we are going to talk about that, and after that I'll tell you like what this batch is all about and what is the coverage we are going to have. When we talk about this subject, advanced auditing and professional ethics, it is the nightmare subject for so many students at the CA final level. Not at the CA final level. If we'll talk about this subject at CA intermediate level only, from that time onwards only, this subject has become a taboo in the eyes of CA final and CA intermediate examinations. And why not? Because ICAI also have critically and very very exhaustively have done so much of R&D on this subject, and they have also changed this subject level to some another extent only. Now no more direct asking questions, no more direct short notes or direct standard based questions. Everything is implementation based and application based examination. So if I look at the last 6 to 7 CA final examination attempts, not only CA final, at the CA intermediate level also, if you'll see, there are so many changes which have been brought by the ICAI. I think almost out of your 100 marks of examination, almost 50 to 60 marks of the examination is coming completely application based. What we used to do when we qualified, and I qualified in the year 2013, what we used to do and what you people have to do, there's a lot of change has come brought by the ICAI in this examination called Advanced Auditing and Professional Ethics. See, ICAI thinks that after getting qualified, you are the product of ICAI. People are going to take you for granted. Intangibly, it is written on your forehead that you are a chartered accountant, and you are going to face the practical level corporate situations. Are you getting the point or not? So after CA final, no one is going to teach you anything. At that point of time, it is very important for you to understand the fact that gone were the days when we used to give the examinations in a very simplified way and in a very calm and composed way. ICAI has now raised the bars, raised the standards of this examination called Advanced Auditing and Professional Ethics. They have started asking you the application based questions, like they are no longer asking you what do you mean by SA 230 audit documentation and all. They are asking you the application based questions. Suppose if you are a chartered accountant in practice and you are maintaining the documentation in your office, and some another practicing CA comes to your office who is the tax auditor for the same company for which you have done the statutory audit, would you do you have a right to say no to that professional who is asking your audit documentation or audit working papers or not? Like that, application based questions have been asked. So it has to be understood in a very simplified way that ICAI is no longer asking you or no longer wants any normal CA in the CA fraternity or in the outside world. We all are representing ICAI, and we know that ICAI is the world's second largest accounting body when it comes to the international level. So in the race of becoming the biggest accounting body, ICAI is now changing the standards of its examinations and asking you the questions on a very like application based manner. So if you look at the last 6 to 7 attempts, you will find that there's a drastic change has come in the examination level of ICAI, especially in the paper number 3. Now, gone were the days when we used to have a direct based questions and all those things. You have to understand the fact that now the approach towards this subject called advanced auditing and professional ethics, the manner in which you should prepare the ABC analysis of this subject to get the maximum number of marks, there's a lot of strategy required. So during this rapid revision batch of 35 to 40 hours, as you can see it in front of you, I'll be teaching you the subject content, and I'll also be teaching you that from which angle you have to understand this particular topic. As you all know that in the CA final advanced auditing and professional ethics, we are filled up with so many topics. And if I have to, particularly talk about some topics like company audit is there, professional ethics, as we all know that so many changes have come in the company audit. Our audit reporting has changed little bit, and section number 143 subsection 3 may also changes have come. So many penalties have changed. Now when we talk about the professional ethics, which is almost going to come in your examination for 16 marks, it has also been changed. Some overview of the code of ethics of 2020 has been asked in your examination and has been included in your portion as well. There's no doubt that we still have to do the old professional ethics only, that is Code of Ethics 2009, but along with that a little bit of introduction over in the coming years. You will find that in a phased manner they are going to replace Code of Ethics 2009 with the Code of Ethics 2020. So many changes in professional ethics have also come. Council guidelines have been changed. So many drastic amendments have come relating to networking and all. And I'll be throwing the light on each and every topic which I'm talking about right now. And I'll be also guiding you, and I'll be also mentoring you in how to get the maximum number of marks in this subject called advanced auditing and professional ethics. So we'll be talking about the strategy also. We'll be talking about the examination pattern also. And I'll be also telling you at the end how this 40 hours of rapid revision batch is going to help you out in the completing the whole subject. So almost I can say that 80 to 90% of your portion will get covered in this particular rapid revision batch. Not only 80 to 90%, first of all, though, I would say that 100% portion will be covered. But yes, in totality, if you'll see that you can cover this advanced auditing and professional examination in 80 to 90% of this, you can get it covered in the 35 to 40 hours, right? So as we have discussed, we are also going to understand in which way your presentation should be and how you have to write your examinations in the span of 3 hours, right? So first of all, let me take you to the tour of the syllabus which we have. So I'm going to start your preparation in the rapid revision batch with the very first chapter called company audit, right? The first topic which we are going to start with is with company audit. Along with that, maintenance of books of accounts topic that we are going to do. Along with that, I will also would like to finish your dividend chapter, right? So these three topics like company audit, maintenance of books of accounts, and dividend chapter. So if we'll see, we will cover section number 138 to section number 148 here. We will cover section number 128 to 137 here, and we will cover 123 to section number 127 here. So these are the three chapters which are obviously which was there in your CA intermediate law as well. The last three chapters which we used to call it as management and administration, but obviously the level at which we have done at CA intermediate level and the level which we are going to do these topics at the CM final level are going to be exhaustively. As you all know that this is going to be a rapid revision batch, so definitely I expect that when you're listening to these classes, you already are familiar and you already have done this particular subject once on your own, right? So this is just a revision batch. So I'm not expecting you to learn anything from this. I'm expecting you to revise along with me so that I can make you ready ki how 35 to 40 hours are going to be enough to understand the subject like advanced auditing and professional ethics. After that, after this, I'll be taking care of your topic called professional ethics. What is the next topic we are going to target? The next topic which we are going to target is going to be professional ethics. So in the professional ethics, I'll be giving you the overview of the professional ethics 2020. Along with that, we will also be doing some basic principles governing an audit and ethical requirements of ICAI, which are newly being added in your professional ethics. And along with that, all the 34 clauses which we have divided into Schedule 1 and Schedule 2. Put together, when we talk about these two topics only, the coverage of marks which is going to come in your examination is going to be 20 to 25 marks. So I can guarantee you that by doing company audit, by doing maintenance of books of accounts, dividend chapter and professional ethics only, your 20 to 25 marks are going to be covered. Once these two topics will be over, then we'll reach to the third topic called audit reporting. In the audit report chapter, we are going to cover CARO 2020. As you all know that CARO 2016 has been replaced by CARO 2020. So CARO 2020 will do, plus the 700 series of standards on auditing we are going to wind up. So you all know that you have 35 standards on auditing, right? Followed with the series of 200, 300 and 400, 500, 600 and 700. So 700 series will be wiped out in this chapter, in this particular topic called audit report, along with CARO 2020. CARO, I'm not going to take it in the company audit because it is going to be a separate topic itself only. After that, we are going to reach to your next topic called audit committee and corporate governance. Audit committee and corporate governance. As you all know that this chapter is also a very important and a very huge chapter in itself. This chapter you can't even ignore in this CA final examination. It is going to fetch you a lot of marks. In the audit committee and corporate governance, what we are going to deal with, we are going to deal with the LODR regulations. We are also going to deal with so many regulations relating to listed entities. Obviously, we already have done the audit committee as per the Companies Act section number 177. But here we are going to understand the audit committee with corporate governance as per the LODR regulations. And one very important thing you have to understand that all the lectures are going to be completely in English, because what I believe that in the examination, before examination, when you hear the subject and the content in the English, you would like to retain it, and that is how you have to present that in the examination. So I'm completely against those classes which are going to be conducted in the in Hindi and all. So all the classes are going to be in the English. After this audit committee and corporate governance, we will do the topics like bank audit plus NBFC audit plus insurance company audit. We will do these three topics together because little bit of similarity is there in that. We will do RBI form, RBI norms and all. In the bank audit, as you are already familiar about the bank audit being in your CA intermediate level also, but that was only 40% of what you have in CA final. CA final may will understand SLR, CRR, concurrent audit, how to do the audit of contingent liabilities and all, credit card operations, your bill discounted, bill purchase, all those topics we are going to do. Then NBFC audit also we are going to do. So many changes have come in the NBFC audit. Along with that, insurance company audit will do. Then along with this, after this, we will do the PSU audit. We will do PSU audit plus internal audit. Section number 138, I will teach you here. Internal audit will do, plus management and operational audit chapter, which we have, that we are going to do. So PSU audit, internal audit, M&O audit we are going to do. After that, we will understand peer review and quality review. These two chapters has to be done together. As you all know that in the peer review, so many amendments have come in the last attempt only. So many amendments have come. So peer review may category list of category A company entities, list B entities, and level 3 entities. All those changes have come. Along with that, we will also do the quality review. Now, after that, we are going to start with the topic called investigations. We will do the topic investigations, due diligence, and forensic audit. This is also going to be a very interesting topic and very important topic as well. In the investigation part, we'll do statutory investigations as well as non-statutory investigations. Along with that, we'll understand due diligence, like when we go for a merger or amalgamation or corporate restructuring, the targeting company, the acquiring company would like to get a due diligence on the targeting company. And obviously forensic audit, where we'll do the independent and systematic audit with the use of our investigative mentality. So these are the various topics which we are going to do. After that, we will focus on some standards on auditing. In the standards on auditing, we'll wipe out 500 series, we'll wipe out 600 series, we'll wipe out 300 series, right? 700 series, I already told you, we'll wipe out, and 500 series, 600 series, and 300 series, plus along with that 200 series and 400 series. So we'll try to wipe out all the standards. As you all know that we have 11 standards here. We have 3 standards in the 600 series. We have 4 standards in the 300 series. We have 9 standards in the SA 200 series, 8 or 9 standards, and 400 series may we have the 2 standards, and already 6 standards we are going to cover in 700 series. So 2, 3, 4, 5, 6, 7, all the standards on auditing are going to be covered, right? Then we will also have some residual topics. What are the other residual topics which we are left with? If I'm not wrong, we have residual topics like PSU over internal audit over, and then we'll have in queue like audit under fiscal loss. Audit under fiscal loss. May you all know that GST audit has been abolished. So we will not be having any indirect tax audit. Little bit of provisions are there that I will throw some light on, but the major focus will be on form number 3CA, 3CD, like audit under fiscal loss, that we are going to do. Then 11th May, we are going to understand like we have audit planning, strategy, program, and along with that, we will do risk assessment and internal control. Risk assessment and internal control chapter, right or not? There will do SA 315. Major focus will be on the SA 315. So that chapter also we are going to do audit planning, strategy, and program, plus risk assessment and internal control chapter, that we are going to do. Now, along with that, we will also do like one last chapter which we are left with. I think that is called audit in automated environment, right? Audit in automated environment. So these are the various chapters I think you have in your portion. Obviously, I have clubbed so many chapters. So we will start with the company audit, maintenance of books of accounts and dividend. Followed with that, we'll do professional ethics, and followed by that, we'll do audit report. Followed by that, audit committee and corporate governance, then bank audit, NBFC insurance, PSU internal M&O management and operational audit, peer review and quality review, investigations, due diligence, and forensic audit. Then all the standards on auditing at one place. Then audit under fiscal loss, audit strategy, planning and program, plus risk assessment and internal control, and audit in automated environment. So these are the all topics we are going to cover. So I can guarantee you we are going to cover almost 100% of the coverage we are going to do. Obviously, some topics may be not possible for me to cover that in a short span of time. That I would definitely expect that those topics you will be covering. But 99.99% of the cases, our total coverage is going to take place in this manner. So this is what all the introduction about the rapid revision batch, which is going to be having a duration of 35 to 40 years. And I'll be taking care of classes. The classes are completely going to be in the English mode. They are completely going to be in the English mode. So now what I'm going to provide you, I'm going to provide you my handwritten notes. So I'll be preparing the chart handwritten notes for all the CA final chapters. So I'll be sharing those notes with you via Google Drive. And along with that, I'll be taking care of ICAI modules. We will doing the most of the chapters like bank audit, insurance audit, and NBFC audit, peer review, quality review. All these chapters we are going to do it from the ICAI module, because what I feel that most of the students think that the ICAI material is of no use, but let me tell you one thing. ICAI has done a lot of hard work in the last few years. I can say, if I'm not wrong, in the last, especially in the last 2 to 3 years, ICAI has brought so many new changes in the their module, and I don't think so that there is any study material available on this planet better than ICAI module right now, especially for your paper number 3, advanced auditing and professional ethics, right? So this is just an introduction video. So I want all of you to make sure that before starting reading my rapid revision batch, rule number 1, what are the rules of this batch? Now try to understand rules of this batch. What are the rules you have to follow? Rule number 1, when you are going to take care of a particular video in this rapid revision batch series, make sure that you are already done with that particular topic. The purpose is to make you understand the topic in a very rapid manner, in a very fast manner, so that make sure that you should be in a position to cope up with me. I will not recommend these videos to those who are learning this subject for the first time completely. For that, my regular advanced auditing and professional ethics batch is going to be held at Guntur Masterminds Institute from the month of April. So I will suggest all of you, those who are looking for, and if your juniors are looking for your like this particular batch in the regular manner, those who are going to listen this particular subject for the first time, it is going to be a 180 to 200 hours batch. So that's the reason. So my regular batch generally goes for 180 to 200 hours. So that's why I will not recommend for those students who are learning this subject for the first time. Those who want to catch up with the subject within 35 to 45 hours, I will recommend this particular series of rapid revision batch series only for those students. So I hope you are already understood the various requirements of using this batch. Point number 2, I will make sure that I want you all to make the running notes along with me when this particular video is going on, where I'll be most of the times making the running notes along with you. I want all of you to make running notes with your own bare hands, because what I feel that when you make the notes with your own hands, it will be like your own asset. And at the time of examination, when you will be seeing that, sometimes when you stuck somewhere, you will close your eyes and you will be coming to know, okay, in my material, this side, this place, some particular answer was there. So you will be able to retain the things very easily. You will be able to retrieve the things very easily. So I want all of you to make running notes. Normal notes I'll be providing you. Make running notes. Along with that, third rule, I will be providing the handwritten notes to all of you. And those who are looking for the regular batch, you all have to understand one thing. It is going to be in the Masterminds Guntur branch. It is going to be, and starting in the month of April, right or not, paper number 3, advanced auditing and professional ethics, right? And it is going to be 180 to 200 hours batch. And remaining all the particular details of this batch, if you're looking for, you can always call the office communication address, or you can always call on their official number to get the more details about this batch. So this is purely going to be a revision batch, right? So I already told you, like, this is the coverage we are going to have in this particular batch. So I will suggest all of you to watch this video of 25 minutes before starting the rapid revision batch series videos, right? So thank you so much everyone for lending your patient ears, and I will try my level best to make sure that your 100% of coverage should be done within these 40 to 45 hours, and I'll make sure that I will be a like catalyst to all of you to get the maximum number of marks in this particular subject called advanced auditing and professional ethics. So I want all of you to participate in the videos along with me. When I'll be saying repeat after me, you all have to repeat at that point of time. Obviously, I'm recording this video and for you people only, but obviously you people are not sitting in front of me, but I will assume that in front of me you people are sitting, and when I'll be remembering those points with these kind of gestures by closing my eyes, I hope all of you to do the same, because what I feel that CA final advanced auditing and professional ethics is not a huge subject. It's not a tough subject. I think there are only two things in this world. One is easy and one is very easy. The only one person who can make your life very difficult is you yourself, by not being sincere during your CA final advanced auditing and professional ethics paper number 3. The best approach towards this subject is you understand the fact that no longer direct asked questions, it is all application based. They want you to behave like a chartered accountant in a particular situation, because when we go out after getting qualified as a product of ICAI, people expect us to implement our knowledge. That will be the purpose behind this particular batch. So thank you so much everyone. Thanks for lending your patient ears, and let's start with the first video on the company audit, which is going to be your next video. Thank you so much everyone. Bye bye. Take care. All the very best for your examination. Bye everyone. Hi, so hello my dear students, how are you all? I hope you all are doing well. So let us start with the first session of our rapid revision batch on CA final paper number 3, advanced auditing and professional ethics. I hope that you all must have already watched the video number 1, where I gave you the introduction, like how this rapid revision batch is going to be, and how we are going to proceed with the different chapters, and how we are going to cover 100% of your portion with the standards, with the different types of audits and company audit, professional ethics, with all the amendments which are applicable for your May or May 22 exams and onwards, right? So the first chapter which we are going to start now with a quick revision with the rapid revision batch is the company audit. So as you all are aware about the company audit, in the company audit, basically we have section number 138 to section number 148. So you can see that we have basically the section number 138 to section number 148. Now, when we talk about section number 138 to section number 148, all these sections are going to talk about whom? They all are talking about the auditor, right? But in this 138 to 148, section number 138 specially talks about the which auditor? This section specially talks about the which auditor? Internal auditor. What is the name of the auditor? Internal auditor. And section number 139 to section number 148 talks about which auditor? Statutory or external auditor. Now, sir, section number 138 I'm going to cover in our chapter called internal audit, operational and management audit, because it is connected with the internal audit. So we'll cover 138 over there. So now we are going to start with section number 139 to 148. So we have to learn the section numbers also and what is inside the section. So let us understand what the sections are talking about. The external audit, or which is also known as statutory audit, which is also known as company audit, right? So let us start with the section number. As you can see that section number 138, but I will not deal with 138 right now. I will tell you about the 138 when we'll do the chapter called internal audit, management and operational audit. So let us first start with section number 139. As you all might be aware of the fact that this is a rapid revision batch. So in the rapid revision batch, considering that you are already aware of and you are already have done one time your advanced auditing and professional ethics exam, so I will try my level best to go not that too fast and to go not that too slow. So I would like to make sure that when you're watching this video, you are trying to match with the speed at which I'm going to make you revise this whole subject. So expecting not you to be the first listener of the advanced auditing, hoping that you have already done advanced auditing somewhere, or wherever you have taken the classes, you are done with that. But now it's time to revise this advanced auditing with the first chapter called company audit. So in the company audit, section number 139 talks about which auditor? It talks about the appointment of an auditor. It talks about the rotation of an auditor. It talks about the casual vacancy in the office of an auditor. So in the section number 139, the first thing which we have to understand is the appointment of an auditor. Now, when we talk about the appointment of an auditor, section number 139 ka subsection 7, subsection 5, subsection 1 and subsection 6 are the first these four subsections which comes to our mind. When we talk about the appointment of an auditor, we are going to divide the auditor, or we are going to divide the company structure in India into two types of companies. One is known as government company and one is known as non-government company. Now, what do you mean by government company and what do you mean by non-government company? That we already know. Government company is a company in which at least 51% of the voting rights are either held by central government, state government, or combinedly by both. Non-government company is the company which is not a government company. So in the government company, first we are going to talk about two auditors. What are the two auditors? First auditor of the government company, how to appoint it, and how to appoint the subsequent auditor of the government company. When we talk about the first auditor of the government company, we talk about section number 139 subsection 5. And when we talk about the subsequent auditor of the government company, we talk about section number 139 subsection 7. So let's understand the first auditor of the government company. So when we talk about the first auditor of the government company, it is always appointed by C&AG, Comptroller and Auditor General of India, when he has to appoint within 60 days from the date of incorporation of that government company. And if the C&AG fails, if the Comptroller and Auditor General of India fails to appoint the first auditor of the government company within 60 days, then this opportunity will be given to the board of directors, and board of directors are going to fill this first auditor's vacancy within 30 days. Are you getting the point? So if the C&AG fails, then the board will appoint in the next 30 days. So what is the time period for C&AG? 60 days. And what is the time period for the board of directors? Is the next 30 days when the C&AG fails. If the board of director also fails, then the whole responsibility comes to the members of the government company. They will conduct a general meeting, and within 60 days, they will appoint the first auditor. So the first auditor of the government company must be appointed by C&AG within 60 days. If the C&AG fails within 60 days from the date of incorporation, it will be appointed by the board of directors in the next 30 days. If the board of director fails, then the members in the general meeting within 60 days. So till how long this person is going to hold the office? Is going to hold the office till the conclusion of first AGM, not till the conclusion of sixth AGM. So in the government companies, you are always appointed as an auditor for one financial year or for one term only. There's no term like 5 years in case of government companies. So tenure is from the date of appointment till the conclusion of first AGM. Then how to appoint the subsequent auditor of the government company? When we talk about the subsequent auditor of the government company, it is appointed by the C&AG again, but here no further delegation to any board of directors or after the board to the members. Nothing like that. Only and only Comptroller and Auditor General of India is going to appoint the subsequent auditor of the government company within 180 days from the commencement of what? Financial year. So within 180 days from the commencement of financial year, the subsequent auditor of the government company will be appointed, and the tenure will be from the date of appointment till the conclusion of next AGM. Till the conclusion of which AGM? Next AGM. So till the conclusion of first AGM, the first auditor will sustain, and till the conclusion of next AGM, the subsequent auditor will be the part of government company. Did you get the point? So how to appoint the first auditor? By C&AG within 60 days from the date of incorporation. If failed, by the board of directors within 30 days from the date of failure by the C&AG in the next 30 days by the board of directors. If the board of director fails, then the members in the general meeting within 60 days. Tenure from the date of appointment till the conclusion of first AG. Now, how to appoint the subsequent auditor under section 139 subsection 7? It is appointed by the C&AG only within 180 days from the commencement of the financial year from the date of appointment till the conclusion of the next AGM. Now, this is how to appoint the auditors of the which company? Government company. So why I am starting with the company audit? As you all know that company audit is the same topic which you have already done at the time of your CA intermediate also. So I feel you will feel more comfortable when we'll start with the topic which you are familiar with. Slowly, we'll go into those topics also, which are very much new in your CA final auditing. Now, we are going to understand how to appoint the statutory auditor of a non-government company. Now, when we talk about the statutory auditor of a non-government company, what is the first thing comes to our mind? The statutory auditor of the non-government company is also further classified into two auditors, first auditors and subsequent auditors. So what are the two auditors here also classified? First auditor and subsequent auditors. Now, how to appoint the first auditor of the non-government company? Same like C&AG, first auditor of the non-government company is now appointed by the board of directors. In case of government company, within 60 days from the date of incorporation, but in case of non-government company, within 30 days from the date of incorporation. So, the first auditor of the non-government company is appointed by the board of directors within 60 days. No, within 30 days from the date of incorporation. Now, if the board of director fails, then what will happen? Then the members will conduct EGM, extraordinary general meeting, where within 90 days, they are going to appoint the first auditor. Now, the question is, here it is written within 90 days. It is not written next 90 days. So, these 90 days already are inclusive of the first 30 days of the board of directors. Are you understanding the point? So, the board of directors will appoint within the first 30 days of the date of incorporation. If the board of director fails, then it will be appointed by the members in the EGM within 90 days. So, these 90 days already inclusive of first 30 days. Now, what will be the tenure of the first auditor of a non-government company? Tenure will be same like the government company's first auditor from the date of appointment till the conclusion of first AGM. So, he is also not going to be appointed for 5 years. Government auditors can never be appointed for 5 years. Now, in this AGM, this first auditor will leave. But let me tell you one thing. If the company wants, they can reappoint the same auditor in the first AGM to continue the office till 6th AGM. But sir, we too have heard that the auditor can never be appointed for more than 5 years. But here, that first year of the first AGM, the audit which you are doing is not counted for the purpose of your rotation under section 139 subsection 2. Did you get the point? So in this first AGM, when this first auditor is leaving, same auditor can be reappointed for the next 5 years, or in the same AGM, subsequent auditor means any other auditor can also be appointed for the 5 years. That is section number 139 subsection 1. So what is section number 139 subsection 1 is saying? In the first AGM, when the first auditor is leaving, another auditor or the same auditor can be reappointed or appointed by the members in this AGM to hold the office till the conclusion of which AGM, everyone? 6th AGM, for a period of how many years? 5 years. So try to understand. The first auditor of the non-government company is first appointed by the board of directors within 30 days from the date of incorporation. If the board of directors fails, the members in the EGM will appoint within 90 days. That these 90 days already inclusive of the first 30 days. But this auditor will hold office only till the conclusion of first AGM. In the first AGM, either the same auditor can be reappointed again or some another auditor can be appointed by the members till the conclusion of 6th AGM for a period of 5 years. So, sir, if the same auditor is appointed, will it be 6 years? No, it will be counted as one term of 5 years only, because the first year auditorship will not be counted for the purpose of rotation of an auditor under section 139 subsection 2. Is it clear, everyone? Yes. So this is how we brought an end to our appointment of an auditor in case of government company and in case of non-government company. Now, remember one thing, before getting appointed as an auditor of any company, let it be government company or let it be non-government company, you as a auditor has to give 4 declarations in writing to the company. How many declarations? 4 declarations in writing to the company. Sir, what are the 4 declarations? Declaration number 1. You are declaring via your declaration on your letterhead to the company where you are going to be appointed that, okay, I am not disqualified under section 141 subsection 3. So you are saying that, okay, as an auditor, if I am accepting your appointment, I am not disqualified under section 141 subsection 3. Second thing also, you are saying that, okay, by accepting your audit, I am well within the limits of my ceiling limit of doing the company audits. It means I'm not violating my ceiling limits of company audit, which is 20 company audits under section 141 subsection 3 clause G. So I am well within my ceiling limits. What is the third declaration you are saying? I understood the terms and conditions of the appointment and I'm ready to accept this engagement. Are you getting the point? That is the third declaration. And the fourth declaration which you are making, that there in this fourth declaration you are trying to prove that you are a clean sheet person. Sir, what do you mean by clean sheet person? In this declaration you are trying to tell that no case is pending against me, my partner or my firm in any kind of statutory authority or any kind of court or ICAI or any other statutory body. So you, your partner and your firm is a clean sheet person. There are no pending misconduct or no pending suits and cases against you. So did you get the point? So point number one, you are declaring that we are not disqualified. Point number two, you are declaring that we are not breaching our ceiling limit. Point number three, you are declaring that you understood and accept the terms of engagement. And point number four, you are saying that there is no any pending cases or suits against you in any kind of statutory authority or the courts or IC. Next, once the statutory auditor of the government company or the non-government company is appointed, we are not supposed to intimate anything to the ROC. But those auditors which are getting appointed in the AGM, again repeating, those auditors which are getting appointed in the AGM are required to be intimated to whom? To the ROC. Now try to understand what I'm saying. If you carefully analyze the government auditor ka first auditor, subsequent auditor, and in the non-government case, the first auditor and subsequent auditor, there is only one auditor, that is subsequent auditor of a non-government company, who is getting appointed in the AGM. So this is the only auditor whose intimation is required to be sent to the ROC. So when we appoint an auditor in the AGM, the company's responsibility is to send one intimation to the statutory auditor that you have been appointed as a statutory auditor within 7 days of AGM. And at the same point of time, same intimation you have to make it to ROC. Who has to make it? Company has to make it to the ROC within 15 days of the AGM. So when you are intimating to the auditor, it is within 7 days, and when you are intimating to the ROC, it is within 15 days. But when you are intimating to the ROC, you have to intimate within form number ADT1. So remember again, this intimation to the ROC is only and only required when we are appointing an auditor in an AGM. And fortunately, there is only one auditor who is getting appointed in the AGM. Who is that auditor? That auditor is the statutory auditor of the subsequent auditor of the non-government company. Within 15 days, you have to intimate to the ROC in the form number ADT1. I hope everything is crystal clear. So this is how we appoint the first and subsequent auditor of the government company and first and subsequent auditor of the non-government company. Before being appointed, what are the 4 declarations auditor has to give, and most importantly, when you have to intimate it to the ROC, in which form. So that brings an end to your section number 139, subsection 5, subsection 7, which talks about first auditor and subsequent auditor of the government company, and 139 subsection 6 and subsection 1, which talks about first and subsequent auditors of the non-government company. Now, further in section number 139, under subsection 2, we have to talk about the rotation of the auditors. Sir, what do you mean by rotation of the auditors? You are not supposed to continue with the same client for more than 5 years, for more than one term of 5 years, if you are a sole proprietor auditor. But if you're a firm of auditors like LLP or a partnership firm of practicing CAs, and if you are being appointed as a firm of LLP or as a partnership firm, you are maximum allowed to serve the same client company for 2 terms of 5 years. So where it is written in the rotation of auditors, section number 139, subsection 2. Now, what do you mean by rotation of auditors? If you are a sole proprietor auditor of a company, again repeating, we are doing Companies Act. So don't use these law provisions in any other audit. We are talking about the company audit right now only. Are you getting the point? So if you are a company auditor and you are a sole proprietor firm, then you are not allowed to serve the same client for more than 1 term of 5 years. The maximum you can serve a client is 1 term of 5 years. But if you are a firm of auditors, means if you are a partnership firm or LLP, you cannot serve the same client for more than 2 terms of 5 years each. You are not allowed to serve the same client for more than two terms of 5 years each, means indirectly one term of 5 years and second term of 5 years means 10 years. Only when you are a partnership firm or LLP. But if you are a sole proprietor, one term of 5 years only. Sir, what will happen after the one term of 5 years in case of sole proprietorship and two terms of 5 years each in case of firm of auditor is served? Then your which period will start, everyone? Your cooling period will start. Which period will start? Cooling period will start. And in the cooling period, remember, in the cooling period, you are not allowed to serve the same client company for the next 5 years, either directly or indirectly. Sir, can I leave as a statutory auditor and come as an internal auditor? No. Law has strictly prohibited and used these words either directly or indirectly. You are not allowed to serve the same client company for the next 5 years. Sir, cooling period is 5 years for both partnership firm and sole proprietorship and LLP. Yes, either you're a sole proprietor auditor or you're a partnership firm auditor or you are an LLP auditor, your cooling period will remain same. That is the next 5 years. Directly or indirectly, you are not allowed to serve the same client. Is it clear, everyone? Yes or no? Yes. Now, this is what do you mean by rotation. So again, repeat, if you're a sole proprietor, you are not allowed to serve the same client for more than one term of 5 years. And if you're a firm of auditors like partnership firm or LLP, you're not allowed to serve the same company client for more than two terms of 5 years. After your respective terms are being contributed or served, your cooling period will start, and during that cooling period, you are not allowed to serve the same client company either directly or indirectly for the next what? 5 years. Is it crystal clear? Yes or no? So neither directly nor indirectly. Next point. Sir, is rotation applicable to every company? Answer is no. If you're a listed company, it is always compulsory because SEBI says that you have to mandatorily rotate your auditors after the one term or two terms of 5 years each. So being a listed company, it is always and always mandatory. But being an unlisted public company and being a private company. Now listen, if you are an unlisted public company and your paid up share capital is greater than equals to 10 crores, or if you are a private company and your paid up share capital is greater than equals to 50 crores, then rotation is compulsory. Again repeating, if your paid up share capital in the unlisted public company is 10 crores or more, and if your paid up share capital in the private company is greater than equals to 50 crores or more, then in that case rotation is compulsory. Otherwise you can continue with the same auditor for longer period of time as well. Rotation section 139 subsection 2 will not be applicable on you. But sir, if the paid up share capital is less than 10 crores and if the paid up share capital in the private company is less than 50 crores, rotation is not compulsory. It is 100% correct. Rotation is not compulsory if the paid up share capital is less than 10 crores or less than 50 crores in case of unlisted public company and private company. But if their borrowings, if the unlisted public company ka borrowings is outstanding borrowings are greater than equals to 50 crores, then also it will become applicable. And if the private company ka outstanding borrowings is also greater than equals to 50 crores, then also it will become applicable. Did you all understand what I'm saying? So first test with the paid up share capital. If the paid up share capital test fails, that is less than 10 crores or less than 50 crores, then outstanding borrowing test is there, which should be greater than equals to 50 crores in both the cases. Let it be unlisted public company or let it be private company. So if you're a listed company, then rotation is always compulsory. If you're an unlisted public company, then paid up share capital 10 crores or more, or private company paid up share capital is 50 crores or more. If the paid up share capital test is not matching, if the outstanding borrowing of either of these two companies is greater than equals to 50 crores or more, then also rotation is compulsory. And if you are a OPC, one person company, or if you are a small company under section 2 subsection 85 of the Companies Act 2013, then in that case you are exempted from rotation. What does that mean? You can continue with your auditor for a longer period of time, more than one term or more than two terms of 5 years each. So this is what do you mean by rotation ka meaning and applicability of rotation. I hope all of you are able to catch up which I'm saying, right or not? And if you think that little bit I'm going fast, make sure that you are reducing the speed of this video while watching it. Okay. Now, there is one very important concept in the rotation of auditors. Say, for example, there is one company called XYZ Limited. In the XYZ Limited, suppose ABC and Co is the outgoing auditor. Say, for example, this firm of chartered accountants have already completed their 10 years, means 2 terms of 5 years. And APQ and Co is the incoming auditor. So they are going to be the new auditor. But you can see that there is one partner who is common between ABC and Co and APQ and Co. So what does the law says on these kind of situation when there is a common partner between outgoing and incoming auditor, when there's a common brand name, common trade name, common management, common control? What are the 5 things? Common partner, common brand name, common trade name, common management, common control between the incoming auditor and outgoing auditor. Between the incoming auditor and outgoing auditor, then both the auditors will be disqualified for the next 5 years in the eyes of law. Sir, why disqualified? Because you are trying to defeat the law provision. You are already being told that once your term is over, you are not allowed to serve the same company for the next 5 years. But sir, ABC and Co is going now, only APQ and Co is coming, but in that there is one common partner, Mr. A. So this provision applies. So if there is a common partner, common brand name, common trade name, common management, common control between outgoing auditor and incoming auditor, then both the auditors will be disqualified for the next 5 years. Now, some of the students might be thinking, sir, ABC and Co to anyways outgoing auditor. ABC and Co is anyways outgoing auditor. It's the cooling period will start. So what's the point of this disqualification? The cooling period and disqualification is same. Answer is no. ABC and Co first will serve its disqualification, that is for 5 years. After that 5 years of cooling period, so indirectly ABC and Co is not going to come back again to XYZ Limited as the statutory auditor for the next 10 years indirectly. So 5 years of disqualification and 5 years of cooling period. Are you understanding what I'm saying? Yes or no? Yes. And APQ and Co, which was the incoming auditor, without doing anything only, it is disqualified for the next 5 years. So if any of these 5 things are found between the outgoing auditor and the incoming auditor, both shall be disqualified for the next 5 years. I hope you all are able to understand what we are trying to understand here. Yes, everyone? Yes. So with that, our rotation is also with the 139 subsection 5, 6, 7 and 1 talks about the appointment of an auditor, which we have already covered, and 139 subsection 2 talks about whom? Rotation of an auditor. Just now we have covered. So if you get any doubt, you can always reach to me, okay, via management, and you can ask the doubts relating to whatever the query you have relating to any chapter of CA Final paper number 3. So I hope I'm able to justify your expectations while doing the rapid revision for you, and you are able to catch with me, right? Now, the next section which we have to cover is known as section number 139, subsection 8, which talks about casual vacancy in the office of an auditor. Now, try to understand it very clearly. Casual vacancy means what? There was an auditor who was already working as a statutory auditor, but he left in between. Sir, left in between, what can be the reason? It can be any reason. It can be the death of the auditor, disqualification under section 141 subsection 3, disablement of the auditor, illness of the auditor, insanity of the auditor, insolvency of the auditor, unwillingness of the auditor, resignation of the auditor, or removal of the auditor. So it can be any of these 9 reasons. Auditor is dead, disqualified, disabled, ill, insane, insolvent, unwilling, resignation, or removal. And casual vacancy may happen in the government company also, and it may also happen in the non-government company also. So if it is happening in the government company, then who will fill up that casual vacancy? Because your old auditor has gone. So who will bring the new auditor in the company? For the government company, who will bring the new auditor? Obviously, be it any reason in the government company, try to understand, be it any reason, let it be any reason: death, disqualification, disablement, illness, insanity, insolvency, removal, resignation, unwillingness. Let it be any reason, the casual vacancy in the government companies will always and always be filled up by CAG, Comptroller and Auditor General of India. Sir, within 30 days from the event, if dead, within 30 days, disqualified within 30 days, disablement within 30 days, illness, insanity, insolvency within 30 days. Who will fill up? CAG will fill up the casual vacancy within 30 days. And if the CAG fails, if the Comptroller and Auditor General of India fails, then obviously this power has been given to the Board of Directors to fill up the casual vacancy in the next 30 days. So first 30 days may CAG will have the power. In the next 30 days, the power has been given to whom? Board of Directors to fill up the casual vacancy. Is it clear, everyone? Yes or no? Yes. Now, if the casual vacancy in the office of auditor is arising in the non-government company case, which government company case? Non-government company case. In the case of non-government company, if the reason is a resignation, now try to understand, if the reason is a resignation, listen to this very carefully. If your statutory auditor in the non-government company is resigning, reason is resignation, then board will fill up the casual vacancy within 30 days. The board will bring the new auditor within how many days? 30 days. But the appointment of the new auditor will be only valid if it is approved by the shareholders in the general meeting within how many months? 3 months. So board will fill up the casual vacancy, will bring the new auditor, that is fine. But within 3 months, we have to conduct a general meeting of members. The shareholders or the members in the general meeting must approve that appointment which is created by Board of Directors within 3 months. So this validity, this appointment will be invalid if it is not approved by the shareholders within 3 months. The first board will fill up the casual vacancy within 30 days, but later on it has to be approved by the shareholders in the general meeting within 3 months. The power is given to the board, but ultimate power is in the hands of shareholders to approve that appointment, which the board has filled up. Only and only if the reason is resignation in case of non-government company. In case of government company, it doesn't matter whether it is reason is resignation or other than resignation. Always CAG will fill up within 30 days or the Board of Directors will fill up within the next 30 days. But here, the reason resignation matters. The Board of Directors will fill up within 30 days, but to be approved by the shareholders within 3 months. But if the reason is other than resignation, means removal, death, disablement, illness, insolvency, then board shall fill up the casual vacancy within 30 days. No need of shareholders approval in the 3 months. Are you understanding the point? So only in case of reason is resignation, then shareholders will be involved. Now, some of the questions they may ask you in the examination, like change of the firm name. Suppose the firm name is changed. Are you getting the point? Firm name is changed. Or death of one partner took place, or admission of the partner took place, or retirement of the partner took place. It never amounts to casual vacancy. So change of the firm name, death of a single partner, admission of a partner, retirement of the partner, only the partnership dissolves, not the firm dissolves. Are you getting the point? The firm will still be there and therefore there is no casual vacancy. But if there is a death of all the partners, if there is a death of all the partners, then yes, there is a casual vacancy. Because all the partners dead means what? The whole firm is destroyed. So obviously there will be a casual vacancy. I hope all of you understood this concept. And what will be the time period for the casual vacancy auditor? It will be the unexpired time period of the original auditor. Again, if he want, he can be reappointed, right or not? But he will first serve the unexpired time period of the auditor in place of whom this casual vacancy auditor has come. I hope everything is crystal clear. The section number 139, subsection 8, which talks about what? Casual vacancy of an auditor. Clear everyone? So with that, our section number 139 is over, where we understood appointment, we understood rotation, and we understood also what? Casual vacancy. These notes I'm going to attach with the videos, so you will be able to access these notes. And most of the times in the chapters where I'll not be able to give you these notes, I'll definitely do it from ICAI material. So rapid revision batch mein, because I already told you in the introductory lecture also ki the best source of material which is available right now is ICAI material only. Other than that, you should not go with any kind of material, because I think they have done a lot. They have done a great job in restructuring your material, and you will come to know when you will have an access to that. So start reading the ICAI material, because let me tell you one thing, your point of view will change about the ICAI study material. It has gone to the another level only, right? Anyways, my materials are also available. You can ask the management about those materials, but still, instead of promoting my material, I would like you to have access to the ICAI material, because I think the language which the ICAI is expecting from you, that language you will be able to gain only when you will read the ICAI material. Is it clear, everyone? Yes. So now 139 section is over. The one section of the company audit is over. Let's move to the section number 140. We call it as RR section. What is RR section? So 139 may we understood how to appoint. 139 may we understood how to appoint. 140 may we'll understand how he will leave, either via resignation or via removal. So 139, it's all about incoming, and 140 is all about outgoing. The auditor, this section 140 is known as RR section, resignation removal section. Now, when we talk about the 140, we will divide this section into 5 subsections. 140 subsection 1, 2, 3, 4, 5. So repeat after me. Section 140 subsection 1, 2, 3, 4, 5. 2 and 3 are talking about a resignation of an auditor, where one amendment has come. So 2 and subsection 3 of 140 section talks about resignation. So then, sir, 140 subsection 1, subsection 4, subsection 5 talks about what? Removal. This is how you have to learn. So 140 ka subsection 2 and subsection 3 talks about resignation, and 140 ka subsection 1, subsection 4, subsection 5 talks about what? Removal. Now, resignation 140 subsection 2 and subsection 3. Removal 140 subsection 1, 4 and 5. In the removal, always remember one thing, there are only 2 people available on this planet who can remove an auditor before the expiry of his term. You know that he has to serve the 1 term of 5 years or 2 terms of 5 years each. But if you want to remove an auditor before the expiry of the term, there are only 2 people who can do it. One is removal of auditor by the members, and one is removal of auditor by the tribunal. The one is removal of auditor by the members. It means members can remove an auditor, or second person is tribunal. Other than that, no one can touch the auditor, or no one can make the auditor leave his place. They cannot remove an auditor at any cost. So only 2 people. Who are those 2 people? Member and tribunal. So members removal is covered under 140 subsection 1 and subsection 4. And tribunal's removal is covered under 140 subsection 5. So we will try our level best to cover all the removals in this particular session of 1 hour, where we have. So I'm going to make a small videos only for 1 hour, so that it will be easy for you to remember all those things, right? So section 1 and 4 talks about removal of auditor by the members. Subsection 5 talks about removal of auditor by tribunal. Are you getting the point? Now we are going to understand subsection 2 and subsection 3 first. So subsection 2 and subsection 3 talks about what? Resignation of an auditor. Sir, what do you mean by resignation? Sir, 140 subsection 2 talks about what you need to do when you resign as a statutory auditor, and 140 subsection 3 says that if you do not do, or if you do not follow 140 subsection 2, then I will penalize you. So 140 subsection 3 is a penalty section, and 140 subsection 2 is a duty section relating to resignation. So what is your duty when you resign? Your duty is to intimate the reasons of resignation. Your duty is to intimate the reasons of resignation. To whom? Your duty is to intimate the reasons of resignation to the company and the ROC in case of non-government company, to the ROC and CAG in case of government company. तो आपको CAG and ROC को you have to inform in case of government company and to the company and ROC in case of non-government company. Sir, when do we have to inform them about the reasons of resignation? Within 30 days of resignation. Within how many days of resignation? 30 days of resignation. In which form number? ADT 3. What is the form number? ADT 3. So what was ADT 1? When we are intimating to ROC that we have appointed an auditor, now we are intimating to ROC ki what is my reasons of resignation. So we are intimating to the company and ROC in form number ADT 3, CADG and ROC in case of government company in form number ADT 3. Within 30 days of your resignation, it is mandatory for an auditor to intimate the reasons of resignation, ki why he is resigning. What is the reason? Because they deserve to know that ki what are your reasons of resignation. Because if they will never come to know that what are your reasons of resignation, then how do you expect that they will take any needful action? So they expect you to tell them the reasons of resignation. Is it clear? Yes or no? Yes. Next one. Sir, 140 subsection 3, what it is saying, ki if you fail to intimate the reasons of resignation within 30 days, so your fine will be imposed. What is the fine? It will be 50,000 rupees flat, but it will be compared with your remuneration received. So whatever the remuneration you have received from that company, it will be compared with the 50,000, whichever is lower will be taken. Not only that, from 31st day onwards, you have to pay 500 rupees per day challan also, 500 rupees per day fine also. So 50,000 or remuneration received, whichever is lower is the normal penalty which they are going to collect from you. Plus, for every day of default, for every day of delay, you will be charged with 500 rupees per day, subject to the maximum of 2 lakh rupees. Your total penalty in any case shall not be more than what? 2 lakhs. Are you understanding? This is the amendment. So what is the amendment? It was 5 lakhs earlier. 5 lakhs got reduced to 2 lakhs. Did you get the point? This is the amendment of your Companies Amendment Act 2020, which is applicable for your May 22 examinations. Did you get the point? Now, what is your penalty? The 140 subsection 3 says that you dare not to give the reasons of resignation. We will impose a penalty of rupees 50,000 to be compared with the remuneration received, and 500 rupees per day, subject to the maximum of 2 lakh rupees. So with this, your 1 hour of the section 140 is over. That is called resignation under 140 subsection 2 and 140 subsection 3. Now the second R we have to talk about, now called removal of an auditor. Sir, when we talk about the removal of an auditor, there are two people who can remove you. One is removal of an auditor by the members. Another one is removal of the auditor by the tribunal. If it is removal of the auditor by the members, then in that case 140 subsection 1 and 140 subsection 4 will be applicable. Now, how the members will remove you? Point number 1. Members will send the special notice. Members will send special notice under section 115. If you remember, in your law, when you were in CA Inter, you have heard one chapter called Management and Administration. In that, there was one small topic called Special Notice by the Members, section number 115. This is a very rare situation when the company does not send the notice to the members. Members are sending the notice to the company. That's why it's a very special kind of notice. That's why we named it as special notice. The members of the company are sending the special notice to the company. Members of the company are sending the special notice to the company. Now the question is, sir, how many members? If you are the members of company not having share capital, so see this CNHSC means company not having share capital. But if you are the members of company having share capital, if you are the members of company not having share capital, then 1% of the voting right holders must send this special notice to the company. And if you are members of company having share capital, it should be 5 lakhs worth of paid up share capital holders. 5 lakhs worth of paid up share capital holders, not issued, subscribed, or called up. Paid up share capital, 5 lakhs worth of paid up share capital holders must make a special notice or send a special notice to the company. And if it's a company not having share capital, 1% of the voting right holders. To whom they are sending the special notice? They are sending this special notice to the company. Okay, please remove the existing auditor before the expiry of the term. Sir, are the members under an obligation to give the reasons of removal? Do they have to give the reasons of removal? Answer is no. Reasons of removal are not required. So reasons of removal are not required. Excuse me. Means the member need not provide any reasons why they are removing the auditor. That is optional on them. If they want to disclose, they can disclose. Otherwise, no one can force them. Now, company received a special notice. Now, once the company received a special notice, what the company will do? Either they will remove the existing auditor or they will replace the existing auditor with another auditor. That's what the members want. And whatever the members will say, they are the owners of the company. Company has to follow the same. Now, once the special notice from the members is received by the company, now within 30 days of that special notice, company has to do two obligations. One, they have to conduct a board meeting and pass a board resolution. And second, they have to apply to the central government for the removal of an auditor before the expiry of the term in form number ADT2. So ADT3 was what? Casual reasons of resignation. ADT1, when we are intimating to the ROC about our appointment of statutory auditor appointed in the AGM. And ADT2 is applying to the central government for removing the auditor before the expiry of the term. So first thing, the company has to do board meeting on board resolution. Second thing, they have to apply to the central government for the removal of an auditor in form number ADT2. Now, once the central government grants the approval, after that, within the next 60 days, the company has to conduct an EGM. What is EGM? Extraordinary General Meeting. And in that EGM, the company has to pass a special resolution, which is 3/4 of the voting in the favor of that outgoing auditor, and the auditor stands removed. This is how members removal takes place. So let us recollect. First, members are sending special notice under section 115 to the company. Sir, if you are a members of company not having share capital, then 1% of the voting right holders, and if you are members of company having share capital, then 5 lakhs worth of paid up share capital. Once the notice is being sent, the company has to either remove the existing auditor or replace the existing auditor with another auditor. Members are under no obligation to give the reasons of removal. The moment company has received the special notice, in the next 30 days, company has to do two things. One is to conduct the board meeting and pass a board resolution. Second one is to apply to the central government in form number ADT2 for its approval to remove an auditor before the expiry of the term. Once the central government approval is granted, then within next 60 days, the company has to conduct the EGM. In the EGM, they have to pass a special resolution. And if the special resolution is passed, the auditor stands removed. Clear, everyone? Yes or no? Yes. Now, this is called section number 140, subsection 1. How the auditor gets removed by the members. Now, section number 140, subsection 4. Sir, during that 60 days wala time period which are being given to us, you know, na 60 days of time period for EGM is given to us. In those 60 days, what the company has to do? First of all, company has to send the copy of special notice of the members to the outgoing auditor. So it is very important for the company to intimate the outgoing auditor that member wishes to remove you. The company will make one copy of that special notice. They will take one Xerox of that copy of that special notice and send it to whom? To the outgoing auditor. Once it is sent to the outgoing auditor, company has to provide the outgoing auditor an opportunity of being heard. As you all know that before removing an auditor, we have to give him an opportunity to defend his part. So opportunity of being heard will be given to whom? Opportunity of being heard will be given to the outgoing auditor. To the which auditor? Outgoing auditor. Now question is, sir, how this opportunity of being heard will be given to the outgoing auditor? We will allow the outgoing auditor ki you can make a representation letter of reasonable length where you would like to defend your removal. Do defend your removal, make a letter of representation of a reasonable length and write ki why we should not remove you. That is what the opportunity company is giving to the outgoing auditor. And if his representation letter of defending his removal reaches to the company, if it comes to the company earlier, sir, what do you mean by reaches to the company early? It means before sending the notices of that EGM where the special resolution is going to be passed for his removal, before sending the notices, if this representation letter comes to the company earlier, so we are going to attach the copy of this defending letter, this representation letter with the notices, and we'll circulate it to the members. But sir, if his representation letter reaches to the company little bit late, means what? Ki notices of EGM are already sent, but his letter is coming little bit late. Then in that case, what we are going to do? In such case, we will invite him, the outgoing auditor, in the meeting, and we will allot him some few minutes to defend his removal and read out that defending letter in front of every shareholder. So if it is coming early, we will attach the copy of that letter with the notice, but if it is coming late, we will invite him in the meeting to read it out in front of shareholders. But before circulating this letter or before giving any invitation to him to attend that meeting, EGM, where he will be removed, we will send one copy of this letter to the NCLT. So before circulation and before invitation, we will send one copy of this letter to whom? NCLT. NCLT is going to read that letter. If the NCLT believes that this outgoing auditor is trying to take needless publicity via this letter, is trying to take which publicity? Needful or needless? Needless publicity, or using the defamatory language against the company and defaming the company's goodwill, we gave him an opportunity to defend his removal. That is fine or not? Yes. But he is using it for some other purpose. He is trying to defame the company. If he will try to defame the company and try to take the needless publicity, do you think that the company would like to keep him? No. If the NCLT is of the opinion that he is taking needless publicity or defaming the company's goodwill, then NCLT will pass an order on the company neither circulate his defending letter to anyone or nor invite him in the meeting, directly conduct the EGM, pass the special resolution, and auditor stands removed. Did you get the point? This is called section number 140, subsection 4. Okay, what do we do in those 60 days? Now, either it is a first auditor or it is a subsequent auditor, the process of removal will remain same. Did you get the point? Let's recollect. First, members send the special notice to the company. Company within 30 days of special notice will do two things: board meeting, board resolution, approval of the central government in form number ADT2. Once the approval comes, in the next 60 days, EGM will be conducted, EGM and special resolution will be passed, auditor stands removed. This is called removal of auditor by the members. Members of company having share capital, what special notice is 5 lakhs worth of paid up share capital, and not having share capital may 1% of the voting right. Now, during those 60 days, what do we have to do? Company will send one special notice copy to the outgoing auditor intimating that members don't want to continue with you. But we are not only going to send a letter, we are also going to give him an opportunity of being heard. So what do you mean by opportunity of being heard? In the opportunity of being heard, we will allow him to make a representation letter of the reasonable length, that why we should not remove him. If this letter comes to the company early, we will circulate this letter to every member via notice. But if this letter comes to the company late, then in that case, what we will do? If this letter comes to the company very late, then in that case, we will allow him or we will invite him to the meeting where he can come and complete his proper reading in front of everyone. But before circulating and before inviting him to the meeting, one copy of that we will send to the NCLT. If the NCLT believes that he is taking a needless publicity or using or defamating the company, then in that case, what will happen? In that case, this letter will neither be circulated nor we will invite him. Directly the EGM will be conducted. Basically, his opportunity of being heard will be lost. And special resolution will be passed and this auditor stands removed. Did you all understand the point? This is how we remove the auditor by the members. Did you all understand the point? This is called removal of an auditor by the members. Clear? Now, next point. Section number 140 subsection 5. So once this section number 140 subsection 5 will be over, our section number 140 also will be over. So removal by the tribunal. If the NCLT, now question is when the tribunal will remove you. Now remember, most of the students are unable to find the difference between removal by the member and removal by the tribunal. Let me give you the clear difference and you will never fail in this particular topic. If it is all about questioning the efficiency and performance of an auditor, members will remove an auditor. When there's a question mark on the performance and efficiency of the auditor, suppose you do not like the performance of an auditor, or you are not happy with the efficiency of the auditor, then in that case, what will happen? In that case, members removal will take place. But if the auditor is guilty of being involved in a fraud or fraudulent activity, not performance or efficiency, fraud or fraudulent activity, then tribunal will interfere. Members do not have any right to remove an auditor. Then it will be a direct removal by the tribunal without any opportunity of being heard. Are you understanding? So when it is efficiency and performance based issue, then members will interfere. If it is a fraudulent or fraud activity related issue and auditor is found guilty of being involved in that, then in that case, removal by tribunal. Now, how the removal by tribunal will take place? Either the tribunal on its own, that is suo motu, if the tribunal got the clarity or got the information on its own, yes, there is one particular auditor who is involved in fraud, or somebody has made a complaint to NCLT. Now, who can make a complaint to NCLT? Tribunal. NCLT has received the complaint either from central government or Security Exchange Board of India or Registrar of Companies or Income Tax Department or any statutory authority or any concerned person. Any of these 6 people made a complaint to whom? NCLT. Or NCLT suo motu on its own. Now, what is the complaint? That the auditor of this particular company is involved directly or indirectly in a fraudulent activity. So, जहाँ पे fraud वाला removal will come, NCLT will participate. When the non-fraud removal, that efficiency performance removal will come, then in that case, members may. Members के case में opportunity of being heard is given, but it is not given in case of what? Removal by the tribunal. So if the tribunal on its own or on a complaint raised by any of these 6 people, the tribunal comes to know that the auditor of the company is involved directly or indirectly in the which activity? Fraudulent activity, which is either happening on the company or by the company. Either the fraud is happening on the company or fraud is done by the company and the auditor is involved in that. Then what will happen? In such case, NCLT within 15 days will pass an order. Within 15 days of its investigation, NCLT will complete the total investigation in 15 days and will pass an order. Right or not? Now, what is the order? The order will be passed कि you are disqualified from being an auditor in any company up to the next 5 years. So, up to the next 5 years, you are disqualified to be an auditor in any company. And next point, you are going to be penalized under section 447. Actually, the penalty is given under 448, but you are going to be penalized under section 447. So you are disqualified from being an auditor in any company. Means you have to surrender your membership COP number for being an auditor in any company up to 5 years. Not flat 5 years, up to 5 years. So that tribunal may pass an order. And you will also be penalized under section 447. So with that, we have covered section number 139 ka subsection 6, subsection 7, subsection 1, subsection 5, subsection 2, subsection 8, which talks about appointment, casual vacancy, and rotation. And along with that, we have also covered section number 140, subsection 1, subsection 2, subsection 3, subsection 4, subsection 5, which is known as what? Which is known as removal and resignation, RR section. Nowadays, movie is coming now, RRR. So this is called RR section, resignation and removal. So 139 was all about incoming of an auditor, how to appoint, and 140 was all about outgoing. Are you getting the point? So 139 incoming, 140 was outgoing. So I hope this lecture was useful to you in revising the two very important sections of company audit, that is 139 and 140. So I hope in the next 5 to 6 hours, our total company audit must be revised. Along with that, we will have 1 or 2 hours on books of accounts and 1 hour on dividend. So almost in 8 to 9 hours, your total company audit, books of accounts and dividend must be over. Then we will allot approximately 10 to 10, not 10, 7 to 8 hours will allot on professional ethics. Then small chapters, 1 hour, 2 hours each, and all those topics. And so this is how I will keep on providing you the rapid revision batch videos, right? So thank you so much everyone for lending your patient ears. I hope you all enjoyed this lecture. If you have any queries, you can reach me by asking the management, and that's it for today. Thank you so much for lending your patient ears. I'll borrow it again in the next video. Bye everyone. Take care. Bye bye. And do remember, this is a rapid revision batch, and we are expecting you to catch up with me because it is a batch going to be only for 40 to 45 hours. So 40 to 45 hours may how I'm going to make you teach the whole paper number 3, advanced auditing and professional ethics. So you have to catch with me and make sure that you are doing these videos on regular basis. Are you getting the point? Just devote 2 hours, 1 or 2 hours on daily basis, watch these videos, and I can guarantee you total auditing paper number 3 of your CA final, which is the taboo paper of among all, will be there inside your head, right sir? So thank you so much everyone again. So I'll see you guys in the next video. Bye everyone. Take care. Bye bye. Hello everyone. Welcome back to the new session on rapid revision batch on your paper number 3, advanced auditing and professional ethics, for the May 22 and November 22 students and onwards. So as you all know that up to the previous session, we have already done up to section number 139. We have already covered the appointment of an auditor, the rotation of an auditor, casual vacancy in the office of an auditor. And in section number 140, we have understood RR section, that is the removal and resignation section, right? So now today we are going to understand a very important section, that is called section number 141. I think after CARO 2020, that is section number 143 subsection 11, the most important section in your company audit is this section. The name of the section is eligibility, qualification and disqualifications of an auditor. Now, when we talk about the section number 141, I would like to tell you that the section number 141 is further classified into 3 subsections. Subsection 1 and subsection 2 talks about the qualification of an auditor, and subsection 3 talks about the disqualification of an auditor. So subsection 1 and subsection 2 talks about qualification, and subsection 3 talks about disqualification. But before that, we have to understand who is eligible to be the auditor. When we talk about the person called auditor, the first thing which comes to our mind is a chartered accountant holding a valid certificate of practice. You all know that after getting qualified, you will be having the 2 options. Either you can go for an employment or you can opt for a practice. When you are opting it from a practice, as you can say that in my name also I have written FCA Rohit Grover. Now what does the FCA stands for? FCA stands for Fellow Chartered Accountant. Now what do you mean by Fellow Chartered Accountant? Fellow Chartered Accountant means that I am into the practice for more than 5 years. So when you continuously hold your certificate of practice for more than 5 years, and when you practice in the field of auditing and accounting, you will be turning from Associate Chartered Accountant to a Fellow Chartered Accountant. But to be an auditor, it is very much necessary that you have to be a chartered accountant holding a valid certificate of practice. But there are some audits, there are some audit branches, there are some audit fields in which COP is not necessary. Say for example, if we'll talk about internal audit under section number 138, if you want to become the internal auditor of the company, you can be a CA without holding COP as well. But if you are a statutory auditor of the company, you have to be a chartered accountant holding a valid certificate of practice. That is the eligibility to become an auditor of a particular company. Now, the next thing which we have to understand is known as qualifications of an auditor. So when we talk about the section number 141, it is further classified into two parts. One is qualification and one is what? Disqualifications. When we talk about the qualifications, section number 141 subsection 1 and section number 141 subsection 2 talks about what? Qualifications, right? And 141 subsection 3 talks about what? Disqualification. If you remember, while taking the appointment also, on our letterhead we have to give the written declaration where I am saying that okay, I am not disqualified under section 141 subsection 3. If you want, you can refer to the previous lecture where we have done that, right? Now, section number 141 subsection 1 and section number 141 subsection 2, which talks about the qualification. So let's have a look on the qualification. When we talk about the qualification, there are two types of qualifications, everyone. Section number 141 subsection 1 talks about the qualification of a sole proprietorship auditor, and section number 141 subsection 2 talks about the qualification of the firm of auditors if you are a partnership firm or LLP. If you are a sole proprietor, what is your qualification? Qualification is very simple, everyone. You need to be a practicing chartered accountant. That's it. If you are a practicing chartered accountant having your sole proprietorship, you are eligible to be the auditor of any company. But if you are a firm of auditors, it means if you are a firm of practicing CAs, then in that case, you need to qualify on the following grounds. What are the grounds you need to qualify? Let's say, for example, first let us talk about partnership firm. In the partnership firm of chartered accountants, it is a very much important rule that the majority of the partners must be practicing in India. Means what? Out of your total partners who are practicing, out of them majority must be practicing in India. That is a rule number 1. That is a qualification number 1. Qualification number 2, there is no limit, there is no upper limit when it comes to the CA practicing partnership firm. Same is the case with the LLP. So whatever the rules I am telling you right now, it is applicable to both partnership firm as well as what? LLP. So there is no upper limit on the number of partners. Next important thing which you have to understand that there is no problem if a practicing CA enters a partnership with a non-practicing CA. That's a very big myth in the minds of the student that practicing CA can only enter a partnership with another practicing CA. Not only non-practicing CA and practicing CA, the major difference between both of them is the signing authority. The practicing CA has a signing authority to sign an audit report, but the same authority is not available to the non-practicing CA. So you have to understand the fact that audit practicing CA can also do, audit non-practicing CA can also do, but who can sign the audit report? Only and only practicing CA. Non-practicing CA is not allowed to sign the audit report. Clear? Next point. Not only that, nowadays we can have a multidisciplinary partnership firms also. Sir, what do you mean by a multidisciplinary partnership firm? Suppose I'm a CA, I can enter a partnership with the CS, with the CMA, with the LLB, with the Bachelor of Engineering, Bachelor of Technology, Actuarial Scientist, MBA, Bachelor of Architecture. Any person. It means any other professional from the other recognized professional body with whom the ICAI is having a treaty, which is recognized by the central government in India. With those professionals also, we can have a partnership firm. So we can have a multidisciplinary partnership firms also are qualified to be an auditor in India. Like say, for example, I am a practicing CA, I can have a partnership with another practicing CS or a practicing CMA or LLB. And most important thing, you will understand that when we talk about the practice, in the practice, there are only two professions which can be practiced together. Generally, if you are a practicing CA, you cannot hold the COP in CS or CMA. But when it comes to the practicing LLB, if you are a practicing lawyer, you can be a practicing chartered accountant also along with that. So if you are a practicing CA, you can also practice in your LLB. You can be a practicing lawyer as well. Condition, you should have taken the permission of Bar Council of India as well as the ICAI. So you are allowed to practice these two professions together. What are the two professions which can be practiced together? Practicing CA as well as practicing LLB. But if you want to enter into a partnership with the CIMA, means foreign professionals, ACCA, CPA, you are not allowed to have a foreign professional partnership with you. You cannot have a partnership with the foreign professionals, where we are going to understand we will understand about that in our clause number 4, schedule number 1, para number 1 or part number 1 of CA Act 1949 in our Code of Ethics, Professional Ethics. तो foreign professionals के साथ you cannot have a partnership firm, but with these professionals you can have a partnership firm. 53A, 53B list में these people and these professional bodies are listed. That you will understand after the company audit. Immediately we'll be starting with the professional ethics. There will be understanding. So what are the 4 features? Qualification: majority of the partners must be practicing in India. There's no limit on the maximum number of partners. You can enter a partnership with a non-practicing CSL, and nowadays you can have a multidisciplinary partnership firm with those professionals who are listed in section who are listed in regulation number 53A in the Code of Ethics, Professional Ethics chapter. There we will understand, but you cannot enter a partnership with the foreign professional. This is called your qualification to be a practicing firm of chartered accountants in India as a partnership firm. All these rules which we have understood in the partnership firm are equally applicable to the LLP as well. In the LLP, there are some extra rules you have to understand. First of all, it must be an Indian LLP. You cannot be a foreign LLP coming to India and start practicing in India. No, you cannot be qualified as an auditor if you're a foreign LLP. You have to incorporate a new Indian LLP in India, then only you are eligible. Now, let's say, for example, Deloitte is able to do the audit in India because it is Deloitte India LLP. Are you getting the point? So it has to be a Indian LLP. Next point. Only individuals are allowed to be the partner in case of LLPs. Only individuals. Means another entity cannot become the part of LLP. Only individuals are allowed. And whether you are a sole proprietor, LLP or partnership firm of practicing CAs, you all have to register with whom? ICAI. And ICAI allots you one firm registration number which you have to quote whenever you are signing the audit reports along with the UDIN. So these are the qualifications under section 141 subsection 1 and 141 subsection 2, qualification of a sole proprietor auditor and qualification of the firm of auditors. Is it crystal clear, everyone? Yes. Now the most important part from where I think hundreds and thousands of questions can be drafted, that part is known as disqualifications of an auditor. Now we are going to understand some 11 different types of disqualifications in which I'll be throwing some light on those particular areas where most of the students fail to answer that in the examination. So first let us start with a very simple disqualification. The first disqualification is a body corporate or a company except what LLP. In India, if you want to practicing as a CA or if you want to be qualified as a CA or if you want to be qualified as an auditor in India, either you can practice in the sole proprietorship firm, LLP firm or partnership firm. These are the 3 things which are allowed. Body corporate of a practicing CAs and a company of a practicing CAs are not allowed. Why the word except LLP is written? Because LLP is a part of definition of body corporate. That's the reason LLP is exempted from that disqualification, because you are allowed or you are qualified to be an LLP in India. So what is the first disqualification? You are not allowed to be a body corporate or a company of chartered accountants. You cannot open a company of chartered accountants like in the form of limited or private limited company, or you cannot be a body corporate of chartered accountants. Next point, you are not allowed to be the officer or employee of the company in which you are an auditor. The company's engagement, when you get engaged as a statutory auditor in one company, you are not allowed to hold any officer designation or employee designation in that company. Not only in that company, in its holding company also, in its associate company also, in its subsidiary company also, and another subsidiary of the common parent also. In all these group of companies, if you are holding any officer or employee designation, suppose you are an auditor in this company and you are holding an employee or officer designation in its holding company, then also you are disqualified. Not only you, your partner and your firm, whole firm will be disqualified. You are disqualified if you are holding that position in associate company, in a subsidiary company or another subsidiary of the common parent. Now the biggest question arises, sir, employee definition we know. Employee means you are under an employment contract. But sir, what do you mean by officer? Officer means manager. Officers means KMPs. Officer means director. Officer means shadow director. Sir, what do you mean by KMPs? KMP means MD, CEO, CFO, whole-time director, company secretary. If you are holding any of these designations, or if you are holding any employment with the company in its holding or in its subsidiary, in its associate or another subsidiary of the common parent, you, your partner and your firm will be immediately disqualified to be the auditor. Vacation will take place. You have to vacate the office immediately, and section number 139 subsection 8 casual vacancy will arise, because one of the reason of the casual vacancy is also a disqualification. So first one, you are not allowed to be a body corporate or a company except LLP. Second thing, you are not allowed to be holding any officer or employee position in the company and in its group. What is employee, that you already know, and what do you mean by officer, that I have explained. This is the definition of officer. Next point, sir, in the second disqualification may you are getting disqualified because you are going to be an employee or you are going to be what? Officer in the company. But in the third disqualification, you are not allowed to be under the employment or in partnership with officer or employee of the company and its group. In the second one, you were becoming the officer and employee and you were getting disqualified. But in the third one, you are not directly the officer and employee. You are in employment with or in partnership with officer or employee of the company. So let me give you one explanation here. Say for example, A and B Co, a chartered accountancy partnership firm, is an auditor of XYZ Limited. In the XYZ Limited, Mr. Q is there, who is the MD of this company. Now, being the MD of this company, Mr. A of the ABC and Co is in partnership with this MD of the company. So A is not officer and employee in the company. A is in partnership with the officer and employee of the company with Mr. Q. Now also A is disqualified, B is disqualified, the whole firm is also what? Disqualified. So you are not only going to be an officer and employee, you are also not allowed to be in partnership with or be in employment with officer and employee of the company. And the rule does not only apply to company, here also the rule applies to the company, its holding, its subsidiary, its associate and another subsidiary from the common parent. Are you getting the point? Remaining examples are given below. You can attach this example with the above provision and you will come to know that why I have used the word called disqualified here. So interpretation, what does the interpretation says? That if you are in partnership with or you are under an employment with whom? With the officer or employee of the company, not only the company, its holding, associate, subsidiary or another subsidiary, you, your firm, your partner will be immediately disqualified. So total 3 disqualifications we have understood. The next disqualification is very important disqualification, that is called indebtedness to the company for goods and services for more than what? 5 lakhs. If you are at any point of time for any period of time, again repeating, try to understand my language. If you or your partner or your firm is indebted to your client or its holding company or its subsidiary company or its associate company or another subsidiary of the same common parent for any period of time, even for a single second, if you are being shown in the debtors, if you are shown in the books of accounts as a debtor, indebted to your client for more than 5 lakh rupees, not greater than equals to 5 lakh rupees, the biggest dumping area where the students fail to answer this examination, they do not understand the differentiation between more than and more than equals to. Here exactly 5 lakhs of indebtedness is not going to disqualify you, but if it is 5 lakh 1 rupee, you will be immediately disqualified. Even for a single moment you have come under as an indebted to your client for more than 5 lakh rupees for goods and services of your client. So let's say for example, I bought one flat. In my flat 8 air conditioners are required and one of my client is the manufacturer of air conditioner. So suppose I am supposed to get 8 lakhs of audit fees from my client and one air conditioner which is costing me in the market is also 8 lakhs. So I told to my client that why should I give the business to any outsider? Let me give the business to you. So I bought the 8 air conditioners from my client only, client company only. And I told him that, ki don't give me the audit fees. We will adjust it. We'll set off it. I'm not asking any favor from my client. I'm not asking any discount from my client. Same market price which is affecting me. Suppose 1 lakh rupee per AC is the price which I have to pay in the market. Same price I'm asking for my client. So my client is ready to set off that. But what is the date today? The date today is 16th March. What is the date today? 16th March. But my audit will start in the month of April or May for the financial year 21-22. From the date of 16 March till 31st March, I'll be shown in the books of accounts of my client as a what? Indebted debtor for 8 lakh rupees. But when my audit will start, they will do the journal entry. Audit fees account debited to debtor 8 lakh rupees. They will pass the adjustment entry after the audit starts because audit not yet started. So for these 15 days, I have been shown as a debtor in my client's books for 8 lakh rupees. Even though after 15 days on 1st April, when I'll start doing the audit, they will do the set off. But that is going to happen in the April. Till 31st March, I will be shown as a debtor for a single second also. If you come in the books of accounts, for how many lakhs I have been shown as a debtor? For more than 8 lakhs. And I'll be immediately disqualified if my indebtedness towards my client for the goods and services is more than what? 5 lakhs. Are you understanding my point or not? Yes. So exactly 5 lakhs, you are not disqualified. More than 5 lakhs, you are immediately disqualified. But at the same point of time, what the law is saying, sir, getting the advance audit fees and getting the progressive audit fees does not disqualify you. You can take the advance audit fees. You can take the progressive audit fees. That will not disqualify you. Say for example, today, that is 16th March, I'm asking the, 8 lakhs of my audit fees in advance. So that will be shown as an advance to the auditor. I will not be shown as a debtor for goods and services. Are you understanding the logic? If I'm using the goods and services, taking the goods and services of my client in the previous example, like I bought 8 air conditioners of 1 lakh each, it was indebtedness. But taking the advance audit fees, taking the progressive audit fees is not indebtedness. If you are taking your advance audit fees or audit fees in the progressive manner, that will not disqualify you. So I hope each and everything is crystal clear when it comes to this disqualification. Are you understanding the point? And this disqualification also will get attracted in the company, in its holding, in its subsidiary, in its associate, and another subsidiary of the common parent. Rest remaining for each and every topic, I have given the suitable examples. So you will be able to correlate after watching this video. When you will see these notes, you will be able to understand this example as well. Are you understanding what I'm saying? Yes or no? Yes. Now, what is the next example? The next disqualification is if you are indebted to or on the behalf of your client. If you are indebted to your client company or on the behalf of the client company for guarantees and securities, not for goods and services, now for guarantees and securities more than what? 1 lakh. So sir, how to remember GS, goods and services for more than 5 lakhs, guarantees and securities for more than 1 lakh. Now let's say for example, my client is ABC Limited. This ABC Limited went to the SBI for a loan of 1 crore rupees. SBI rejected the application. SBI is saying we need a guarantee. Now I am the auditor of my client ABC Limited and I am also a very good friend of SBI manager. My client knows this fact. So my client forced me to go to the SBI and give the guarantee on this 1 crore of loan. Now, when I'm giving the guarantee on this 1 crore of loan, what does that mean? We all know the contract of guarantee. I became a surety now. For my client, I gave the guarantee to the third party, that is SBI, on the behalf of my client. And what is the amount of guarantee? 1 crore. If my client will become defaulter, who will pay that money? I have to pay that money. It means I'm indirectly compromising my IOI. Integrity, objectivity, and independence. That is what we don't want. So it means the moment this kind of situation is coming, you are immediately disqualified. And in case of securities and guarantee, limit is not more than 5 lakhs. It is more than 1 lakh. Now here I gave a guarantee to the third party on the behalf of my client. Now let's do another example. If my client is a finance company, and one of my close friend, Mr. Y, came to this company and wanted to take a 1 crore of loan. Now my client is asking Mr. Y, do you have any surety or not? Here he's a very good friend of me. So he told me, why don't you give a guarantee on my behalf? I gave a guarantee. So when I gave a guarantee, what happened? I became indebted to my client now on the behalf of third party. So either you give a guarantee to the third party on the behalf of your client, or you give a guarantee to the client on the behalf of the third party. In both the cases, if the guarantees or securities are going to be more than what? 1 lakh rupees, you, your partner, your firm will be immediately disqualified. Are you getting the point or not? So I hope you understood the difference between the fifth disqualification and the fourth one. In the fourth one, it was a disqualification relating to goods and services, and the limit was more than 5 lakhs of indebtedness. And here the indebtedness is for guarantees and securities, and the limit is more than 1 lakh. Clear, everyone? Now let's move to the sixth one. Very, very important. If you, your partner, are holding any kind of security, what do you mean by any kind of security? Equity, preference, debenture, bond, commercial paper, deposit, any kind of security of any value, even a single rupee, in your client company and any of the company in its group, you, your firm and your partner will be immediately disqualified. It means you, your partner, your firm is not allowed to hold even a single rupee of security. That can be equity share capital, preference share capital in your client's company. The moment you will hold it, moment is the last moment, your firm will be immediately disqualified, not even a single second. So if you, your partner, is holding any security of any value in the company, company means client company is holding, company is subsidiary, anywhere, you will be immediately disqualified. Yes or no? So immediate disqualification will take place. Not even a single moment will be taken. But, in case your relatives are holding, relatives, not relative. In case your relatives are holding any security up to rupees 1 lakh of face value, then in that case, you are not disqualified, nor your firm is disqualified, nor your partner is disqualified. So relatives के case में disqualification does not attract if your relatives are holding up to rupees 1 lakh of face value of the security. What is the major point? Face value of the security. Are you understanding what I'm saying? But if your relatives are holding more than what? 1 lakh, it means if it will cross 1 lakh 1 rupee, the moment it will become 1 lakh 1 rupee of face value, you, your partner and your firm will be immediately disqualified. No, disqualification will attract, but after 60 days. In your and your partner's case, में immediate disqualification if you are holding any security of any value. But in relatives case, if it is more than 1 lakh of face value, then also disqualification will come, but not immediate. You will be disqualified, your partner will be disqualified, the whole firm will be disqualified, but after 60 days. Now the question arises, sir, relatives के case में why it is 60 days given? It is given 60 days because you can take corrective measures to bring the level of your relatives' investment up to 1 lakh. Suppose your wife is holding or your husband is holding. You can tell them to bring it to the level of 1 lakh. 60 days time period the government has given to you. Otherwise, you will be immediately disqualified. On 61st day, if this still their holding is more than 1 lakh rupees, you, your partner, your firm will be disqualified. So what is the conclusion? In case of you or your partner holding any security of any value, immediate disqualification. But in relatives के case में up to 1 lakh of face value, no disqualification. But if it is breaching 1 lakh of face value, not immediate disqualification, but after 60 days. You have been given 60 days to take the corrective measures. Are you understanding what I'm saying? Yes. Now the biggest question arises, sir, who is relative? That is the biggest problem. I will give you the solution within 1 minute. Now try to understand me. Little bit funny, but I think you will be able to enjoy it. Now, any co-partner of the HUF, any co-partner of your HUF family will be known as a relative. Any co-partner will be known as a what? Relative. But other than that, there are 14 persons you have to remember. Who is always here? Spouse. Who is always above you? Mother, father. Who are always parallel to you? Brother, sister. Who are below you? Son, daughter. Mother, father, brother, sister, son, daughter, your spouse. 6 people are over. Mother, father, brother, sister, son, daughter, spouse. 7 people are over. Stepmother, stepfather, stepbrother, stepsister, and stepson. 5 more added. 12 people are over. Are you understanding? Mother, father, brother, sister, son, daughter, stepmother, stepfather, stepbrother, stepsister, stepson, and spouse. Total 12 people are over. Son's wife and daughter's husband. Correct enough? So, spouse, mother, stepmother, father, stepfather, brother, stepbrother, sister, stepsister, son, stepson, but no stepdaughter, only daughter, son's wife and daughter's husband. These are the 14 people will be covered in the definition of relative. So, if my father-in-law is holding 2 lakhs worth of face value of securities in my client company, am I disqualified? Answer is no, because father-in-law is not covered in the definition of relative. But if my father is holding, yes, after 60 days, me, my partner and my firm will be immediately disqualified. Are you understanding what I'm saying? So this is the definition of relatives you should know. So 14 people are there. Mother including stepmother, sister including stepsister, father including stepfather, brother including stepbrother. Don't get mistaken by the step spouse. Spouse is only one. Okay. So son including stepson, but there is no stepdaughter, only daughter. Son's wife and daughter's husband. So these are the people who come in the definition of relative under section 2, subsection 77 of the Companies Act 2013. So with that, your 6 disqualifications are over. Now, the next disqualification is a very important disqualification under clause G, section 141, subsection 3, clause G, 7th disqualification. If you are breaching your ceiling limit of doing the company audits, if you are breaching the ceiling limit of doing the which audits? Company audits. Now the question arises, so what do you mean by ceiling limit? One practicing CA in one financial year cannot do more than 20 company audits. So this is a ceiling limit of company audits, not audits, company audits for a practicing chartered accountant in one financial year. It means I can do n number of partnership firm audits, I can do n number of society audits, trust audits, sole proprietorship audit, but when it comes to company, I cannot do more than 20 company audits. That is a single practicing CA's limit. But once we become a part of the firm, it turns into a limit of a firm, not the partner. Are you understanding the point? Say for example, in my firm, 3 partners are there. All 3 are practicing CAs. So it will be 20 plus 20 plus 20, 60 limit of the total firm. How much is the limit? 60 will be the limit of the total firm. Are you understanding what I'm saying? So see, ceiling limit of doing the company audit. It is for practicing chartered accountant per financial year. A practicing CA cannot perform more than 20 company audits in one financial year. But if you are doing the audit of OPC company, small company, dormant company and those private companies whose paid up share capital is less than 100 crores, they are not covered in the list of 20. They will not be counted. They will not affect your ceiling limit of 20. As many OPC companies audit you can do, as many small company audits you can do, as many dormant company audits you can do, as many private limited companies audit you can do whose paid up share capital is less than 100 crores. But make sure that that private limited company should not have defaulted in either filing the financial statement under section 137 or filing the annual returns under section 92 with the ROC. It means those private limited companies which are having a paid up share capital of greater than equals to 100 crores are covered and are going to affect your ceiling limit. So when the ceiling limit is not getting affected by the private companies, if the paid up share capital of such private limited company is less than what? 100 crores. And at the same time, they should not have defaulted in 92 and section number 137. You can see it over here. Yes or no? Yes. It means if you are doing the audit of the public companies, it will affect your ceiling limit. If you are doing the audit of private companies whose paid up share capital is greater than equals to 100 crores, it is going to affect your ceiling limit. If you are doing the audits of section 8 company, it will affect your ceiling limit. If you are doing the audit joint audits, it will affect your ceiling limit. If you are doing the government audits, that will affect your ceiling limit, government company audits. And if you are doing guarantee company having share capital audits, that also will affect your ceiling limits. So all these audit affects your ceiling limit, but these audits do not affect your ceiling limit. But remember, in the private limited company, you only and only have to catch paid up share capital, not the issued capital or subscribed capital. Are you understanding what I'm saying? So those private company whose paid up share capital is less than 100 crores, not less than equals to, less than 100 crores, exactly 100 crores equals to 100 crores will affect your ceiling limit. Is it clear to all of you? Yes or no? Yes. Next one. If you are a partner in multiple firms, then put together your ceiling limit shall not be more than 20. Are you getting the point? Now in my firm, suppose 3 partners are there, A, B, C. All 3 are practicing CA. So what is the ceiling limit of the firm? It is 60. But in my firm, suppose A, B and C is there, but C or B is a non-practicing CA. Then in that case, my ceiling limit will be 40 because this ceiling limit is for a practicing chartered accountant. And remember, as per Income Tax Act 1961, your ceiling limit of tax audit is 60 per practicing CA. How many tax audits a single practicing CA can do? 60 tax audits. But ceiling limit of company audit is 20 tax audit. And remember one thing, if suppose this is the example, A, B, C, D, E and Co, total 5 partners are there. It means how many company audits we can do? 100 company audits. A is in Goa. He is taking care of his holidays. B is in US. C is in Canada. And D is having a marriage. So no one is available in the office. Only E is available in the office. Only one partner is available in the office. Can he sign all the audit reports? Answer is yes. There is no harm when a single partner can sign all the 100 company audit reports. Sir, why sir? You told only 20 now. That is your individual ceiling limit. Now you are no more an individual. You are a part of the firm. And when you sign the audit report as a firm, appointment letter never comes in your name. Appointment letter comes in the name of firm. Whenever you sign it on the behalf of the firm. And firm limit is 100. You are just a signing authority. So yes, single CA, practicing CA, who is a partner of that firm, can sign all audit reports if the other auditors or the other partners are not available. The answer is yes. Same thing applies to the tax auditor also. So there is no harm if no one is available or only you are available, you can also sign the audit reports. Crystal clear? Yes or no? I hope everything is clear to all of you. So that brings an end to our 7th disqualification as well. So if you are breaching the more than 20 company audit ka ceiling limit, then you are disqualified. And do you remember that same disqualification ka declaration we are also giving while doing the appointment? Ki I am not breaching my ceiling limit. I am well within my ceiling limit. So one question below is given on the ceiling limit. Now you can see that what is this question? Now ABC and Co means 3 partners are there. 3 partner means how much is the company audit limit? 60 company audit limit. ABC and Co is already having 58 audits. What are those 58 audits? In this 58 audits, 29 are public company already, 8 are cost audit, 4 are private limited companies whose issued share capital, not paid up share capital, issued share capital is 400 crores each. 7 branch audits are there, 3 government company audits are there, 2 charitable trust audits are there, 3 foreign company audits are there, and 2 joint audits are there. Mr. A of ABC and Co is also running his sole proprietorship, A and Co, where he is doing 17 audits. Out of 17 audits, 4 are public company audit, 3 are religious society, 2 are guarantee company having share capital, 4 are branch audit, and 4 are what? Tax audits. Now listen to me very carefully. These are the companies which are waiting outside ABC and Co to be their auditor. Are you getting the point? Whether ABC and Co can accept all these audits or not. Now I'll tell you, when these kind of questions will come in the examination, how you have to do. So I think you all can see the question now. ABC and Co mein how many partners are there? 3 partners. It means 60 company audit is the ceiling limit. Am I correct? So we have to keep that in our mind. Now ABC and Co is already having 58 audits. Now in the 58 audits, 29 public companies are there. Yes, this will affect your ceiling limit. But 8 cost audits are there. Cost audit is not a company audit. Therefore, we have to concentrate on this list. What is this list? Public company, private company whose paid up share capital is greater than equals to 100 crore because less than is not covered under ceiling limit. Section 8 company, joint audits, government audit, government company audit, and guarantee company having share capital. All these are those things which affects your ceiling limit. Now let's come back to the question. Is it cost audit written over there? No. So 8 cost audit are not covered in your ceiling limit. So I'm going to take it as a 0. 4 private limited companies are there whose issued share capital is 400 crores each. Yes, sir, it is to be counted. But did I tell you the issued share capital or paid up share capital? Paid up share capital. It means these 4 private limited companies also I'm going to take it as 0. 7 branch audits also I'm going to take it as a 0. But 3 government company audits, yes, it affects my ceiling limit to 29 plus 3, 32. 2 charitable trust. Most of the students fall in this trap. They think that charitable trust is a Section 8 company. But who told you that it is a Section 8 company? It is not a Section 8 company. It's a charitable trust. So being a charitable trust, it is not a Section 8 company. It's a trust. If it is a charitable company written, I will consider it as a Section 8 company. So no, it will not affect my ceiling limit. I will take it as a 0. Now, 3 foreign companies. No, it does not affect my ceiling limit. I'll take it as a 0. 2 joint audits. Yes, it does affect my ceiling limit. So I will take it as a 2. So in total, 34 so far out of 58 are covered under my ceiling limit of company audit. But you know that Mr. A is also running its sole proprietorship where he is doing how many audits? 17 audits. Out of which 4 are public. Yes, his ceiling limit in his own firm also will be counted for ABC and Co. because he is a partner in ABC and Co. Therefore, 34 plus 4, 38. Sir, here 3 religious societies are there. Is it 3 religious company? If it is written company, I'll treat it as a Section 8. But it is written 3 religious society. So, bhaiya 0. Again 38 only total. 2 guarantee companies having share capital. Yes, it affects my ceiling limit as per the inclusion list which we have done above. So it is 40 now. 4 branch audit 0. Therefore, it is still 40. 4 tax audit does not affect because we are talking about company audit ka ceiling limit, not tax audit. So it is still 40. It means ABC and Co put together with A and Co still has exhausted only 40 company audit ka ceiling limit. It means still they have 20 more to accept. They can accept 20 more because what is this firm having 3 practicing CAs? Now, these are the list of companies which are sitting in the office of ABC and Co. to make their statutory auditor. So let's analyze this. MNO Limited, it's a private company or a public company? Sir, public company. Therefore, it will affect my ceiling limit. Yes, the 40 plus 1 makes it to 41. PQR Limited again is a public company. Yes, it will affect. It will become 42. I can accept it. RST Private Limited, whose paid up share capital is exactly 100 crores. Exactly 100 crores. Yes, it affects the ceiling limit. If it is less than 100 crores, no. So it means 42 became 43. 5 Section 8 companies audit came. Now it is not a trust or society. 5 Section 8 companies are there. The 43 plus 5 makes it to what? 48. 7 joint audits are there. Yes, I can accept 7 joint audits also. The 48 plus 5 makes it to 55. 1 UVR Limited is there. Again, public company. Yes, it is 56. Still 4 are there. 8 cinema hall audits are there. PVR Cinemas. 18 branches of PVR Cinema Hall. Branches. It will be considered as 1. It might have been under 1, but branch audit is not covered. Therefore, 56 will remain 56. And 4 government company audits. Now it is 60. It means yes, ABC and Co. can accept all these company audits. Are you understanding the ceiling limit ka relevance? So why I'm stressing more on ceiling limit? Because yes, you may get a separate question on that. Did you get the point? So with that, our 7 disqualifications are over. Now the next disqualification, 8th disqualification. You, your partner and your relative. Now relative word is added here. You, your partner and relative should not be the director, should not be the KMP in the company. Here, no group testing will be done. We don't have to check this disqualification in the group, because in the group, it is already being tested in the clause number 2. B clause mein, you or your partner should not be the officer or employee in the company. That has already been tested over there. But here relative is added. Their relative was not there. It means you, your partner or your relative should not be the director or KMP position in the company. It means you are not allowed to be the employee, director, KMP. None of that is allowed. Your partner is also not allowed to be the director, KMP and employee. But relative के case में only director and KMP will disqualify you. It means relative can become what? Employee in your client company. Now, let's do this chart. Employee one side, director KMP one side. Now we are talking about you as an auditor. You are disqualified. You are disqualified. Your partner, you are disqualified if you are an employee. You are disqualified if you are director and KMP also. But your relative, if an employee, not disqualified, you are qualified. Because employee never participates in the decision making. That's why relative के case में director and KMP is only considered. Are you understanding? But if your relative is a director or KMP, then you are disqualified. But this also we have to check in the main company, not in the group of that. If your relative is a director or KMP, not in the company in which you are an auditor, it is director or KMP in the holding subsidiary, associate or another subsidiary, then also you are qualified. You are not disqualified. Director and KMP in case of relative should be only and only tested in case of the main company in which you are an auditor, not in the group company. But you and your partner के case में it will be tested in everywhere, employment also and director and KMP position also. But relative के case में employment is allowed, director and KMP is not allowed, that too in the main company not allowed. They are qualified. You are qualified if he is a director in case of holding subsidiary, associate and another subsidiary. I hope you all understood. Especially in this clause, we are not doing the group testing. Try to understand. You are disqualified, your partner is disqualified, relative is disqualified if you are holding director or KMP in the company. But relative can be an employee. Nowhere it is written employee. So yes, relative can be an employee. In that case, you are qualified. Because employee never participates in decision making. Therefore, you are qualified. But director and KMP participate. Therefore, you are disqualified. Did you get the point? Yes. Now, ninth is also a little bit different because in the group we are going to add one more thing. You and your partner, and I would like to say relative also. You and your partner and relative should not establish any business relationship with the company. If you, your partner or your firm or your relative are establishing any business relationship with your client, and client means company, it's holding, subsidiary, associate, another associate. What is this? Subsidiary of an associate also added. What this is the extra point here. Subsidiary of an associate is also added. Now the biggest question arises, sir, business relationship means what? Business relationship means commercial relationship. It means if you are an auditor in a company and you are establishing a B2B relationship with your client, you are immediately disqualified. But B2C relationship mein you are qualified. So let me give you the example. I am the auditor of Airtel Limited, Bharti Airtel Limited. But I am also using the SIM of Airtel. I am using the SIM, telecommunication services of Airtel. Am I disqualified? Or my firm is disqualified? Or my partner is disqualified because we are using the Airtel communication network? Answer is no, because I am using the Airtel SIM as a customer. So it is a business to customer relationship. I am qualified. This will not be termed as a business relationship. Are you understanding the point? But if I have my own company, I am the auditor of Bharti Airtel Limited. I have my own company where I am manufacturing the SIMs and I am delivering, I am supplying those SIMs to my client. Now in this case, you tell me it is a B2B relationship. Therefore, I am disqualified. I can stay in Taj Krishna, Taj Group of Hotels if I am the auditor of Taj Group of Hotels. As a customer, if I am staying, no problem. But if I am providing any business relationship with the Taj Krishna Group of Hotels, then in that case, I am immediately disqualified. So B2B mein you are disqualified, but B2C mein you are qualified. But what is the extra point we found here? We are going to test this business relationship not only in these 5 companies. Now, what is the extra point added in this 9th disqualification? That is subsidiary of an associate also will be tested here. Is it crystal clear to all? Yes or no? Yes. समझ में आया? Yes. Next. You, your partner and firm, if committed an offense involving which a fraud crime. Which kind of crime? Fraud crime. If you, your partner or a firm committed an offense of fraud and you were convicted for such offense, convicted means sent to jail, and 10 years have not elapsed since such conviction, you are disqualified indirectly for 10 years. If you have been convicted for an offense relating to fraud, then in that case, you, your partner and your firm will be disqualified. Remember, when NCLT disqualifies you, when NCLT removes you before the expiry of the term, section number 140 subsection 5 in the previous video, he was disqualifying you for up to 5 years. But here court is involved. Who is involved? Court is involved. When NCLT gets involved, disqualification of maximum 5 years. But when the court is involved, minimum disqualification of 10 years if it was committed an offense of a fraud kind of nature and you were convicted for that. If you, your partner or firm committed an offense involving fraud and convicted, and 10 years have not elapsed since such conviction, then you are disqualified for 10 years because whose order it is? Court order. So remember, NCLT under section 140 subsection 5, when it is removing you before the expiry of the term, there the disqualification, there also fraud is involved, but there the disqualification is up to maximum 5 years. Here NCLT is not removing you, court removing you. The court order will be valid for 10 years. It means you have to wait for 10 years to again come into the market and do the practice again. So suppose in 2008, Mr. A, say for example, Mr. A, the auditor of Satyam scam, the one who was involved in Satyam scam, Mr. A, he was jailed for 9 years. It means he will come out of the jail in 2017. How many years he served in jail? 9 years. But what is the total disqualification? 10 years. It means even in 2017, even though he came out of the jail, he is still what? Disqualified. He will become qualified only from 2018 onwards. 10 years must elapse. And suppose Mr. A of Satyam scam was jailed for 12 years. But sir, you to say 10 years now. Jailed for 12 years, it can be jailed. Okay, sir. So means 2018 mein this Mr. A will be qualified again? No, he's still in jail. What is his jail term? 12 years. When did he go to the jail? 2008. It means when he'll come out of the jail? 2020. So after coming out of the jail, now he'll be qualified. But sir, you to say 10 years, so it means you will get your audit report signed in the jail. Will you go to the jail? Number 123, Caddy number 420, sir, please sign the audit report like that? No. 10 years of disqualification or service of imprisonment, whichever is later. Minimum 10 years, maximum service of imprisonment. After that only you will be again qualified to do your practice. Is it crystal clear? Yes. And 11th and the most important disqualification, that is called, if you are a statutory auditor of a company. If you are a statutory auditor of the company, you are not allowed, you are prohibited. You are not allowed, you are prohibited under section 144 to provide any of these services. If you found guilty of providing any of these services under section 144, 144 talks about prohibited services, which you are not allowed to provide if you are an statutory auditor of a company. So along with being a statutory auditor, you are not allowed to provide internal audit. So statutory auditor cannot be the internal audit, cannot be the cost auditor, cannot provide actuarial sciences services, cannot provide investment banking, investment advisory, management consultancy services, agency functions, cannot be involved in the bookkeeping system, cannot be involved in the accounting system, cannot be involved in the financial information system, cannot be providing portfolio management services, and cannot be providing underwriting agreement services. If any of these services you are guilty of being provided under section 144, being the statutory auditor, along with being the statutory auditor, if you are guilty of providing these services, you are immediately disqualified, vacate the office, and 139 subsection 8 will take place. अगर government company है, तो let it be any reason याद है, and if it's a non-government company, reason is other than resignation. With that, our section number 141 is already over. So 141 mein what we did, everyone, very important section. What we have learned, almost it took 1 year to revise, 1 hour, sorry, not year, to revise this complete section. The 141 subsection 1, subsection 2, which talks about qualification, and 141 subsection 3, which talks about disqualifications. Is it crystal clear to all of you? Yes. So I hope this video will help you out in doing the revision of this particular section also. So I'll see you in the next video with the section number 142 to section number 148, because I think the majority of the sections which we are left with another 2 hours of session, so we need to revise those sections. So maybe from 142 to section number 148, we'll be able to revise it in the next 2 hours sessions, because I'm keeping these videos very short so that it will be easy for you to revise it. So 1 hour video each I'm trying to make it. So 142 to 147 we'll do it in the next session, and in the next session we'll dedicate 148 and 143 के some parts, except 143 subsection 11. Everything I'm going to revise here, because 143 subsection 11 talks about CARO 2020. That will be our after professional ethics when we'll do the 700 series. So that time I will make you revise in the audit report chapter. Okay, so audit reporting mein CARO 2020 also will understand. We'll revise it. We'll have a dedicated session on CARO. Along with that, 700 series also will wind up. But after this company audit, after the books of accounts, and after the dividend, I would like you to take you towards the revision of professional ethics. The professional ethics, these 3 chapters, books of accounts, company audit, dividend, and audit reporting put together is going to fetch you 40 marks in the examination. Minimum 40 marks of revision will be over. After that, we'll take the other separate chapters like audit committee, corporate governance, due diligence, forensic, and whatever the sequence we will be into. Peer review, quality review, PSU audit, and you can see internal audit, management audit, audit of banks, insurance, and BFC. So one by one, we'll keep on. And maybe in future, the videos you will be finding that will be more than 1 hour also, because there are some topics which you cannot leave in between. These are section based. So yes, we can do the revision as per the particular section. But yes, if you are still thinking that it is taking a lot of time for you to revise, do play this video at 1.5x speed if you want to revise it in half of the time. Are you getting the point? So thank you so much everyone for lending your patient ears. I'll again borrow it in the next video. Bye bye everyone. Take care. Hello my dear students, welcome you all to the another lecture on CA Final paper number 3, Advanced Auditing and Professional Ethics, RRB batch for May 22 and November 22 students. So as you all know that up to the previous session we have done sections up to 141, where we in the 139 we have already covered appointment, casual vacancy, and rotation of an auditor, and in the section number 140 we have covered resignation and removal, and section number 141 may we have already covered qualification, disqualifications, and eligibility. Right now we are left with a very small section, so let's wrap up this company audit as soon as possible. So section number 142 everyone. In the section number 142 we are going to talk about the remuneration of the auditors. Now see, when we talk about the remuneration of an auditor, you have to understand it very carefully that when we talk about the remuneration is always determined by the shareholders in the annual general meeting. But if you are a first auditor, of a which company, of a government company, then it will be determined by the C&AG. Subsequent audit of the government company, it will be determined by C&AG. First audit of the non-government company, as you all know that, will be appointed by the board of directors. Therefore board of directors, and generally in all other cases members in the AGM will determine your remuneration. So who determines your remuneration? In most of the cases members determine your remuneration in the AGM where you have been appointed. Right, next point. Sir, what does the remuneration include? Remuneration includes your audit fees, advisory fees, plus all those expenditures which are incidental in conducting an audit. What do you mean by that? Traveling expenditure or fooding, lodging, if you went outside for the inspection of any stock, or you went outside for a factory visit, whatever the fooding, lodging expenditures will be there, all that expenditure also will be given to you by whom? By the client. So it is also a part of your auditor's remuneration. Clear? Next point. Sir, in the remuneration section number 142, how the client is required to disclose the remuneration in his books of accounts or in his financial statement. So as per schedule number 3 of Companies Act 2013 under part B, as you know that schedule 3 is divided into 2 parts, part A, part B. Part A talks about the balance sheet, part B talks about the P&L statement. So as it is the expenditure of the client, the client in his schedule 3 part B, that is P&L statement, he has to show the remuneration as this. So he will put an heading as auditor's remuneration. As you all know that as per schedule 3 there are minimum 2 years information is required. So current year auditor as well, current year like auditors remuneration as well as last year auditors remuneration. Under the auditors remuneration, you will find that there are two subheadings: how much remuneration he collected as an auditor and how much remuneration he has collected as an advisor. Remember one thing: advisory fees and the audit fees shall not be clubbed together. It will be clubbed together as a total money, but shall be shown separately under the subheadings: how much money he has received as an auditor and how much money he has received as an advisor. So in this, as an auditor, only his statutory fees will be counted, and as an advisee, if he has done any IT work, GST work, or any kind of ROC work related to his client, those kind of things are also going to be included as an auditor. So this what brings an end to our very small section called section number 142. Now came the most important section, that is called 143. In the 143, total up to 15 subsections are there. When we talk about the section number 143, subsection 1, that comes to duty to inquire. Then section 143, subsection 3, that is to duty to express an opinion on certain matters. So here one amendment has come. Here in this section, one amendment has come, and another amendment, the biggest amendment you already know, in the section number 143, that is CARO 2016 has been replaced by CARO 2020. So that I already told you, we are going to cover it in our auditors report chapter. And section number 143, subsection 12, duty to report the fraud. Here also the amendment has come, right? The amendment relating to penalty has come, and there are so many other residual provisions also in section number 143, like section number 143, subsection 5, subsection 6, and subsection 7, that is relating to the PSU audit, government audit, may test audit, supplementary audit, that will understand in the audit of PSUs may. And in 143 also we have subsection 9 and subsection 10, where the duty of the auditor is to follow the standards on auditing. Are you getting the point? Then we have subsection 4, where you have to give the duty to report the reasons in case of modified opinion. So like that, small subsections are there. But in 143, major these 4 sections are the sections which you have to concentrate upon. So let us understand and finish off the first section or first subsection of 143, that is called section 143, subsection 1, duty to inquire. Now, when we talk about section 143, subsection 1, duty to inquire, the first and the most important thing you all have to understand one thing is, these are the 6 matters on which duty to inquire is the obligation on an auditor. Means what? If any of these 6 situations comes in front of an auditor, then auditor has a duty to inquire this matter. Situation number 1, if the auditor sees that client company has given any loans and advances. Remember, this point is not taken loans and advances. It is not on your borrowings, it is on your advances. If your client company has given any loans and advances, has granted any loans and advances, the first duty to inquire on the auditor in this case is, he has to check whether the loans are properly secured or not, and the terms and conditions are regular or not. Should not be against the company, it should be detrimental to the, it should not be detrimental to the company, it should not be prejudicial to the company, it should be in the favor of the company. Say for example, company was having some idle funds. If they will deposit that funds in the bank as an FD, they could have earned 8%, but instead of that they gave the loan to one of their directors, which earned only 4% for them. So there is exactly a 4% interest loss for the company. A company could have earned more, but they did not earn more. Why? Because the terms and conditions of that loan given to the director was prejudicial to the company. So remember one thing, whenever your client company gives any loans and advances or grants any loans and advances, that duty to inquire on the auditor is to check that whether it is properly secured or not, proper enough security has been given or not, and the terms and conditions of the loan must be on regular basis. These should not be against the interest of the company. Second duty to inquire under section 143 subsection 1 is, purchase and sales are not mere the book entries. You might be aware of the fact that when the year end closing comes, the most of the companies are in the race of showing their best purchases and best sales. Means their figures should be more, so that they can impress the bankers and lenders to get the more and more investments and to get the more and more loans and advances. So in the race of that, sometimes during the year end, they do the bogus sales and they do the bogus purchases. So when the auditor is doing the final audit or when he's doing the statutory audit, this is a very common area where the most of the frauds may take place. So what is the duty on an auditor in this case is he has to ensure that his sales and purchase which have taken place in the last few months of the year or throughout the year must not be mere book entries. These should not be only mere book entries. It should not be the bogus sales. It should be actual sales and actual purchases. Are you getting the point or not? Now, how I'll verify? I'll go to their inventory, I'll visit their godown, and in the godown, if the stock is getting less or day by day it is getting reduced, it means yes, they are making the proper sales. And if the stock is increasing day by day, yes, they are making the proper purchases. So there are so many methods: inspection, observation, various RAP procedures, risk assessment procedures you have by which you can understand कि yes, the sales and purchase are actual or sales and purchase are bogus. So make sure that whenever you are checking the sales and purchase of your client, ensure that they are not bogus in nature. Next point, personal expenditure. The third duty to inquiry is personal expenditure shall not be allowed to be debited to P&L account. That we already know. Personal expenditures are your personal, they are not the business expenditure. If you come across any kind of personal expenditure which the client is debiting to P&L account, make sure that you should not allow it. The fourth duty to inquiry is if your client is a non-investment company. If your client, again I'm saying, it is a non-investment company, they should not have sold their investments below its cost. If they have shown their investment, if they have sold their investment below their cost, that should not be treated as an ordinary loss. That should be treated as an exceptional loss. Because being a non-investment company, your major line of activity is not buying and selling the securities. Being a non-investment company, you are into a particular business and you are not allowed to waste the shareholders' funds. So you are not allowed to sell your investments below its cost. So let's say, for example, suppose you are an auditor of Motilal Oswal company and you are also an auditor of Reliance Industries Limited. Both the companies made the 100 crores of investment in Tata Steels. Are you getting the point? But in 2021, say for example, due to recession, they sold their investment at 60 crores and 60 crores. So what is the ultimate loss for both the companies? 40 crores for Motilal Oswal and 40 crores for the Reliance Industries Limited. But for the Motilal Oswal, being an investment company, for the Motilal Oswal, it is an ordinary loss. But for the Reliance, it is not an ordinary loss. It is an exceptional loss. As an auditor, I will not have that much of point of worry, that much of duty to inquire when I'm doing the audit of Motilal Oswal. But definitely my eyes will be on my client Reliance, because for them this 40 crores of loss is not an ordinary loss. It is an exceptional loss for them. So are you understanding the point? So in this duty to inquire, your fourth duty to inquire is being a non-investment company, your client should not sell its investment below its cost. Now, what is the fifth duty to inquire? The fifth duty to inquire is to make sure that whatever the paid up share capital your client is showing, they should have received the consideration for the total paid up share capital either in the form of cash or in the form of bank. So reconcile the total paid up share capital with the bank statement and the cash vouchers. If you think that, let's say for example, there are 200 crores of paid up share capital is there, it means obviously 200 crores of money they must have received. If they have issued 200 crores of capital, if they are claiming that there's a 200 crores of paid up share capital, it means they might have issued 200 crores of, paid up share capital means they might have received it in the form of bank or in the form of cash. So check out their bank and cash registers. Let's say for example, you got only 180 crores reconciliation. So what is the difference? 20 crores of difference is coming. Ask them, inquire from them where these 20 crores have gone. I'm not saying that your client is wrong in that, but you have a duty to inquire where that 20 crores have gone. There might be a case that out of 20 crores, 5 crores they might have paid as an underwriting commission in the form of shares, free of cost. Sometimes we issue it to the underwriting commission. Sometimes we pay the promoter's remuneration in the form of shares, that is also free of cost. So 5 plus 10, say for example, 5 plus 10 comes to 15. So 195 crores matched. Or sometimes the company may issue the fully paid up bonus shares, and you all know that in the fully paid up bonus shares, we only capitalize the CRR. There's no inflow to the company. So it can be any reason why there's a difference coming. So your duty to inquire is to find out the reason why their paid up share capital and the receipt of the paid up share capital amount is getting differentiated. Is it clear, everyone? Yes. Next point, what is your duty to inquire? Number 6. You should be very careful in this area. you should not allow your client to show their loans and advances to be categorized in the form of deposits. Loans and advances shall not be categorized as deposit. So if your client is showing some of its loans and advances which it has given in the form of deposits, make sure that you are telling your client not to show it, not to make it, or not to show it like that. Reason being very simple, deposits are non-income generating assets. Say for example, lease deposit, rent deposit, or any kind of deposit. But loans and advances are income generating assets. So if they will categorize the loans and advances as deposits, it means your client is indirectly going to hide an income. Let's say for example, there is one company which has given loan to the XYZ Limited at the rate of 20 crore rupees and deposits are 1 crore rupees. If they will make this balance sheet as this balance sheet, means what? They converted their deposits into what? Loans, and loans into what? Deposits. Now see, they have done the vice versa of these two things here. But what is the impact on the financial statement? Direct impact. It means they have hidden 19 crores of loans in the form of a deposit, and say for example, interest at the rate of 10% comes. So it means that they are almost able to hide 1.9 crores of interest income. Are you getting the point or not? So make sure that it is a very common practice which generally the company does to hide their loans and advances in the shedding of what? In the shed of deposits. So you should not allow the loans and advances to be categorized in the form of deposit. So that brings an end to our very important section called section number 143, subsection 1, duty to inquire. So there was no amendment in that. That's why we will move to the next section. Now in this section 143 subsection 3, duty to report on certain matters, there are so many amendments. So many amendments means in the clause number J, there are total 10 clauses in 143 subsection 3 which the auditor has to report. In the clause number J, there are some almost 3 extra points have been added and one I clause also have been added. So 2 clauses have been altered. I clause, J, E, F, G, H, I, J, K. K clause has been added and J clause में some 2-3 amendments have come. So overall 143 subsection 3 clause, which is also known as OLRR paragraph in our SS 700 audit report. You know that as per SS 700, we have to learn the basic elements of an audit report. So there is one OLRR para in our audit report that is called other legal and regulatory requirements para. There the change has come. Now I'll tell you what is the change. First, let us understand what are the other clauses. Now, under section 143 subsection 3, that is duty to report on certain matters, there are things which the auditor has to report. What is the first thing auditor has to report? Whether the proper information and explanation from the client has been received or not. Okay, whatever the information and explanation you ask from the client, whether that information and explanation the client has provided to you or not. For you, is it a proper information and explanation received or not? If not, what is its impact on financial statement? You have to report on clause number A. In the clause number B, you are reporting that whether the client's books of accounts are prepared as per section number 128 or not. You all know that in the maintenance of books of accounts, we have one section called 128, according to which the books of accounts shall be maintained by the company. So you are nothing but commenting and you are putting the remarks on whether the books of accounts of the client are as per section number 128 or not. In the clause number C, what we are reporting, whether branch audit reports from the branch auditors have been received and sent to you properly or not. Are you satisfied with the branch audit reports or branch audit findings which are sent to you by the branch auditors, and is it being properly sent to you or not? So clause number A में we are reporting upon information and explanation. Clause number B में we are reporting upon books of accounts, section number 128, and clause number C में we are reporting upon branch audit reports. And in the clause number D, we are reporting that whether the financial statements have been in agreement with the books of accounts or not. You all know that section number 129 talks about what? Financial statements. But we all know that financial statements are prepared from what? Books of accounts. So financial statement must agree with what? Books of accounts. So what we are trying to tell you here is whether your financial statements are in agreement with books of accounts or not. In the clause number E, what the auditor is reporting about, financial statement must have been prepared in compliance with the accounting standards. As you all know that from 2015 onwards, some company have started following INDAs. and some companies are still following the accounting standards. So whether they are following INDAs or whether they are following accounting standard, we have to check that their financial statements are prepared in compliance with the accounting standards or not. Then in the clause number F, you remember these clauses you have to remember in a very sequential manner. The clause number A is on information and explanation. Clause number 2 is on books of accounts as per 128. Clause number 3 is on branch audit reports have been received properly or not, or sent to you properly or not. Clause number 4, that financial statement must be in agreement with the books of accounts. Clause number 5, you are reporting upon कि financial statement must have been prepared as per the compliance of accounting standards or INDAs. In the clause number F, that is 6, you are reporting if you have given any adverse remarks. If you have given any adverse remarks on the entity or not, and if your adverse remarks have given any impact on the functioning of the company or not. So whether any negative, adverse means negative remarks, whether any negative or adverse remarks by an auditor has been given on the financial statement, and whether such adverse remarks have left any impact on the financial statements of the company or not. Next, in the clause number G, you are reporting that whether any director is disqualified under section 164 subsection 2 or not. If I'm not wrong, this you have done in the corporate and allied laws, where you have understood that section number 164 is talking about the disqualifications of an auditor. In that, there are some special disqualifications given under section number subsection 2, 164 subsection 2. If any of the director was a director when the company has failed to file the financial statements or annual returns with the ROC for continuously 3 years, or the company has failed to pay the interest on debentures or repay the debentures or interest on deposits, or any preference dividend was pending continuously for 1 year and company failed to pay, if you are a director at that point of time, then also you are disqualified. So as you all might be aware that in the law, company law mein, you have section number 164 which talks about the disqualification, but here we are not talking about the total disqualifications of the director. We are specifically talking about the special 2 disqualifications, where the continuous 3 years disqualification and continuous 1 year wala. Annual returns and financial statements were not filed continuously for 3 years and company failed to repay its debts or outstanding borrowings on continuously for 1 year. If you were a director at that point of time when the default was taking place, you are disqualified to be an auditor or to be a director in any company for the next 5 years. That is what section number 164 subsection 2. So in this point, the auditor is disclosing, is reporting whether any of the director is disqualified under section 164 subsection 2 or not. So let's understand clause number A to F again. Clause number 1 was on, A was on information and explanation received is correct or not, and what is its impact on financial statement. Next point, books of accounts must be prepared as per section number 128. Point number 3, branch audit reports. Point number 4 was relating to financial statements in agreement with books of accounts. Point number 5, that is clause E, relating to financial statements must be prepared as per the accounting standards and INDAS. And clause number H, E, F, G. Yeah, clause number F was talking about if the auditor has left any negative or adverse remark on financial statement, what is the impact of that on the functioning of the company. And clause number G mein, auditor is also reporting that whether any of the director is disqualified under section 164 subsection 2. And in the clause number H, the auditor is also reporting whether any qualified or qualification or any reservation or adverse remarks have been given in the on the books of accounts of the client or not. So these were the very common clauses in 143 subsection 3. So far amendment has not come. Up to I clauses there is no amendment. But I clause is very important, 143 subsection 3 clause I, because it is reported in your audit of automated environment also. At the same point of time, it is reported under internal risk assessment and internal control chapter also. So what is 143 subsection 3 clause I? Here, the statutory auditor of the company is reporting whether the company has adequate internal financial control system installed in the company or not. Do they have the good operational and effective internal financial control system in their organization or not? But this clause is not required to be reported. Which clause? I clause. That means the 9th clause is not required to be reported if you are issuing the statutory audit report of 1% company, small company, or the company whose turnover is less than 50 crores and borrowings, outstanding borrowings are less than 25 crores. तो अगर आप ओपीसी के ऑडिटर हो, अगर आप स्मॉल कंपनी के ऑडिटर हो, or if you are an auditor of a company whose turnover is less than 50 crores and the net worth, outstanding borrowings is less than what? 25 crores, you need not report on this clause, that is 143 subsection 3 clause I in their auditor's report. Other than this, in every company you have to report that whether the company has an adequate internal financial control system or not. Now the amendment has come in the J clause. Where the amendment has come? In the J clause. J clause is known as other matters. In the J clause actually, there were 3 subclauses, A, B and C. So amendment is not on these 3. Amendment starts from the D. Clause D has been added in the clause D, in the subclause D, in the J clause. See, 143 subsection 3 J clause. In the J clause, one new point has been added, that is called D point. In the D, 3 more points are there, A, B and C. Now listen to this clause very, very carefully. Other matter clause mein auditors is reporting. Now what does the auditor reports on the subclause A? He reports that whether the company has shown the impact of its pending litigations on its financial statements or not. You all know that so many companies have so many contingent liabilities. So when the company has the contingent liabilities, it is necessary for them to show the impact of those pending litigations against the company on its financial statement. So we are reporting here whether the company has shown the impact of pending litigations on its financial statements or not. Next point, sometimes some of the client companies will enter into a derivative contracts, that is called forward contracts or future contracts. If your client has entered into any derivative contracts or commodity contracts or forward contracts or future contracts, you are expecting from your client that they should have made an adequate provision for the same. You all know that derivatives are future contracts, and in the future the prices may go up or the prices may go down. So you expect your client whether he has made adequate provision or not. So this point is showing the impact of pending litigation on financial statement, and this point is whether adequate provision has been made if your client has entered into a derivative contract. Next point, you all know that under section number 123, if the dividend is not paid within 30 days from its declaration in the AGM, we transfer that dividend to unpaid dividend account, unpaid and unclaimed dividend account. In the unpaid and unclaimed dividend account, this will be kept for 7 years from the date of declaration, for the next 7 years. Once the 7 years are over, after that, the unpaid dividend account or unclaimed dividend amount is required to be transferred to IEPF, Investors Education and Protection Fund, or IEAF, Investors Education and Awareness Fund. So here we are reporting whether any delay by the company has been done to transfer the funds from unpaid dividend account to IEPF or not. If the company has done the delay, you all know that as per section number 125, you are only being provided 30 days from the closure of the unpaid account, from the closure of the unpaid dividend account. Within 30 days, you have to transfer this to the IEPF fund, Investors Education and Protection Fund. But if you do not transfer it, then in that case, there is a problem. So if the company has done any such kind of delay, that we are going to report in clause number C. Now, up to this, there was no amendment in this section 143 subsection 3. So 143 subsection 3 ka clause number J has been amended. Now, let's understand, sir, what is the amendment? I will tell you in a very smooth manner. When you read it from the ICAI material and when you will read it from the RTP, so many students complain me, sir, this is going bouncer to us. I don't know what kind of amendment has been done. Now, I'll tell you in a very smooth manner. Now, try to understand. In the clause J, there is A, B, C point was already there. D point, this D point is an amendment. In the D point, there are 3 points. Now listen to this. If your client company has given any, now it has to be understood in this way. Try to understand, whenever the client company gives any loan to another company, or does any investment to another company or person, or does any advance to any company. So whenever your client does any loan, gives any investment, or gives any loan, does any investment, or gives any advance to any person or the entity or foreign entity from its borrowed funds or from its securities premium account or from the other sources, whatever the sources may be, whenever your client does give any kind of loan, does any kind of investment, does any kind of advance, it has to mention that in the notes to accounts. You all know that as per section number 129, notes to accounts is one of the financial statement. So if your client company, if you are a statutory auditor of a company and your client company has already given any loan or done any investment, means outflow, or given any advance to any person, any entity, or any foreign entity from its borrowed funds or from its securities premium account, from its other sources, it has to mention that in notes to accounts. That is required, that is mandatory. But here what the auditor is asking the client, he is asking the client company, did you give any loan, did you make any investment, or did you give any kind of advance to any person, any entity, or any foreign entity other than what you have already disclosed in notes to accounts? If you have done that, give me the MRL on that. And if you have not done that, give me the MRL on that. You know the MRL when I'm talking about? MRL stands for Management Representation Letter, or as per SF 580, it is known as Written Representation Letter. When we needed a corroborative evidence, when we needed a supportive evidence on something which is purely the responsibility of the management, we always ask the management an MRL or the WRL, or it is also known as management certificate. So if you have already disclosed any loans, any investments, or any advances given by the company in the notes to accounts, that is fine. I'm not talking about those loans, investments, and advances which are already disclosed in the notes to accounts. I'm not talking about that. If you have given other than that which is already disclosed in the notes to accounts, if you have given any loan, or if you have done any investment, or if you have done any advance from your borrowed funds, from your other sources, from your securities premium account to any person, to any entity, or to any foreign entity, then other than that which is already mentioned in the notes to accounts, please give me that WRN on that. Or if you have not done that, then also give me the WRN on that. Are you getting the point? So read the point, that auditor has received a representation that management has not loaned, not invested, not advanced any funds, means outflow, to any person, to any entity, to any foreign entity from its borrowed funds, securities premium account, and other sources. Which loans, advances, and investments other than those parties which are already specified in notes to accounts? Which are already specified in notes to accounts, I'm not bothered about that. This point is, please tell me if you have given or not. If the management is saying, no, we have not given any loan, we have not made any investment, we have not given any advance to any person, any entity, any foreign entity from our borrowings, from our securities premium account, from our other sources to any other person other than those which is disclosed in the notes to accounts, then management has to provide you the WRL or MRL, Management Representation Letter, or Written Representation Letter you have to receive from the management, because you have to collect an evidence that management is denying that they have not given any loan, advance, or investment to the parties other than which are already disclosed in the notes to accounts. So if the management is saying that no, we have not given, take WRL and take MRL on that, right or not? So this is on giving the money. This amendment is on giving the money. So let's understand it again. auditor must receive a written representation from the management where the management is declaring that we have not given any loan, we have not made any investment, we have not given any advance to the parties other than which are already disclosed in notes to accounts from our borrowings, from our securities premium account, and from our other sources. On that, we are taking WRL as per SA number 580 from the management on that. Crystal clear? Now, A point ka, if I have to ask you what is vice versa, that is B point. In the B point, auditor is taking what? Auditor is again asking the MRL from the management. Auditor is again asking the WRL from the management. Hey management, did you take any loan? See, in the point number A, it was giving the loan. But in the point number B, did you take any loan? Did you take any loan from the persons? Did you take any funds from the persons other than those mentioned in the notes to accounts? Are you understanding the point? In the point number A, it was outflow. In the point number B, it is inflow. The auditor has received a representation that management has not received any funds from any other person, entity, or foreign entity other than those parties which are already specified in notes to accounts. So in the point number A, if the client company has given any, or in the point number B, if the client company has taken any. If the client is saying, no, I have not given to anyone, and no, I have not taken the money from anyone, take the WRL on the same. Then sir, what is the point number C? Point number C may auditor is declaring that I already got the WRL on both the points, so therefore I have no reason to doubt on A and B above. Dekho, I needed an evidence, they gave me the evidence. Therefore, right now I don't have a doubt whether they have received any money or not, or they have given any money or not. So clause number A was talking about giving any loans, investments, and advances, and clause number B, getting any loans, advances, and expense. Getting any loans and advances. So if the management is declaring that neither we have given nor we have taken from any person other than which are already mentioned in notes to account, auditor should take the MRL and the chapter is closed. This is the amendment which was brought in the clause number J under the point number, under the subclause number D. Under the subclause number D, there are 3 points. Point A is on outflow, funding somebody, or point number B was on getting funded. So if the management is saying that we have not funded anybody or we have not received any funds from anybody other than those mentioned in the notes to account, take the WRL, written representation letter on that. And once you have received it, auditor must declare that I have, if he is satisfied, he will declare that he has no reason to doubt on A and B. And this clause also added. What is this clause? Very simple clause. 123 section in the dividend topic we know now. Within 30 days of declaring the dividend in the AGM, within 30 days of declaration, the dividend must be paid. So here we are declaring that company declared and paid the dividend in compliance of section number 123 of Companies Act 2013. And what is compliance of section number 123? Within 30 days from the declaration of AGM, please pay the dividend to all the members. And please send the share warrant to all the members. If the company fails to do that within 30 days and it is the company's fault, then in that case, section number 127 will be applicable. That is a penalty on the company. Company ka kitna penalty hai? 18% rate of interest they have to pay. And the officers in default ka penalty hai 1,000 rupees per day and imprisonment up to 2 years. Did you get the point? So we have just simply added one point, whether the company has declared and paid the dividend on time as per the compliance of section number 123 or not. So this is the amendment part which has been recently added by the ICAI in your section number 143, subsection 3, clause J. Under the clause J, already A, B and C point was there. D clause has been added and E clause has been added. In the D clause, 3 points have been added. A point in the clause, subclause D, it is saying that the auditor must receive a representation that the management has not funded or not loaned, not invested, not advanced from its sources to any person, any entity or foreign entity other than those parties which are already mentioned in notes to accounts. And clause number B may they have not received any funds from the parties other than which are mentioned in notes to accounts. And C point may he is declaring that he has no reason to believe or no reason to get doubt on A and B. And in the E point, whether the company has declared and paid the dividend in compliance with section number 123 of the Companies Act or not. So this was a small amendment came in section number 143 subsection 3. So 143 subsection 1 we are done with, 143 subsection 2 also we are done with, 142 also we are done with. 143 subsection 12 now we are going to do, and 143 subsection 11, that is Caro, we are going to do it in the audit report chapter. Now here also in this point 143 subsection 12, duty to report a fraud, one small amendment has come. What is amendment? Amendment came in its penalty. Earlier the penalty was it was a minimum fine of 1 lakh or maximum fine of 25 lakhs if the auditor fails to report the fraud to the central government within 30 days. Now the penalty has been changed. Now what has been changed? For that we have to learn the section first. Now what is 143 subsection 12, everyone? It is a duty to report a fraud. What is the section? Duty to report a fraud. You know that if you are a statutory auditor of the company, if you are a secretarial auditor of the company, or if you are a cost auditor of the company. So it means 143 subsection 12, subsection 13, subsection 14, subsection 15. Actually, there are total 4 subsections in this 143. 12, 13, 14, 15. But generally we talk about 12 only mostly because 15 talks about the penalty and 13 and 14 talks about the procedure. Are you getting the point? So I'm going to treat it as 143 subsection 12 only. That will more than enough if you will quote this section. So as a statutory auditor, secretarial auditor or cost auditor, so this section covers all the 3 professionals practicing CA, CS and CM. Practicing one. So if you are a statutory auditor, secretarial auditor, cost auditor of the company, while doing an audit, when you are doing an audit, you come across, you are not digging out, you come across any kind of fraud, omission or material misstatement due to fraud or error, your duty is to report it to central government within how many days? Within 60 days. Now the question is, sir, who is the central government? We are going to report it to the Secretary of Ministry of Corporate Affairs. Right? But the biggest problem was, sir, how much amount of fraud we have to report? Then the solution to this question was given by rule number 13. So what is the rule number 13 says that? Rule number 13 says a very simple thing. Rule number 13 says that rule number 13 of CAR 2014. Sir, what is rule number 13 of CAR 2014? Rule number 13 of CAR 2014 is nothing but called Company Audit and Auditors Rules 2014. Company Audit and Auditors Rules 2014. Under that rule number 13 came. Now what the rule number 13 is saying? Rule number 13 is saying a very simple thing. What does it say? It is saying that let the auditor first quantify the fraud. Let him do the quantification of the fraud. Let him see that how much fraud amount is involved in that. Once the auditor will quantify the fraud, if the fraud is less than 1 crore, if the fraud is less than 1 crore, if the fraud is less than 1 crore, not equals to less than 1 crore. This is the biggest area where the students may make the mistake. If the fraud amount involved means fraud which he came across is involving an amount less than 1 crore, then your duty is only to report it to audit committee. If there is no audit committee, report it to board of directors within how many days? Within 2 days, and your work is done. If you report it to audit committee, or if the audit committee is not there, to the board of directors within 2 days, your fraud amount is less than 1 crore, then your duty is over. You need not do any further reporting to central government and such like that. But if the fraud amount is greater than equals to what? 1 crore. If the fraud amount is greater than equals to 1 crore, then you have to follow the same process. Report it to audit committee. If no audit committee, to the board of directors within what? 2 days. But you have to give them 45 days. You have to wait for 45 days to allow them to justify and explain why this fraud has taken place in their company. Let them explain. Let them justify why this fraud has taken place in their company. Did you get the point? So you will wait for 45 days. So here the journey of 60 days starts. So 45 days of wait is over. After the 45 days of wait, there will be 2 things. Either their reply will come or their reply will not come. If their reply will come, if the board of directors or audit committee will give you the explanation or justification, then attach their comments with your report on fraud. And if they do not reply, then you have to prepare the report on fraud. In both the cases, you are preparing the report on fraud. But if they reply, attach that reply also with the report. Otherwise, you prepare the report when in the next 15 days. So after 45 days, you don't have to wait for 46th day also. Within the next 15 days, your report should be ready. If their comment has come, attach those comments. If their comments have not come, then do not attach any reply. But in the next 15 days, the reports must be prepared by you, and it should be sent to the Secretary MCA. Sir, on whose letterhead? On auditor's letterhead. Sir, what the auditor's letterhead should contain? It should contain the name of the auditor, address of the auditor, contact number of the auditor, email of the auditor, membership number of the auditor, COP details of the auditor. On your letterhead, these 6 things are must. And we are sending it to whom? Secretary MCA. Sir, in which format we are reporting? The report on fraud which you are preparing must be reported as per the ADT4 format. And when you are sending it to the Secretary MCA, make sure that you are sending it via a registered post with acknowledgement due. You are sending it via RPAD, a registered post with acknowledgement due. But if the registered post with acknowledgement due is not possible for you, then in that case, at least send a speed post. At least send a what? Speed post. But when you are making an option of sending it via speed post, remember one thing, we are not sending it via email. We are sending it via post. But when you are sending the speed post, at least send them one email confirmation to the Secretary MCA office. Okay, as and when you receive this parcel, please reply back whether you receive the parcel or not. So either you do registered post with acknowledgement due, or you send a speed post with an email confirmation. And you all know that it has to be prepared on the whose letterhead? Auditor's letterhead. It should be prepared. And it should include these 6 information. And it is to be reported as per the format of what? ADT4. Now, this is what section 143, subsection 13 and 14 talks about. Now, section number 143, subsection 15 talks about what? In case the auditor fails to report or fails to oblige his duty under section 143, subsection 12, then this is the amendment area. Now, what is the amendment? You can see that very simple amendment. Earlier, the fraud ka the duty to report the fraud ka, if you do the violation, then it was minimum 1 lakh, maximum 25 lakhs was the penalty. But now that penalty has been replaced by, in case this fraud was related to listed company which you failed to report, then in that case you will be liable to a penalty of directly of rupees 5 lakh rupees. The auditor will be liable to a penalty of rupees 5 lakh. And in the any other cases, the penalty will be 1 lakh. It means in case of unlisted company, public company, unlisted private company, unlisted public company, in such kind of companies, if you detect a fraud and you fail to report, your liability is rupees 1 lakh. It means you are liable to fine of rupees 1 lakh. But if it was a listed company, then your penalty is going to be 50,000. So that brings an end to our another section 143, subsection 12, duty to report a fraud. So what is amendment? Guys, amendment came only in the penalty. No amendment otherwise. In case of listed company, the penalty is going to be 5 lakhs. And in case of other cases may you fail to report, the penalty is going to be 1 lakh on the auditor. So that brings an end to your section number 143, subsection 12. Now, CARO 2020, as I already told you, section number 143, subsection 11, we are going to cover it under audit reporting chapter. Clear enough? So our 143 section is also over. 139, 140, 41, 42, 43. Now, 144 is also already over. Do you remember yesterday in the previous session we have done section number 143, 141, subsection 3, disqualification. Disqualification mein, do you remember the last disqualification? What was the last disqualification? Auditor is not allowed to provide the services which are prohibited services under section 144. So these are the list of those prohibited services which you have to remember. So with that, our section number 144 is also over. So 139 is over, 140 is over, 141 is over, 142 is over, 143 is over except CARO 2020, and 144 is over. Now let us understand what is section number 145. What is section number 145? This is huge topic of CARO. You can see that all the 21 clauses are there that will understand exhaustively, right? Now, there are some residual things, rights and duties of an auditor. You know that what are the rights of an auditor? Right to remuneration, right to have information and explanation from everyone, right to have an access over the books of accounts, whatever it is, a voucher, document, a report, or any kind of records. Then right to visit the branches. Remember, you can only visit the Indian located and domestically located branches. Foreign branches are outside your scope, so you don't have the right to visit the foreign branches. Right to sign an audit report, that I already told you, and it is itself is a section number 145. The auditor has a right to sign the audit report, but in case you are not available, can your practicing partner sign? Yes. Other than you, who can only sign the audit report? Your practicing partner can sign, not your partner, because non-practicing CA can also be your partner. But who is only allowed to sign it if you are not there? Your practicing partner can only sign. That is what itself section number 145. Right to sign an audit report. Then section number 146 is what? Section number 146 is duty to receive, attend and participate in the meeting. Remember one thing, whenever the shareholders meeting will be conducted, that is AGM and EGM, every company is under an obligation to send auditor a notice of that meeting. It means it is a right of an auditor to receive the notice of every shareholders meeting. Remember, again I'm saying every shareholders meeting, not board meeting. Board meeting ka notice will not be sent to the auditor. Only the shareholders notice, shareholders meeting ka notice will be sent to the auditor. After receiving the notice, attending the meeting is your duty. Right is only to receive the notice. Once you have received the notice, attending the AGM and EGM is your duty. That is what section number 146 is saying. So what is section number 146 is saying? Ki attending the meeting for which you have received a notice is your duty. Sir, why it is duty? It is my wish whether I want to go or I don't want to go. No one can force me. No, you can't say like that. Law says that. Tell me one thing. AGM में one of the ordinary business is what? Adoption and approval of financial statement. Reason number one. Reason number two, appointment and reappointment and removal of an auditor. So when you yourself will not be present in the AGM, who will clarify the doubts of the shareholders if they will get any on the audit work? Are you understanding my point? If the shareholders will get any kind of doubt on the audit related work, board of directors will not be able to clarify the doubts. Therefore, it is your duty that you have to attend the meeting if you have received the notice of the AGM or EGM. So make sure that you are attending. That is what section number 146. So duty to attend the meeting is your 146 section, and right to sign the audit report is your section number 145. So we are done with 139, 130, 140, 141, 142, 143, 144, 145, 146. So what is 146? Duty to attend the meeting. What is 145? Right to sign the audit report. Now, after attending the meeting, sir, can you participate in the meeting? You can only and only participate, sir, if your audit related work is being discussed in the meeting. If your audit related work is being discussed in the meeting, you are allowed to participate. Otherwise, keep your mouth shut. You are not allowed to participate in the meeting till the time it is not required. But if the audit related work is being discussed, you are allowed to participate. Clear, everyone? Yes or no? So receiving the notice is your right. Attending the meeting is your duty. And participating only when if the audit work is discussed. Next, what is the next right you have? Right of lien over the client's books of accounts. Actually, ICAI does not support this right. This right we have borrowed it from ICAEW, Institute of Chartered Accountants of England and Wales. But if you want to have a right of lien over the books of account, India mein allowed nahi hai. But I will tell you what are the 4 conditions to be satisfied as per ICAEW if you want to exercise this right over the books of account. Say for example, you have done the audit, and when you have done the audit but your client is not ready to pay you the audit fees. So in that case, you can have a lien over the books of accounts of your client, but those books of accounts on which you are having a lien must be belonging to the which year? It must be belonging to the current year books of accounts. It should be belonging to the current year. And you must have used those books of accounts for some audit purpose. You must have used those books of accounts for some audit work. You must have used them. Next point, it must be in your possession in a lawful manner. It must be a lawful possession. You are not allowed to use any unlawful means to get the possession of those books. They must have come to your custody in a lawful manner. That means with the prior permission of the client. And the most important, only if your audit fees is pending, not advisory fees. If your audit fees is pending, then only you can have the lien over the books of accounts. If your advisory fees is pending, you are not allowed to have the lien over the books of accounts. Is it crystal clear? Yes or no? Then what are the duties you have? You already know these duties. Duty is to express an opinion on financial statement. Duty is to verify the accounts of branches if you are visiting, that is 143 subsection 8. Duty is to inquire, that we have already done 143 subsection 1. Duty is to report on certain matters, 143 subsection 3, where the amendment has come in the J clause. Duty to report under CARO 2020, that is 143 subsection 11. Duty to report a fraud under section 143 subsection 12, 13, 14, 15. Duty to follow the standards on auditing while doing audit, that is section 143 subsection 9 and subsection 10. Duty to give the reasons. Duty to give the reasons on modified report. Whenever we issue the modified report, it is our mandatory duty that we have to give the reasons for modification in the opinion, that is 143 subsection 4. Duty to follow the instructions of C&AG, Comptroller and Auditor General of India and central government in case of government audit, that is 143 subsection 5, subsection 6 and subsection 7. With that, your section number 139 to section number 146 are completely over. Now we are moving towards, you can see that 145 subsection 145 is right to sign an audit report, and 146 I already told you, duty to attend the report, duty to attend the meeting. As I already told you, receiving the notice of a meeting, all the meetings except the board meeting, that is your right. Attending the meeting, it is his duty to attend all the meetings exceptionally AGM except what? Board meeting. And participate, you can only participate only when the audit work is being discussed. That we have already discussed in 146. Now we are moving towards a penal section. Small amendment in the penal section has come. Now what is the penal section? 147. Now what does the 147 say? 147 says a very simple thing. What does it say? Ki bhaiya, if you are a company and if you have done the violation of 139 to 146, the 147 says that being a company, if you have violated section number 139 to 146, the company will be liable to a fine of minimum 25,000, maximum 5 lakhs. And the officers in default who are involved in this particular default of 139 to 146 violation, they will be liable to a penalty of minimum 10,000, maximum 1 lakh. Now here there used to be one imprisonment up to 1 year or both. This point used to be there. This point has been eliminated. This is the amendment. So OID ka amendment came कि their imprisonment up to 1 year wala point has been deleted, omitted. Now they are only liable to a fine of minimum 10,000 rupees, maximum 1 lakh. Company is liable to a fine of minimum 25,000, maximum 5 lakhs. If the company is doing or officers in default are doing the default of section number 139 to 146. Now the same section 147 penalizes auditor also. If the auditor violates section number 139, 143, 144, 145, not all the sections, selective sections. If the auditor violates the section number 139, 143, 144 and 145, then auditor's penalty is little bit same like the company's penalty which we had just seen parallelly. Minimum fine of 25,000, maximum fine of 5 lakh rupees, and this fine amount will be compared with your 4 times the remuneration received, whichever is lower. So this is the penalty if the auditor violates section number 139, 143, 144, 145. The auditor ka penalty is same like the company, upper part. Minimum 25,000 of fine, maximum 5 lakhs of fine. It will be compared with 4 times the remuneration you have received as an auditor, whichever is lower. If the auditor knowingly cheats, if the auditor knowingly cheats, knowingly means intentionally, if the auditor knowingly cheats or deceits whom? Company, shareholder, income tax department or creditor, then his penalty will be little bit increased. That is minimum 50,000, maximum 25 lakhs. It will be compared with your 8 times the remuneration received. So minimum 50,000, maximum 25 lakhs. It will be compared with your 8 times of remuneration received, whichever is lower. Whichever is lower. Did you get the point or not? Correct hai nahi hai? So here it is 4 times the remuneration received and here it is 8 times the remuneration received. There the upper fine was 25,000 to 5 lakhs. Here the fine is 50,000 to 25 lakhs. Or here you are cheating, therefore you may be sent to imprisonment up to 1 year or both. So in the 147 section mein amendment came in the OID part. In the OID part, imprisonment up to 1 year wala point has been removed. So with that, our section number 139, 140, 141, 142, 143, 144, 145, 146, 147 is over. Only 148 is left and 143 subsection 11 is left. These two sections I will do and cover in the audit report. Mein 143 subsection 11 we are going to cover. In the next session of the next video mein I'm going to cover 148 and immediately after 148 I will take you to the books of accounts chapter. I will take you to the books of accounts chapter, maintenance of books, where we are going to cover 128 to section number 137. 138, I already told you, it is all about internal audit that we are going to cover in the chapter called internal audit, management and operational audit. The 128 to 132 is made the most important section which you have to cover is 132, that is called NFRA rules. The NFRA rules we have to cover. Are you getting the point? So this will take another 2 lectures on this part and 1 lecture after this, 1 lecture on dividend. So 148 plus books of accounts makes it to 3 lectures and 1 lecture on dividend. So in the coming 3 to 4 lectures of 1 hour each, we will be in a position to cover our 3 chapters: company audit, books of accounts and dividend. After that, we'll jump to the professional ethics, where the NOCLAR, the new amendment has come, that is non-compliance of laws and regulations. NOCLAR, NOC, non-compliance of laws and regulation. New compliance has come in the professional ethics and code of ethics 2020 ka overview we are going to do, and after that we'll move ahead with the certain other chapters, right? So that's it for today. So thank you so much everyone, and I'll see you in the next lecture. Bye everyone. Hello everyone. Good evening, good afternoon, good morning to all of you, whosoever is watching this lecture at whatever the time. So welcome to the another lecture on our CA final paper number 3, advanced auditing and professional ethics, a rapid revision batch for May and November 22 students, right? So as you all know that we have already covered section number 139 to section number 147 up to our previous video. So this is in continuation to that video, where we are going to cover our section number 148, which talks about the cost audit, and along with that we'll immediately jump to our sections 128 to 137, which talks about the maintenance of books of accounts. Followed by that we'll cover the dividend chapter, and then as you all know that according to the plan we'll cover each and every chapter separately. Now 148 section talks about what? It talks about the cost audit. First of all, we have to understand, sir, cost audit is required on which kind of entities? Cost audit is basically required on those manufacturing, production, assembling, extraction, mining and processing industries who have to maintain the cost records. Now the question arises, sir, what do you mean by cost records? As per rule number 3 of Cost Records and Audit Rules 2014, if you are being a manufacturing company and your turnover of the manufacturing company is more than equals to 35 crores, then it is mandatory for you to have what? It is mandatory for you to maintain the which records? Cost records. Which records, everyone? Cost records. If you are maintaining the cost records, then you may come under the cost audit. So there are so many myths about the cost audit, which I would like to first clear it out. Remember one thing, cost records are the records of raw material, records of labor, records of installed capacity, records of each and every manufacturing item which is available in your company. Cost records are those records. Are you getting the point or not? But cost audit is not a mandatory audit like a statutory audit. Rule number 4 of Cost Records and Audit Rules 2014. Rule number 3 talks about when the company, manufacturing company, has to maintain the cost records, and rule number 4 talks about its audit, cost audit. So remember one thing, just because you are maintaining the cost records doesn't mean that the cost records are mandatorily required to be audited. For audit, there are separate rules, and for the cost records, there are separate rules. Are you getting the point or not? And one most important thing you have to understand, कि cost audit is not a statutory audit. Cost audit is not a statutory audit. Like a statutory audit, cost audit does not take place every year. It is not a regular audit. It is not a yearly audit. Rather, cost audit is also not a part of statutory audit. So if you are a manufacturing company, you are maintaining financial statements and you are also maintaining what? Cost records. So on the cost records, cost audit will take place. On the financial statements, statutory audit will take place. It means there can be a manufacturing companies, production companies, and extraction mining companies where the raw material and labor is being used, they may get the 2 audits at one point of time, cost audit as well as what? Statutory audit. So don't be under the impression that cost audit is a statutory audit. No, cost audit is not a statutory audit. Statutory audit is an audit of financial statement. Cost audit is the audit of cost statements, cost records, cost principles, cost accounting, all those things. It's a complete different set of life. Who are the most eligible people to do the cost audit? Obviously, practicing CMAs are the only people who are eligible to do the cost audit. Sir, only? Yes, only. Like secretarial audit, only practicing CS can do. Likewise, cost audit, only practicing CMAs can do. So what is our question number 1? Is cost audit a statutory audit? Answer is no. Is cost audit a part of statutory audit? Answer is no, because cost audit is in addition to statutory audit. So it is not a part of statutory audit. Statutory audit is different, cost audit is different. Next question. Sir, is cost audit a regular audit or yearly audit or periodical audit? Answer again is no. Cost audit is not an yearly audit. It is not a periodical audit. It is not like a statutory audit. Now, next question. Sir, cost audit is mandatory. Cost audit is mandatory on which kind of industries? Cost audit is mandatory on manufacturing, mining, processing, production, extraction, assembling companies. Sir, why? Because these companies, what are the common things they have? They make the use of raw material and labor. And wherever the raw material and labor will be used, along with the normal books of accounts which the company generally prepares as per section number 128, you also have to maintain the cost records in that case. But cost records, when you will maintain, if your turnover is greater than equals to 35 crores. Where it is written? Rule number 3 of Cost Records and Audit Rules 2014. So if your company is making the use of raw material and labor and the total turnover of the company is greater than equals to 35 crores, along with the normal books of accounts, that company also has to maintain what? Cost records. Did you get the point or not? Yes. Next, cost records when applicable. As I already told you, rule number 3 of CRA rules. Sir, what is CRA rules? Cost records and audit rules 2014. If your turnover is greater than equals to 35 crores, the company has to start maintaining the which records? Cost records. Next most important thing which you have to understand here is, sir, is audit compulsory? Is cost audit is compulsory? Answer is no. Actually, what the central government has done, central government has divided all the manufacturing production companies in India into 2 categories. List A category list B category. What are the two categories? List A category and list B categories. List A category and list B category. Now, list A category mein central government has kept the regulated sectors, and list B category the central government has kept the 33 industries which are unregulated sector. So central government has divided all the companies in India which are into the manufacturing into two categories, list A category and list B category. In the list A category, it is regulated sector comprising of 6 industries. In the list B, it is unregulated sector comprising of 33 industries. So do we have to know the names of the industries? Answer is no. That is a part of your CMA course, not the CA course. If your company is falling under list A category and the annual turnover of that company from the production and manufacturing of goods and services is greater than equals to 50 crores, and condition number 2, turnover from such goods and services for which cost records are required to be maintained is greater than equals to 25 crores also. Say for example, you are a company with 160 crores of turnover. It means you are from list A category. Say for example, you are from list A category and your total turnover of the manufacturing of goods and services is 160 crores. It means condition number 1 is satisfied. But this is and it means second condition is also required to be satisfied. What is second condition? This 160 crores of turnover is from, say for example, 5 goods. What are the 5 goods you are manufacturing? 5 goods gave you the turnover of 160 crores. But in this 5 good, there is only 1 good for which cost records are required to be maintained. And the turnover from that 1 good for which cost records are required to be maintained is 40 crores. It means your condition number 2 is also satisfied. So total turnover should be greater than equals to 50 crores, and turnovers of such goods and services for which what records are required to be maintained, cost records are required to be maintained, that should also be greater than equals to 25 crores. Then, being a list A category regulated sector company, your cost audit will become compulsory. Otherwise, cost audit will not happen. Same is the case with the list B category. If your company is falling under the unregulated sector of 33 industries, then when the cost audit will become applicable, if your overall turnover for the one financial year is greater than equals to 100 crores, instead of 50 crores, it is changed to now 100 crores because you are in the list B category. List A category है तो 50 crores है greater than equals to 50 crores. List B category है तो greater than equals to 100 crores. And your average turnover from such goods and services for which cost records is required to be maintained has been changed to 35 crores or more. So it means this turnover of 50 crores becomes 100 crores in list B category, and this turnover of 25 crores become 35 crores in list B category. Remember, both the conditions are required to be satisfied. Then only cost audit is required. Otherwise, cost audit is not required. Are you understanding the point? Otherwise, the cost audit is not required. Is it crystal clear, everyone? Yes or no? Yes. Otherwise, cost audit is not required. Okay? Now, what is the next point you have to understand? So that's what I kept on telling you. Cost audit and statutory audit are not same. The cost audit is only required if in the list A category, your average annual turnover is greater than equals to 50 crores and turnover from such goods and services for which the cost records are required to be maintained is greater than equals to 25 crores. And list B category mein average turnover is greater than equals to 100 crores annually, or turnover from those goods and services for which cost records are required is also greater than equals to 35 crores. Then in that case, cost audit will take place. It means it is not an annual audit, it is not a statutory audit. But suppose you are satisfying all the conditions of cost audit, but your company is operating from SEZ zone. Sir, what is SEZ? Special Economic Zone. If your company is located, if your company is a manufacturing company, but it is located in SEZ zone, if I have to give you the example, there is one place near Vizag that is called Duvada. In the Duvada, Vizag steel plant is operating from SEZ zone. So Vizag steel plant is exempted from the cost audit. So if your company is into the manufacturing activity and operating from SEZ zone, then in that case, cost audit is not required. Or your company is 100% EOU. Sir, what do you mean by 100% EOU? 100% export oriented undertaking means whatever you are producing, you are exporting it. Sir, why this exemption has been given? Because when you export, you increase the foreign reserves of the company, because your payments will come in the foreign currency. So it means you are helping the company, helping the country like India in maintaining its foreign reserves. So yes, you will get an exemption if you're 100% EOU. Sir, what about the normal export turnover companies? Normal export companies also will get the exemption, but more than 75%, more than 75% of their total turnover should come in foreign currency. If out of the total turnover, more than 75% of the turnover is coming in the foreign currency, then you will also get the exemption. If you are a small and medium enterprise manufacturing unit, then also you will get the exemption under the cost audit. Cost audit is not required. And if you are a company having your own power plant, you are generating and producing own electricity, and not only that, you are using such electricity for your captive consumption, then also you are exempted. So if you are any of these 5 categories of the companies, you will be exempted from the cost audit, everyone, even though you are satisfying the conditions in the list A category or list B category. No cost audit is required. Next one. Sir, who will conduct the cost audit? As I already told you, only practicing CMAs will conduct the cost audit. In case he is not available, then this opportunity might be given to the practicing CA. But only and only practicing CMAs are allowed. So practicing CAs are generally not allowed. Who can only do? Practicing CMAs can only do. Practicing CAs cannot do. But as we know that there's a scarcity of practicing CMAs in the market, so sometimes this may be given to the practicing CA. Right? Now, when we do the statutory audit, we all know that while doing the statutory audit, we have to see that the company has followed GAAP or not. We have to see that company has followed accounting standards or IND-AS or not. And while doing the audit, we have to see that if we are following standards on auditing while doing the audit or not. Same way, practicing CMAs while doing the cost audit, they have to see that whether the client company has followed GAAP or not. So GAAP has been changed to GAAP here, generally accepted cost accounting principles. And we also have to see that their cost accounts or cost statements are prepared not by following accounting standards, but by following cost accounting standards. उसे हम बोलते हैं CAS. There are total 24 cost accounting standards in the CMA course. So client company is expected to follow GAAP, generally accepted cost accounting principles, and CAS, cost accounting standards. And while doing the audit of this client, we have to follow CAAS. In general audit, in statutory audit, we follow it as essays. But in the cost audit, we are going to follow CAAS, that is called Cost Auditing and Assurance Standards. We have only 4 cost auditing and assurance standards that we have to follow. So in the normal audit, in the financial audit, we see GAAP and AS and follow SS. In the cost audit, we see GAAP and CAS to be followed by the management, and we are going to follow CAAS, that is called Cost Auditing and Assurance Standards. That is how the cost audit is different from statutory audit. Next point. So what are the disqualifications of the cost auditor? Remember one thing, if you are a cost auditor of a particular company, you cannot be the statutory auditor of the same company. It means cost auditor of one company and the statutory auditor of the same company cannot be the same person. It has to be separate. They both should be separate person. They cannot be the same persons. Cost auditor of the company cannot be the internal auditor of the same company. Cost auditor of the company cannot be the tax auditor of the same company, but the cost auditor of the company can be GST auditor. Can be the which auditor? GST. So these 3 are disqualifications This one is qualification. He can be GST auditor, but as you all know that GST audit has been abolished. So it means this is also not possible. But you will write it in the examination. Next, who appoints the cost auditor? He is getting appointed like a subsequent auditor of the government company. Now you tell me, who appoints the subsequent auditor of the government company under section 139 subsection 5? Under section 139 subsection 5, subsequent auditor of the government company is appointed by CAG, C&AG within 180 days from the commencement of financial year. But here, cost auditor is going to be appointed by board of directors of the company within 180 days from the commencement of the financial year. So by the board of directors within 180 days from the commencement of financial year. So he's appointed like a subsequent auditor of the government company. But subsequent auditor of the government company means CAG will appoint. But here who is appointing? Here board of directors is appointed. Time period is same, within 180 days from the commencement of financial year. Sir, within how many days he has to complete the audit? He must complete his cost audit within 180 days from the end of the financial year. So you have been appointed within 180 days from the commencement of financial year, and you are expected to complete your audit within 180 days from the end of the financial year. Sir, इसकी remuneration कौन decide करेगा? As you all know, remuneration is always decided by the members. Now, when the board of directors have appointed a cost auditor, sir, do we have to intimate this to central government? Answer is yes. Board of directors will intimate to central government in form number CRA2. Cost records are required to be maintained in form number CRA1. Whereas we have to intimate that we have appointed the cost auditor to the central government in form number CRA2 within 30 days from the date of appointment, or within 180 days, whichever is earlier. Within 180 days from the commencement of financial year, or within 30 days from the date of appointment, whichever is earlier. Board of directors have to intimate this to the CRA, to the government, central government in form number CRA2, if we have appointed the cost auditor. Suppose if your cost auditor dies or resigns or getting removed, means casual vacancy, so same here, same board of directors will fill up the casual vacancy within 30 days, and again we have to intimate to the central government in form number CRA2 that we have again reappointed a new cost auditor, and that intimation is also going to be given in CRA2 within 30 days. Did you get the point or not? So if the cost auditor dies, resigns or removed, casual vacancy will be arising, and who shall fill it? Board of directors within 30 days shall appoint a new cost auditor, intimate again to the central government in form number CRA2 within 30 days. Next, sir, when the cost auditor completes his audit report, the cost auditor has completed his audit, is he going to send the cost audit report to the central government? Answer is no. Who appointed him? Board of directors. So he will send his cost audit report to the board of directors. Now, board of directors have received the cost audit report. If the cost auditor has kept any qualifications, modifications or reservations, then the board of directors have to explain and pass the comment on such qualifications, modifications and reservations which were kept by the cost auditor. And within 30 days of receipt of this report from the cost auditor, the board of directors within 30 days of the receipt of the cost audit report, board of directors shall forward this report along with their comments to whom? To the central government in form number CRA4. To the central government, they have to inform it in form number CRA4. Did you get the point or not? Remember, cost records are form number CRA1. Intimation to central government is form number CRA2. Correct? Cost audit report is form number CRA3. Cost audit report is required to be given by the cost auditor in format of CRA3. And cost audit report plus board comments we are sending to central government in form number CRA4. So these four form numbers you have to remember. CRA1, 2, CRA1, 2, 3, 4. CRA1 is for cost records. CRA2 is for intimation for appointment of cost auditor to the central government, and casual vacancy again intimation to central government. And CRA3 is the cost audit report which the cost auditor has to send it to board of directors, and board of directors, after passing their comments, they will attach their comments and will forward it within 30 days to the central government in form number CRA4. Are you getting the point? So this is what do you mean by The provisions relating to which audit? Cost audit. So I hope section number 148 went sincerely inside your head. Clear everyone? Yes or no? And removal of the cost auditor again by the board of directors after opportunity of being heard by passing a board resolution. If you want to remove a cost auditor again will be removed by the board of directors after opportunity of being heard by passing a board resolution. Now section number 177, as you can see that this one anyways we are going to cover in the audit committee and corporate governance, so there's no point of doing this section here. Clear everyone? So with this, our company audit ke section number 139, 140, 141, 42, 43, 44, 45, 46, 47, and finally 148 is also over, except Caro 2020, that is 143 subsection 111. Now that I already told you, we'll cover in the audit report chapter, right? Now let's move to the next chapter, that is called Books of Accounts chapter. What is the next chapter, everyone? Books of Accounts chapter. Are you getting the one? Maintenance of books of accounts, right? Now, as you all know that in the maintenance of books of accounts, we have to cover section number 128 to section number 137. This is a list of sections which we are going to cover. That is section number 128 to section number 137. This is relating to your chapter called Maintenance of Books of Accounts. Clear everyone? Yes or no? So now let's start with the topic called Books of Accounts and Financial Statement. So here we are going to cover section number 128 to 137. Now 128 talks about the books of accounts, 129 talks about the financial statement, 130 talks about the reopening of books of accounts and recasting of financial statement, 131 talks about voluntary revision of board report or financial statement, 132 is NAFRA, National Financial Reporting Authority, very important section. 133 talks about central government prescribing the accounting standards. 134 talks about the board report. 134 subsection 1 signatories of financial statement. 134 subsection 3 which talks about the director responsibility statement. 135 CSR where the small amendment has come relating to COVID-19. 136 sending the financial statement copies to members, and 137 that is filing the financial statements with ROC. So these are the sections we have to cover this lecture, and I think the next two lectures will be dedicated on this along with the dividend chapter. Clear? So I will try my level best to cover up this in the next two lectures along with these sections, along with that 123 to 127 that is called your dividend chapter. After that we'll directly jump to the professional ethics, right? So once the professional ethics, company audit, books of accounts and dividend chapter will be over, so we can say that our 30 to 40% of the marks will be completed in the revision series of RRB batch main for and November 22, right? Now let us understand section number 128. You can see that section number 128 talks about what? Books of accounts. अब इसको ध्यान से सुनना. Sir, what is section number 128? It is talking about the books of accounts. What is the meaning of books of accounts and what are the features of books of accounts? Where the books of accounts, for how long the books of accounts are getting preserved, and what are the inspection for the books of accounts? Who can inspect the books of accounts? Books of accounts in the electronic form, and keeping key responsible persons for the books of accounts and penalty on non-compliance. So first let us understand section number 2, the definition of books of accounts. Dekho, whenever we talk about the books of accounts, there are total 4 types of books of accounts. So what are the 4 types of books of accounts? The 4 types of books of accounts are books of accounts of assets and liabilities, books of incomes and expenditure, books of sales and purchase, and cost records, if any, which is required by the manufacturing company. So there are total 4 types of books of accounts: assets and liabilities, sales and purchase, incomes and expenditure. Now what are the features of books of accounts? As you all know that books of accounts helps in preparing the financial statement. So financial statements are generally summarized in nature. It means if the financial statements are summarized in nature, then what is explanatory in nature? Books of accounts are always what in nature? Explanatory in nature, because they are consisting of daily routine sale, purchase, assets, liability, income and expenditures. Next point. If the financial statements we expect it to be true and fair, books of accounts also has to be true and fair. And books of accounts are always prepared on accrual basis of accounting if you're a corporate entity. If you're a non-corporate entity, you have a choice of maintaining your books of accounts on accrual basis or cash basis. That's your choice. But being a corporate entity, it has to be on accrual basis of accounting, and books of accounts are always prepared on double entry system. So these four are known as the features of the books of accounts. Next thing, sir, where do we generally keep the books of accounts? Books of accounts are generally required to be kept at a registered office. But sir, what if the registered office is outside India? Then it has to be kept outside India. But quarterly basis, it is required to be sent to India. Sir, what if I'm a dependent branch? If you're a dependent branch, your books of accounts will be taken care of by whom? Your books of accounts will be taken care of by your books of accounts will be taken care of by your head office. Are you getting the point? So if you are a dependent branch, your books of accounts will be taken care of by the, maintained by the, preserved by the, kept by the head office. Generally, books of accounts are kept at registered office, but if the registered office is outside India, those books of accounts are required to be sent to India on which basis, everyone? Quarterly basis. This question they may ask you, ki semi-annually, annually or weekly basis. It is quarterly basis. Such set of books of accounts must be sent to India. Sir, I want to change the place of keeping the books of accounts. Can we change the place of keeping the books of accounts? Answer is yes. We can change the place of keeping the books of accounts. Yes, by passing a board resolution, we can change the place of keeping the books of accounts. But within 7 days of passing the resolution, new communication address where you are now keeping the books of accounts has to be intimated to ROC within 7 days of passing the board resolution in form number AOC 5. You have to intimate the new address. That is called meaning and the features of books of accounts. Next point, sir, books of accounts are required to be preserved and required to be inspected. Yes, if the company is in existence, for less than 8 years, if the company is in existence for less than 8 years, you must preserve the books of accounts for all the financial years. But if the company is in existence for 8 or more years, then in that case, at least 8 accounting years books of accounts must be preserved. Next point, if any inquiry, inspection or investigation is going on the company, then till the time that inquiry, that investigation or that inspection is not getting concluded, till that time you have to preserve the books of accounts. Say for example, the queries took 15 years to get concluded. So you can't dispose these books of accounts after 8 years. You have to preserve it till the time that inquiry, investigation or inspection is not getting concluded. So this is what brings an end to your preservation of books of accounts ka topic. Next point, sir, who can inspect the books of accounts? Books of accounts members can't inspect. Sir, what? Yes, you heard it right. Members can't inspect the books of accounts, but because membership and management, board of directors, because books of accounts are generally prepared by board of directors. Financial statements are also prepared by board of directors, but financial statements can be inspected by the members because that is their right. But books of accounts is not their right. Books of accounts cannot be inspected by the members. It is prohibited. Only directors can inspect. And if the directors are inspecting, then there is no cost of inspection. But anybody else other than directors are inspecting, then 50 rupees per person per inspection is the cost of inspection of books of accounts. And if you want to take extracts or copies of the books of accounts, you will end up paying rupees 10 per page. Remember, this same rule is there in LLP Act also. LLP Act maybe cost of inspection is 50 per inspection, but there the cost of extraction or extracts or copies is 5 rupees per page, but here it is 10 rupees per page. Are you getting the point? Next point, sir, if the books of accounts are kept outside India, then also can Indian director inspect it? Yes. What the Indian director will do? Indian director will make a request to the company, and the company shall make sure that within 15 days of his request, those books of accounts must be produced in front of him. Did you get the point? So within 15 days, those books of accounts must be produced in front of him. To whom? To the Indian director who has requested to see the books of accounts which are outside India. Is it clear, everyone? The books of accounts, if kept outside India and the Indian director wants to inspect it, those books of accounts shall be revert back to India within 15 days of his request. Next point. Sir, if the director himself is inspecting the books of accounts, is there any restriction? Answer is no. Company cannot restrict a director from inspecting any information, let it be secretive information or sensitive information or confidential information. If the director himself or herself is inspecting, there is no limitation on that. But if the director himself is not coming, he is sending his agent or legal representative or power of attorney holder or relative. In that case, if the company want, they may restrict some access to some those informations which are little bit secretive, confidential in nature. Then in that case, company can stop them from accessing or can restrict them from accessing such books of accounts which are little bit sensitive, confidential in nature. The director himself is doing no such a restriction. He is sending someone else some restriction. Now, next point. Can a holding company directors come and inspect the books of accounts of subsidiary company? Generally not allowed. But there is one small exception. If the whole board of directors of that holding company authorizes one director, whole board of directors means 100% consent of the board of directors of holding company required, and they authorize one director, that one authorized director can go to the subsidiary company and is allowed to inspect the books of accounts there. So did you understand the point? Yes or no? So who can, who cannot inspect it? Directors can't, directors can, members can't. Cost of inspection 50 per person if the directors no cost, and cost of extraction or copies rupees 10 per page. If the director himself is inspecting, there is no any kind of restriction. He can access to any information. But if he is getting it inspected via his agent, LR, power of attorney or relative, then sensitive or confidential information, if their own company does not want them to access it, so then company can do that. Company can restrict them. Next point, sir, what if the books of accounts are lying outside India and the Indian director wants to inspect it? Okay, registered office is outside India. Then within the 15 days of his request, those books of accounts must be produced in India. So can the holding company director go to the subsidiary company and do the inspection? Answer is generally no. No, not allowed. But yes, sometimes it is allowed. If one authorized director authorized by all the directors of the holding company can go and inspect the books of accounts of subsidiary company. Next point. Sir, what if the books of accounts are required to be maintained in electronic form? Remember, if you want to prepare the books of accounts in electronic form, there are 6 conditions required to be satisfied. Sir, how many conditions? 6 conditions required to be satisfied. Condition number 1. If you are preparing and maintaining and preserving your books of accounts in electronic form, make sure that it must be stored and preserved. It should be stored and preserved on Indian cloud server. You are not allowed to take the foreign server for preservation and maintenance and storing of books of accounts in electronic form. So your books of accounts in electronic form must be preserved and stored on Indian cloud server. Next point. It is only and should be only allowed to be accessed in India. So it is accessible only and only in India. Condition number 2. Daily 2 backups you have to take of your books of accounts. One is on-site backup, which you have to keep at the company, and one is off-site backup at a place other than company. So daily you have to take the 2 backups. One is on-site backup and one is off-site backup. The point number 1 must be stored on Indian cloud server, only accessible in India, daily on-site and off-site backup, and make sure that you are maintaining the books of accounts in electronic form. You are not allowed to maintain it in any other form. Make sure that it displayable in the original form only, like a trading P&L and balance sheet. So you are not allowed to do it on your own. Clear? Next point. Did you get the point? Next point kya hai? Now, next point mein your books of accounts must have this following feature. Sir, what is this feature? Your books of accounts must have the following features. Sir, what is the feature? Your books of accounts must have the 4 features. What are the feature number 1? Your books of accounts in electronic form must be storable in nature, printable in nature, retrievable in nature, displayable in nature. They should have the features of elements or capacity of storage. It should be printable, it should be retrievable, and it should be displayable. Next point, in case of branch books of accounts, because you are a head office and you have a dependent branch, you will maintain the books of accounts. Make sure that you are maintaining the books of accounts of the branch in an unaltered form. You are not allowed to change it in any way. And not only that, after these 6 conditions, first of all, to tell me all the 6 conditions. Condition number 1, must be stored on Indian cloud server, accessible only in India, daily on-site offsite backup, must be maintained in original form, must have a capacity of storage, printing, retrieval, and display, and in case of branch books of accounts, must be maintained in unaltered form. And make sure that you are filing these 4 informations with to the ROC. Name of your internet service provider. Which internet service provider is providing you the internet service in your company? Name of the internet service provider or network service provider. Internet protocol address of the internet service provider and network service provider. This information also you have to file with whom? ROC. Location of internet service provider and network service provider. Manner of retrieval of information. All these informations are required to be. All these informations are required to be. Filed with whom? ROC. Next point. Sir, who are the key responsible persons for maintaining the books of accounts, and what is the penalty if they do not maintain the books of accounts in the proper manner? Remember one thing, the key responsible persons for maintaining the books of accounts is the managing director of the company, whole-time director of the finance department of the company, and CFO. These are the 3 people who are the key responsible persons, KRPs, for maintaining the books of accounts as per section number 128. If none of these person is available in the company, then all the directors will be treated as what? All the directors will be treated as, they will be treated as KMPs. Did you get the point or not? All the directors will be treated as KMPs. Next point. Sir, what if the MD, whole-time director and CFO is not there? Then all the directors will be treated as KMPs. But remember one thing, what is the penalty if the books of accounts are not maintained as per section number 128? That is a minimum fine of 50,000, maximum of 5 lakhs, or imprisonment up to 1 year, or both. This is the section number 128, which talks about books of accounts. I hope you are able to see that whole section. The meaning and feature we have covered here. Meaning and feature we have covered here. Preservation and inspection we have covered here. Books of accounts in electronic form we have covered here. Key responsible persons we have covered there. So this is what brings an end to your section number 128. Now, section number 129. भैया ये तो बहुत important section है. It talks about financial statement. Sir, when we talk about the financial statement, 5 things comes to your mind. Balance sheet, P&L, cash flow statement, notes to accounts, and statement of changes in equity. So what are the 5 things? Balance sheet, P&L, cash flow statement, notes to accounts, and statement of changes in financial statement. Sir, from the financial statements, what do we come to know? From the balance sheet, we'll come to know about the financial position of the company. From the P&L, we'll come to know about the financial results and profitability of the company. From the cash flow statement, we'll come to know about the flow of funds. And from the notes to accounts, we'll come to know about the notification and disclosures relating to accounting standard schedule 3 and accounting policies. And statement of changes in equity gives us the information about how much equity has been changed as compared to the last year. What is the shareholding pattern has changed. But remember, cash flow statements. In the financial statement, cash flow statement is not applicable if you are a OPC. If you are a one-person company, you need not prepare the cash flow statement. If you are a small company, you need not prepare the cash flow statement. If you are a dormant company, you need not prepare the cash flow statement. And if you are a startup private company and you are declared as startup by the Department of Promotion for Internal Trade and Industries. So if DPIIT Department for Promotion of Industries and Internal Trade has declared you as a startup private company. Remember, private company, public company though always, and not all private companies, only startup private companies, and those startup private companies which are declared as startup by the DPIIT, Department for Promotion of Industries and Internal Trade. And this department is located under Ministry of Corporate Affairs. So what are the 4 companies to whom cash flow statement is not applicable? So bhaiya, it is not applicable to one-person company, small company, dormant company, and startup private company. Is it crystal clear? Yes, sir. Next one. Sir, who are the users of financial statement? Our financial statement, why company prepares the financial statement? So that they can satisfy the management, shareholder, government, employee, lenders, suppliers, and research scholars. Remember one thing, these people use the financial statements of the company for their different purpose. Say for example, management for the decision making, shareholder for the profitability and consistency of business, government is looking for taxation, employees are looking for retirement benefits and employment benefits, lenders use the financial statement so that they can check the repayment capacity of the client, suppliers use the financial statement so that they can check the credit worthiness of the company, research scholars use the financial statement so that they can talk about the investment opportunities and trend evaluation of the company. Is it clear, everyone? Yes or no? Yes. Now, next point. Sir, books of accounts or financial statement के features में what is the difference between them? As you all know that books of accounts are explanatory in nature, but financial statements are summarized in nature. Books of accounts and financial statement both are expected to give the true and fair view because financial statements are prepared from books of accounts. So if the books of accounts are true and fair, financial statements are expected to be true and fair. Books of accounts are maintained on double entry system. Financial statements are prepared by compliance of accounting standards and IND-AS. Books of accounts are accrual in nature. They are based upon the accrual basis of accounting, but financial statements are to be prepared as per Schedule 3 requirement. Did you get the point? These are the features difference between books of accounts. And most important thing, if you are a banking company and if you are an insurance company, if you are an electricity company, if you are a defense production company, तो भैया section number 129 is not applicable to you because as a banking company, insurance company and electricity company, you are regulated by your respective acts and you have your own financial statements का set of accounts. You have your own format of financial statement. You need not follow the format of financial statement of Schedule 3 of Companies Act as well as section number 129. Sir, who has given this exemption? NFRA has given this exemption in consultation with central government. The NFRA in consultation with National Financial Reporting Authority in consultation with central government has given this particular exemption to banking company, insurance company, electricity company, and those companies which are into the production of what? Defense production goods. जैसे BEL, Bharat Electrical Limited or Electronics Limited, which is into the manufacturing of gunpowder, guns and tanks and all. So you are not expected, you are exempted from section number 129 and Schedule 3 requirement because you will follow the financial statements format of your respective acts as you are the regulatory companies. Right or wrong? Next point. Earlier, what used to happen? Earlier, if you are a holding company, in your AGM, your own standalone financial statement you used to lay down and consolidated financial statements of the group. That's it. Your own financial statements and consolidated financial statement. But nowadays, if you are a holding company, if you are a parent company, your responsibility has increased. Now in your AGM, your own standalone financial statement definitely will come. Cash flows, consolidated financial statement of the group also definitely will come, same as it is. But what is the change? The separate standalone financial statement of all your subsidiaries, associates and joint ventures also will be laid down in the same AGM. This is the new amendment. So not only your standalone financial statement, the standalone financial statements of your subsidiaries, associates and joint ventures are also going to be laid down in the same AGM. Now, next one. Sir, what is the exemption from consolidation? Remember one thing. अब इसको ध्यान से सुनना. Exemption from consolidation to intermediate wholly owned subsidiary. Exemption from consolidation of financial statements to which subsidiary? Intermediate wholly owned subsidiaries as well as partially owned subsidiaries. First of all, to understand, if you are an intermediate wholly owned subsidiary and you are a parent of some another company, you are an intermediate wholly owned subsidiary. It means you are a subsidiary, but wholly owned subsidiary. You are also a parent of some other company. You need not do the consolidation of financial statement. You will get an exemption. And if you are a partially owned subsidiary also, then also you need not do the consolidation. You will get an exemption. If you want to get an exemption as an intermediate wholly owned subsidiary, there are two conditions to be satisfied. But if you want an exemption from consolidation of financial statement as a partially owned subsidiary, then in that case, three conditions are required to be satisfied. Now, isko dhyan se sunna. Now, listen to this. First, अपन बात करेंगे intermediate wholly owned subsidiary की. Now, suppose A is the 100% holding of B. It means in the B, 100% of the voting rights of the B are held by whom? A. So, what is B? B is a wholly owned subsidiary of A or not? Yes or no? Yes. Now, B is holding 70% of the voting rights in what? C. B is holding 70% of the voting rights in what? C. Now, when the B is holding 70% of the voting rights in C, now what is happening? Now, what is happening? अब इसको ध्यान से सुनो. Generally, as a parent company, you have a responsibility of doing the consolidation. So, A to will do the consolidation of A plus B plus C. But B has to do the consolidation financial statement of, has to prepare the consolidated financial statement of B plus C. Am I correct or not? Because B is also a parent of whom? C. But B may get the exemption. B may get the exemption from doing the consolidation. So this is called exemption of consolidation to the intermediate wholly owned subsidiary. But B will get this exemption when B need not prepare the consolidated financial statement of B plus C. When the B will get an exemption if the two conditions are satisfied. Sir, condition number 1, your immediate parent company must be located in India. Condition number 1, your immediate parent company must be located in India. Matlab, what is the B's immediate parent company? B's immediate parent company is A. A must be located in India. If the A, its parent company, whose B's parent company, A, is located outside India, B will not get any exemption. If B wants to get an exemption, its parent company must be located in India. Matlab, A must be located in India. Condition number 1. And condition number 2, B should not be a listed company or going to be a listed company either in India or outside India. It means this intermediate wholly owned subsidiary exemption from consolidation of financial statement is not at all applicable to the listed companies either in India or outside India, or going to be listed companies which have applied for listing in India or outside India. You people are not going to get any such exemption. Means listed company को consolidation करना ही पड़ेगा. Listed company must have to prepare a consolidated financial statement. They will not get any kind of exemption. So to get this exemption by the B, if the B wants this exemption, so B's immediate parent company A must be located in India, and B should not be a listed company in India or outside India, or not going to be listed in India or outside India. These two conditions are satisfied, then as an intermediate wholly owned subsidiary, you will get the exemption. You need not do the consolidation of A plus, sorry, you need not do the consolidation of B plus C. So who will do that? Your immediate parent company will do that, but if that is located in India. Now, this exemption is also available in case of partially owned subsidiary. Now, look at this example. A is holding 60% voting rights in B now, and B is holding 70% of the voting rights in C now. अब तुम मुझे बताओ, is B a wholly owned subsidiary of A or is B a partially owned subsidiary of A? B is the partially owned subsidiary of A, not the wholly owned. If the A is holding 100%, then B is a wholly owned subsidiary. But now A is holding only 60%, therefore it is only and only what? It is only and only partially owned subsidiary. Now, if B wants again an exemption from doing the consolidated financial statements of B plus C, now B does not want to do that. Yes, B can get this exemption. But now, three conditions to be satisfied, out of which two we already know. Its immediate parent company. Who is immediate parent company? A must be located in India. A must be located in India, and B should neither be a listed company in India, nor be a listed company outside India, nor going to be a listed company in India or outside India. But sir, what is the next provision? Now listen to me very carefully. Very, very carefully. Now listen. How much A is holding the voting rights in B? 60% voting rights. It means in the B, remaining 40% are what? Minority interest. They are known as non-controlling interest. 60% is a controlling interest by the A, but in the B, 40% are what? Non-controlling interest. It means those 40% may raise the objection कि why B is not preparing the consolidated financial statement of B plus C. It means if B wants to get the exemption, being a partially owned subsidiary, because in the wholly owned subsidiary this condition was not there, because in the wholly owned subsidiary A was holding 100%. So immediate parent company will agree, okay, I will prepare, you don't prepare, get the exemption. That's the reason this condition was not there. Now, what is the condition? The 40% who is the non-controlling interest as per INDAS and minority interest as per the accounting standards, B company has to send them a notice. Do you have any objection if I do not prepare the consolidated financial statements of B plus C? If none of the 40% of the non-controlling interest shareholders say any objection, then only B can get the exemption. If any of that non-controlling interest members or non-holding interest or minority interest members raise any objection, B will not get this exemption. So B will only get this exemption if all the non-holding interest or minority interest shareholder will give what? Will give permission to the B in writing that we do not have any objection if you do not prepare the consolidated financial statements of B plus C. So what are the three conditions to be satisfied? Condition number 1, B neither should be a listed company nor going to be a listed company in India or outside India. Condition number 2. What is the condition number 2? The immediate parent company must be located in India. Condition number 3. What is the condition number 3? B must have sent notice to the non-holding members for not doing consolidation of financial statements of its subsidiary, associate and joint venture, and the non-holding members have no objection if the B is doing that, and such partially owned subsidiary is having a proof of it कि non-holding members have no objection in that. If it does not have a proof that कि non-holding members are not having any objection, then this exemption will not be provided. Are you getting the point? This exemption only will be provided if the non-holding members will give no objection to the B in writing. Are you getting the point? Yes or no? Yes. So this is what do you mean by section number 129. Now, how many layers of holding subsidiary are allowed? That you already know. Only 2 layers are allowed. If A is the 80% voting right in B and B is the 60% voting right in C, C is a subsidiary of B, C also a deemed subsidiary of A. So that is called layer 1, layer 2. This 2-layer relationship is allowed. But nowadays 3-layer relationship is allowed if anywhere 100% subsidiary is there. So among all the 3 layers, if there is any 100% subsidiary, then only 3 layers are allowed. It means that D, if suppose there is no 100%, suppose if there is no 100%, it means D is the subsidiary of C as well as D is the deemed subsidiary of B. But D is not a deemed subsidiary of A because 3 layers are not allowed. But if anywhere 100% wholly owned subsidiary is there in any of the 3 layers, then D is also a subsidiary of C, D is also a subsidiary of B, D is also a subsidiary of A because there is one 100% subsidiary among the 3 layers. You can see that there it is 100%. It can be here also, it can be here also. And last but not the least, so what is the penalty on the non-compliance of section number 129? If the section number 129, like section number 128, is not followed properly, the key responsible persons, do you remember the key responsible persons in 128? They are the whole-time director of finance department, MD, and chief financial officer. Or if they are not there, any of the directors, they will be held liable. Same penalty of 128 is applicable to 129. That is fine of minimum 50,000, maximum 5 lakhs, or imprisonment up to 1 year, or both. You can see that who are the key responsible persons for financial statements also. MD of the company, whole-time director of finance department, and CFO. If not, then all the directors, what is the penalty if they do not prepare financial statement as per section number 129? Minimum 50,000, maximum 5 lakhs, or imprisonment up to 1 year, or both. This is what do you mean by section number 128 and 129. Done. So in this particular video, we have covered 148, very important section on cost audit, 128 books of accounts, and 129 financial statement. The remaining sections, that is 130, 131, 132, 133, 134, 135, 136, 137 we'll cover in the next video. So next video is going to be a little bit bigger. That is going to be minimum 2 hours video. And then another one video I'll make on dividend chapter. After that, our 20 to 25 marks of portion will be over, both in MCQ as well as a descriptive manner. So I'll see you guys in the next video, everyone. Thanks for watching it, and I hope I'm able to meet your expectations. And if you have any feedback to give to me, you can send an email to me on carohit.grover, carohit, ROHIT .grover@yahoo.com. So carohit.grover@yahoo.com, right? So thank you so much for watching my video, and I'll see you guys in the next video. Bye everyone. Take care. Bye-bye. Hello everyone, how are you all? This is your faculty CA Rohit Grover, and welcome you all to the new lecture in our CA final paper number 3 Advanced Auditing and Professional Ethics Rapid Revision batch for May and November 22 onwards, right? So as you all might be aware of the fact that we have already covered like so many sections of the company audit, and now we are on the maintenance of books of accounts, some sections. So where we have already covered 128 and 129. So quickly let's do the 130 and 131 and 132. After 132, I'll take you to 135, that is called CSR, and then 134 will do. Are you getting that? Along with 133. And after that, we'll be completing our dividend chapter, and afterwards, we'll be starting with our most important topic called Professional Ethics, Code of Ethics, right? Now, in section number 130 and 131, if you carefully see, it is there in front of you. Section number 130 talks about what reopening of books of accounts and recasting of financial statement, and why does this section apply, I will tell you. And section number 131 also, you know that it is all about voluntary revision of board report, or financial statement. Now see, what is 130? If the NCLT on its own, if the NCLT suo motu feels that, or somebody has made a complaint to the NCLT, if the NCLT on its own or somebody has made a complaint to the NCLT, who can make a complaint to the NCLT? SEBI, ROC, Income Tax Department, Central Government, or any statutory authority or any concerned person. Any of these 6 people have made the complaint to the to the NCLT, or NCLT felt on its own. Sir, we understood NCLT felt on its own, or somebody made a complaint to NCLT. But what is a complaint? Complaint is that कि भैया books of accounts of this company are prepared in a fraudulent manner. The books of accounts of this company are prepared in a fraudulent manner, and affairs of the company are mismanaged. Again repeating, what are the 2 complaints? Books of the company are prepared in a fraudulent manner, and affairs of the companies were mismanaged, due to which there's a huge doubt casted on the credibility and acceptability of financial statement. As you all know that financial statements are prepared from the books of accounts. So if the books of accounts are prepared in a fraudulent manner, and the management was involved which was completely doing the mismanagement, obviously there will be a doubt casted on the financial statements credibility. So who is making this complaint? Either SEBI, ROC, or you can say Income Tax Department, or Central Government, or any other statutory authority, or any other person making a complaint to NCLT, or NCLT felt on its own. If the NCLT is satisfied on the above complaint, or NCLT smelled it like yes, company is making the books of accounts in fraudulent manner, then NCLT will pass the order under section 130. Now what is the order under section 130? Reopening of the books of accounts and recasting of what? Financial statements. So bhaiya, reopen your books of accounts and recast your financial statement, and the coverage of this order is going to be up to the 8 preceding financial years. As you all know that every company maintains their books of accounts and preserve it for at least for the last 8 accounting years. So if the complaint will be raised, then it will be, you can say that yes, NCLT can pass the order for reopening of the books of accounts up to the preceding 8 financial years. Are you getting the point? But before NCLT is passing this order, NCLT has to give the notice to all the requisite concerned authorities, and the reason of section number 130 and 131 is also required to be presented in the board report. So this is what 130 all about. And what is 131, everyone? 131 is all about voluntary revision of board report or financial statement. As you all know that board of directors are having the 2 responsibilities. What are the 2 responsibilities? They have to prepare the board report as per section number 134, and they also have to prepare the financial statements as per section number 129. If the board of directors of a particular company feels that while preparing the board report or while preparing the financial statement, they did not comply fully with section number 134 relating to board report and 129 relating to financial statement, they themselves can make an application to whom? NCLT. Now, why they are voluntarily making the application to NCLT to let them revise the board report or financial statement? Because they don't want to come under the scanner of NCLT and they don't want to pay the penalties and fines. So it's better that prevention is better than cure. They only realize their mistake and they are making the application to whom? NCLT. And if the NCLT is satisfied with their application, then NCLT may make or NCLT may allow the board of directors to revise their board report or financial statement. If the NCLT is satisfied, order under section 131 will be placed. And remember, what is the major difference between 130 and 131? In the 130 order, the NCLT can put this order to reopen the books of accounts of preceding 8 financial years. But in 131, if the NCLT is ordering under 131, it may only allow you to revise your financial statements or revise your board report of up to preceding 3 financial years. So 8 financial years are allowed in 130 and up to 3 preceding financial years is allowed under 131. So that is what the major difference between what? Now you can see that coverage is here up to preceding 8 financial years and coverage is here up to preceding 3 financial years. So 130 is a forcible section by the NCLT on the company to reopen the books of accounts and recast your financial statements. Whereas 131 is a voluntary section where the board of directors are applying to the NCLT ki please allow us to revise our board report or financial statement. There the coverage is up to preceding 8 financial years. Here the coverage is up to preceding 3 financial years. But let it be 130 or 131. In both the cases, if this order, any of the order or both the orders have been passed by the NCLT on a company has to mention the reasons of 130 and 131 in their board report. Did you get the point? And most important difference is also that here complaint is involved, where in 130, and in the 131 complaint is not involved, application request is involved. Board of directors are requesting to the company. Is it clear, everyone? Yes or no? Yes. Now next section is 132, everyone. So first let us complete the section number 132, which is very important section. And 132 section is all about NFRA. So 130 is over, 131 is over, 128 is over, 121 is over. So I will be picking up the very most important sections of this particular area. Now what is 132? 132 talks about NFRA. Now, sir, please give us some little bit introduction of NFRA. Now, when we talk about the NFRA, the first thing you have to understand that NFRA is a filter between ICAI and MCA. You all know what do you mean by MCA? Ministry of Corporate Affairs, and ICAI, Institute of Chartered Accountants of India. As you all might be aware of the fact that ICAI is entrusted with a duty to form accounting standards and standards on auditing. Today also, accounting standards and standards on auditing will be made by, will be established by ICAI only. But Now ICAI directly cannot ask the MCA to notify it. Those accounting standards and those standards on auditing which the ICAI is making now first will be now forwarded to whom? NFRA, National Financial Reporting Authority. Once it is forwarded to NFRA, if the NFRA thinks that this new standard on auditing or new accounting standard or INDAS is valid enough for the better fair presentation of financial statement, then NFRA will now make the recommendations to whom? Ministry of Corporate Affairs. So you can say that between ICAI and between MCA, NFRA has started behaving like a filter. So first ICAI has to throw all its accounting standards, standards on auditing, amendments on accounting standards to whom? To the NFRA's pocket. NFRA will analyze it, monitor it. If the NFRA feels that yes, it should be notified by the MCA, then NFRA will report it to MCA and finally it will be notified. After that only it will be applied to our portion. So between ICAI and MCA, now NFRA has come. Now NFRA is not only playing this role. Let me tell you one thing. NFRA is playing a very, very huge and important role. Now what is the role NFRA is playing? Now try to understand. Nowadays, NFRA is also taking care of professional misconducts and other misconducts which are conducted by the auditor while doing the audit of so many types of companies. Sir, but we to heard in the code of ethics that professional misconduct and other misconduct will be punished and penalized by the ICAI. No longer. More than half of the powers of the ICAI have now been vested in the hands of NFRA. NFRA is a more constitutional, more bold body as compared to ICAI. NFRA has started taking the more punishment steps against the fraudulent auditors and fraudulent members in practice if they are involved in particular type of scam and scandal. Now NFRA has mostly all the companies ka auditor and the companies functioning, whether it is properly happening or not, auditors are properly working or not, if they are involved in fraudulent activity like scam and scandal. Now NFRA is taking care of and punishing you in relation to your professional misconduct and other misconduct. I'm not saying that it is completely given in the hands of NFRA, but majority of the powers of the ICAI has been vested in the hands of NFRA. So that we'll understand over the period of time. So what is NFRA? First we'll understand. Sir, what is NFRA? NFRA is an institute or an authority which basically is going to monitor the services of auditor in terms of quality review of services rendered. So NFRA is now acting as a watchdog on the services which are rendered by the auditors. If the NFRA feels that yes, there is a particular hole or there is a particular black spot in the quality of the services which are rendered by the practicing CAs, then in that case NFRA will interfere and will make sure that the appropriate punishment will be given to that particular chartered accountant in practice or a firm in practice guilty of professional misconduct or other misconduct. Now, next thing, sir, who has constituted the NFRA? NFRA is constituted by the central government. Why it is constituted by the central government? To make sure that matters relating to accounting standards and auditing standards can be in a better manner taken to the eyes of Ministry of Corporate Affairs. So as I told you already, first ICAI used to do the same, but now ICAI no longer is directly interacting with the Ministry of Corporate Affairs. ICAI, if they want to put their standards on auditing and accounting standards on the board of Ministry of Corporate Affairs, it has to go through the eye of National Financial Reporting Authority first, established under section 132 by the central government. So who constituted NFRA? Central government, monitoring the accounting standards and standards on auditing and the amendments in these standards brought down by the ICAI. Now, what is the composition of NFRA? So remember everyone, in the NFRA total 16 members are there. One is the chairperson of NFRA. And what is the qualification of the chairperson? There is no particular qualification for being the chairperson of NFRA. He should be a person of eminent personality and having a good expertise in the fields like law, taxation, finance, accounts and auditing. And there are not more than 15 members required in the NFRA. And in these 15 members, some of the members will be part-time and some of the members will be full-time members. Next one, before joining the NFRA, make sure that the chairperson and the members of the NFRA must give a declaration of independence. All of them have to give the declaration of independence, the chairman as well as all the members. Now, what is the declaration of independence? In this declaration, they are saying that we do not have any conflict of interest with the entity which is under their investigation. And at the same point of time, we do not have any relationship with that audit firm or of whose case they are handling right now. So remember one thing, NFRA has to give, the chairperson and the members of the NFRA has to give this declaration before joining the NFRA. And this independence, they don't have to maintain only at the beginning of joining the NFRA. They have to maintaining during the full course of their employment. On every assignment which they will get, they have to provide this declaration of independence. And not only that, even after leaving the NFRA, suppose you left the NFRA, after leaving the NFRA also for the next 2 years, you are not allowed to have any kind of relationship with that audit firm or that chartered accountant in practice who was under the case of NFRA. Are you getting the point? So not only you have to maintain the degree of independence during the employment, you are also going to maintain it after 2 years from ceasing to become the member of NFRA. Now, what are the powers of NFRA? As I already told you that most of the powers of professional misconduct and other misconduct relating to members in practice and members in service, which used to be handled by the ICAI, now has been shifted to whom? NFRA. Now, what are the powers which have been shifted to NFRA? Now, clearly look at that. Whether suo moto, if the NFRA suo moto believes that, means what? Somebody made a complaint or NFRA on its own believe that, or complaint made by the central government. Who made a complaint to NFRA? Either central government made the complaint or NFRA suo moto believes that, what it believes, that the member or the firm of chartered accountant is guilty of professional misconduct or other misconduct. Either you are guilty of professional misconduct or you are other misconduct. By looking at this meaning, you are already getting confused. Sir, ये तो हमने code of ethics में पढ़ा था. This one we read in code of ethics. But remember, some of the powers of the ICAI has been shifted in the hands of NFRA. So not only ICAI is going to take care of the professional misconduct and other misconducts of the chartered accountants in practice and the firm of auditors. Along with the ICAI, NFRA is also watching you and monitoring you throughout your practicing, right or not, throughout your practicing era till the time you are doing the practice. So if any firm or a chartered accountant is guilty of professional misconduct or other misconduct, NFRA has the power to investigate that professional misconduct or other misconduct. Are you understanding the point? What I was saying, that let's do the wrap up of the first power of the NFRA. The first power of the NFRA says that if NFRA finds out on its own or somebody has made a complaint to whom? NFRA. Now, what is a complaint? That member or the firm of auditor is guilty of professional misconduct or other misconduct, then the NFRA has the power to investigate. Now, the question arises, sir, what if the NFRA has started the initiation or NFRA has initiated the investigation? Remember one thing, once the NFRA has started the investigation, then in that case, no other authority or no institute can start the proceeding. This is a special power given to the NFRA. Next one. What is the next power of NFRA? NFRA also has the civil court powers. The civil court judges are having the powers like enforcing your attendance, examining you on oath, examining the witnesses, summoning and enforcing your attendance. All those things, the powers which are given to the civil court judge, are also being provided to the NFRA. You can see that summoning and enforcing the attendance. You can see that examining them on oath, inspection of any books of accounts, and examination of witnesses. So what a civil court judge can do, the same powers are given to the NFRA. The first one, power to investigate. 7.1, power 2 of the civil court. Now, power to impose the penalty. This is very, very important. If after the investigation, the NFRA believes that yes, this particular auditor or the firm of auditor is guilty of professional misconduct, then what is going to happen? Then in that case, NFRA will impose the penalty. Sir, how much penalty NFRA will impose if it is an individual case? If it is a case of an individual auditor, then minimum 1 lakh, maximum 5 times the remuneration received or the fee received. And if it is a firm of auditors, it is minimum 5 lakhs and maximum 10 times of the fee received. So again repeating, if it is an individual member involved in that professional misconduct or other misconduct, it is minimum 1 lakh, maximum 5 times of the fees received. And if it is firm of auditors involved, it is minimum 5 lakhs and maximum 10 times of the fees received. Not only that, you will be debarred from being practicing in CA profession. You are not allowed to be a member or COP holder anymore. and you will be debarred for minimum 6 months from your practice, maximum 10 years from your practice. So it is and, means it is and, both the things will take place. Fine also it will be imposed, and at the same point of time you will be debarred from practice. Next one, sir, if I am not dissatisfied, if I am not satisfied with the order of NFRA, is there any authority where I can go and appeal? Yes, the authority is known as NCLAT, National Company Law Appellate Tribunal, where you can go and file an appeal. Next point, sir, how many meetings NFRA can do? NFRA can do as many meetings at whatever the place they want, at whatever the time they want. Next point, other employees and secretary. If you think that the NFRA is not able to handle the so many cases with the required staff and with the present staff and present employees, then NFRA can hire more number of employees and more number of staff as per the requirement. Where the head office of the NFRA is located, head office of the NFRA is located at Delhi, and it also has the branches at some other places. Next point, who will prepare the books of accounts of NFRA? Books of accounts of the NFRA will be prescribed by the central government. How the NFRA is going to prepare its books of account, that will be prescribed by the central government, obviously in consultation with C&AG, Comptroller and Auditor General of India. इसका audit कौन करेगा NFRA? As we know that it is a central government authority, so therefore the audit of NFRA is also going to be conducted by the C&AG, and after doing the audit, it will forward its audit report and financial statement to the central government. And once the audit report and financial statements are audited by the CAG along with its annual report, what the central government will do, central government will put all these documents in front of both houses of parliament, so that finally the audit of the NFRA can be closed. So these are the various introduction things which you should know about the NFRA. What is NFRA? What does it do? What are the powers of NFRA? Power to investigate, power to impose penalty, power of civil code, how many members are there, what is the declaration they have to provide, till when they have to maintain that independence, after leaving NFRA also till when, where the books of accounts, how the books of accounts will be prescribed, who will do the audit, and how it will be laid down in the both houses of parliament. So this is what all about the NFRA you should have known. Now we are going to understand NFRA rules 2018, which were notified on the 13th November 2018. On 13 November 2018, so many rules have been notified. So among them, few rules which I am going to discuss with you, which can be very important from your examination point of view. As I told you that nowadays NFRA has little bit taken up the responsibility from the shoulders of ICAI. So what the central government has done, central government via these rules, especially via rule number 3, has given a special power to NFRA. What is a special power have been given to the NFRA? Ki NFRA does have the investigative powers on such class of companies and body corporates and their auditors. Such class of companies, body corporates and their auditors. Now question is, sir, which companies have now been covered under the preview, under the scope of NFRA, on which NFRA can conduct the investigations? All the listed companies either in India or outside India, you are only and only going to be investigated by now whom? NFRA. So all the listed companies in India or outside India will be investigated by NFRA. Next one, if you are an unlisted public company but your outstanding borrowings are 500 crores or more, paid up share capital is 500 crores or more, or your turnover is 1000 crores or more, now you are also going to come as an unlisted public company under the scope of NFRA. Are you getting the point? Next one, if you are a banking company, insurance company, electricity company, any company made under the special act, or any body corporate made by the central government, then also you are going to come under the scanner of whom? NFRA. NFRA can investigate these companies also. Next one, any class of company, body corporate, person which is referred to NFRA by the CG, which is in the public interest. If the CG feels that it is in the public interest that NFRA should investigate this particular company, even though it is not covered under the NFRA rule number 3, then also NFRA will take care of that investigation of that particular company which is referred to NFRA by the central government. But it should be in the public interest. And all those foreign branches, all those foreign associates, all those foreign subsidiaries whose parent company is located in India, but you as an associate, you as a subsidiary located outside India, but your parent company is located in India. and as a foreign subsidiary or as a foreign associate, you are contributing at least 20% in the total consolidated income of the group or 20% in the consolidated net worth of the group, that foreign subsidiary and that foreign associate is also going to be investigated by whom in India? NFRA, not ICAI. So in total, 5 types of companies have been included in the scope of NFRA. Point number 1. Listed companies in India, outside India. Unlisted public company whose paid up share capital is 500 crores or more, outstanding borrowings is 500 crores or more, or turnover is 1000 crores or more. Banking, insurance, electricity, any company made under the special act or any body corporate required by the central government. Any other company which is referred by the central government in the public interest, or foreign associate or foreign subsidiaries which are contributing at least 20% in the consolidated net worth or 20% in the consolidated income of the group. So this is what do you mean by rule number 3. Did you all understand the rule number 3? Now, information relating to the auditors. Now, every body corporate which is covered under rule number 3 has to inform about their auditors to NFRA now. Now, informing about your auditors to NFRA is mandatory. Every existing body corporate other than the company governed under these above rules, all those body corporates other than the rule 3 companies shall intimate and inform NFRA about their auditors within 30 days from the commencement of these rules. Means those companies which are covered under rule number 3, they are going to be investigated by the NFRA. But other than them also, they have to inform, other than rule 3 entities, they also have to inform about their auditors to whom? NFRA within 30 days from the commencement of these rules. And when these rules commenced? 13 November 2018. And those body corporate other than company defined under section 2 subsection 20, all those body corporates which are other than defined under section 2 subsection 20 which are formed in India, they also shall inform NFRA about their auditors appointed under section 139 subsection 1, that is called subsequent auditor, within 15 days from the appointment of such auditor. Means for the normal companies, they have to inform within 15 days from the appointment about their auditor to the NFRA, and those body corporates other than rule 3, they have to inform about their auditors within 30 days from the commencement of these rules. Next point kya hai? In form number NFRA 1. What is the form number within which they have to inform? They have to use the form number NFRA 1 to inform about their auditors. Next point. Note. All ceasing to be the listed companies or body corporates means what? Suppose you cease to be falling under the rule number 3. Even though you are unlisted or listed, for the next 3 years also, you still continue to inform about everything, or you still continue to get governed under NFRA. Suppose you delisted in India or outside India. Suppose your paid up share capital fell below 500 crores or more, or outstanding borrowings fell below 500 crores or more, or turnover fell below. So if you are a listed company or unlisted public company, even if your limits have no more eligible to be covered under rule number 3 under the NFRA, you are still liable to report to the NFRA for the next 3 years. They shall still be governed by the NFRA rules. Next one. Rule number 3 is over. Now rule number 4. Now, what are the functions and duties of NFRA? What does the NFRA does? Basically, NFRA establishes the high quality for accounting standards and standards on auditing. I am not saying that ICAI is not doing that. ICAI is very well doing that, but NFRA is monitoring that ICAI must establish those kind of accounting standards and standards of auditing which are assuring the high quality work. And NFRA is also doing the effective oversight of accounting of the body corporates and auditing by the auditors. Whether the accounting by the company is being done properly or not, or whether the audit by the auditor is being done properly or not, that is also effectively taken care of or taking monitored by whom? NFRA. And why this all things NFRA is doing? To protect the interest of investors, public, creditors and other affected parties. See, I am not saying that ICAI is not doing the same. ICAI is also doing the same. But NFRA is a more aggressive body. It takes care of the public, stakeholders, creditors, other affected parties. It wants that the best quality standards on auditing and accounting standards should be brought into the picture. It wants to bring that it should always be keeping an eye upon the accounting done by the body corporates and auditing done by the auditors. Mainly, it focuses on maintaining the details of particulars of auditor. So their main focus of NFRA is that they should maintain the particulars of the auditor, recommend AS and SA for the approval by whom? Central government. Monitor and enforce compliance with AS and SS. Company should follow AS and the auditor should follow SS. It is monitor and enforcing that they should comply with that. Checking the quality of the services of what? Professional. Remember, don't confuse NFRA with peer review and quality review. Everyone is having their own role to play. Next one, raising the standards of Indian AS and SS with the international institutes. Remember one thing, our standards on auditing, accounting standards are very good, but still they are lacking in meeting the standards which the international standards have set up in India. So to make sure that the Indian accounting standards and Indian standards on auditing should compete with the international one, that's the reason NFRA has been brought in India. Is it clear? Next point kya hai? Rule and promoting awareness. So this is the major functions and roles of what? NFRA. Now rule number 5. Every auditor under rule number 3. Under rule number 3, companies ka auditor shall file its annual return with NFRA in form number NFRA2 specified by central government on or before 30th November. So every auditor under the rule number 3 shall file annual return with NFRA in form number NFRA2 specified by central government on or before 30th November. Next point. Main rules. Basically, NFRA has 4 major functions. What is our rule number 6 function? Recommending SAs and AS to whom? Central government. Right or not? Next one, monitoring and enforcing the compliance with AS. On what company? Now tell me one thing here, SA is written? No. Only AS is written. It means rule number 7 is completely focused by NFRA on companies which are following those accounting standards. So first one, it will recommend SAs and AS to central government, which ICAI is doing. So it means NFRA is keeping an eye on ICAI also, so that ICAI should provide the best quality AS and SS. 7th rule mein, it is monitoring and enforcing the compliance of accounting standards on body corporates. 3rd mein, it is monitoring and enforcing the compliance of standards on auditing on auditor. And rule number 9 also overseeing the quality of service and suggesting measures for improvement. So NFRA is not a fault finding machine, what we think of. Generally, we have a bad attitude towards the NFRA. We think that NFRA is something which is a fault finding machine. It is completely after running behind the CS, but aisa nahi hai. It is not about running after the auditors and all. It is all about, telling you to maintain your quality if you're going somewhere wrong and giving the recommendations for improvisation. Not only on auditors, it also keeping the eye on body corporates, that they should follow the accounting standards also properly. Auditors should follow the standards on auditing properly. So rule number 7 and 8, you can differentiate between that. And 6th one, it is monitoring on ICAI also. ICAI should provide the quality standards on auditing and accounting standards so that it can be recommended to whom? Central government. Rule number 6, NFRA. What is the rule number 6? NFRA shall receive the recommendations from ICAI on the proposal of new SAs and on amendments. So ICAI will make the new SAs and AS as always, and it will also propose the recommendations on amendments to existing SAs and AS. But it shall be first given to whom? NFRA. If the NFRA wants, it may ask the additional information if required from the ICAI on the A above. It means if the NFRA thinks that whether any additional information is required, the NFRA will not hesitate in asking ICAI why this particular standard or why this particular rule is required. Next, shall consider it, and if things fit, it shall be recommended to the central government. That is rule number 6. So, pehle NFRA received, NFRA analyzed. If NFRA thinks that additional information is required, if not required, it will immediately carry forward these rules and give to whom? Central government to notify it in the Ministry of Corporate Affairs. Did you get the rule number 6? What is rule number 7? Ensuring that companies should maintain the accounting standards and comply with the accounting standards very carefully. Are you getting? NFRA may review the financial statements of the company or the body corporate. Whenever the NFRA wants, it can go to the company and ask them to give their financial statements. Next one, it may ask the additional information from the company, body corporate or its auditors by giving written notice. If the NFRA thinks that there is a problem, or anyway, if it wants to clarify any kind of doubt, it may give a notice in writing to that company, to the body corporate or the auditors, and ask the additional information. May require personal presence of the officer in review of the financial statement. Whenever it is reviewing the financial statement, they want a particular officer of the company to be present at that point of time, and shall publish its findings relating to non-compliances, if any, on its website. If the NFRA finds any non-compliances by the company or a body corporate in following the accounting standards, it will immediately publish it on the website, unless it has a reason to believe that there is a code of confidentiality which is going to be broken. If the NFRA thinks that the code of confidentiality can be broken if it will directly publish it on the website, it will be public and it is sensitive information, then NFRA directly will go and report it to the central government. Otherwise, NFRA will not think twice before publishing the name of that entity or the company which is not following the accounting standards properly on its website. Next point. If the NFRA thinks that there is any violation of accounting standard, that it may decide for further investigation, NFRA may go for the further investigation or enforcement action through its concerned division. That is rule number 7. Rule number 8 is now monitoring and enforcing the compliance with standards on auditing on auditor. This is on auditors. NFRA may review the audit working papers and communications relating to the auditor. So, जितना भी audit documentation you make और जितने भी audit working papers you prepare as per SA 230, all of that can come under the review and the scanner of whom? NFRA. NFRA can evaluate the quality control system. जितना भी as per SA 220 and 230 you are maintaining the quality control system, NFRA can question on that also. NFRA can also do the testing or sampling of supervisory techniques which are adopted in your firm. NFRA may also demand the general practices and internal practices report from the auditor. What are your governance practices and what are your internal practices which you carry out in your audit report? So basically, NFRA is analyzing your way of doing the work. It is analyzing your quality standards. It is analyzing your 230 working papers documentation. It can do the testing on you. It can ask you your governance practices. It can ask you your internal processes. Why NFRA is doing that? So that NFRA can promote the high quality standards, so that it can protect the auditor's reputation. It is doing it for you only, not for anybody else, so that it can reduce the risk of failure of auditors, and so that necessary actions can be taken on the basis of report. NFRA may demand the personal presence, like NFRA may demand the personal presence of the officer in case of compliance of accounting standards on the company. NFRA may also ask the personal presence of what? Auditor, when the NFRA is reviewing your work, right or not? Next one. Again, if the NFRA will find that there is a non-compliance on the standards on auditing, so NFRA will publish that non-compliance findings on its website. But if the NFRA feels that there is little bit confidential, sensitive in nature relating to auditors information, then NFRA can sneak it into the ears of central government very slowly. It may send a separate report to the central government containing that proprietary and confidential information for central government's information. Matlab, that is what I told you. If the information is proprietary in nature, confidential or sensitive in nature, it may sneak it out in the ears of central government. Where it has a reason to believe that there is a violation of any standard by the auditor, then it may decide further investigation or enforce the action through its concerned division. Next one. Overseeing the quality of services and suggesting measures for improvement. What the NFRA do? NFRA may direct an auditor to take measure for improvement in the quality in terms of, अगर NFRA को लगता है कि there is one particular auditor who is not maintaining the good quality while doing his audit, तो NFRA can suggest him some measures to improve the same. What can be the suggestion? Suggestion can be change in the audit process or change in the quality control standards or change in the audit reporting with specified detailed plan of action within time limit. So NFRA is basically giving you a time limit so that you can show to the NFRA ki whatever the improvements and suggestions NFRA is looking for in your quality of audit, you are giving the NFRA back that report ki these are the improvements and suggestions which you told me, I have already done it. Auditor is under an obligation to incorporate those improvements and send a report to NFRA explaining his compliances. It is the auditor's responsibility that whatever the improvements NFRA is telling you, you should do that and finally report it back to NFRA. NFRA shall monitor the improvements and take the necessary action if required. After your compliance report, which the NFRA has suggested to you, has come to the NFRA, NFRA will monitor your improvements and take necessary action. If the NFRA believes that your case should be forwarded to QRB, Quality Review Board, so NFRA will forward your case to the Quality Review Board and call for extra information. NFRA may take assistance of its experts also on checking your activities. So this is a rule number 6, 7, 8, 9 relating to NFRA. So 6 was on ICAI, 7 was on body corporates following the accounting standards, 8 was on auditor following the standards on auditing, and 9 was on overseeing and monitoring the quality of auditing done by the auditors. Next point, rule number 10, power to investigate. NFRA shall forward the matter of further investigation or action, if any, on its own, suo motu, or on the reference made to it by the central government, or on the basis of compliance or overseeing and monitoring activities. NFRA shall report to central government if there is an evidence. अगर NFRA के पास evidence है to believe that कि company has not complied with any act or rules and regulations, and the fraud involved in the company is more than 1 crore, then after the commencement, then in that case, NFRA can directly report it to whom? Central government. After the commencement of these rules, no body, institute or authority shall initiate the proceeding if the NFRA has already initiated. मैंने तुम्हें पहले ही बताया था कि once the NFRA has started the investigation, no other person can investigate it. But for the companies other than rule number 3 who is still investigating, I already told you कि only rule 3 companies, auditors, body corporates are coming under the scanner of NFRA. Other than that, still it is to be done by the ICAI. So for the companies other than covered in rule number 12, cases of professional and other misconduct of company or body corporate shall be continued to be proceeded by whom? ICAI. Next is rule number 13. If a company or officer of the company or auditor of the company or any person violates a rule of what? NFRA. अगर आपने NFRA rules violate करे तो भैया penalty under section 450, and 450 is a general penalty section where on whom company, OID and auditor, every officer and company in default, every company and officer in default shall be punishable of a fine up to rupees 10,000 and 1,000 rupees per day if the default continues. So 450 is a very general penalty section which you have already read in your company law. And finally, rule number 16, to promote and aware the significance of accounting standards and standards on auditing, quality of audit and auditors' responsibility among company body corporate auditors by giving training, seminar, education and workshops and publicity. So NFRA is not only a fault finding machine. If the NFRA believes that some seminars, some workshops should be conducted for the accountants and auditors and companies to have a better compliance of accounting standards and standards on auditing, NFRA will do the same. So that brings an end to your very important section number 132, which talks about NFRA. Now, section number 133 is a very simple section. 133 says that central government to prescribe some accounting standards. As you know that before 2015, every company in India used to follow accounting standards. But after 2015, when IND-AS came to India, after 2015, some companies are still following the accounting standards, and some companies are still following are now following the IND-AS. So those companies which are following the IND-AS, they should follow the IND-AS standards, and those companies which are following the accounting standards, they should follow the accounting standards from AS1 to AS29. And before NFRA, there used to be one body called NACAS. And what is the full form of NACAS? Then full form of NACAS is National Advisory Committee on Accounting Standard, which used to be there before NFRA, but it was only taking care of accounting standards. But now NFRA is taking care of both accounting standards as well as standards on auditing. With that, your section number 133 is over. Section number 134 किसके बारे में है? 134 talks about the board report. 134 talks about the board report. Now, what are the contents of the board report? Remember one thing, in the contents of the board report, you have to be very much understand the one thing that board report under section 134 talks about all the things which are happening in the company right from the day 1 to 365th day of financial year. So how many number of boards meetings have been conducted during the year, that will be reported in the board report. Extracts of annual return, you all know that some parts of the annual return will be called as extracts, that is required to be attached in the board report in MGT 9. And if you want to see the full annual returns of the company, it will be published on the website of the company, and web link of that website will be given in the board report. And if you are interested in understanding the risk management policy of the company, that web link also will be given in as one of the content of the board report. Why section number 130 and 131 has been imposed on you by the NCLT, that reason is also going to be a part of your board report. What is the constitution of your audit committee, nomination and remuneration committee, shareholder relationship committee, etc. in the company, that is also going to be the part of your audit report. And what are the CSR initiatives taken during the year, that is also going to be the part of your board report. Next point, highlights of the major things happened during the year, like major contracts, major commitments if the company has entered, that highlights are also going to be the part of your audit report. How many number of subsidiaries, associate, joint venture entered in the group of the company and left the group of the company, that is also going to be reported in the board report. How many energy consumption conservative initiatives taken by the company during the year, that is to be reported in the board report. How much foreign exchange earned and foreign exchange spent by the company during the financial year, that is also going to be reported in the board report. Technological advancement, if you have adopted, that is also going to be reported in the board report. Top 10 employees of the company performance wise and salary, they are also going to be reported in the board report. And the details of those employees are also going to be the part of your audit report who have worked in the company throughout the year and earning the salary for more than 1 crore 2 lakhs per annum, and details of those employees who were employed by the company through the part of the year, not for the full year, and who were getting the salary or remuneration exceeding 8,50,000 rupees per month. And you also have to attach the director's responsibility statement and how many KMPs added or removed during the financial year. All these things are going to the part of your board report under section 134. And as I told you that you have to attach the director's responsibility statement to section number 134, subsection 3 talks about the director responsibility statement. First of all, try to analyze what is the heading called. Heading is called director's responsibility statement. Now, what are the responsibilities of the director? Now, if you analyze, accounting policies should be properly selected and properly implemented. That is the responsibility of the directors. Accounting estimates are properly made and well judged. That is also the responsibility of directors. Accounting records are reliably prepared. That is also the responsibility of directors. Accounting standards are consistently followed. That is also the responsibility of directors. Going concern assumption is appropriate. That is also the responsibility of directors. Laws and regulations are properly complied with. That is also the responsibility of directors. And internal financial control systems are properly installed in the company and working properly in the company. That is also the responsibility of directors. So this is known as directors responsibility statement. So you can see that all these 7 declarations are being given as it is. So I'll tell you to remember how it is: accounting standard, accounting policies, accounting records, accounting estimates, going concern, laws and regulations, internal financial control system. So that is what brings an end to your director responsibility point. But if your board report and director's responsibility statement is not being prepared as per section number 134, and if you have violated that, then company will be liable to a penalty of minimum 50,000, maximum 25 lakhs. And officers in default who are defaulter, who have done the fault in preparing the board report and director responsibility statement, they will be liable to a penalty of minimum 50,000, maximum 5 lakhs, or imprisonment up to 3 years, or both. Did you get the point? So this is your penalty under section 134 if your board report and director's responsibility statement is not matching. These are some of the extra points you can write in the board report. Comments on negative or adverse remarks kept by the auditor or by the secretarial auditor, that is also going to be the part of your board report. Amount of profits, if any, transferred to reserve, that is also going to be the part of your audit report. Dividend recommended by the board, either final or interim, that is also going to be the part of your audit report. Next one, evaluation and performance of its board of directors and committee members of the listed company and unlisted company whose paid up share capital is greater than or equals to 25 crores. That is also going to be part of your board report. Public deposits raised, repaid and defaulted, if any, during the year, that is also going to be the part of your board report. And declarations made by the independent directors, that is also going to be the part of your audit report. Now the main point is, sir, who is going to sign the audit report? Now remember, if the board report, sorry, not the audit report, if the board report is, who is going to sign the board report? Who are the signatories of board report? If the chairman of the company is authorized by the board of directors, if the chairman of the company is authorized by the board of directors, then only chairman will sign the board report. If the chairman of the company is not authorized by the board of directors, then 2 directors will sign the board report, among whom one should be MD. So you can see that if the chairman is authorized, only chairman. If the chairman is not authorized by the board of directors, 2 directors, among whom one should be MD. And in case of OPC, definitely who will sign? Only 1 director will sign. Next point, sir, who will sign the financial statement? India mein culture is that ki auditor also signs the financial statement, but actually as per section number 134, auditor never signs the financial statement. Here also the same thing you have to understand. If the chairman of the company is authorized by the board of directors, the chairman will sign along with the chairman, CEO, chief executive officer, chief financial officer, and company secretary of the company will sign. If the chairman is not authorized by the board of directors, then two directors will sign, among whom one should be MD plus CEO, CFO, and CS. So remember one thing, as per section number 134, no chartered accountant, no auditor signs the financial statement. But as a culture is there in India, no one believes the financial statement unless signed by the chartered accountant in practice or their auditor. And for the CEO, nowadays, need not be a director first to sign the financial statement. So earlier, what used to happen, if the CEO wants to sign, he has to be a first director and then CEO. But now, you need not be a director first to sign the financial statements as a CEO. That brings an end to your section number 134. Now, what is 136? 136 talking about the sending the financial statements to whom? Member. That is what 136 is saying. 136 is saying that if you are a listed company, then in if you, section number 130 says that ki financial statements copy is required to be sent to whom? It is required to be sent to every members of the company, every debenture trustee of the debenture holders, as well as the auditors. But if you are a listed company, then you need not send the full financial statement. Only the salient features of the financial statement are required to be sent in form number AOC 3. But the full-fledged financial statement, you have to kept it open for inspection at your registered office during the business hours at least 21 days before the AGM. So full-fledged financial statement will be kept open for inspection at registered office during the business hours at least 21 days before the AGM, or business hours means 9 AM to 6 PM. If somebody demands the hard copy, then you have to give the hard copy. But there is one rule number 11. What is rule number 11? If you are a listed company and if you are a unlisted public company whose turnover is greater than 10 crores and net worth is greater than 1 crore, then in that case, you always have to send the financial statement copy on their mail. But only if the members have the demat account. So if the members are having the demat account, then financial statement copies are required to be sent on a mail. But if the members do not have the demat account, but they have given their consent to the company that we do not have any objection, if you send us the financial statement on email, to them also company has to send via email. But those members who neither have the demat account or not consented to the company has to send them the hard copy or the physical copy only. And violation of this section number 136 will draw a penalty on the company for 50,000 and OID fine of 5,000. Clear है? And in case of section 8 company, ये तो CSR activities के related है, so that will understand in CSR. So section number 136 is also over. So we are only left with 135 and 137. So let us understand what is 135, everyone. जल्दी से पढ़ लेते हैं. What is 135? 135 is CSR. What is 135, everyone? 135 is all about CSR. Let me see if anything is there. So, what is section number 135? Section number 135 talks about the corporate social responsibility. First of all, sir, we have to understand what is this corporate social responsibility. Every company which is covered under section number 135, they have some social responsibility towards the society. So that is why it is called as corporate social responsibility. So what the company has to do? Company has to do some CSR activities which are listed in schedule number 7. Company has to do those CSR activities which are listed in schedule number 7. Sir, to whom it is applicable? It is applicable to every company either listed in India or outside India, or listed, unlisted company, public company, foreign company, Indian company or foreign company, public or private company, and it also covers even section 8 company. Next point. Sir, it is applicable to the companies when? It is applicable to the companies only when either of the three conditions are satisfied. Condition number 1. Your net worth should be greater than equals to 500 crores or more, or your turnover should be greater than equals to 1000 crores, or your net profit is greater than equals to 5 crores. How much of CSR expenditure the company has to spend? At least 2% of the average of the last 3 years net profits. Next, sir, is this CSR expenditure going to be qualified as a business expenditure? Answer is no, because if we'll allow you to qualify it as a business expenditure, then the company will get a tax benefit. Company is indirectly saving its tax. Then what's the point of doing the CSR? Am I correct or no? So it is not allowed as a business expenditure. Next one. Sir, will I be getting any kind of exemption under CSR? Remember one thing, if continuously for 3 financial years, you are unable to satisfy net worth condition or turnover condition or net profit condition, then the 4th year onwards, you are not supposed to do any kind of CSR expenditure until and unless you do not fall under the section number 135 again. Next point. So if the CSR expenditures is underspent, what will happen to the underspent amount? Underspent amount will be carried forward in the next year, and next year you have to spend the next year CSR as well as the underspent amount of the last year. But sir, what if the company has spent overspent CSR? Overspent CSR, nothing can be done. In this case, company will not be allowed to carry forward in the next year. Sir, do we have to constitute a CSR committee? Yes, of course, you have to constitute a CSR committee. CSR committee only will decide that from schedule number 7 which CSR activity has to be done. And CSR committee only will recommend it to the board of directors to spend the CSR expenditure. So if you are a listed company, then your CSR committee should have at least 3 members, among whom one should be independent director. Company other than listed companies may, you can make a CSR committee with the 2 members also and no requirement of independent director. But if you are a foreign company, your company also will be having the 2 members, and one will be the nominated by the foreign company, and one will be the member who receives the who receives the communication on the behalf of the foreign company. Are you getting the point? So 2 members will be on the audit committee of the foreign company. One will be nominated by the foreign company, and one will be that member who will be receiving the correspondence or communication on the behalf of the foreign company. Next one, CSR committee will decide what to spend and what not to spend, where to spend, where not to spend, and it will give the directions to the board of directors, and board of directors have to carry out the directions of the CSR committee as suggested by CSR. And in case the board of directors are unable to spend, no penalty on them, but if they are unable to justify why did not they spend, then there is a penalty. So what is the penalty for the non-compliance of section number 135? Same like 134. Company का penalty है minimum 50,000, maximum 25 lakhs, and officer in default का penalty है minimum 50,000, maximum 5 lakhs, or imprisonment up to 3 years or both. But this penalty is not on non-spending, it is on non-justification of non-spending. Now, next few things which you know about, which you should know about the CSR activities. Sir, suppose there is one company and this company wants to do a CSR activity. How it can do the CSR activity? So let's say, for example, Reliance has to spend 1,000 crores on the CSR activity. What the Reliance can do? Reliance can do one thing. Reliance can constitute its own Section 8 company and it can do the CSR activity on its own behalf. So Reliance can make, say, for example, Reliance Foundation, and it can do the CSR. Or you can hire another Section 8 company, not your own. You can hire another Section 8 company which is approved by the central government to do the CSR on your behalf. Or neither you are making your own CSR company or Section 8 company, nor you have any kind of other Section 8 company which is approved by the central government. Then in that case, what you can do, you can hire any other Section 8 company which is having a consistent track record of at least 3 years of doing the CSR expenditure. So either you can make your own Section 8 or central government approved Section 8, or any other Section 8 which is having a consistent track record of doing the CSR activities in the last 3 years. Clear, everyone? Next point. So in case you are not able to do the full-fledged CSR on your own, suppose your CSR is falling short of something which you have in mind, then you can have a combination also. What is the combination? You can do the collaboration with any other company or any government company to do the CSR. So there are 4 methods of doing the CSR. Either you can create your own Section 8 company, or you can hire a Section 8 or similar company like Section 8 which is approved by the central government, or you can hire any other Section 8 company which is having the consistent track record of doing the CSR activities of the last 3 years, or you can collaborate with any other company including government company to do the CSR expenditure. But the most important thing which I would like to tell you is the amendment which came in CSR. Now, what is the amendment came in CSR activity? Now remember one thing, COVID-19 related amendment has come in the CSR. What is a COVID-19 related amendment? Now, COVID-19 related amendment is that if you are spending the CSR expenditure on COVID-19 activities, then you are qualified. It is qualified to be a Schedule 7 activities. So yes, you will get the, you will be like qualified to call it as a CSR expenditure. But what kind of activities? Suppose you are spending the CSR money on medical oxygen cylinder and storage plants, health infrastructure, ventilators or medical equipments for COVID-19 and such other kind of problems. Not only for COVID-19, if you are spending the money for COVID-19 or such other problems, or if you are not spending the money on this, you are donating that money or you are contributing that money to those specified R&D projects, to some public funded projects or other certain organizations which are engaged in these activities. So either you are doing it, that is well and good, or if you are contributing to any other organization or projects which are involved in those kind of activities, then also it will be considered as CSR expenditure. Are you getting the point? Relating to COVID-19 or such other problems like COVID-19. Now this amendment came on 5th May 2021, and if you alone are not able to do the CSR, you can do that also in collaboration with another company, including the government company. So this amendment came on 5th May 2021. Then again another amendment came on 30th July 2021, where they say that CSR expenditure will also be qualified if you are distributing free COVID-19 vaccination to the people other than your employees and other than your family members and relatives. Then also you're qualified, because if you are spending the money on COVID-19 vaccination of relating to your employees, you are doing the welfare of your employees, relatives and family members. That is your duty. That is not your CSR. That is your duty. So other than your employees and other than family members, if you are doing, then in that case also it will be qualified. So total 3 things relating to CSR qualification it has come. If you are doing any health center or medical equipments or ventilators, oxygen cylinder, storage plant, you are doing it on your own, CSR expenditure to be qualified. You are contributing it to the specified projects, R&D projects and other certain organizations who are doing these activities, then also qualified to be a CSR. You can also do it in collaboration with any other company, including the government company, then also it is qualified to be a CSR. Or if you are doing the CSR expenditure on COVID-19 medicine for the employees, other than employees and your families and relatives, then also it is qualified as a CSR. Now this amendment came on 30th July 2021. So this is the amendment relating to CSR activities. So that brings an end to your section number 135 as well. Now we are moving towards the last section, that is called section number 137. Section number 137 is connected with section number 92. As you all know that every company has to file its annual returns with ROC. Every company has to file its annual return with whom? ROC within 60 days from the date of AGM. Same way 137 says that every company has to file adopted financial statements with whom? ROC within 30 days from the date of AGM. Adopted and approved by the shareholders in the AGM. Within 30 days of AGM, the one copy of that financial statement you need to file with ROC in form number AOC 4. But if you are a parent company, then you are going to file AOC CFS 4 also, that is consolidated financial statement. But if you are a listed company, or if your paid up share capital is greater than equals to 5 crores, or if your turnover is greater than equals to 100 crores, or your financial statements are prepared as per IND AS, then you have to file AOC XBRL 4 form number. But if you are a NBFC, if you are a housing finance company, if you are an insurance company, electricity or banking company, you are exempted from XBRL. तो XBRL किसको फाइल करना है? Listed company को, and any other company whose paid up share capital is 5 crores or more, turnover is 100 crores or more, and the company which is preparing its financial statement as per IND AS, they have to follow XBRL format and they have to file AOC XBRL 4 form number. Parent company AOC CFS 4 form number. Standalone financial statement AOC 4. But if you are a banking, insurance, electricity, NBFC, housing finance company, then extensible business reporting format language form is not applicable. Now, there are 3 situations may arise. AGM is held and financial statement are adopted. Then within 30 days, file the financial statement with ROC and complete your work. AGM is held but financial statements are not adopted. It means that is a problem. First, you have to file unadopted financial statements with whom? ROC within 30 days from the AGM, because financial statements are not adopted. Then in the subsequent meeting, whenever these financial statements will be adopted, again you have to file the adopted financial statements again with the ROC within 30 days from that meeting in which those financial statements are now adopted. But if the AGM was supposed to be held but not held, then in that case what you need to do? Then in that case the financial statement copy shall be filed with the ROC within 30 days from the date on which the AGM could have been held. The maximum date on which the AGM could have been held. And in case there is a violation of section number 137, अगर आपने 137 को follow नहीं किया, then company will be liable to a penalty of 1000 rupees per day subject to the maximum of 10 lakhs, and officers in default में MD, managing director, and chief financial officer will be liable to a penalty of 1 lakh rupees flat plus 100 rupees per day subject to the maximum 5 lakh rupees. But if the MD and CFO is not there, then this penalty will be imposed on any authorized director which is authorized by the board to take up this responsibility. If that authorized director is also not there, then all the directors will be held responsibly. But how OPC will file its adopted financial statement? OPC has to file its adopted financial statement within 180 days from the end of the financial year. Why, sir? Why not AGM case say 30 days? Because OPC mein AGM is not applicable. So that brings an end to your section number 128 to section number 148. So 128 to 137 we have covered, including 132 NFR, a very important section in this chapter, and 139 to 148 we have already covered under next section in the company audit chapter in the earlier videos. Only 138 is left, that is called internal audit, that we are going to cover in the internal audit and management and operational audit chapter. So with that, your very major important topic called company audit is over, except the dividend topic, that is called 123 to 127, that we are going to take place in our next video. So thank you so much everyone for watching this video. I hope you liked the revision, and do share it with your friends if you think that they are worthy of being watched. I'll see you guys in the next video. Bye bye everyone, take care. So hello everyone, how are you all, and welcome to the another lecture on our CA final paper number 3, advanced auditing and professional ethics, a rapid revision batch for May and November 22 students. So as you all know that up to the previous video we are already done with what we are done up to section number 128 to section number 148 relating to maintenance of books of accounts, company audit, and now we are going to start with section number 123 to 127. Now when we talk about the section number 123 to 127, these are the sections which are bounded and related to your dividend chapter. Now see what is happening. Section number 123 talks about the dividend, and it also talks about the dividend, sources of the payment of dividend, adjustment, and what if the FR is used for the payment of dividend. 124 talks about the unpaid and unclaimed dividend account. 125 talks about the investors education and protection fund. 126 talks about the dividend kept in abeyance, and 127 penalty if the company fails to pay the dividend on within 130 days from the date of its declaration. So let us start with 123. 123 mein what we are going to understand, first let us understand the definition of section number 2 subsection 35, which talks about the dividend. The definition of dividend is nothing but very simple definition. Definition of the dividend is a return to the shareholders and also includes interim dividend. Rather, the exact definition is dividend includes interim dividend. Means in the definition of final dividend, interim dividend is also included. Now the question is, what do you mean by final dividend and what do you mean by interim dividend? Final dividend is that dividend which is recommended by the board of directors, but it is declared by whom? Shareholders. Interim dividend is a dividend which is both recommended and declared by the board of directors. Next one, it is declared at the AGM. Final dividend is always declared at the AGM, whereas the interim dividend can be declared at any time between the two AGMs or any point of time during the financial year. Final dividend once declared cannot be revoked except it is against the provisions of the act, right? But this dividend called interim dividend can be revoked by the company only before its declaration. So remember one thing, interim dividend is completely in the hands of board of directors, so they can revoke it if they think that at one point of time they are unable to pay the dividend. But final dividend, once it is declared, it cannot be revoked until unless it is declared as against the eyes of the law. And remember one thing, once the dividend which is recommended by the board of directors, shareholders cannot either increase it or they cannot they can only confirm it or they can reduce it, but they are not allowed to increase it even if it is recommended by or even if it is required to be increased by 100% of the shareholders. When we talk about the dividend, what are the sources of making the payment of the dividend? The sources of making the payment of the dividend is current year profits, of course, But if the current year profits are insufficient and inadequate, or current year losses are there, then in that case you will pay the dividend out of free reserves. So what are the first source? Current year profits. Second one is, if the current year profits are not sufficient or adequate, you will pay it out of free reserve. But free reserves are not unrealized gains, they are not notional gains, they are not revaluation reserve, they are not DRR, debenture redemption reserve, and they are not CRR. That is what the definition of free reserves. Or sometimes you can touch the capital profits of the company also, but those capital profits only which are what in nature? Realized in nature. Or if you neither have current year profits, nor you have free reserves, nor you have capital profits, then sometimes it should be either guaranteed by the central government or state government. But before the declaration and payment of the dividend, first you have to adjust the current year depreciation from the net profits. So when you are using the current year profits to pay the dividend and declare the dividend, you have to first adjust the current year depreciation, and you also have to adjust the unabsorbed depreciation of the previous years. And some part of the portion you have to transfer to reserves also. Now question is, sir, how much percentage we have to transfer to reserve? That is completely dependent upon the decision to be taken by the company. So there is no particular percentage which is required to be transferred to reserve. It is completely and purely a discretionary decision of the board of directors. So when you're using the current year profits, current year depreciation has to be adjusted, unabsorbed depreciation of previous year has to be adjusted, and transfer to reserves you have to do. But when you're using the free reserves for the making the payment of the dividend, then in that case, current year losses will be adjusted first. Obviously, when do you use the free reserves? Either your current year profits are inadequate or your current year losses are there. So if you have the current year losses, first you have to adjust the current year loss. After that, you have to adjust the brought forward losses. Now the question is, sir, what if my brought forward losses are more than my free reserves? For that also there is a solution. You don't have to adjust the total brought forward losses, my friend. You have to adjust only those brought forward losses which are lower than your total brought forward losses or depreciation in those loss-making years, whichever is lower. So you have to check the depreciation in those loss-making years. You have to compare it with your total brought forward losses. Whichever is lower, that much brought forward losses only you have to adjust, not the total brought forward losses. So remember, if you are paying the dividend out of current year, first adjust the depreciation, unabsorbed depreciation of previous years, and you have to little bit transfer to the reserves. But if you are making the payment of the dividend out of free reserves, then in that case, the current year losses has to be adjusted as well as the brought forward losses. But brought forward losses to the extent of total brought forward losses to be compared with the depreciation of those loss making years, whichever is lower. Are you getting the point? That only you have to adjust. Now, what is the dividend declaration and payment rules, everyone? If the dividend is paid out of free reserves, section number 123 and the rule number 3 of dividend declaration and payment rules 2014, they have some rules relating to that. Rule number 1. When the free reserves are going to be utilized. Free reserves are only and only going to be utilized when your current year profits are insufficient or you have current year losses. Again repeating, when your current year profits are insufficient or you have the current year losses. And if you are using the free reserves, then in that case, 4 conditions are required to be satisfied. What is the condition number 1? In case the company is using the free reserves for the making the payment and declaration of dividend, then rule number 3 says that the rate of dividend to be offered or the amount of dividend to be declared shall not be in any case more than average of last 3 years dividend rate or 3 years dividend amount. Again repeating, the rate of dividend to be offered or the amount of dividend to be paid shall not be more than average of last 3 years rate of dividend or 3 years amount of dividend declared and paid. But this condition A is only required to be fulfilled if you have declared and paid the dividend in the last 3 years. If any of the year in the last 3 years is missed out, it means you neither declared nor you paid. Then in that case, this provision is not required to be satisfied. Next condition. How much maximum withdrawal is allowed from the free reserves? how much amount for the dividend you can maximum withdraw from the free reserves. It should not be more than 10% of the total paid up share capital of the company plus its free reserves. You are not allowed to withdraw more than 10% of the total paid up share capital of the company plus its free reserves. Next one, after withdrawal, how much minimum shall be left out in the free reserves? After the withdrawal, how much should be minimum left out in the free reserves? After withdrawal, minimum 15% of your paid up share capital should be left out in the free reserves. And most importantly, before making the payment, condition number 4, first adjust your current year losses, my friend. Which year losses? Current year losses. So let's do one example. Suppose the current year losses of the company is 6 crores. So what do you understand from that? It means if the current year losses are there, sir, definitely this company has to make the payment and declaration of dividend out of free reserves. Equity share capital of the company is 40 crores. Paid up share capital is 100 crores and free reserves are 30 crores. In the 16, 17, 17, 18 and 18, 19, company has declared 20%, 18% and 22% as a dividend. Then you have to calculate how much amount of the dividend to be paid. Ab sunna dhyan se. What was condition number 1? Rate of dividend to be offered shall not be more than average of last 3 years rate. What is the last 3 years rates, everyone? 20 plus 18 plus 22, 16 divided by 60 divided by 3. That means 20%. Now 20% of these two, if you calculate, because dividend is declared on both equity share capital and preference share capital. So 20% of the 40 crores plus 100 crores is what? 140 crores. 140 crores cut 20%, if you will calculate, it is coming to what? It is coming to approximately 28 crores. So as per the condition number 1, 28 crores maximum you can pay. But we have to see the condition number 2 also. What is condition number 2? Ki bhaiya, maximum withdrawal is allowed 10% of the total paid up share capital plus free reserves. What is the total paid up share capital? 100 plus 40, 140 plus free reserve 30. So total 170. 170 ka 10% if you will calculate, maximum 17 crores you can withdraw from the which reserves? Free reserves. So iska matlab, sir, 17 crores to we can't. 17 crores we can't. First of all, chalo, theek hai. Let's say for example 17 crores you have withdrawn, but you have to first adjust the which losses? Current year losses. It means if I'll adjust the current year losses, how much I can pay? I can pay only 11 crores. But sir, there is a condition number 3 also. After the withdrawal, minimum 15% of the paid up share capital should be kept in reserves. What is the 15% of the paid up share capital? 140 crores ka 15% if we'll calculate, how much it is coming? 21 crores. Total reserves are 30 crores. So 30 crores mein se 21 crores has to be reserved. Has to be kept in the free reserve. It means maximum we can withdraw only 9 crores. So as per condition number 3, we can only and only withdraw 9 crores because 15% has to be kept in the free reserves. So once you have done the 9 crores means 6 crores adjustment of the current year profits you will do. It means maximum profit you can pay is only and only in the form of dividend as 3 crores. So what are the 4 conditions to be satisfied, everyone? Condition number 1. Rate of dividend to be offered shall not be more than average of last 3 years rate. Condition number 2. Maximum withdrawal allowed is 10% of the total paid up share capital plus free reserve. But condition number 3 is after withdrawal, minimum 15% of the paid up share capital must be kept in your free reserve. And condition number 4, first adjust the current year losses. So you can see that our journey started from 28 crores, but finally the company in this case can end up paying only and only 3 crores. This is how you have to do the question in the examination. But remember one thing, if your company has defaulted in section number 73 to 76, that is in default in making the payment of deposits, then you are prohibited from declaring the dividend and paying the dividend. But this particular above rule of free reserves, the above rule of free reserves is not applicable in case of 100% government companies. It is not applicable in case of 100% government companies, the companies in which the 100% of the voting rights are either held by central government, state government or combined by both. But if you are defaulted in 73 to 76 acceptance of public deposits, you are not allowed to declare and pay the dividend. Completely understood or not? Yes. Now, sir, what do you mean by interim dividend? Interim dividend we already know. Interim dividend is a dividend which can be declared at any rate at any point of the time during the 2 AGMs. It is both recommended and paid by the board of directors, and it can be of any reasons. But remember one thing, interim dividend also can be paid out of the free reserves. But there is one very important thing you have to understand. What is that important thing? Listen to this very, very carefully. The date on which you are declaring the interim dividend, understand it very carefully. The date on which you are declaring the interim dividend in its preceding quarter. In its which quarter? Preceding quarter. Say for example, 7th October, I am declaring the interim dividend. 7th October 2021, I am declaring the interim dividend. Tell me the preceding quarter. Preceding quarter is 30th September. First quarter is April to June. Second quarter is July to September. Na? So what is the preceding quarter? 30th September. On 30th September, if the company has suffered some losses from the date of declaration of interim dividend in the preceding quarter, if the company has suffered the losses, then your rate of interim dividend shall not be more than average of last 3 years rate. The date of declaration of interim dividend in the preceding quarter, in the recent preceding quarter, if the company has still suffered the losses, then the rate of interim dividend shall not be more than average of last 3 preceding financial years ka interim dividend rate. Now you can see that if there are losses in the financial year up to the last day of the preceding quarter, preceding the date of declaration of interim dividend, in such case the rate of interim dividend cannot be more than average of last 3 years. Let's say for example, I am declaring the interim dividend on 4th August. So what is the preceding quarter of 4th August? Means 30th June. On 30th June, if the company is incurring the losses, then in that case, your rate of dividend shall not be more than average of last 3 years rate. Rest all the provisions of the dividend are equally applicable on interim dividend also. Did you understand the point or not? Now, in the next provision, I'm going to make you understand section number 124, 125 and 127 in a very smooth manner. See, 123 I already discussed with you. Now we are going to discuss 124, 125 and 127. Now what is 124? It has to be understood in this way. Now see, we all know that dividend is always and always recommended at which meeting? Board meeting. Once it is recommended in the board meeting, shareholders can't increase it. They can only confirm it or reduce it in the AGM. Are you getting the point? The shareholders are allowed to increase it? No, they can only confirm it or reduce it in the AGM. Now, once the dividend is recommended in the board meeting, in the AGM, declaration of the dividend shall take place. Who will declare the dividend? Shareholders will approve the dividend declaration, which is recommended by the board of directors. Again, they can't increase it. They can only confirm it or reduce it. Once it is declared at the AGM, the company shall make the payment of the dividend within 30 days. Within 30 days of declaration, company has to make the arrangements for the payment of dividend. Company has to make the arrangements for the payment of dividend within how many days? Within 30 days, the company has to make the arrangement for the payment of dividend. Are you getting the point? Sir, how the company will pay the dividend? Now, once it is declared in the AGM, within 5 days, company has to open a dividend account and transfer the total dividend amount from the company's bank account to the dividend account. And within the 30 days from the AGM, within the 30 days from the declaration of the dividend, company has to make the necessary arrangements that they should pay the dividend to each and every member, and they should send the dividend warrant to each and every shareholder. Did you get the point? But they are not allowed to pay it out of their own account. They have to open this dividend account. And remember, this dividend account which the company has to open, and the declaration and the payment, everything has to be done within 30 days. So these 5 days to open the dividend account is also included in 30 days. So within 30 days from the declaration of dividend at the AGM, dividend account also should be open, amount shall also be transferred, and the payment shall be made to the members, and dividend warrant shall also be posted within those 30 days. Everything has to be done within 30 days. How the dividend can be paid? It can be paid by the check, demand draft, online transfer or ECS. Cash dividend not allowed. In case company fails to pay the dividend within 30 days from the date of declaration, again repeating, in case the company fails to pay the dividend within 30 days from the declaration of the dividend, then in that case, what is going to happen? In that case, what is going to happen? Company will be held liable to a penalty under section 127 if it is the company's fault. If the company fails to pay the dividend, then penalty under section 127 will be imposed on the company. If it is not the company's fault, then no penalty under section 127 will be imposed on the company. Only when it is company's fault, it will be imposed on the company. Did you get the point or not? Yes or no? Yes. Now 127 will be applying. What is the 127? Company shall pay the interest penalty at the rate of 18% plus officer in default will pay the penalty up to ₹1,000 per day plus imprisonment up to 2 years. So at least ₹1,000 per day of the amount of like fine they have to pay per day, whatever the delay it will take place, and they will be sent to the jail up to 2 years. But company will be ending up paying the interest penalty at the rate of 18%. Again and again, I am saying this section number 130 will be applicable when it is applicable only and only if it is the company's fault. It means in case the non-payment of dividend was not the company's fault, 127 shall not apply. Now, what can be the cases under which the company is not under the default? Suppose one of the shareholder gave the instructions to the company, okay, I want to receive the dividend in this particular form. Company tried it, but it was a complete failure. Company was unable to fulfill that condition, and company has communicated also that your condition cannot be fulfilled, your instructions cannot be fulfilled. In that case, it is not the company's fault. It is the shareholder's fault. So if the shareholders are given any instruction, company tried to fulfill it, but unable to fulfill it, and company intimated that it cannot be fulfilled, then in that case, it is not at all a company's fault. You cannot say that the company is at fault. Did you get the point? Condition number one. Condition number two, dividend was not paid under the operation of the law. Under the operation of law, it was prohibited to pay you the dividend. Suppose the garnishee order was received against you. So no dividend can be paid out to you. Then again, it is not the company's fault. Or what is the third case? If the dividend is disputed over the title of recipient. Suppose the recipient is having a dispute going on in the court where he is not liable to receive the dividend. Company will not pay the dividend. It is not company's fault. Or if suppose the recipient has indebtedness towards the company and company has to pay the dividend. So company is indebted to recipient and recipient is indebted to the company. Company can do the set off. Then also it is not the company's fault to not to pay the dividend or any other reasonable grounds. If any of these cases are there, section number 127 will not be applicable on the company. It is only applicable on the company if the company is having a fault in not paying the dividend on time within 30 days from the date of declaration. Then only 127 will apply. With that, 127 is over. But if there is a non-payment of dividend out of dividend account, remember one thing, dividend account which we are opening after the AGM, it has a validity of only 30 days. If there is still something left in that dividend account, even after the 30 days, either it can be unpaid dividend or unclaimed dividend, then this dividend account will be closed. It will be shut down. And in the next 7 working days, we have to open a new bank account. What is the name of the new bank account? The name of the new bank account will be unpaid and unclaimed dividend account. The dividend account will be shut down after the 30 days. Then after the 30 days, in the next 7 working days, we have to open a new bank account called unpaid and unclaimed dividend account, which will be valid for 7 years from the date of declaration. What is the validity? 7 years from the date of declaration. Now, all that unpaid and unclaimed dividend amount in the dividend account will be transferred to unpaid and unclaimed dividend account. From the dividend account, it will be transferred to unpaid and unclaimed dividend account, and it all has to be done. Opening of this account and the transfer should be done within 7 days. This is called section number 124. That is called unpaid and unclaimed dividend account. So what is the name of the section? Unpaid and unclaimed dividend account. Now listen to this very carefully. Once the dividend account is closed, the amount of dividend shall be transferred to unpaid and unclaimed dividend account within how many days? Within 7 days. So once the dividend account is closed, the amount of unpaid and unclaimed dividend account shall be transferred to unpaid and unclaimed dividend account within how many days? 7 days. But if you have not transferred the amount within 7 days, the company will end up paying the interest penalty at the rate of 12% per annum. So on the failure of transfer within 7 days, company shall pay the interest at the rate of 12% per annum. Once the amount is transferred to unpaid and unclaimed dividend account within 90 days from the date of transfer, company will make one list of outstanding shareholders with their name, address, and amount outstanding, and it will publish that list on the website of the company, and it will send that list to the IEPF authority in form to the central government in form number IEPF 7. Remember, within 90 days from the transfer to this account, company will prepare one list of those shareholders for whom dividend is pending with their name, address, amount outstanding, and it to be published on the website of the company and the website which is approved by the central government. And same, this list has to be sent to the central government in form number IEPF 7. Now, what is the validity? Its validity is 7 years from the date of declaration. Now, 3 months before the closing of this account, suppose 6 years, 9 months are over. 3 months before the closing of this account, again a fresh updated list of dividend outstanding shareholders will be prepared, and again it will be published on the website of the company and the website which is notified by central government. Right or not? So 90 days after the transfer, this list will be prepared. 3 months before the closure of this account, list will be prepared. If the amount is still lying in the unpaid and unclaimed dividend account, which is not paid on, which is not claimed by the shareholders, after 7 days, after 7 years, the amount from this account shall be transferred to IEPF fund, and the shares of those unclaimed shareholders will be transferred to IEPF demat account within the next 30 working days. So from the end of the 7 years, from the date of declaration, if it is still unpaid or unclaimed, that amount will be transferred to IEPF fund, Investors Education and Protection Fund. And the shares of those members who have not claimed their money, their shares will be transferred to IEPF demat account within the next 30 working days from the end of 7 years from the declaration of the dividend. Now, this is called section number 125. But in case you are not following the section number 124 properly, that is unpaid and unclaimed dividend account, if you have done any violation, then company will be liable to a penalty of 1 lakh rupees flat plus 500 rupees per day subject to the maximum of 10 lakhs, and officers in default ka penalty kitna hai? 25,000 flat plus 100 rupees per day subject to the maximum of 2 lakhs. This is a penalty under section 124 subsection 7 if there is a violation in section number 124. Did you get the point or not? So if there is any violation in section number 124, then what is the penalty, everyone? Company penalty 1 lakh plus 500 rupees per day subject to the maximum of 10 lakhs, and OID ka penalty hai 25,000 plus 100 rupees per day subject to the maximum of 2 lakhs, right or not? And once this amount is transferred to IEPF and IEPF demat account, the shares have been transferred, then section number 125 starts. Now, question is, sir, what is Investors Education and Protection Fund? Investors Education and Protection Fund is basically a central government fund. And this authority known as Investors Education and Protection Fund, this authority is also constituted by whom? Central government. So this fund is made by central government, and this authority is also constituted by whom? Central government. Now, what is the purpose of this fund? The purpose of this fund is written in its name only, to educate the investor. That is why it is known as Investors Education. To educate the investors about what? About the capital markets. IPF wants to educate the people about the capital markets and to protect their interest against the malpractices done by the company. So the funds which are coming to this account, that is called IEPF account, will be used for educating the investors about the capital market and will be used to protect their interest against the malpractices. Who will do the audit of this authority? The audit of this authority will be done by the C&AG, that is Comptroller and Auditor General of India. In case after 7 years or after 8 years or after 9 or 10 years, whatever the number of years you want to come and you want to claim your money, which you have not claimed in the last 7, 8, 9, 10 years, being a rightful claimant, you can apply electronically to IEPF authority in form number IEPF 5. Now, IEPF will send your case to the company to get the cross verification whether this person is a rightful claimant or not. Within 15 days, the company has to send the report to the IEPF ki yes, whether he is a rightful claimant or no, he is not a rightful claimant. If the company confirms that ki yes, he is a rightful claimant, then the IPF will release your funds, as well as IPF will release your securities also. Did you get the point? So IPF will release your funds and IPF will release your security if the IPF is satisfied. Did you get the point or not? Now, what is the composition of IPFs, everyone? IPF has one chairman. IPF has members not exceeding 7. IPF also have one CEO. IPA के पास chairman भी है, members not exceeding 7, one CEO, and plus one secretary of MCA, who is the ex officio chairperson of authority. Right or not? So these are the total 7 plus 3, 10 people who are going to constitute an IPF. So who are the people in the IPF? Chairperson is there, 7 members are there, one CEO is there, and secretary of MCA, who is the ex officio of chairperson of authority. Next point क्या है? Next point. What are the sources? What are the sources which comes in IPF? What are the things which comes in IPF? IPF has grants and donations made by the government. IPF also has amount lying in IPF prior to the Companies Act 2013. IPF also have unpaid and unclaimed dividend. IPF also have those monies which are collected by the government in the disgorgement and personation of securities. Those matured debentures, preference share capital deposits, and interest which were not claimed by debenture holder, preference share holders, and deposit holders for 7 years, that will also be transferred to IPF. It also has income from the investments which are made out of IPF funds. It also have the income from the sale of fractional shares. Sometimes when the company issues the bonus shares, when the merger takes place or amalgamation takes place or acquisition takes place, sometimes company issues the shares, and in that race of issuing the shares, sometimes fractional shares will be there. Which shares will be there? Fractional shares will be there. So while getting the fractional shares, those fractional shares also will be transferred to IPF, and when the IPF sells those fractional shares, whatever the income IPF gets, that also transferred to IPF fund. Application money which are not refunded by the company also for the 7 years will be transferred to IPF and any other sources. So these are the various funds which are lying in the IPF. Right or not? Where does these funds are going to be applied by the IPF? IPF applies these funds towards a refund to the rightful claimants later on. As I already told you, if later on you claim your money, then IPF will refund you. Next one, protection, awareness, and education and promotion purpose regarding the capital markets. Reimbursement of legal expenses. If you were fighting with the company to get your dividend, but ultimately you won the case, so whatever the legal expenses you have spent on fighting the case, that will be reimbursed by the IPF from the IPF fund. And for any other person incidental to and distributed disgorged to the grievances loss bearers. Sometimes क्या होता है, when you file a complaint and your complaint is not getting resolved, due to that you will be having so many grievances against the company and you may incur so many genuine losses. So IPF will distribute you to those genuine loss bearers whose shares were disgorged and who suffered the any kind of loss due to the disgorgement of the security, but they have suffered the genuine losses. Which losses? Genuine losses. So these are the various areas where the IPF fund will be utilized. So that is what bringing an end towards your IPF section number 125. And finally, one last section which is left in the dividend chapter, that is section number 126, keeping the dividend in abeyance. Now, it's a very simple section. Try to understand. Let's say, for example, there is one person called A selling the shares to the B. So A is the transferor and B is the transferee. Now, B has already transferred the money to the A and A has already transferred the shares to the B. But when the B applied for the registration of the shares in his name, say for example, company took 120 days. Suppose company took 120 days to solve your case, to register the case. Now during these 120 days, so many times dividend might have been declared by the company. Say for example, 1 lakh rupee dividend has been declared, which now the question arises, this dividend belongs to A or belongs to B? Because A's name is still in the register of members, but he is not the rightful owner. B is the rightful owner, but his name is not in the register of members. So company is in situation of dilemma. To whom to pay, to whom to not to pay. Company must make sure that they should get one declaration from the A that he does not have any problem if the dividend is transferred to B. Till the time that declaration is not given by the A to transfer the dividend to the rightful owner called B, company will keep that dividend which is declared by them into the unpaid and unclaimed dividend account for the time being. Till what time? Till the time title or ownership of the dividend is not clear. It means the transferor of the shares must give in writing to the company he does not have any objection if they will transfer the dividend to the rightful owner called B. But till the time that declaration is not coming, company is unclear to whom to pay the dividend, whether to pay the dividend to A or to the B. The company will keep the dividend in abeyance. And what is the best place to keep the dividend in abeyance? They will transfer this dividend till the time the title is not clear to the unpaid and unclaimed dividend account. So that brings an end to section number 123 to section number 127. So with that, your dividend topic is also revised. I hope you all like the session relating to dividend as well. So with that, our section number 123 to 148, all the sections relating to company audit, including MOA, including maintenance of books of accounts, and including audit related provisions, including dividend chapter, everything has been taken care of, right? So we will immediately continue and start with another video, or we'll continue in the same video relating to another very small chapter called liabilities of an auditor. So see you guys in the next topic, that is called liabilities of an auditor. Now let's start with the next topic, everyone, that is called liabilities of an auditor. Now what do you mean by liabilities of an auditor, everyone? Remember one thing in this chapter, this is one of the very ignored chapter of CA final paper number 3, right? Because people think that they know everything about the liabilities of an auditor, but actually it's a very wrong misconception. Let me tell you one thing. There are so many types of liabilities we are going to discuss in this chapter. Obviously, some of the liabilities will be relating to professional ethics, that is Chartered Accountants Act 1949. These liabilities we are not going to discuss here, because this one we are going to discuss in our Code of Ethics, that is 2020 as well as 2009. Then some liabilities of Companies Act we are going to discuss, like here section number 132 liabilities there, 447 liabilities there, or criminal liability under section 34 and civil liability under section 35. Then some liabilities of Income Tax Act we are going to understand, and other statutes liability will be seeing if any such kind of liability is there or not. So when we talk about the liabilities, there are total 3 major types of liabilities in this chapter which are covered. Now, sir, what are those 3 major types of liabilities which are covered in this chapter? Liabilities under Companies Act under section 147, 132, 34 and 35 are covered. Are you getting the point? That is 147 means penalty section in the company audit, 132 NFRA, 34 is the criminal liability, and 35 is the civil liability. Both are related to 34 and 35 are relating to prospectus. Income Tax Act may will understand 278, 288, rule number 12A and section number 271J. Are you getting the point? So this one is the liability we are going to understand. And professional ethics liability, I already told you we are going to cover in the professional ethics. So let us understand what is the liability under section 147. As you all know that, what is the liability on the auditor under section 147? 147 may be already understood if the auditor violates section number 139, 143, 144 and 145, then his liability is 25,000 to 5 lakh rupees, or 4 times the remuneration received, whichever is lower. And we also understood that if the auditor intentionally deceits or cheats members, creditors, income tax department or company, then his liability will be minimum 50,000 to maximum 25 lakhs, or 8 times the remuneration received, whichever is lower, plus what is added here, or imprisonment up to 1 year or both. So this is the new thing which has been added in 147. So 147 covers actually 2 types of penalty: violation of 139, 144, 145 on the auditor, and intentionally deceiving or cheating the members, creditors, income tax department or company. So if you are violating 139, 144, 145 and 146, then 25,000 to 5 lakhs will be compared with 4 times of your remuneration rate, whichever is lower. And if you intentionally deceits or cheats members, creditors, income tax department or the company, then in that case your penalty is minimum 50,000, maximum 25 lakhs, or 8 times the remuneration received, whichever is lower, or imprisonment up to 1 year or both. So this penalty we already understood in company audit. Then just now in the previous session only, in the previous class only, or in the previous lecture only, we have understood about NFRA. So NFRA has the power to investigate on you if the auditor or the firm of auditor is involved in professional misconduct or other misconduct. and it has a power to impose a penalty on the auditor also. If you are an individual auditor who was found guilty of professional misconduct or other misconduct for the companies which are covered under rule number 3, then NFRA can impose the penalty of minimum 1 lakh, maximum 5 times of your audit fees received, and minimum debarred from your practice for minimum 6 months, maximum 10 years. And if you're a firm of auditors, that is partnership firm or LLP, then what is your minimum liability? Your minimum liability is going to be minimum fine of 5 lakh rupees, maximum 10 times of the audit fees received, or debarment from doing the practice as a CA under the CA Act for minimum 6 months, maximum 10 years. So recently in the previous lecture only, we have understood this NFRA ka penalty under section 132, and we have already covered 147. So 2 penalties of the Companies Act we have already covered where the auditor is going to be penalized. Actually, Companies Act में so many penalties are there. Companies Act में section number 143 subsection 3 penalty is also there. कि if the auditor does not provide the reasons of the resignation, then 50,000 rupees or the remuneration received, whichever is lower, plus 500 rupees per day, subject to the maximum of 2 lakhs, not 5 lakhs, because we have done that amendment. And penalty under section 140 subsection 5 is also there. When you are getting removed by the tribunal for getting involved in the fraudulent activity, then the tribunal can impose the penalty on you to disqualify you to be an auditor in any company up to 5 years, and penalty under section 447, that is also there. So there are so many areas. And section number 143 subsection 12 also, in case you do not fulfill your duty to report a fraud, then in case of listed company, if you fail to report the fraud to the central government authority, then in that case 5 lakh rupees, and in case of other cases it is 1 lakh. So there is no endless penalties which are given in what? Which are given under the Companies Act. So 140, so you can say that if I have to make a chart of penalties, 140 subsection 3, duty to give the reasons of resignation, but in case you fail to give the reasons of resignation. 140 subsection 5, that is a removal of an auditor by the tribunal, उसमें भी penalty है. Then 143 subsection 12, that is also including the penalty or the liability on auditor. 147 तो dedicated section already there, and 132 is also there. So these are the various 4-5 sections which are connected with our company audit chapter. So you can write all those liabilities under the Companies Act 2013. But under the Companies Act 2013, there are 2 more very important liabilities which we have to discuss. And if I'm not wrong, you all have read these liabilities at your CA intermediate level in the chapter called Prospectus and Allotment of Securities. Past chapter बोलते थे हम उसे, Prospectus and Allotment of Securities under the Pass Rules 2014. उसमें, if you remember, there are 2 types of liabilities which were talked about. One is the criminal liability and one is the civil liability. Now, what is the criminal liability? Now, listen to this very carefully. See, we all know that prospectus is a faithful, trustworthy, and most factful document of the company. Being an outsider, just try to understand that you don't know anything about the company. You come to know about the company only via one document, that is called prospectus. So, what is the golden rule of the prospectus is it has to be faithful, trustworthy, and containing only true and correct information. But if the company, now see, if the company issues any offer document or prospectus, means private placement offer or prospectus, or any such other kind of document or any kind of prospectus containing any untrue statement, untrue information means fraud information is there, any material misstatement, any omission is there, fraud information is there, or wrong information, any fraudulent information is there, or any misleading information is there. Remember, if the company issues any offer document and prospectus of such document, or prospectus contains any untrue statement or any material misstatement or any fraudulent information or any misleading information, then those persons who are authorized to issue, those who have given the consent to issue this untrue, misleading, or fraudulent prospectus, they all will be held liable under section 447, whose penalty is covered under section 448. This is called criminal liability in relation to prospectus. Listen to this very carefully again. if the company issues, only on issue criminal liability is there. If somebody has believed on that and somebody has acted on that and bought the securities and suffered a loss, then section number 35 civil liability will come. That I will tell you. But here though we are only penalizing those people who have consented to issue this fraudulent prospectus. So if this is untrue prospectus, fraudulent prospectus, unfaithful prospectus, material misstated prospectus, misleading prospectus is allowed by the people to be issued to the public at large in the form of prospectus, then in that case all will be punished under section 447, and those persons includes chartered accountant also. Now the question arises, sir, what is 447? If the fraud amount involved is, if the fraud amount you have done, if you have done any fraud, and if the fraud amount involved is less than 1% of the turnover of the company to be compared with 10 lakhs, whichever is lower. So there will be a fraud amount. It will be compared with 1% of the turnover or 10 lakhs, whichever is lower. One figure will be there. If the fraud amount is less than that, then that person will be liable to a penalty up to rupees 50 lakhs or imprisonment up to 5 years or both. But if the fraud amount involved in that scam, if the fraud amount involved is greater than equals to 1% of the turnover of the company or 10 lakhs, whichever is lower. If less than this side penalty, if greater than equals to this side penalty, then what is the penalty amount? Minimum fraud amount will be the fine, maximum 3 times the fraud amount will be the fine, minimum 6 months or minimum 3 months. Sir, when minimum 6 months? If it is an unlisted company, and if it is a listed company, minimum 3 years, maximum 10 years of tenure of imprisonment. And believe me, there is an and, not or. Here it was or, but here it is and. It means both the fine and the jail you will go, and here you may end up paying the fine or you may be sent to the jail. That is called section number 447. This is called the criminal liability under section 447. But you can escape from this criminal liability. You know that as an expert, as an auditor, as a professional, you can escape from this criminal liability if you are able to prove that in the court of law. What you are able to prove? That if the auditor or the person makes to believe to the court of law that his information and statement and role and data in that of a document was immaterial in nature. If I as an auditor can prove in the court of law कि sir जो भी मेरा statement है, whatever the data, whatever the information, whatever the statement I am making, that was immaterial in nature. What in nature? It was immaterial in nature. And if the court believes that yes, my information was immaterial, I can escape from section 447 under section 34 penalty, that is called criminal liability. Or if I can prove that in the court of law, till the issue of the prospectus, the information published, I believed it to be true. Dekho, imagine one thing, as an auditor, you only give the consent for your statement on whatever the information and explanation given to you by the client. If you think that the information and explanation given to you by the client is what? Is untrue and unfaithful in nature, but you believed it to be true. They made a picture in front of you that it is true information. If you can prove it to the court of law, okay, sir, till the issue of prospectus, I believe this information to be true, then also you can escape from this criminal liability under section 34. So under two circumstances, you can escape from the criminal liability. Circumstance number one, when you can prove it in the court of law, okay, sir, my information was immaterial in nature, and till the issue of the prospectus, I believe this information to be true. Like that, we have section number 35 liability also in the Companies Act. तो कंपनीज एक्ट में तो बहुत सारी लाइबिलिटी है. 140 सबसेक्शन 3 है, 140 सबसेक्शन 5 है, 143 सबसेक्शन 12 है, एंड व्हाट डू से 147 है, 132 है, 34 है, 35 सिविल लाइबिलिटी. अब सुना, सिविल लाइबिलिटी और क्रिमिनल लाइबिलिटी में डिस्टिंग्विश कैसे करना है. In the criminal liability, only those persons were penalized who consented to issue that fraudulent prospectus. But here, you issued a fraudulent prospectus, but an innocent buyer, the innocent subscriber, believed on that fraudulent information, and not only he believed, he also bought the securities and suffered a loss. It means you gave an untrue prospectus, it was materially misstated, somebody believed on that and incurred a loss by buying the securities on the basis of your information provided. If all these four things are connected, then civil liability will come. Now see, if any person has subscribed or purchased the securities of the company, believing upon that statement, information, or omission of the information due to which such person suffered a loss, injury, or damage, and if the expert was also involved in such information, matlab indirectly they're talking about chartered accountant or CS or CMA, in such cases, if he found guilty, will be penalized under section 35. So how 35 is to be segregated from 34? In the 34, excuse me. So in the 34, what was it? In the 34, you were only issuing the fraudulent prospectus, but in the 35, you issued the fraudulent prospectus. One innocent buyer subscribed the shares on the basis of that information, and not only he bought, he also suffered a loss. So it means the scope or the horizon of this particular provision is very huge. So then in that case, the auditors who were involved and consented in issuing that kind of prospectus, they all will be penalized under 34 as well as 35. Now question is, what is the definition of expert as per section number 2, subsection 38? Expert means any engineer, any valuer, any chartered accountant, company secretary, or cost accountant. It means we all three are covered under this definition of expert, because the expert word is written in the provision as well. Yes, here the auditor is also covered. He or she will be liable under section 35. Ab section 35 की liability क्या है? Liable to penalty in terms of damages or compensation without any specified limit. मतलब whatever the compensation the injured party will ask, I may be liable to pay that without any limits. In the criminal liability, there was still some limits. कि भैया आप फाइन अप टू ₹50 lakhs और मिनिमम फ्रॉड अमाउंट मैक्सिमम 3 times the fraud amount, or imprisonment up to 5 years or minimum 6 months or 10 years in the left side and right side penalty. Here you are liable to pay the penalty in terms of damages or compensation without any which limit. Specified limit, it means it depends upon case to case. It means section number 34 and 35 penalties. I hope you all understood. But you can also escape from the section number 35 penalty. Sir, how I can escape from the section number 35 penalty? If you can make that believe in the court of law कि my opinion was published without my knowledge and without my permission as an auditor, if you can prove that in the court of law कि sir, I don't say that I don't have given an opinion, I gave a statement, I gave a consent, I gave an opinion, but they published my opinion without my consent, and you have already taken an action before the prospectus was issued. They were trying to publish my consent without my permission. I already caught them, and I withdrawn my consent and my statement and my facts and my opinion before publishment of the prospectus. If you can prove that in the court of law, then you will not be penalized under section 35. Or if you come across that ki they have published their information without your permission and the prospectus is already issued. Now, in this case, you withdrawn it before the prospectus was issued. In this case, you came to know after the prospectus is issued. Then what is the necessary course of action you have taken? You immediately given a public notice in a newspaper ki do not believe on my opinion or do not believe on my consent and statement which I have given. If you have done that also, it means that is also good on your part. And yes, you can prove that in the court of law, you can escape from the liability. And what is the third thing? If the auditor believed that the information as issued by him was on the basis of an expert, and he believed that expert was a true person, but later on that expert was later on found out to be an untrue person, means you believed someone as an expert. So when expert is giving you some facts and data, you will never question that expert's integrity because you are not allowed to. But later on it was found that that expert on the basis of which you gave the information, that expert later on found out to be untrue person. Then in that case, it is not your fault. So these are the three areas by which you can escape the which penalty? Section number 35 penalty. So what are the areas you can escape? How you can escape? Before publishment of the prospectus only, you came to know that it is going to be published, but you withdrawn it. Second time, already published, you later on came to know, but you took a corrective action by giving a public notice in the newspaper advertisement. And third paper mein, you can make the court believe that you believed one expert, but later on you found out that expert was an ingenuine or untrue person. Then you can escape from section number 135. So, 35. So these are the penalties under section 140 subsection 3 we have understood, 140 subsection 5 we have understood, 143 subsection 12 we have understood, 147 we have understood, 132 we have understood, 34 understood, 35. So all the Companies Act penalties we have understood. Professional ethics ka penalties, C Act ka penalties, Code of Ethics ka penalties, I already told you we'll discuss in our next topic, that is called professional ethics. But remaining penalties I have made you understand under the Companies Act. Now let us move to the penalties on an auditor under Income Tax Act. Under the Income Tax Act, there are total 4 penalties. Section number 288 penalty, section number 278 penalty, rule number 12A penalty, and section number 271J penalty. अब इसको ध्यान से सुनो. If any chartered accountant or auditor is disqualified under section 288, if you are a chartered accountant or you are an auditor but you are disqualified under section 288 of the Income Tax Act 1961 from representing any assessee in the income tax proceeding. Now the question is, why you were disqualified under section 288 of the Income Tax Act 1961? You are disqualified from representing any assessee in front of income tax authorities in the income tax proceeding under section 288 of Income Tax Act 1961. Now the question is, why you were disqualified? Disqualification number 1, you were removed or dismissed from government service after 1/4/1938. If you were in the government service, or if you were removed or dismissed from the government service after 1/4/1938, 1st April 1938 के बाद you were dismissed or removed from your government service, it means you are permanently disqualified. You are permanently disqualified to represent any assessee in the income tax authority under Income Tax Act 1931. So you are permanently disqualified. But if you were found guilty and you were convicted for any income tax proceeding or imposed penalty under this act, means what? Suppose if you were convicted under income tax proceeding or imposed penalty under the Income Tax Act, your disqualification will be determined by Chief Commissioner of Income Tax, Principal Chief Commissioner of Income Tax, Principal Commissioner of Income Tax, Commissioner of Income Tax. So Chief Commissioner of Income Tax, Principal Commissioner of Income Tax, Chief Commissioner of Income Tax, Principal Chief Commissioner of Income Tax. Any of these 4 persons will determine your disqualification time. Whatever the disqualification time these people will determine, that for that time period you are disqualified to be an auditor or a chartered accountant to represent any assessee in the income tax proceeding. But if you are removed after 1/4/1938 from the government service, permanently disqualified. But here your disqualification time will be determined by Commissioner of Income Tax, Chief Commissioner of Income Tax, Principal Commissioner of Income Tax, Principal Chief Commissioner of Income Tax. But if you were disqualified under insolvency, then till the time the insolvency continues, you are disqualified. So you are not allowed to represent any assessee because you are insolvent. And for an insolvent person, even a 5 rupees will be like 5 lakhs. So you may easily compromise your independence, objectivity and integrity. So no bhaiya, till the time your insolvency continues, the chartered accountant, that auditor is what? Disqualified to represent any assessee under the income tax authority. Or if you convicted for fraud offense by the court, then 10 years from such conviction. That we already know under the disqualification. If you have convicted for any offense relating to fraud and minimum 10 years have not elapsed. So what are the 4 disqualifications? If you were removed from the government service after 1/4/1938, remember this date, 1/4/1938, permanent disqualified. If you were liable to any imposition of any penalty under Income Tax Act, then your disqualification will be determined by Commissioner of Income Tax, Chief Commissioner of Income Tax, Principal Commissioner of Income Tax, Principal Chief Commissioner of Income Tax. If you were disqualified due to your insolvency, till the time your insolvency continues. And if you were disqualified for a fraud offense, then you will be disqualified for minimum 10 years. That is your disqualification under section 288 of Income Tax Act. Now disqualification under section 278. If the chartered accountant or auditor induced means you motivated an assessee. you provoked an assessee, you pushed an assessee to evade or avoid the income tax or penalty of income tax or interest on income tax. Are you getting the point? You helped, you motivated, you induced, you pushed an assessee to evade. Evade means you are telling the assessees to avoid the income tax, penalties, or interest on income tax, which is genuinely required to be paid by the assessee, because you are bringing a loss to the revenue of the government. What is the penalty? If the tax evasion which is held by you, if the tax evasion which is helped by you is exceeding 25 lakhs, if the tax evasion helped by the chartered accountant to his assessee is exceeding 25 lakhs, then it is minimum imprisonment of 6 months, maximum 7 years, and with the fine. Are you getting the point or not? But if the tax evasion which is held by you to the assessee is less than equals to evasion of 25 lakhs, if the tax evasion, not the income evasion, if the tax evasion is less than equals to 25 lakhs, then minimum imprisonment of 3 months, ये वो क्या reduced, and 7 years got reduced to 2 years and with fine. So if the income tax evasion is more than 25 lakhs, minimum 6 months, maximum 7 years and with fine. If the income tax evasion is less than equals to 25 lakhs, then minimum 3 months, maximum 2 years and with fine. So this is what penalty under section 278 on chartered accountants or on auditors. Now what is the penalty under rule 12A? Under rule 12A, if the chartered accountant has issued any information report or accounts to the income tax authority, if the chartered accountant has signed any income tax report or authority has provided any false accounts or misleading accounts, believing it to be false, he already knew that it is false. Now 278 he is inducing the assessee to evade the taxes, but here he is giving a false information to the income tax authority and chartered accountant knew it to be false. It means he was doing it intentionally. Then imprisonment up to 7 years and with the fine whatever will be decided case to case basis. And what is the penalty under section 271J? If any chartered accountant or registered valuer or merchant banker issues any kind of certificate or report to the assessing officer or income tax department knowing it to be false, intentionally you are issuing a report. Now sir, how to differentiate between 12A and the 271J? 12A is completely on chartered accountant giving the false information which was required by the assessing officer or IT authority, knowing it to be false. Here you are issuing a certificate or a report, not the information, certificate or a report. Then what is the penalty? Rupees 10,000 rupees flat penalty on every certificate issued by you. So these are the 4 penalties which are there under Income Tax Act 1961 on the chartered accountant. The 288 is relating to disqualification penalties, 278 is relating to tax evasion penalty, rule number 12A is relating to giving the false information, and section number 271J is relating to a penalty when you are giving a false report or false certificate, that is 10,000 rupees for that. What is the penalty here? 7 years imprisonment and fine. What is the penalty here? If the tax evasion amount is greater than 25 lakhs, then minimum 6 months, maximum 7 years and with fine. If it is less than equals to 25 lakhs of tax evasion, then it is 3 months, maximum 2 years and with fine. Or यहाँ पे disqualification, if you remove from the government company, government officer, or dismiss from the government officer after 1/4/1938 permanent, if you were imposed any penalty under the Income Tax Act 1961, then it will be determined by, your disqualification will be determined by Chief Commissioner, Income Tax, Principal Commissioner, Income Tax, Chief Principal, Chief Commissioner, Income Tax, and Chief Principal Commissioner of Income Tax. Next one. If it is insolvency, till the time your insolvency continues, and if it is the last one, what was that? If it is if it is convicted relating to a fraud, then it is 10 years ban. So I hope you liked this lecture. So in this lecture we have covered 2 very important topics. One is dividend and one is liabilities of an auditor. So what are the 2 topics we have covered? The 2 topics which we have covered in this lecture is the dividend chapter, that is section number 123 to 127, plus liabilities of an auditor. So in the next topic we are going to start with professional ethics, everyone. So thank you so much, everyone, for lending your patient ears. I'll borrow it again in the next video. Bye, everyone. Take care. So hello everyone, how are you all? I welcome you all to the another lecture on our RRB batch for the May 22 students, right? So as you all know that we have already completed a company audit, and we have also started with the introduction of the professional ethics with the NOCLAR, and along with the summary of the new code of ethics 2020. Now I'm going to make you understand another very small chapter. Like the remaining professional ethics, we'll do it later on, but I would like to make you understand another very small chapter that is called audit of consolidated financial statements. So as you can see that in front of you, there is an audit of consolidated financial statement. Very important chapter, everyone. And you can expect a minimum 4 marks going to come from this particular chapter. And there are so many aspects to be covered in the audit of consolidated financial statement. First of all, let us understand, sir, what do you mean by consolidated financial statement? You all know that the consolidated financial statement is basically a prime responsibility of the parent company. It is a responsibility of the which company? Parent company, to ensure that the consolidated financial statements are prepared. Now, when we talk about the consolidated financial statements are like standalone financial statements only. So as I was saying, consolidated financial statements are like normal standalone financial statements only. It's just that the word standalone will be substituted with the word called consolidated. Now you can see that what do you mean by consolidated financial statement, as it is the parent company's responsibility that it should consolidate the financial statement of all its components with itself. That is called its subsidiary, joint venture and associates. Now, when we talk about the consolidated financial statement, these are 4 in number: consolidated balance sheet, consolidated P&L account, consolidated cash flow statement, and consolidated statement of changes in equity. As per section number 129, we know that there are 5 financial statements: balance sheet, P&L, cash flow statement, notes to account, and statement of changes in equity. It is just that we have to include one word called consolidated before the name. Now, next thing what we have to understand, in the audit of consolidated financial statement, you have to understand one very important fact that when we talk about the companies today in India, some companies follow accounting standards in India, and some companies in India today follow the IND-AS. Right now, as you all know that IND-AS came into India in the year 2015. So some companies are still following accounting standards, some companies are following IND-AS. So those companies which are following the accounting standards, they have to use the division 1 format of schedule 3 while preparing their consolidated financial statement. Again repeating, division 1 format of schedule 3 while preparing their financial statement. And if you are a company which is using the IND-AS for preparation of their financial statement, for them division 2 of the schedule 3 requirement is required. Next thing, now what is the section number 129 subsection 3 of the Companies Act 2013 says that now what used to happen earlier, that when the parent company's AGM will come, annual general meeting will come, the parent company used to put its own standalone financial statements, consolidated financial statements of the group. But now the recent amendment says that own standalone financial statement of the parent is required, plus consolidated financial statements of the group is required, plus standalone financial statements of the component. What do you mean by component? Subsidiary, associate, and joint venture is also going to be laid down in the same AGM. Sir, what is the reason why holding company, why parent company has to do that? The reason is very simple, everyone. Try to understand how a investor will come to know that which subsidiary or associate or a joint venture is a profit making and which one is loss making. They can only come to know that when they will see the standalone financial statements of joint venture, associate, as well as the subsidiary. So section number 129 subsection 3 says that every parent company along with its financial statement shall also prepare the consolidated financial statements of its components, and along with the consolidated financial statement of its components, standalone financial statement of component is also the parent's responsibility. Clear, everyone? Yes, sir. Next, what is section number 129 subsection 4 says? Now, section number 129 subsection 4 is very simply saying one thing, key if The standalone financial statements are getting prepared as per section number 129, the audit rules, preparation rules, and the adoption rules. Again, repeating, audit rules, preparation rules, and adoption rules, which are applicable to the standalone financial statements, are equally applicable to the consolidated financial statement. So there is no separate rules for the consolidated financial statement. What is applicable to the standalone financial statement? What are the audit rules applicable? What are the adoption rules applicable? What are the preparation rules applicable to standalone financial statements are equally applicable to the consolidated financial statement. And not only that, nowadays I just now told you, as per section number 129 subsection 3, holding company's responsibility is not to prepare its own standalone financial statement, not to prepare only the consolidated financial statement, but also to let down the standalone financial statement of its components. When I'm using the word called component means what? Component means subsidiaries, associates, and joint ventures in the form number AOC1. So you can see it right over here in the form number AOC1. It is required to be attached here. Clear, everyone? So this is what brings an end to the introduction of cash flow statement, section number 129 subsection 3 and section number 129 subsection 4. Now, as this point, if you remember, this point we have already discussed. This point we have already discussed in our company audit topic. Now let me tell you where we have discussed it. Company audit mein, if you remember, section number 129 of the Companies Act, that is financial statements of the Companies Act, we have understood. In that I told you that let's say for example there is one A company is holding 100% of the voting rights in B company, and the B company is holding 80% of the voting rights in C company. Now you all know that A is also a parent company, B is also a parent company. It means B also has to do the consolidation. But Companies Act section number 129 says that B is a which subsidiary now? B is a intermediate wholly owned subsidiary. Again, I'm saying B is a which subsidiary? Wholly owned subsidiary, because A is holding how much in the B? 100% in the B. So consolidation of B plus C. Again repeating, consolidation of B plus C, which is the responsibility of the B, is not required to be done by the B. It will be the responsibility of whom? A. Why the parent will take the responsibility? Two conditions will be satisfied. Then in that case, B will get the exemption. Sir, what are the two conditions to be satisfied? Condition number one, the B is neither a listed company nor a listed company in India or outside India, or nor in the process of being a listed company. Condition number one. Condition number two, its immediate parent company. Who is the immediate parent company of the B? Its immediate parent company A must be located in India. So if you are a wholly owned subsidiary, you can get the exemption from the consolidation. Two conditions: if your immediate parent company is located in India, and most importantly, if you are not a listed company or going to be listed company in India or outside India. Now, sir, is this same exemption available to the partially owned subsidiary? Answer is yes. Same exemption is available to the partially owned subsidiary, but instead of two conditions, now three conditions to be satisfied. So what are the three conditions? Condition number one, immediate parent company should be located in India. So same condition, yes. Condition number two. Condition number two says that in case you are not a listed company in India, outside India, or not in the process of being a listed company. Okay, sir, that also we understood. So in case your parent company is immediate parent company in India, immediate parent company is located in India, or you are neither a listed company nor going to be listed company in India or outside India. And the third condition is you have to send a written notification to your non-holding members. What is a written notification to your non-holding members? You have to send that, do you have any objection if I do not make the consolidation? Now the question is, who is sending this? Let's say for example, A is holding 80% of the voting rights in B now, and B is holding 60% of the voting rights in C now. Now you can see that B also has to do the consolidation of B plus C. But remember, B is not required to do the consolidation if the immediate parent A is located in India. Now what is B? Is B a wholly owned subsidiary? Answer is no. B is not a wholly owned subsidiary. B is a which subsidiary? B is a normal subsidiary, partially owned subsidiary. But what is the third condition? Now tell me, how much A is holding in B? A was holding 80% of the voting rights in B. Now you can see that what about the remaining 20%? Remaining 20% are non-holding interest. So what the B will do? B will take the permission from the non-holding interest. Do you have any objection if I do not give you the consolidated financial statement? If the non-holding interest give the permission, then in that case B has to do or B need not do? B need not do any kind of consolidation. Did you get the point? So yes, we have already covered that in section number 129 in the company audit. If you want to read it again, you can refer to the 129 company audit chapter again. Next, most important thing you have to understand that when we do the audit of consolidated financial statement, there are some definitions which are being changed as per AS and as per INDS. So when we talk about the definition of the control, when we talk about the definition of associate, subsidiary, joint venture, minority interest, so there are some words which are having a different meaning in the INDS and having a different meaning in accounting standard. Now look at the first definition, associate. You all know that what do you mean by an associate? A company in which the another company is having a significant influence. And what do you mean by significant influence? At least 20% of the voting rights. But associate name or associate meaning as per the AS and as per INDS is same. You can see that there is no change. Next thing, what do you mean by control? The control means what? Control means directly or indirectly another company is having a control over more than 50% of your equity, as well as the another company is having more than 50% of the control over your composition of the management. That is generally we see when we talk about the holding company. But here, instead of using the holding and subsidiary, they have started using the word called investor investee in INDS. Now, what is the definition of the control? Same definition only the words have changed. Now, what is the word? When an investor has rights over the investee. Who is investor? Holding company. Rights over the investee, holding company, and has ability to affect the returns throughout its power over an investing. It means it has a right to exercise its power over an investing. The same thing we are talking in AS and in INDS, just that the words have been changed. Instead of holding subsidiary, we have now started calling them investor investee company. Clear everyone? Next one. Sir, what do you mean by joint control and joint venture? You know that joint control and joint venture is an arrangement between the two companies where they will be having the joint control over the same project. It does not have any different meaning in INDS. It is same. Next one. What do you mean by minority interest? You all know that what do you mean by minority interest? The interest which is other than the holding interest. Let's say for example, A is holding 80% in B. 80% is held by the A. But what about the remaining 20%? 20% is held by A? No, it is not held by A. It is held by another company. Are you getting the point? It is held by another company. No, it is not held by another company. These are those 20% people who are called as a minority interest. They are called as which interest? Minority interest. And in your financial reporting paper, we already know that some portion of the minority interest we calculate, that is the net assets attributable to them, net results attributable to them. So that is as per the accounting standard. But the same thing when we see under the what do you say INDS, instead of minority interest, we are going to call them as non-controlling interest. We are going to call them as which interest? Non-controlling interest, in which instead of calling it as net results and net assets, we are going to call it as equity. So remember, we call it as net results and net assets attributable to minority interest in case of AS. We call it as net equity attributable to minority interest in case of what? INDS. Next one, subsidiary definition is same, which is there in the AS. It is also equally applicable in the INDS, right or not? So this is what the introduction of this chapter called audit of consolidated financial statements. Next thing, what is the parent's responsibility when it comes to the audit of consolidated financial statement? As you all know that consolidated financial statements preparation and presentation is whose responsibility? Parent's responsibility. So it is a parent who has to take care or ensure that the preparation and presentation of consolidated financial statement should take place. Next point which we have to understand is, now next point which we have to understand is, you have to ensure that when the parent is making the preparation and presentation of financial statement, There are other few responsibilities of the parent company you have to understand. What are the other few responsibilities of the parent company? It has to identify its components and include their financial information in the consolidated financial statement. So suppose I'm a parent company, my responsibility is to identify my subsidiaries, associates and joint ventures and include their financial information in the consolidated financial statement. Now, what is the next responsibility the parent has? It also has to identify its reportable segments. As you all know that what is reportable, not reportable as per AS 17, that is the parent's responsibility to identify its reportable segment. It is also the parent's responsibility to identify its related party and related party transactions. So total four responsibilities of the parent we have done that. Parent is primarily responsible for the presentation and preparation of consolidated financial statement. Parent is also responsible for identifying its components and including their financial information in the consolidated financial statement. Parent is also responsible for identifying its reportable segments. Parent is also responsible for identifying the related party and related party transaction. And remember, parent is also responsible for obtaining accurate and complete information. So remember, parent has to ensure that whatever the financial information it is adding in the consolidated financial statement, it should be accurate and complete. And it is a parent's responsibility to do the consolidation adjustment. Sometimes the accounting policies of the component and the accounting policies of the parent are not matching. So who has to do the harmonization of those accounting policies? That is also parent's responsibility. Sometimes the gap of the parent, that is generally accepted accounting principles of the parent, are not matching with the generally accepted accounting principles of the components. Then it is the parent's responsibility to ensure that those gap also should be harmonized or changed accordingly. So there are total 7-8 responsibilities of the parent: preparation and presentation of consolidated financial statement, identification of the components and including their financial information, make sure that the information which is it is including should be accurate and complete, identification of the reportable segments, identification of the related parties and related party transactions, identification of carrying out the consolidation adjustment, harmonization of accounting policies, and conversion of the gap if required. So these are whose responsibilities, everyone? These are parent company's responsibility, because consolidation is the responsibility of which company? Parent company. Now, next thing, auditor's responsibility. Now, what is the auditor's responsibility? Parent auditor's responsibility is what? CFS, consolidated financial statement auditor responsibility is what? He has no different responsibilities. He has the same responsibilities which we generally take place in the standalone financial statement. Tell me one thing. Do we have to check in the standalone financial statement whether the financial statements are prepared as per the applicable financial reporting framework or not? Sir, answer is yes. Same thing he is doing it here. He has to check that consolidated financial statement must be prepared as per AFRF. Do we check in the SFS, standalone financial statement, to express an opinion on the truthness and fairness of the financial statement or not? Yes, he is expressing the opinion on the truthness and fairness of what? Consolidated financial statement. We also have to ensure that we have a duty to inquire under section 143 subsection 1. Do you remember that in the company audit we have done the 6 topics? Same auditor's responsibility is case of consolidated financial statement, and whatever the auditor's responsibility in case of reporting on certain matters under section 143 subsection 3. Do you remember the J clauses? And in the J clause amendment has come. Same responsibility auditor is having when it comes to 143 subsection 3. So when the auditor is doing the audit of consolidated financial statement, we cannot say that auditor's responsibility differs just because he is an auditor of consolidated financial statement. Answer is no. His AFRF checking will remain same, expression of opinion will remain same, duty to inquire under 143 subsection 1 will remain same, duty to report under 143 subsection 3 will also remain same. Next point. In the CFS audit also we have to do the audit planning. Why the auditor does the audit planning in the SFS audit? So that he can complete his audit on timely, efficiently and effectively based. Same is the case here. When the auditor is doing the audit of consolidated financial statement, he has to ensure that he should do the adequate planning, strategy and programming so that he can complete the consolidated financial statements on timely basis, effectively and efficiently audit can be done on time. So this is what SA 300. Now, in the standalone financial statement, do we acquire the knowledge of internal control system and accounting system of the client? Same way, auditor has to acquire the knowledge of internal control system and accounting system of the consolidated financial statement or total group, so that he can understand internal control system, accounting system, general IT control system, so that he can decide his nature, timing and extent of his which procedure? Audit procedure. So we are not doing anything different here. Same thing which you do as a statutory auditor of a standalone financial statement, same way you have to do the audit of consolidated financial statement. Clear everyone? Next one. In the normal general audit of standalone financial statement, we have to check the audit risk or ROMM applicable in the financial statement, and we would like to proceed with our procedures, RAP procedures, so that we can bring down the ROMM to the lowest acceptable level. Same thing as a 315 ka ROMM level. Now you have to check not in the standalone financial statement, you have to check the same ROMM level at the consolidated financial statement level. Next point, we have to ensure that what rules and regulations are applicable to standalone financial statement are equally applicable to consolidated financial statement. And most important thing, most important thing, tell me one thing, is it necessary that the parent auditor is also the auditor of the subsidiaries? Answer is no. If the parent auditor is also the auditor of the subsidiaries, associates and joint ventures, then so there is no requirement of SA 600. What is SA 600, everyone? SA 600 is all about what? It is all about using the work of another auditor. So tell me, if the component auditor and the parent auditor both are same, do we need to consider SA 600? No. But if the parent auditor thinks that I can do the consolidated financial statement alone, I do not need any kind of coordination with the other auditors, then in that case, there is no need to comply SA 600. But if the parent auditor or the CFS auditor thinks that he himself alone cannot do the CFS audit alone, he has to take care of the help of another auditors of the components, then in that case there will be a compliance of SA 600. So there is nothing extra, nothing extraordinary we are doing. Generally what we do at the standalone financial statement, same procedure we are following when we are doing the consolidated financial statement. And most importantly, generally we take WRL from the management when management is responsible for the preparation and presentation of financial statement. Management is responsible that financial statements are prepared as per AFRF. Management is responsible that material considerations have been taken care of while preparing the FRF. Standalone financial statement. Instead of standalone financial statement, we have to use the consolidated financial statement. So here also auditor under SA 580 is taking the WRL from the parent company with 3 declaration. CFS are prepared as per AFRF, same point. They approve CFS and take responsibility of its preparation, same point. They consider all the material matters which think they are material for the preparation of CFS preparation. So instead of SFS, we have to substitute the word SFS with what? CFS. Next point. Very important point. Now you have to concentrate very importantly here. Now try to understand which I'm trying to tell you in the next 2 minutes. Now see, what do you understand by materiality level? Every auditor has to check the materiality level of the ROMM at financial statements which might be affecting the users of financial statement. Am I correct? If you are a parent auditor, you will be having your own materiality level. But if you are a component auditor, you are having your own materiality level. Remember one thing, materiality level is a relative concept which keeps on changing from person to person, judgment to judgment, auditor to auditor, case to case, entity to entity, year to year, circumstance to circumstance. Make sure that when the materiality level you are considering, you are not supposed to force the component auditor's materiality to be dropped down, and they should not be forced to follow your materiality level. Just because you are a parent company auditor or just because you are a CFS auditor, it doesn't mean that ki component auditors do not have their individuality. You are not allowed to challenge their competency if they have already considered or if they have already made their own materiality level. It is your responsibility that while drafting the consolidated audit report, you have to take their materiality level as it is. You are not allowed to do any kind of changes in their materiality level. Say, for example, there is one subsidiary auditor. He has kept his own materiality level, due to which he has given a modified or qualified report. Even though that subsidiary is ignorable in nature, but as a CFS auditor, you are not going to ignore that subsidiary just because it is ignorable in size. The materiality level of that component auditor which he used for modifying and keeping the reservations in the audit report, you have to take it as it is. You are not allowed to alter the materiality level of the component auditor just because they are smaller than you. Are you getting my point? The materiality point of level pay, the subsidiary auditors may have their own point of view, you may have your own point of view, no one is challenging yours, and parent auditor, the CFS auditor, is also not allowed to challenge theirs. That is what the 320 special point you have to mention. Is it clear, everyone? Yes or no? Yes. Now, what is the next point? The next point pay you have to understand what is the other financial information the auditor is responsible for. Auditor has to look for there is a proper harmonization of accounting policies done by the parent company. There is a proper conversion of gap done by the parent company. Let me tell you one thing. When the accounting policies of the component are not matching with the accounting policies of the parent, components have to change according to the parent. Parent will not change according to the components. So remember, child is going to change according to the parent. Parent is not going to change according to the child. Are you getting the point? When the conversion of gap is also taking place, components gap should be changed as per the parent, not the parent's gap should be changed as per the component. And same thing applies with the consolidation adjustment also. Consolidation adjustment is also whose primary responsibility? It is a primary responsibility of the parent, and sometimes subsequent event adjustments will come. Sir, how? Let me tell you one thing. Suppose A is the parent company. Its financial year is starting from 1st April to 31st March. B is the component company. Its financial year is starting from 1st June to 31st May. Now tell me, is the financial year of the parent company and the component company same? Answer is no. Any event took place in the month of April is going to be a subsequent event for company A, but it is a in-year event for company B. Again, I'm saying, suppose any event took place in the month of April, it is a subsequent event for company A, but it is an in-year event for company B. Why? Because company B's financial year gets over on 31st May, whereas the company A's financial year gets over on 31st March. So for the 31st March ending company, April month event will be a subsequent event, whereas for the company which is ending on 31st May, for them it is going to be a in-year event. So auditor has to take care of all these things. Next most important point, audit the consolidation. Now it is the high time that auditor should start auditing the consolidation. Now it's very important point you all have to understand. Whenever auditor does the audit of consolidation, he has to first understand the importance or first understand the group structure. How many associates are there? How many joint ventures are there? How many subsidiaries are there? Second thing, he has to understand the group controls, not individual, because he's an auditor of CFS. So has to make sure that he should understand the group structure. At the same point of time, he has to make sure that he understands the group control. Now, what do you mean by group control? What are the information technology controls, general IT controls, IT dependent controls? What are the application controls? How many are manual, how many are automated in the total group? He has to also ensure the nature, timing, and extent of his audit procedure on the basis of ROMUM in the CFS. You all know that while doing the consolidation, there's the high risk of material misstatement. So on the basis of that, it is the auditor's responsibility to determine his nature, timing, and extent of his audit procedure. It is the auditor's responsibility to understand the accounting policies of not only parent, he also has to understand the accounting policies of the component, because he will be watching how the parent company does the harmonization of the both. As a CFS auditor, it is also your responsibility to understand the translation process. Sir, what do you mean by translation process? Now try to understand. When the foreign subsidiary or the foreign associate is going to be translated into Indian currency to be merged or consolidated with the Indian parent, then there will be a translation process to convert the foreign currency into an Indian currency. Who has to take care of that? Auditor has to take care of that. He should understand. So what the auditor should understand? Group structure, group controls, accounting policies of parent as well as the holding, parent as well as the component, translation process, determining the nature, timing and extent of his audit procedures on the basis of ROMUM at the time of consolidation, and most important thing, he has to check whether he is in looking for any use of another auditor's work. If yes, how he is going to coordinate the work. This is how you do have the responsibility when the consolidation is going to take place. This is how you do the audit of consolidation. Next point. Completeness of components. It's a very important topic. Now try to understand, sometimes the parent company does not realize the fact that even though intentionally it is not becoming, but unintentionally sometimes it becomes the parent of some components. Let's say, for example, Reliance Industries was watching Infosys Limited. Suppose Infosys Limited was giving a high amount of profit in the market. What Reliance Industries did? Reliance Industries was watching the share price of the Infosys. So Reliance Industries first bought 10% of the share capital. Then it bought 15%. Then it bought another 6%. So 15 plus 6% makes it to what? 21%. But Reliance did not realize that the Infosys became its associate. Are you understanding my point? So sometimes you do not know that you became a parent and somebody became your component, either intentionally or unintentionally. I can say that it can be a genuine case or it can be intentional case also. In such cases, what to do? In such cases, auditor should take the total list of components from the management. Auditor shall obtain the total list of components from the parent company. After obtaining the total list of components from the parent company, he should watch the parent company very carefully, how the parent company is doing the consolidation of all those components, whether all those components are included or not. In case auditor feels suspicion that if the list provided by the management or the TCWG is not the complete list, then how he is going to do the completion of that components? This is what is this question. We have total 7 to 8 tools in our hand by which we can do this incomplete list turn into a complete list. Now, tool number 1. What is the first thing we are going to understand? Tool number 1. You all know that as per SA 230, do we maintain our audit working papers? Yes, we do maintain our audit working papers. As per SA 230, we have to preserve it for 7 years. I'll immediately go to my office. We'll review my audit working papers of the past year. I'll come to know that how many components were there in the last year. Tool number 1. Tool number 2. I will directly go to the management and inquire how many components you have included in the component consolidation and how many components you have excluded in the consolidation. If you have included, that is very well, but if you have excluded, why? So this is what the point number 1. Point number 2, I am telling you. The third thing is I will identify or I will check the management's method of identification of the components. How management identifies that something is a component or not, I'm going to check their method also. Next, I'm going to check their investment register. Sir, what you will come to know from the investment register? Bhaiya, from the investment register, I'll come to know that whether the company has invested in that company to make it as its associate or to make it as its subsidiary or to make it in a case of joint venture. So from the investment register only, I'll come to know that if 20% to 50% investment the parent is having in one company, it means that company is associate. More than 50% subsidiary. If there is a joint control, that is a joint venture. That is a fourth method. Then I will also check their joint venture and joint arrangement papers, and I will verify them right from the bottom to the end, so that I'll come to know that who are joint ventures, where they have entered into a contract. I will also verify their other arrangements or other documents which I have not included, but maybe they might have forgot to include it. I will check it and verify it. And most importantly, I will tell the management, please give me your 186 and 189 register. 186 intercorporate loan register, 189 register of related party loans. From that also I'll come to know whether the components list is correct or not. And last but not the least, identify the changes in the which pattern? Holding pattern. So there are total 8 methods available with the auditor by which he can accomplish the objective of completeness of components. If he thinks that key components are not properly included, he can immediately on the spot, he can come across this. Did you get the point or not? Yes. Next point. Next thing what we have to understand here is, sir, you just said in the point number 2, is some components might be included, some components might be excluded. Yes, I said. On what basis the company can exclude its components? Remember one thing, if the company is following accounting standards, there are 2 types of components which the company can exclude from the consolidation. How many types of components, everyone? 2 types of components. Sir, what are the 2 types of components? Components number 1, with whom the parent company and the component relationship is temporary in nature. Let's say, for example, I bought some 25% of the shares in one company. Now tell me, that company became my associate or not? Yes. But I did not buy it from the associate point of view. I bought it to sell it in the near future to get the maximum profit out of it. So tell me, was it an investment purpose or was it a trading purpose? It was a trading purpose, short-term purpose. So here the parent and the component relationship was what? Permanent? No, it was temporary. Such components are not required to be included in the consolidation. That is what the point number 1. If the company is following what? Accounting standards. If the company is following accounting standard, there are second set of components also not required. Those components are not required where there is a severe restriction. Those components are not allowed where there is a long-term severe restrictions is there on the components which impairs their right to transfer the funds to the parent. Means what? You are a subsidiary. On you, there is a long-term severe restriction that you are not allowed to transfer the funds back to the holding. Even though you want to give the funds back to the holding, ki bhaiya, I don't want your funds, but there is a long-term severe restriction on the component which impairs their right to transfer their funds back to the holding company. If you are a company following accounting standard, these are the 2 types of consolidations which are not allowed to you. These are the 2 types of components which are not required to be included for the purpose of consolidation. If you are a company following INDAS, in generally INDAS, you are not allowed such kind of exclusion. INDAS says that all companies are required to be included. All companies, whether temporary relationship, long-term severe restriction, it matters or does not matter? It does not matter at all. Did you understand the point? It does not matter at all. But recently, what has been told that if you are a company following the INDAS, there are some sort of what do you say components which can be excluded. Sir, which kind of components can be included? Those components, those subsidiaries which I only made or acquired for investment purposes. It means those subsidiaries ka nature is what? The nature of those subsidiaries are investment subsidiaries. Those are which kind of subsidiaries? Investment subsidiaries. Those investment subsidiaries are not required to be added in what? They are not required to be added in the not required to be added in the consolidation, but that is only available if it is the company following INDAS. If it is the company following AS, then 2 short-term relationship, temporary, and long-term sway restriction on the subsidiary. On the other side, if the company is following INDs, which are excluded from the consolidation, which are what? Which are only and only investment purpose related subsidiaries. Next most important thing, consolidations to be done on line to line basis. Remember one thing, if you are a company following accounting standard, your consolidation must be as per AS 21, AS 23, AS 27. But if you are a company following INDAS, your consolidation must be as per 110 INDAS, INDAS 103, INDAS 111, INDAS 28. So what are the four standards which are applicable for consolidation when you are doing the consolidation as per INDAS? INDAS 110, INDAS 111, INDAS 103, INDAS 28. But if you're a company following accounting standards, you have to do line to line consolidation by following AS 21, 23, 27. And remember, your assets, liabilities, income, expenditure, and cash flows should be line to line added with each other. You also have to calculate the goodwill and capital reserve. As you all know that when do we calculate the goodwill? When we end up paying more than what is required to be paid, and when we end up paying less than what is required to be paid, in that case it results into capital reserve. And attribution of the equity towards the minority interest. So if you are a company following accounting standards, you have to follow the consolidation rules of AS 21, 23, 27. But if you are a company using INDS, you have to follow 110, 111, 103, and 28. The list is given in front of you. Is it clear, everyone? Yes. Now, the most important part. Sir, what is the most important part? After this, our particular topic on the audit of consolidated financial statement will be over. Remember, every company has to do, every parent has to do two types of consolidation adjustments. What are the two types of consolidation adjustments? One is known as permanent consolidation adjustment and one is known as temporary consolidation adjustment. Permanent consolidation adjustments are those adjustments which are only required to be done once, that too in the first year. It is not required to be done at the later stage. But at the subsequent years, if there is a change in the shareholding pattern, then this adjustment may come again. Remember, 99.99% of the cases, permanent consolidation adjustments are only required to be done at the first occasion, not at the subsequent occasions. But in the subsequent occasions, it might be required if the shareholding pattern changes. Point number one. Now, question is, sir, what are those permanent consolidation adjustments? There are two permanent consolidation adjustments. One is the calculation of goodwill and capital reserve. What is the first one? Calculation of goodwill and capital reserve. The another one is determination of equity. What is another one? Determination of equity attributable to the minority interest. These are the two permanent consolidation adjustments which are only and only required to be done at the first occasion. Otherwise, it is not required to be done. But yes, equity movement towards the minority interest may keep on changing on yearly basis. That might be the thing which you have to calculate it again and again in the coming years. But calculation of goodwill and capital reserve is only required to be done one. That's why it is known as which one? These are known as permanent consolidation adjustments. Is it clear, everyone? So, when the permanent consolidation adjustments are happening, what are the 6 audit procedures of an auditor? As a CFS auditor, you are sitting on the right side. You can see that audit is sitting on the right side. Auditor is sitting on the right side watching the company doing the permanent consolidation adjustments. So when the company is doing the permanent consolidation adjustment, point number one, what he is checking? Calculation of the goodwill and calculation of the capital reserve which the company has carried out under the permanent consolidation adjustment is appropriate or not. Duty number one. Procedure number two, he has to have a major focus, main focus of the auditor should be on the pre-acquisition reserves, because pre-acquisition reserves are required to be distributed among holding interest and non-holding interest in a very, very appropriate manner. Remember one thing, biggest of the frauds of the companies takes place in the which one? In the pre-acquisition reserves. Pre-acquisition reserves must be contributed or must be apportioned between minority interest and holding interest in a very, very appropriate manner. That is the third procedure of an auditor. Fourth procedure of an auditor, he should always look for the dates of investment. Whenever the investments are increasing or decreasing, when the parent company is doing the investments in its components, each and every date he shall make a record of. Next important point, he should monitor the changes due to subsequent acquisition or subsequent disposal. Say for example, there was one company which was my associate with 35% voting rights, but company increased 35% to 55%. Now 20% increase, it means from associate it changed into subsidiary due to more acquisition or more disposal. More acquisition, suppose it was a subsidiary with 65% of the voting rights, but company recently disposed 35% out of 65%. It means from subsidiary it changed to what? Associate. So it means monitor the changes due to the subsequent acquisition and disposal of components in the group. And most importantly, most importantly, now say for example, it is the parents company's responsibility how they want to show the goodwill or capital reserve. See, let's say for example, for all the components, company paid the goodwill of 2500 crores. And for all the components, company earned the capital reserve of 600 crores. Goodwill you have paid 2500 crores and capital reserve you have earned is 600 crores. Now tell me, capital reserve will come on the liability side 600, goodwill will come on the asset side, that is 2500. Now what is the net effect? 1900. So it is a parent company's choice whether it wants to show 1900 consolidated effect, set of effect, or it want to show 2500 separately and 600 capital reserve separately. So it is purely and purely parent company's responsibility how they want to show. So these are my 6 audit procedures to be taken care of when I'm doing the audit of permanent consolidation adjustments. Now, what do you mean by current consolidation adjustment? What is the next topic? Current consolidation adjustment. Sir, current consolidation adjustment means those consolidation adjustments which are required to be done only once or every year. It is required to be done every year. So what do you mean by those kind of adjustments? Intra-group indebtednesses and intra-group balances, intra-group interest payments, intra-group interest received, intra-group management fee received, intra-group management fee paid, intra-group indebtedness, intra-group profits from the sale of property by the component to the parent or by the parent to the component, harmonization of accounting policies adjustments, conversion of the gap adjustments, then subsequent events adjustment if in case the component and the parent have the same financial year, in case the component and parent have the different financial year, and deferred tax payments. You all know double tax, deferred tax asset or deferred tax liability, which may come arising of temporary differences and movement in the equity, sometimes move more towards the minority, sometimes less towards the minority. To movement in the equity attributable to minority interest and non-controlling interest. Again, what do you mean by current period consolidation adjustment? Those adjustments which the parent company has to do on yearly basis, every year. It's not like permanent. Permanent is only required to be done at the first occasion, but this is required to be done on yearly basis. Point number 1. What is yearly basis adjustment number 1? What is yearly basis adjustment number 1? Adjustment number 1 is what? Intra-group indebtedness, intergroup interest payment, intra-group interest received, intra-group management fee paid, intra-group management fee received, intra-group profits on sale of property from component to parent, parent to component, intra-group harmonization of accounting policies, conversion of the gaps, subsequent events if the holding and parent and components are having the same accounting year, subsequent events if the parent and component are having the different accounting years, deferred tax payments arising on the temporary differences, and movement in the equity attributable towards minority interest and non-controlling interest. Clear, everyone? Now, sir, this is the procedure you have to check. Like in the permanent consolidation, we have checked the procedure. Here also you have to check the procedure, but I will make it very easy for you. You just have to remember the current year or temporary consolidation adjustment. Prefix every temporary consolidation adjustment which you have in mind with the words check that. So what the auditor has to check that? Auditor has to check the memorandum accounts. Auditor has to check that intra indebtedness is eliminated. Auditor has to check that intra interest payments are eliminated. Auditor has to check that intra what do you say, management fee payments and receipts are eliminated. Auditor has to check that intra profits are eliminated. Auditor has to check that harmonization of the accounting policies have taken place. Auditor has to ensure the uniformity in the accounting policies. Auditor also has to check that there are some accounting policies which cannot be harmonized. See, there are some accounting policies which are impracticable to be harmonized. Leave it as it is. Auditor also has to check that conversion of the gaps have taken place properly. Auditor has to check that deferred tax assets and deferred tax liabilities are calculated properly. Auditor also has to check that equity movements attributable towards minority interest and non-controlling interest is done. Are you getting the point? And what are the other procedures auditor has to follow? In the other procedures, make sure that auditor has to ensure that he should get a good understanding of the management procedures to reduce his risk. Because until unless you will not understand the management procedure, you will not be able to understand it properly. He has to check that goodwill shall be valued at the date of acquisition. The goodwill shall be valued from on the date of acquisition, not on the date of balance sheet, plus be tested for impairment loss at every balance sheet date. We all know that goodwill is required to go for an impairment loss, or at every balance sheet date we have to check that whether there is any impairment loss in the goodwill or not. So it is to be valued on the acquisition date and checked for impairment loss at every balance sheet. And most importantly, financial statement shall be drawn up to the same financial statements of the parent. I already told you, if the financial year of the component is using the different financial year from its parent, then the financial year of the component has to be changed according to the parent. Parent need not change according to the component. But let me tell you one thing, if the companies are following accounting standard, this adjustment you can only do when the difference between the parent and the component is 6 months. If the difference between the financial year of the parent and the component is 6 months and the company is following accounting standards, it is allowed. If the difference between the parent's financial year and the component's financial year is maximum 3 months, then only allowed if the company is following INDS. So it means accounting standard based companies. Accounting standard based companies are only and only going to allow you when accounting standard based companies are only and only going to allow when the difference between the parent and the components, what parents and components financial year is maximum 6 months difference, and it is allowed in case of INDS if the difference between the parents financial year and the components financial year is maximum 3 months. I hope all of you understood the same. Yes. Now, informations to be disclosed in the consolidated financial statement. Remember one thing, auditor shall check that following information shall be disclosed in the consolidated financial statement: amount of net profit, amount of net assets, amount of other comprehensive income. Repeat, amount of net profit, amount of net share in the profits, net share in the assets, and net share in the other comprehensive income of each and every component. Along with that, their percentage towards the consolidated percentage means percentage of their net participation in the assets to the consolidated assets, percentage of their net share in the profits to the consolidated profit, percentage of their net comprehensive income to the consolidated income. These are the three things required to be shown. With that, your provisions relating to audit of consolidated financial statement is over, everyone. So this is how you have to revise the consolidated financial statement. The notes have already been provided to you. It is being given to the management. Make sure that you are taking the notes link from the management, and make sure that you are going through the videos at a normal pace only, because these are videos for 1 hour for almost each and every particular chapter. And I hope I'm justifying your expectations in making you revise the whole audit. So thank you so much everyone for lending your patient ears. I'll borrow it again in the next video. So see you guys in the next video relating to professional ethics. So bye everyone. Take care. Bye bye. So hello everyone, how are you all? Welcome to another video on CA Final Auditing Rapid Revision Batch for the May 2022 and the November 2022 students. Now, up to the last topic, we have already conducted the audit of consolidated financial statement. Now, in this particular video and in continuation of this video, or maybe a separate video, we'll be understanding the very two important topics. One is known as peer review and one is known as quality review. So let's have a quick revision of the concept called peer review. Now, the first thing which you have to understand, sir, what do you mean by peer? Peer stands for person of a same standing, and review stands for what audits you have already done, what assurance services you have already given to your clients on your practicing unit. Some people are going to come. Who are those some people? They are the another practicing chartered accountants who are going to come to your practice unit, and they are going to review your audit services and the quality which you have provided. So what do you mean by peer review? A person of the same standing is going to come to your practicing unit. Whatever the audits you have done in your last 3 years, those audit and assurance services, whatever you have provided in the last 3 years, they are going to come and they are going to verify it. They are going to reevaluate it. They are going to check whether you have provided the quality of the services or not, or whether you have provided the services as per the professional, ethical and technical standards of issued by the ICAI or not. So basically peer review is that. So peer stands for same standing. Sir, what do you mean by same standing? A person of the similar standing means a practicing CA who is also into a practice. He will come to your practicing unit sent by the ICAI under one board called peer review board. He is a peer reviewer who is going to come to your practicing unit and he is going to evaluate the quality of the services rendered by you. Let it be audit services, assurance services or review services. All these services will be checked by him. So basically, peer review, most of the people have a misinterpretation that peer review is a fault finding machine. So idea behind the peer review is not to find out your faults. The idea behind the peer review is to make you sure that or make you understand that whenever you are providing any services to the client, the idea behind the peer review is to make you understand that if you are falling short of some services, if you are falling short of your quality of the work which you are providing to the client, ultimately it will be a disrespect to the ICAI, ultimately it will be a disrespect to the council. That's why the ICAI under one board called peer review board, they keep on conducting the peer review on the auditing firms or on the practicing units so that they can make sure that the quality what you are providing is as per the professional, ethical and technical standards. Next one. Recently in the peer review, so many amendments have come. Now, when we talk about the amendments in the peer review, amendments in the peer review comes on the basis of statement of peer review, which is always and keeps on getting amended. Now, recently in the July 2021, the peer review statement got amended, and when the peer review statement got amended, so many minor changes have been brought. So changes have come in the level 1 category of practicing unit, level 2 category of the practicing unit and so many other places also. Now, next important thing is what is the significance and what is the importance of peer review? For the auditor, the significance, the advantage of the peer review is it is a stamp of your competency. It is a self-defensing tool. Now you can hang that peer review certificate in your office and you can tell to the outside world that boss, I am giving the quality services, right? So it displays it demonstrates your performance. So another advantage is your regular work won't get disturbed. And what is the advantage to the society regarding the peer review? Society will have enhancement in their trust and confidence over your services because peer review certificate demonstrates that you are an efficient and good quality practicing unit. People will not think twice before coming to your firm and giving the assignment. So that is what the benefit of the peer review from the auditor point of view and for the society point of view. Next thing, what are the objectives of the peer review? I already told you the objective of the peer review is to check whether the practicing unit is following the statutory and other requirements or not, whether it is doing the audit and assurance services as per the technical standards or not, and the ultimate objective of the peer review is to enhance the confidence, trust and the credibility by the what? By the users. So users should have more credibility, confidence and trust on the audit reports issued by you or the financial statements audited by you. That is the basic reason behind conducting the peer review. Is it clear, everyone? And make sure that, again, I'm telling you, don't misinterpret peer review that ICAI is trying to point out the weaknesses. ICAI is bringing the weaknesses to your notice so that in the future you can provide the ultimate best quality services. So it is not going to be treated as a fault finding machine. It is basically conducted to make sure that you are giving the best quality services to the users of your services. Next point, what is the scope of peer review? What does the peer review include? Peer review checks that whether you are following the ICAI laws, rules, regulations, publication guidelines, standards or not. It also applies to your all types of assurance services. Remember, all types of assurance services, auditing, assurance, review services, everything is covered under the peer review. Next one, it also ensures that whether you're maintaining the proper records of all your assurance services or not, client registers are properly maintained or not, stipend register is properly being paid or not, work diaries by the article assistant is being properly prepared or not, your attendance register of the article is being prepared or not. Next one, it also ensures that you are following the professional, ethical and tech standards. So it is very easy to combine it one together in one word. We can call it as a professional, ethical and technical standard, as a PET standards. Next one, the other purpose, the other scope of the peer review is to ensure that you are giving the best quality services, and most importantly, it also covers whether you're giving the adequate training to your staff who is being hired by you either as a audit staff or as an article assistant. Next point, what is not included in the peer review? What is not under the scope of peer review? The peer reviewer cannot check your law consultancy services and auditing standard services. If you are engaged in preparation and compilation of financial statement, that is not covered under the peer review. He cannot check your tax advisory and tax preparation of tax returns services. He cannot check your representations if you have done any in front of the income tax authorities. If you are being testifying as an expert witness, that is also outside the scope. Management consultancy services, due diligences. So these 7 are not under the scope of the peer reviewer. Now, when the peer reviewer comes to your practicing unit, now the biggest question arises is, sir, up to how many years of documentation, up to how many years of audit and assurance services he can look at? He can look at your last preceding 3 financial years, right? Next one, what do you mean by professional ethical standard? The professional, ethical and technical standards, the meaning of that is that they want to assure that you have a good knowledge of framework related laws, you have a good knowledge of auditing related laws, you have a good knowledge of accounting related laws, you have a good knowledge of law related compliances, and you have a good knowledge of standards on internal audit. So it means basically the peer reviewer is testing, is checking that do you have the knowledge of particular laws and regulations or not? Do you have the knowledge of the framework related applicable financial reporting frameworks or not, schedule 3 requirement and accounting standards? Do you have the knowledge of INDAs or not? Do you have the knowledge of standards on auditing, standards on assurance engagement, standards on review engagement, standards on internal audit? And basically this is what the idea behind conducting the peer review or not. And are you getting updated with the guidance, amendments, notifications, revisions, pronouncements given by the ICAI from time to time or not? All that put together is known as PET standards, right, everyone? Next one, focus of the peer review. Now, what is the focus of the peer review? The focus of the peer review is system related and quality related. System related, it is going to check whether you are giving proper training to the staff or not, system and procedures for the assurance services or not. Quality related, are you complying with the PET standards or not? Are you maintaining the register of assurance engagements or not? Are you maintaining the register of attendance of or articles or not? Are you paying them the stipend on time or not? Are they maintaining the work diaries or not? Are you making the record of number of assignments you have done? Are you making a record of fee charged by you? And are you ultimately providing the quality in your auditing services and assurance services or not? Next, most important thing, and the big amendment came here is, sir, what do you mean by peer review board? When we talk about the peer review board, there should be maximum 12 persons, minimum 50% of that. First of all, the question arises, sir, peer review board banata kaun hai? Who constitutes a peer review board? ICAI, our council, makes the peer review board. Don't mix it with the quality review board. Quality review board is constituted by the central government. Peer review board is constituted by the council, maximum 12 members. Among that, 50% should be council members and 50% should be the persons from the eminent personality having a good knowledge in the other fields of economy and who are the person of high integrity and reputation. Next, most important thing, if you want to be a member of the peer review board, you should not be a member of council, you should not be a member of disciplinary committee, you should not be a member of board of discipline, you should not be a member of committee on ethical standards, you should not be a member of QRB, you should not be a member of Financial Reporting Committee. These are your disqualifications. If you are a part of these, any of these committees, you will not be allowed to be the member of peer review board. Next point. Casual vacancy. Sir, what is the casual vacancy? Agar peer review board mein, if in the peer review board any casual vacancy comes or any of the member resigns or getting removed, immediately filled up by the council. Next most important thing, who constitutes it? As I already told you, who constitutes it? Council. And who is going to be the chairperson and vice chairperson? Remember, the vice chairperson and the chairman of the peer review board, again repeating, vice chairperson and the chairperson of the peer review board is to be decided, is to be appointed by the council among the CA members only. Are you getting the point? Next point. What is the tenure going to be? The tenure of the chairperson and the vice chairperson, they are going to be rotated every year. Remember, they are going to be rotated every year. But sir, about the remaining 11 members, among the remaining 10 members, means other than your chairman and vice chairman, the 2/3 of the members will have a rotation, that is 3 years or their term as a council member, whichever is earlier. Again repeating, out of the total remaining members, 2/3 of the members will have a term 3 years or their term, whichever is earlier, as a council member. Now remaining 1/3, council keeps these 1/3 people for a longevity purpose. So their tenure will be decided by the council. But 2/3 of the tenure of the peer review board is having a tenure of 3 years or their term as a council member, whichever is earlier. Next point. Sir, how many meetings they are going to conduct? Peer review has to meet at least once in 3 months, means one meeting in 3 months, means 4 meetings in a calendar year. And the quorum is going to be 1/3 of the total strength of the peer review board, or 3 members, whichever is higher, with the presence of vice chairman. If the vice chair is not present, then there should be a presence of chairman. And the quorum of their meeting is this word. Just now I told you 1/3 or 3, whichever is higher. And in case within 30 minutes the members of the peer review board are not available, you all know that the meeting as per the company sector also keep on adjourning. Here also peer review board meeting will be adjourned. Next one, whenever you are going to conduct a meeting, you have to report your that you are conducting a meeting before whom? You have to report it before council. Next one, qualifications of a peer reviewer. Now who can be the peer reviewer? Remember one thing, big amendment came. Peer reviewer has to be a practicing CA. If you are already a practicing CA, 7 years are enough in practice. 7 continuous experience years of practice are enough. So if you are in practice, again saying you should be in practice for 7 continuous years. But sir, I'm a non-practicing CA, but I want to become the peer reviewer. No problem. You can also become the peer reviewer, but you should have served the employment in a particular industry for 10 years plus 3 years in practice. So for you, it is in total 13 years. So if you are right from the beginning of practicing CA, then 7 years are required. You can see that 7 years of experience. But if you have served an industry, then in that case, 10 years of experience plus 3 years of practice experience. So 10 years experience where? In that industry where you were working as an employee, as a chartered, as a CA, plus 3 years of practice. Next point, you have to undergo through a training which is prescribed by the peer review board, and most importantly, you have to file one declaration of confidentiality at the time of empanelment and at the time of whenever the new peer review assignment will be given to you. Next, most importantly, in case the peer reviewer wants, at the time of doing the peer review, if he wants, he can take the help of one qualified assistant. Now the question arises, sir, who is that qualified assistant? That qualified assistant should also be a practicing CA. He should also be a practicing chartered accountant, and he should not be disqualified under section 8 and under section 21 of the Chartered Accountants Act 1949. Remember, and he should be a partner or paid assistant with the peer reviewer. He should be the partner or paid assistant with the peer reviewer. And most importantly, his name shall be communicated to the peer review board and practicing unit before the commencement of peer review. Remember, if the peer reviewer thinks that I may require the need of one qualified assistant, that qualified assistant's information you have to inform it to peer review board as well as the practicing unit well in advance before the commencement of the peer review. Next point, he does not have any right to have a direct communication with the practicing unit and direct communication with the peer review board. He can only and only discuss the matters with the peer reviewer. And he also has to sign the declaration of solvency. Declaration of confidentiality. Now, what should be the disqualifications of a peer reviewer? Peer reviewer should not have any kind of imprisonment or should not be convicted on any offense of moral turpitude and imprisonment. Next, most important thing, he should not be found guilty of any kind of action or proceeding in the ICAI Council or the disciplinary committee or board of committee. No pending disciplinary action against him. He should not have the conflict of interest with the practicing unit for which he is going to be a peer reviewer. And most importantly, most importantly, he should not have undergone through an articleship of the partner of the practicing unit. Whatever the practicing unit for which you have been assigned, and if any of the partner of that practicing unit for which you are going to conduct a peer review, you should not have done articleship under that practicing unit. If any of these five situations will arise, you will be immediately disqualified. And remember, when you have been appointed as a peer reviewer for a particular practicing unit, 2 years before the appointment and 2 years after the appointment as a peer reviewer. Again repeating, 2 years before being appointed as a peer reviewer and 2 years after being appointed as a peer reviewer, you should not have any kind of professional relationship with that practicing unit. These many amendments are there in the peer reviewer qualification as well as the qualified assistant. There's not that much of amendment, but yes, there are so many amendments in the eligibility of becoming a peer reviewer. So remember one thing, these are the amendments you have to take care of. Next most important point, now sir, peer review is applicable to which kind of practicing unit? So remember one thing, if you are a level 1 category practicing unit or if you are a level 2 category of practicing unit. If you are a level 1 category of practicing unit, once in every 3 years your peer review will be conducted. So suppose if my practice is there and my practicing unit is covered under the level 1 category, then every 3 years a peer review is going to take place on my practicing unit. Now the question arises, sir, what I should have done to come under the level 1 category? I should have done the central statutory audit of any bank or any insurance company. I should have done statutory audit of any central or state public sector undertaking or central cooperative society whose net worth is greater than 5 crores or turnover is greater than 250 crores. Next one, I should have done the statutory audit of any asset management company or a mutual fund company. I should have done the statutory audit of any listed entity, whether it is listed in India or outside India. I should have done an audit of a body corporate including the trust. I should have done an audit of an entity whose net worth is greater than 100 crores or turnover is greater than equals to 250 crores. I should have done the statutory audit of NBFC which has accepted the deposits greater than equals to 100 crores, and I should have done the audit of an entity whose financial statements are prepared as per INDAS, and I should have done an audit of an entity which has raised the funds from public banks or financial institution, which has raised the funds via donations and contributions, or which has been funded by the central government or state government more than 50 crores. If I have done these audits or any of these audits, then my practicing unit will be considered as level 1 category of practicing unit. So again repeating, what makes you level 1 category? Central statutory audit of bank or insurance company, statutory audit of an entity which is central or state PSU or the central cooperative society whose net worth is more than 5 crores or the turnover is more than 250 crores, and statutory audit of a asset management company or mutual fund, statutory audit of a listed entity in India, outside India, statutory audit of a body corporate including trust, statutory audit of those entities whose net worth is greater than 100 crores. Remember above, net worth was greater than 5 crores, here net worth is greater than 100 crores, or the turnover is greater than equals to 250 crores, there it was greater than 250 crores. Next one, NBFC which has accepted the deposit for greater than equals to 100 crores, entitities which are preparing their financial statement as per INDAS, and companies which have raised the funds from the banks, financial institutions or from the public by the way of donations or contributions or funded by central government or state government for more than equals to for more than 50 crores. So in that case, you will be treated as a level 1 category practicing unit, and your peer review will be conducted once in 3 years. Clear everyone? What makes you a level 2 category? If you have done statutory audit, internal audit, concurrent audit, system audit, tax audit, departmental review. Again repeating, statutory audit, internal audit, concurrent audit, systems audit, tax audit, or departmental review of public sector undertakings, banks, or insurance companies. Then in that case, you are a level 2 category. Or if you have done the audit of those NBFCs which are not covered by level 1. Do you remember that in the level 1 what is covered? What was covered in the level 1? What was covered in the level 1? Level 1 में those NBFCs who have raised the deposit more than 100 crores. Here more than equals to 100 crores. Here it means less than 100 crores will be covered over here. And if you have generated the UDI and unique document identification numbers more than prescribed by the peer review board, then in that case you will come under the scanner of the peer review board, and any other practicing unit providing assurances not covered or other services not covered under the 1, 2 and 3 above. So if you are a level 2 category, as on the right side you are able to see, then every 4 years once your peer review will take place. So once in 4 years your peer review will take place if you are a level 2 category, and once in 3 years your peer review will take place if you are a level 1 category once in 3 years, and level 2 category once in 4 years. Next, sir, can I get the peer review done on my own? Yes, you voluntarily can also apply to the peer review board ki I want my firm to be peer reviewed. Now you might be thinking, sir, which firm will I already told you peer review board is nothing but gives you an authority. Peer review board is basically is not a fault finding machine. It is basically demonstrating your performance. So remember one thing, yes, you can also request the peer review on your own and make sure that the peer review board will act within 30 days from your request. And not only that, in case your client wants you to get peer reviewed, it means your auditee can also contact with the peer review board, and peer review board will put the peer review on you. It means on your own request peer review can be done, on the request of your auditee, your client also peer review can be done. In both the cases peer review board must act within 30 days. And the fifth area where the peer review can be done on you, if your practicing unit is referred to the peer review board on the request of the secretary, on the request of ICAI, disciplinary committee, board of discipline, directorate discipline, or other regulatory authorities. So remember one thing, there are different 5 methods of getting your peer review done. If you are falling under level 1 category, if you are falling under level 2 category, on your own request, on your request of your client, and most importantly, if it is requested by the ICAI, secretary, board of discipline, disciplinary committee, or directorate discipline. Are you able to understand? In your case and your client's request case mein, peer review board must act within 30 days. Clear everyone? So this is what the main topic relating to the peer review board, everyone. Clear everyone? Hello everyone, how are you all? I hope you all are doing well, and welcome to the another lecture for our paper number 3, CA final, advanced auditing and professional ethics. And this video is for rapid revision batch for May or November 22 students. So as you all know that up to the previous video we have already completed our company audit, dividend chapter, liabilities of an auditor, maintenance of books of accounts. So everything about the company audit, dividend and books of accounts and liabilities of an auditor is over. Now we are going to start with a very important topic that is called professional ethics, which is also known as Code of Ethics, which is also known as your Chartered Accountants Act 1949. First of all, before starting this video, I would like to give you the overview of this video, that in this video what we are going to connect, maybe it will be in the 2 parts, or maybe I'll be able to cover that in 1 part only. So first of all, what we are going to cover in this particular topic. In this particular topic, we are going to cover so many things. As you all might be aware of the fact that the Code of Ethics 2020 has already come into the existence, but for your CA final May 22 examinations, so far only the overview has been added. So we are going to understand the overview of code of ethics, the new code of ethics, only the summary, like how many parts are there and which part is applicable to which particular chartered accountant in practice or chartered accountant in service. So why it is applicable, what is the reason it is applicable, all that's in a summarized part. 15 to 20 minutes of discussion we'll be having on this part, right or not? Next one, definitely we are going to understand the old code of ethics, that is 2009 also, where we'll be talking about the type of misconducts and type of misconducts, in which two types of misconduct comes: professional misconduct and other misconducts, that is Chartered Accountants Act 1949, which we are going to study. Along with that, we will also understand some council guidelines, right or not? And along with that, we'll also understand some self-regulatory measures. And in that we'll understand disciplinary mechanism also, like how the Chartered Accountant Act 1949 works and what are the board of discipline, what do you mean by disciplinary committee, appellate authority, all the 34 clauses divided into 2 schedules, and part 4 in the schedule 1 and part 3 parts in the schedule 2, all that things in detailed and in a brief manner I would like to explain it to you. Because remember one thing, in the code of ethics and in the professional ethics, you have to understand one thing: this part has to come in your examination for minimum 16 to 20 marks. Nowadays, what they have started is they have started asking you one professional ethics question, one code of ethics question along with the other parts. So that makes this topic a highly important and highly valuable in your examination. So company audit may minimum 8 to 10 marks will come, and in the professional ethics minimum 15 to 20 marks will come. And after the professional ethics, we are going to understand peer review and quality review. After that, we'll understand CARO 2020. Along with that, we'll understand audit report, and that's how we are going to proceed with the further videos. So I will again suggest that those who are doing the advanced auditing and professional ethics for the first time, please do not watch this video, because this video is going to be little bit fast. This is for those students assuming that they have already done their preparation, and this is the video recording for rapid revision batch, which is applicable for the May and November 22 students. So this is the overview of the chapter. Now let us begin with the chapter. In the chapter, if we'll understand, we will first start with the overview of the new code of ethics which has been recently added by the ICAI. First of all, let me tell you one thing what we used to have. We used to have a code of ethics. We used to have code of ethics which was 2009, but recently ICAI has changed it to code of ethics 2020, right or not? So many changes have come, but so far the total code of ethics 2020 is not being implemented in our examination. For our examination, only the overview of the new code of ethics is there. That is what we are going to understand. When we talk about the code of ethics 2020, everyone listen to me carefully. When we talk about the new code of ethics 2020, it is being further classified into 4 parts. As per the old code of ethics, we used to have 2 schedules divided into 4 parts in the schedule 1 and divided into 3 parts in the schedule 2, comprising of total 34 clauses, under which the chartered accountant in practice and the chartered member in service will be held guilty for professional misconduct or other misconduct. But when we talk about the code of ethics 2020, we will come to know that the code of ethics 2020 is basically divided into 4 parts. Part 1, which talks about the fundamentals. Part 2, which is applicable to the professional accountants in service. Part 3, which is applicable to the professional accountants in practice. And part 4 is relating to assurance, independence on assurance and review engagements, and independence on engagements other than audit and review engagements, right? So let us have a summary. Let us have the composition of code of ethics, like what ICAI wants you to understand. And definitely one question has to come from the overview of code of ethics 2020. Now, as for the part 1, in the part 1, everyone, what is included in the part 1? In the part 1, it talks about the code. It talks about the fundamental principles. If you remember, we have the SA 200 series. In the SA 200 series, do you remember we have the basic principles governing an audit? Ethical requirements by ICAI, like principle of integrity, principle of confidentiality, principle of independence, principle of professional care and due diligence, principle of professional behavior. All these fundamental principles have been talked about in the part 1. So part 1, as you can see, that what is part 1? It complies with the code, fundamental principles and conceptual framework, which includes the fundamental principle and conceptual framework, and is applicable to all the professional accountants. The major difference you will find between the professional ethics old one and the new professional ethics code of ethics 2022 is, in that professional ethics we used to call them as chartered accountants in practice and chartered accountants in service, or members in practice and members in service. Here we are going to call them as professional accountants. So part 1 is equally applicable. Part 1 is equally applicable to professional accountants in practice as well as the professional accountants in service. So it is equally applicable to professional accountants in practice as well as the professional accountants in service. Next, part 2. What is part 2? Part 2 is basically applicable to professional accountants in service. Those who are doing the job, those who are into the employment. Are you getting the point? So it's not only mandatory for the CAs in practice or the professional accountants in practice to follow the code of ethics. Code of ethics is equally required and equally important for those professional accountants who are in the service. And those professional accountants who are in service, including which kind of service, everyone? You can see that professional accountants employed, engaged or contracted in the executive or non-executive capacity. What do you mean by executive or non-executive capacity? Executive capacity means when you are in full-time employment with the particular company and serving them as a CA in service. Or what do you mean by non-executive capacity? When you are serving them but not in full-time employment as a director or KMP form. So either you are in executive function capacity or you are in non-executive function capacity. But if you are a professional accountant in service, not in practice, then part 2 related to you. Part 2 is applicable to you. Right or not? Now, what kind of professional services in which kind of industry? Suppose you are a professional accountant in the industry like commerce, service industry, public sector, or you can say that education sector, or you can say that not for profit sector if you are working as under the Section 8 company, if you are working under regulatory or professional bodies. So either you are delivering the executive capacity or non-executive capacity in any of these areas. What are these areas? You can see that what are these areas? The areas like education sector. So if you are a professional accountant in service providing executive services or non-executive services in the areas like commerce, industry, service, Section 8, public sector, regulatory bodies, professional bodies, then part 2 is also applicable. Part 2 is applicable to you. But remember one thing, part 2 is also applicable to professional accountants in practice who are performing the professional activities to their relationship with the firm as an employee. It means part 2 of the Code of Ethics 2020 is applicable to professional accountants in service as well as professional accountants in practice. What do you mean by professional account? Which professional accountants in practice? Who are working as an employee in some CA firm. Are you getting the point? You are a practicing CA only, but you are working as an employee in one particular CA firm, then this part 2 is equally applicable to you. So part 2 is applicable to professional accountants in service as well as the professional accountants in practice, and those professional accountants in practice who are working as an employee in a CA firm. Are you getting the point? Now, what is part 3, everyone? So part 3 is basically applicable to whom? Part 3 is applicable to professional accountants. Part 3 is applicable to professional accountant in public practice, means CAs in practice, which sets out the additional matter that applies to professional accountants in public practice when providing the professional services. So when we quickly wrap up, what is a summary of Code of Ethics, what we have learned so far? So part 1, what is part 1? Part 1 talks about fundamental principles. Part 1 also talk about Code of Ethics. Part 1 is also talking about the conceptual framework. Which framework, everyone? Conceptual framework, which is applicable to both. It is applicable to both professional accountants in practice as well as professional accountants in service. Part 2 is applicable to professional accountants in services who are providing the professional services either in the capacity of executive or non-executive capacity in the Section 8 sector, regulatory bodies, professional bodies, commerce, industry, service sector. And it is also applicable to those professional accountants in practice who are working as an employee in any kind of CA firm. Now, When we talk about the part 3 is completely applicable to CAs in practice, means professional accountants in practice. Now, what does the part 3 talks about? Part 3 talks about various kinds of clauses which are only applicable to professional accountants in practice. Now, what do you mean by professional accountants in practice? It will talk about professional accountants in practice, like if you are doing any audit assignment, right or not? If you are doing any audit assignment, or if you are doing any review assignment, or if you are doing any assurance assignment, so that is covered in your part 4. So part 4 is completely dedicated to whom? Part 4 is completely dedicated to chartered accountants in practice or professional accountants in practice who are either doing auditing and review engagements or engagements other than auditing and review engagements. If you are doing auditing and review engagement, what level of independence you have to maintain? That is part 4A. So what is part 4A, everyone? See, what is part 4A? Independence. What is the part 4A? Independence for audit and review engagements, which applies when performing audit or review engagements. And what is part 4B? Independence for assurance engagements other than audit and review engagements. So if you are into the engagements other than audit and review engagements, then what kind of independence level you have to maintain? That is part A and part B of what? Part 4. So if I have to tell you a complete story, if I have to tell you the complete story of the new code of ethics, so new code of ethics is broadly classified into 4 parts. How many parts, everyone? 4 parts. Part 1 talks about what? Part 1 talks about fundamental principles, code of ethics, conceptual framework, which is applicable to professional accountants in practice as well as the professional accountants in service. Now, what is part 2? Part 2 talks about those clauses which are only applicable to professional accountants in service. But it is not only applicable to professional accountants in service, it is also applicable to professional accountants in practice. But which professional accountants in practice? Who are working as an employee in any CA firm, right or not? You are a practicing CA, but you are working as an employee in any CA firm. Now, part 3. Part 3 is completely dedicated to professional accountants in practice, who are in public practice, like CAs in practice, like I'm in practice. So part 3 is completely dedicated to me. Now, part 4. Part 4 talks about the independent standards. Which standards, everyone? Independent standards. And independent standards, it is further classified into 2 parts, 4A and 4B. What is 4A? 4A is applicable to independent standards on those auditing and review engagements which the professional accountant in practice is going to take. And part B talks about those independent standards on assurance engagements other than auditing and review engagement. So what kind of independence level you have to maintain when you are doing auditing and review engagements, and what kind of independence standards you have to maintain when you are doing the assurance engagements other than audit and review. So part A is on audit and review standards, and part B is on assurance standards other than audit and review standards. So this is what the total summary of the Code of Ethics 2020. Are you getting the point? Next one. The Code of Ethics contains the sections. It contains the sections which address the specific topic. Some sections contain subject to aspects of those topics. Like say for example, whatever the sections in the Code of Ethics 2020 are covered, they are being structured into 3 manners. What are the 3 manners? First of all, every section you will find the introduction, like what this particular section is all about. What is a preamble of this section? In which context this section has been made. Then second part of the section, you will find that requirements. What this section requires from you. Are you getting the point? What kind of areas have been addressed here? Then the third part is how this section is applicable to you. What is the third part? Third part is how this section is particularly applicable to you. So is it applicable on CA in practice, or is it applicable on CA in service, and what are the suggestions how you can improve? So every section in the new Code of Ethics is basically divided into 3 parts. Part 1 talks about introduction of the section, that is preamble, background, history of the section. Part 2 talks about the requirements of the section, like what kind of specific obligations a CA in practice or the professional accountant in practice or a professional accountant in service is having. And part C talks about the application material. It will give you the explanations, suggestions, and improvements and actions to be taken care of along with the illustrations and all. Are you getting the point? So remember one thing. Basically, our new Code of Ethics 2020 is broadly classified into 4 parts. Part 1 talks on fundamental principle, Code of Ethics and conceptual framework, which is applicable to both professional accountants in practice and professional accountant in service. Part 2 talks about the various clauses which are applicable to professional accountants in service as well as the professional accountants in practice who are working as an employee in any CA firm. Part 3 is completely dedicated to professional accountants in service. In practice, and part 4 is further classified into part 4A and part 4B. Part 4A is dedicated to the independence level to be maintained when you are doing the audit and review engagements, and part B talks about the independence level you have to maintain when you are doing the assurance engagements other than audit and review engagements. Then whatever the sections are given in the Code of Ethics, they are broadly classified into 3 parts. One is introduction part, where you will come to know about the history and preamble and background of the section. Second one is the requirement part, that what is the obligation under this section you have to comply with. Third one is the you can say suggestions and illustrations and explanations will be given over here, right? Now let us understand what do you mean by the fundamental principles in the part A. As I told you, only summary is there, so we are going to have it in a very quick manner. If you can see this chart, you will find that there are total 5 types of fundamental principles which have been talked about. What is the first one? First one is talking about integrity. As you all know that as per SA 200 and as per SA 220, overall objectives of an audit and conducting the audit as per standards on auditing, that is SA 200, and quality control to be maintained while doing the audit of financial statement, SA 220. Integrity word has been used so many times. So integrity ka basically meaning is what? What is the basic meaning of the word called integrity? Integrity means honesty. What is the meaning of integrity? Integrity means honesty. Integrity means straightforward. Auditor is expected to be straightforward, means if you are a member in service or you are a member in practice, you have to be honest towards your work, you have to be honest towards your practice, you have to be straightforward, and along with that you have to be very, very sincere when it comes to your duties. That is what we mean by concept of integrity. Then what is the next fundamental principle have been talked about? The next fundamental principle has been talked about is what? Objectivity. What do you mean by objectivity? Objectivity means always maintaining the impartial and unbiased attitude. Which one? Impartial and unbiased attitude you always have to maintain when you're doing the audit of any entity, or when you are either you are a professional accountant in practice or you are a professional accountant in service. You are always expected to maintain impartial and unbiased thing. If you think that something is going to affect your objectivity, it's better to keep yourself away from that kind of audit assignment. Now, what do you mean by professional competence and due care? You are always expected to upgrade yourself. You are always expected to upgrade and update yourself with the new technologies, with the new training, seminars, programs which are conducted by ICAI, and you should keep on polishing it to the extent that you can serve the profession in the best manner. Next one is talked about what? Professionality, confidentiality. What do you mean by confidentiality? As you all might have heard that in the SA 220 and 200 that confidentiality means an chartered accountant in practice or a chartered accountant in service. Either you are in practice or you are in service. If you come across any confidential, sensitive information of your client, you are expected to keep your mouth shut. You are not allowed to disclose anything relating to your client. You are not allowed to make the misuse of that information until and unless the client permits or it is a specific requirement of the statute or law. You are allowed to keep your mouth shut. So keep your ears and eyes open, but always keep your mouth shut. That is called confidentiality. And the next one is what? Professional behavior. What do you mean by professional behavior? You are always expected to maintain it. You have to maintain the dignity of the profession. People respect you, accept your work and recognize your work only because you are going to behave in a professional manner. So that is what the expectation of everyone from you. So always the auditor, either you are a professional accountant in practice or you are a professional accountant in service, you are always expected to maintain a professional behavior. So now you can see that it is given below. What do you mean by integrity? So let's have a quick session. A professional accountant, what do you mean by that? A professional accountant shall comply with the principle of integrity, which requires an accountant to be straightforward and honest. That is what I told you: honesty, sincerity, and straightforwardness. A professional accountant shall not knowingly be associated with the reports and returns, communications, or other information which he believes that contains a material false or misleading statement. You should not be connected with any kind of information which you already know that it is materially false and materially misstated, and those kind of statements and information which are provided negligently. Next one, omits or obscures required information, with such omission or obscurity would be misleading. You should always be sincere towards your work. Don't be gross negligent towards your work. You should be straightforward. If any breach you found, if you find any breach, then in that case it is your responsibility that you should immediately modify your report and make sure that in a sincere manner you should bring it to the notice of the required authorities. And he should, if when a professional accountant is aware of anything, aware of having been associated with information described in para 2, accountant shall take the steps to be disassociated from that information. If you come to know that there is one information which is misleading and all, it's better to avoid that circumstances. It's better to get away from this particular area. Second one is objectivity. In the objectivity, what I told you, you are expected to maintain impartial and honest and unbiased attitude. A professional accountant shall comply with the principle of what? Principle of objectivity, which requires an accountant not to compromise professional or business judgment because of bias, conflict of interest, or undue influence of others. So never do work under the undue influence of anyone, or don't be biased and partial while doing your work. A professional accountant shall not undertake any professional activity in circumstance or relationship which unduly influences his professional judgment regarding that activity. Clear? Next one is professional competence and due care. What do you mean by professional competence and due care? Always remember that you are always going to be respected in the market if you are going to update your skill and upgrade your knowledge at every step of your profession. You are not at all. You are expected to follow the professional, ethical, and technical standards which are issued by ICAI and remaining things which are issued by the laws and regulations. You are always expected to maintain the due care and competence whenever you are serving your client. Are you getting the point? Now, not only in practice you are expected to maintain, you are also expected to maintain when you are in service. Are you getting the point? And make sure that you will keep on continuing polishing your skills, and you should be aware about the developments which are taking place in our profession. Are you getting the point? Because continuous professional development is only going to develop you and maintain your capabilities in the organization. And you should always be diligent. Be careful while doing the work. Don't be gross negligent. Because people are paying you a hefty amount. People are asking your professional services because they have a faith on you. They have a faith on your competence, and they have a faith on your care and due diligence skills. So you are not expected to be gross negligent while doing it. So always maintain the mode of doing the things in very careful manner. Right or not? Next point. While what is written, see in the point number 6, in complying with the principle of professional competence and due care, a professional accountant shall take the reasonable steps to ensure that working in the capacity under the accountant's authority have appropriate training and supervision. You are expected to go to so many trainings, and you are expected to attend so many seminars which are conducted by ICAI so that you can develop your skills. Fourth one, confidentiality, as we already know. What do you mean by confidentiality? Be alert to the possibility of inadvertent disclosures, including in social environment, and particularly to a close business associate or immediate or a close family members. So what this particular fundamental principle says, that keep your ears and eyes open, always be alert, but you are expected to keep your mouth shut. Maintain confidentiality with the firm or employing organization. Maintain confidentiality disclosed by the prospective client. And so whether you are a past auditor or you are a present serving auditor, you are expected to always maintain the confidentiality. You are not expected to open up your mouth until and unless required by the client or it is a requirement of a particular statute. Next one, not to disclose confidential information acquired as a result of professional employment relationship outside the firm or employing organization without a proper authority, unless there is a legal or professional duty to disclose. Not to use the confidential information acquired as a result of professional against your client. Remember one thing, you are not expected to misuse that confidential information which you acquired. Are you getting the point? And remember, always take reasonable steps to ensure the confidentiality is being maintained properly. To take reasonable steps to ensure that personnel under the accountant's control, those who are working under you, Not only you have to maintain the code of confidentiality, those who are working in your engagement team are also required to maintain the confidentiality. Did you get the point or not? So because if you will maintain the confidentiality, then only the client will be able to tell you each and everything what you are looking for. Next point. Under what circumstances you can break the code of confidentiality? Under what circumstances you can make the disclosures? See the point number 1. If the disclosure is required by the law. If the law is forcing you, pushing you, then only it is to be disclosed. Disclosure is permitted by the law and is authorized by the client. So either it is required by the law or it is authorized by the client. That I already told you. Or there is a professional duty or right to disclose when not prohibited by the law to comply with the requirements of peer review and quality review. Now remember one thing, sometimes on you peer review and quality review will take place. That we'll understand in our next chapter, and those who are watching this video, they are already aware of the fact that peer review and quality review is conducted on the practicing units to check the quality of the services they are rendering. But under the peer review and quality review, if someone is asking you what kind of information you have collected while doing the audit of your client, yes, under the peer review and quality review, if it is not prohibited by the law, you are expected to disclose some information. You are also expected to respond to the inquiry and investigation by the professional regulatory body. If you are being inquired or if you are being inspected or investigated by a required authority or any statutory authority, then also you can break this code of confidentiality. Are you getting the point? And you are also allowed to break this code of confidentiality when any legal proceedings are going on. That is what. And you are complying. You are breaking this because you have to comply with your PET standards. What do you mean by PET standards? PET stands for professional, ethical, and technical standards. So these are the various circumstances under which you are expected to disclose the confidential information which you acquired from your client. But generally, you are required to maintain it because that is your one of the fundamental principles to always keep your mouth shut. Are you getting the point? So this is what do you mean by confidentiality. And after the confidentiality, what is the next one? Professional behavior. That is what is expected from you always. So what is expected from you always? That you always maintain a good professional behavior. Are you getting the point or not? Good professional behavior means you are not allowed to solicit the client. You are not allowed to advertise your business. You are not allowed to you are not allowed to compare yourself with others. So you are not allowed to disgrace the other chartered accountant. You are not allowed to take the credit of something. You are not allowed to, misbehave with the other professionals in professional accountants in practice or professional accountants in service. You are not allowed to, bring down the reputation of ICAI. You are not allowed to do any kind of act which is bringing down which is bringing the disrespect to the ICAI. That is what kind of professional behavior is expected from you. So professional accountant shall comply with each of the fundamental principles. So what are the 5 fundamental principles we understood, everyone? The first one we understood is integrity, then objectivity, then confidentiality, then professional skill, professional competence and due care, and finally professional behavior. So every accountant, either you are in practice or you are in service, you are expected to maintain the same. Next one, fundamental principles of ethics establish the standard of behavior expected at professional accountant. The conceptual framework establishes the approach which an accountant is required to apply to assist in complying with those fundamental principles. A professional accountant might be facing a situation in which complying with one of the fundamental principles conflicts with complying with the one or more other fundamental principles. In such situation, the accountant might consider consulting with experts. अब सुनना ध्यान से. Sometimes क्या होता है कि you are in a ethical dilemma. What do you mean by that? Sometimes you want to follow one fundamental principle, but if you follow that fundamental principle, the other fundamental principle is coming in your way. It means they are clashing with each other. So when you are in an ethical dilemma, what is right and what is wrong, when you are in a situation of, when you are in the dilemma of making a choice between right thing and the right thing, then in that case, it's better to take advice of others within the firms or employing organizations. Take the advice of the others within your firm, or take the advice of those charged with governance, TCWG of the client. Take the advice of the institute, or take advice of legal expert. However, such consultation does not relieve the accountant from the responsibility. Remember one thing, even though you are taking the advice while maintaining the fundamental principles, but you are not going to escape from your responsibility just because you have taken an advice. Ultimately, decision will be yours and you will be ultimately responsible for the same. And if you still think that nothing is working out, better to disassociate yourself from that thing, that particular place. Next point. Threats evaluation and threats and safeguards. So as you all know that in the CA intermediate level also we have done the 5 types of threats. So I will not be giving you so much of detailed thing on that. So we will just have an overview. There are total 5 types of threats. One is called self-interest threat. Second one is called self-review threats. Third one is called advocacy threats. Fourth one is called familiarity threats. And the fifth one is called intimidation threats. What do you mean by self-interest threat? Self-interest threat is when you are having any financial relationship or financial relationship with your client, financial relationship or financial interest with your client that will impact your objectivity and independence. That kind of threat which you have in your profession, that is known as self-interest threat. Say for example, you are financially interested with one of your client. You're financially interested with one of your client. So being financially interested, you always have this kind of self-interest threat in that. Now, what do you mean by self-review threat? Self-review threat means, say for example, you worked as a director in one company, you left, and next, in the coming year only, you became the auditor of the same company. So 1 year back, you were the director of that company, and now you are the statutory auditor of that company. So you have to review your own work only. So that kind of threat is known as self-review threat. Are you getting the point? You have to review your own judgments which you have made while working as a director in that company. So that kind of threat is known as self-review threat. Next, what kind of threats come? Advocacy threats. Now, what do you mean by advocacy threats? When you refer somebody, when you refer the securities of your client to someone, at that point of time, there is an advocacy threat because you referred it. And if that security will not perform as per the expectations which you shown to the other party, you will always be under the threat whether that particular security will perform or not. So that kind of threat is known as advocacy threat. You advocated and you referred your client to someone. Then familiarity threats. Familiarity threats are those threats when your close family relative or close family friend is working in one company and you are the auditor of that company or you are an employee in that company. So such kind of threat will be there. If you will try to become more independent and more objective, that may harm the employment of one of your relative, or that relative may get thrown out of their job. If you will try to go beyond the object, if you will try to be so much of impartial and unbiased, that may affect the entire organization, or that may affect your relatives or your close friends association with the company. That kind of threat is known as familiarity threat. Then we have intimidation threat. What do you mean by intimidation threat? When you have a threat of being punished. Say for example, you have a threat of suppose you have only one client, which is your major client, and your major source of revenue is coming from that client only. So you have a threat. Okay, what if that client will throw me out from this particular position as an auditor or as a job? Like suppose you are not doing any, or you are not having any kind of job offer letters in your hand. So you will be feeling like, if I'll try to go beyond this particular employer, then in that case, I have a threat of being thrown out. So threat of being punished or thrown out or losing the client, those kind of threats are intimidation threats. So we are always surrounded by, as a professional accountant in service or as a professional accountant in practice, you are always and always surrounded by threats. Right, everyone? So this is what the various types of threats, and these are the various examples given below, which you can later on take care of. Right. Next point. Evaluation of the threats. Now remember one thing, when you already know that, now in the SA 315 also we understood that when we already know that there are some ROMM level while you are doing the audit of a professional company, when you are being a professional, when you are as an statutory auditor of the company, when you come across that yes, there is an audit risk, inherent risk, control risk, and ROMM available in the financial statement, do we accept it just like that, or we try to reduce it to the lowest acceptable level? Yes, we try to reduce it at lowest acceptable level. And how you can reduce your threats to the lowest acceptable level? Only and only by complying with your fundamental principles. Always be following integrity, objectivity, confidentiality, professional competence, and due care and professional behavior. I can guarantee you, I'm not saying that you will be able to eliminate the threats, but at least you will be able to reduce them to the lowest acceptable level. But only and only when you comply with the fundamental principles. Clear hai? Now how you are going to address these threats? What are the actions you will take to eliminate these threats? What are the safeguards you will take to eliminate these threats? What is the first safeguard, everyone? Having an appropriate reviewer who was not a member of the team. Always remember that if you will get the third party review now, that will always help you in making a better judgment. So what is this? Now how you can safeguard yourself from those threats? Having an appropriate reviewer who was not a member of the team review the work performed or advise and necessary might address a self-review threat. Using the different partners and engagement teams with separate reporting lines for the provision of non-assurance services to an assurance client might address self-review and advocacy threats. Try to use the different partners and different engagement teams at the different parts. Then involving the another firm to perform or re-perform the part of engagement. Say for example, you have already done an audit of a particular firm. You can, appoint another firm to do the audit with you. You can appoint another firm to conduct another review on you. Right or not? That will help you in understanding the self-review threats. Separating teams when dealing with the matters of confidential nature might address a self-interest threat. So separating teams while dealing with the matters of confidential nature might address a self-interest threat. And assigning additional time and qualified personnel to required tasks when an engagement team has been accepted might address a self-interest threat. Clear, everyone? Yes or no? Hello everyone, I'm sorry for the last technical glitch, so we had to discontinue that video. So we have already covered the summary of Code of Ethics as per 2020 Code of Ethics 2020 ka summary we have covered, and along with that we have also covered the threats, we have covered the fundamental principles. Now the new thing which has been recently added, that is your May 2022 examination amendment that is newly added in your Code of Ethics is the NOCLAR. Sir, what do you mean by NOCLAR? Non-compliance of laws and regulations. The full form of NOCLAR is non-compliance with laws and regulations. Sir, can you please throw some more light on NOCLAR? Yes, I would love to. And remember one thing, being an amendment, so it is highly expected in your examination. Are you getting the point? Highly expected in your examination. So sir, non-compliance with laws and regulations means what? Actually, what used to happen is, earlier the auditor had to fight between his two fundamental principles. One fundamental principle which the auditor always have to maintain, you all know, is known as confidentiality. What is the first fundamental principle? Confidentiality. Now what do you mean by confidentiality? Sometimes you know that you will come across some confidential and sensitive information of your client which may directly impact the financial statements of the client, but as an auditor of that particular client you are expected to maintain what? Confidentiality. So at one side you have to maintain the confidentiality, but on the other side your ethics says that you should report. On the other side your ethics says that you should report to the higher authorities. So on one side you have to maintain the confidentiality, and on the other side your ethical principles, the ethical requirements says that please report if you find any non-compliance. Because if you remember, we have done SA 250. Sir, what is SA 250? Consideration of laws and regulations. Now, as per SA 250, as and when you see any kind of non-compliance of laws and regulations which are directly impacting the financial statements of the client, then in that case, what is your responsibility? You have to modify your report. You have to modify your report and you have to communicate to the higher authorities. But if you want to communicate to the higher authorities, the another ethical principle which comes in your way, that is called confidentiality. So what to do, what not to do, this was the biggest ethical dilemmatic situation for chartered accountants in practice and professional accountants in practice. Now the ICAI, now the Institute of Chartered Accountant of India, by following the footsteps of IESAB, International Ethical Standard Board. Are you getting the point? It is on the footsteps of that international board, and now they have also brought NOCLAR in India. Actually, NOCLAR is a very old concept. It's a very old concept. International Ethical Standard Board already included NOCLAR for so many years back, but Institute of Chartered Accountant of India has brought this concept of NOCLAR. Now, what is basically NOCLAR? NOCLAR ka full form, non-compliance of laws and regulations. Now, sir, why we are doing this? If you find any kind of non-compliance of laws and regulations, whether done intentionally or unintentionally by the employee, officer, management, TCWG, anyone in the organization, then it is your responsibility that you have to report it to the regulatory authorities. Are you getting the point? The dilemma which the auditor was already into earlier, should I report or I should not report? If I'll report, confidentiality is coming. But if I'll not report, my ethics are not allowing me to keep my mouth shut. So that kind of dilemmatic situation has been, resolved by introduction of NOCLAR. So what do you mean by NOCLAR, everyone? You can see that in the course of providing the professional services to the client or carrying out the professional activities for an employer, professional accountants may come across an instance of non-compliance with the laws and regulations. So when you are providing the professional services to your client, either you are a professional accountant in practice or you are a professional accountant in service. So remember, this NOCLAR provision is also applicable on both of them. Either you are a practicing CA or you are a servicing CA while doing the activities, professional activities for your client or for your employer. It is specially written for your client and for your employer. Where it is written? It is written when you are providing professional services to your client or you are doing the professional activities for your what? For your employer. It means both are covered here. Who are covered here? Professional accountants in service are also covered and professional accountants in practice are also covered. While doing the practice, while serving your client and while serving your employer, if you come across any kind of non-compliance of the laws and regulation or suspected non-compliance of laws and regulation committed by the whom? Committed by whom? By your client or the employer or by the TCWG or by the management or by the employees of the client or by the employer. So either your client has done the NOCLAR or the employer has done the NOCLAR or TCWG has done the NOCLAR or management has done the NOCLAR or employees have done the NOCLAR, it is your responsibility to report it. Now the question arises, sir, do we have to report only intentional NOCLAR? Answer is no. It can be intentional or it can be unintentional. It can be an omission or it can be a commission. Suppose your client omitted to follow the law and regulation or committed a wrongful thing in following the laws and regulations. It can be intentional NOCLAR or it can be unintentional NOCLAR, done by your employer or done by your client, done by the TCWG or done by the management. Your responsibility is to report it. Are you getting the point? Now, who can do it? Your client can do it, your employer can do it, TCWG can do it, management can do it, or other individuals working in the company can do it. So I hope you all understood the concept of NOCLAR. So NOCLAR stands for non-compliance of laws and regulations. It is applicable for both professional accountants in service as well as the professional accountants in practice. So in case while doing the practice and while doing the service, if you come across any kind of NOCLAR or suspected NOCLAR done by the client or employer intentionally or unintentionally in the form of omission or commission, then in that case your responsibility is to report. Now, next, how a NOCLAR under revised code of ethics does not address the personal misconduct unrelated to the business. Remember one thing, NOCLAR mein what is excluded? What is excluded? If any MD, CEO or CFO has done any personal non-compliance, if it is a personal NOCLAR of any CEO, MD or CFO, that is not required to be reported here. We are only going to report those kind of intentional or unintentional NOCLARs which are connected with the business of your client or which are connected with the business of your employer. Personal NOCLARs are not covered in the code of ethics, not at all covered. So personal non-compliance of laws and regulations are not covered. Suppose one of the CFO has not paid the taxes. So that is his personal NOCLAR. That is not the business related NOCLAR. Are you getting the point or not? Next, as per IESBA, as I already told you, International Ethical Standard Board of Accountants. So it is International Ethical Standard Board of Accountants. Following examples would be covered in the NOCLAR. Now, we are going to report which kind of no class that we are going to understand. So what kind of no class are going to be reported here? We are going to report no class relating to fraud, corruption or bribery. We are going to report no class relating to money laundering, terrorist financing and proceeds of crime. We are going to report no class relating to securities marketing and trading like insider trading or something like that. Banking and other financial products and services no class. We are also going to report if there is any data malfunctioning, data mining or data kind of any no class relating to data protection also. We are also going to report those no class which are relating to environmental protection. Like say for example, Air Pollution Act is applicable to you, but you are not having the proper welfare measures and safety measures and health measures for your for your workers in the factory. No class relating to public health and safety. Suppose you are doing any kind of business which is bringing danger to the public health and safety, and you are also going to report those no class relating to tax and pension liabilities and payments. Suppose if there is any default in workman compensation fund. So these are the various examples of the no class which you have to report, either done intentionally or unintentionally, done by your client or employer in the form of commission or in the form of omission. Always remember. Now, what is the objective of no class? Objective of the no class is that auditor should not turn a blind eye. If the auditor will keep his eyes closed, how the stakeholders will have a belief on the auditor then? If the professional accountant in service, people expect a quality work from a chartered accountant. You are not expected to shut your eyes down. If in front of you any kind of no class is going on, non-compliance of law and regulation is going on, you are expected to open up your eyes and you are expected to report it. Are you getting the point or not? So that is what they are saying. The objective of no class is that turning a blind eye to the potential no class is not an appropriate response from the professional accountants, while placing the renewed emphasis on the roles of management and TCWG in addressing the matter. Further, it increases the awareness and understanding among the professional accountants of their legal and regulatory responsibilities when they face no class. Some important points about the no class. What is the first one? During the course of providing a service. What do you mean by that? What do you mean by that? Remember one thing, you are not expected to investigate the no class. You are only expected to report the no class. Moment you will come to know about that there is a non-compliance or suspected no class, then in that case your duty is done. You are not required to investigate. Investigation is not your responsibility. And you are not responsible for its complete compliance. That is the responsibility of the management. Your responsibility is to only report it. And next most important point, expertise of laws not required. You are not expected to behave like an expert at that point of time. If you think that to understand a particular no class, you need a legal advice or you need an expert advice, hire the expert and then try to understand it. Professional accountants are only expected to apply a normal knowledge and normal expertise. We are not expected to have a high level of expertise. In case high level of expertise is required, it is better to hire someone to do the thing. Now see, professional accountant is expected to apply knowledge and expertise and exercise professional judgment. However, is not expected to have a level of knowledge of laws and regulations greater than which is required to undertake the engagement. Whether an act constitutes non-compliant is ultimately a matter to be determined by the court or other appropriate adjudicative body. So what are the so many points we understood? So no class stands for non-compliance of laws and regulations applicable to professional accountants in service and professional accountants in practice. Next one. What is no class? If there is any no class or suspected no class found out by a practicing CA or a servicing CA while serving to his client or employer, either done intentionally or unintentionally by the client or TCWG or employer or management, either in the form of commission or omission, it is your responsibility to report it to the regulatory authority. What kind of no class you are not expected to report? The personal no class are not required to be reported. And those kind of no class which are not at all having any consequential, which are clearly non-consequential in nature and which are clearly personal no class in nature, you are not expected to report on that. Sir, what kind of no class you will be reporting? No class relating to insider trading, relating to SEBI, data protection, environmental protection, public health and safety. No class relating to, what do you say, you can see all these examples, money laundering, tax, pension, evasion, all these kinds of no class you have to report. And you are not expected to investigate a no class. You are only and only expected to just catch the no class and report it. You are not expected to investigate or not expected to have the compliance of that. Right or not? That is different thing. Then what are the certain matters which are expressly out of the preview? Those no class which are clearly inconsequential in nature and which are personal in nature. Are you getting the point? And as per IESBA code, what is IESBA code? International Ethical Standard Board of Accountants code. Disclosure of the matters to an appropriate authority would be precluded if doing so would be contrary to the law or regulation. If you think that if it is against the law and regulation, then in that case you are not expected to disclose it to regulatory authority. Now the major difference between no class, sir, that too we have read in SA 250 also. Now what is the major difference between no class and SA 250? The major difference between the no class and SA 250 is no class is a broader concept. SA 250 was only and only connected with the auditing engagements. No class is having a wider scope. It is connected with the auditing, review and assurance engagement. SA 250 was only and only limited to whom? It was only and only limited to members in practice. But no class is covering both members in practice as well as the members in service. So that is a point number 1. Point number 2 में no class में stakeholders has been described. What do you mean by stakeholders? Everyone, your competitors, your lenders, government, management, shareholders, everyone is a stakeholder. So no class is basically is introduced to protect the interest of whom? Stakeholders. But SA 250 was basically not at all specifically, it was talking about what? Stakeholders. So yes, stakeholders have been introduced in the no class, but stakeholder definition was not there in SA 250. Are you getting the point or not? So SA 250 does not define the stakeholder. No class is related to affect or non-compliance on investor, creditors, employees and general public. Next one. As per the no class, in exceptional circumstances, professional accountant might become aware of an imminent breach of law and regulation that would cause substantial harm to investor, creditor, employee or the general public. Having first considered whether it would be appropriate to discuss the matter with the TCWG or management, the accountant shall exercise professional judgment and determine whether to close the matter to the appropriate authority or not. Right or not? Next one, if the disclosure is made, that disclosure is permitted. This provision is not existing in 250. So there are so many differences between the no class and SA 250. So these 4 points, when you read it, you will come to know the major differences between SA 250 and no class. Now, applicability of no class in India, as I already told you, IESBA, International Ethical Standard Board of Accountants, they have already introduced the no class so many years back, but ICAI has introduced it recently, and ICAI has specifically limited the no class provision only and only to the listed entities. In case of members in practice and for the members in services, applicability has been restricted to employees of the listed entities only, and that too only and only audit assignments. So far, full no class has not been introduced by ICAI. ICAI kept it only and only restricted to professional accountants in practice and professional accountants in services relating to listed entities. It means if your employer is a listed entity or you're working in a listed entity or your client is a listed entity, up to that extent only no class has been restricted so far by the ICAI code. So it is trying to put forward the footsteps on the IESBA code, but IESBA code makes no class applicable to all types of assignments in case of members in practice and to all the employees in case of members in service. But in India, only and only applicable to listed entities and listed employees. Did you got the point or not? So I hope every one of you understood everything relating to no class. So how do you have to respond to no class in case of employment? Responsibility is of the senior professional accountant in service, and also it is a responsibility on those professional accountants other than the senior professional accountant. In case of audit engagement, it is a responsibility of the professional accountant. What are the steps to be taken for responding? First of all, obtain the understanding of the matter. First of all, try to understand, acquire the knowledge of that NOCLAR. Then addressing the matter, address it. Then seeking the advice. If you think that you are not expert enough to comment upon that, seek the advice. Then determining whether further action is needed or not. See for further action if it is required or not. Determining whether to disclose it to the appropriate authority or not. And see that is it an imminent breach? Is it a big breach? If it is a big breach, and if it is required to be reported, but always you are required to maintain what? Documentation for the NOCLAR. Like we maintain the documentation in SA 250, you also have to maintain the documentation in NOCLAR. So it may be noted that in a situation where the disclosure ought to be made by the auditor, the appropriate authority for the purpose of disclosure will depend upon the nature of the matter. For example, appropriate authority would be SEBI in case of financial fraudulent reporting. So according to different types of NOCLAR, different types of appropriate authority are there. So appropriate alignment has been made in code with regard to requirements of confidentiality as required under Chartered Accountants Act 1949. Did you get the point? So that is what all about the NOCLAR you should have known about. So this is what NOCLAR, non-compliance of laws and regulation, is all about. Very small topic. So why we stressed so much on that? Because it is amendment, and definitely you are going to be tested with the amendment. Maybe it should come. Maybe it may also come in your examination, right? So with this, our provisions relating to new code of ethics, that is a revision relating to summary of code of ethics, is also over. Fundamental principles are also over. Threats are over. How to handle those threats are also over, as well as the NOCLAR relating provision is also over. Now we are going to understand the code of ethics 1949, which is divided into two schedules, having 4 parts in the schedule 1 and 3 parts in the schedule 2, and having 34 clauses in total, along with some self-regulatory measure guidelines and along with some council measures. So that we are going to start in the next topic, right? So let us start with the next topic. What is the next topic? Chartered Accountants Act 1949.
Hello everyone, how are you all? This is your faculty for CA Final Auditing, and as you all know that regarding the professional ethics, we have already recorded 2 videos. One video was on new code of ethics, and another video was on the new amendment which came in the new code of ethics relating to NOCLAR. Now today, what we are going to do, today we are going to start with the complete discussion on the code of ethics. So as you all know that the new code of ethics, the fully has not been introduced, but at the same point of time, only the overview has been introduced, and in the overview, along with that, new amendment has come relating to NOCLAR, and the overview and NOCLAR both has already been provided to you. Now in the code of ethics, basically we have to understand so many sections, and some of the clauses we have to understand, under which the chartered accountant in practice or the chartered accountant in service both will be found guilty. First of all, let me give you the introduction of what code of ethics is all about. In the code of ethics, there are total 2 schedules, everyone. How many schedules? 2 schedules are there, and the schedule number 1 is classified into 4 parts and schedule number 2 is classified into 3 parts. When we talk about the schedule 1, it is classified into 4 parts and further classified into 19 clauses, under which the member in practice and the member in service will be found guilty of professional misconduct or other misconduct. When we talk about the schedule 2, it is classified into 3 parts, and 3 parts are further classified into 15 particular sections, 15 particular clauses, under which the member in practice again and the member in service will be found guilty of professional misconduct or other misconduct. So basically the idea behind bringing these all schedules and clauses into your portion was to make you understand that after getting qualified, once you become a member of ICAI, once you get qualified as a practicing CA, or you go into an employment, at that point of time you have to understand one fact that you are no longer a free bird. There are so many disciplinary committees which are always watching you and always keeping an eye on you, right everyone? So let us start without any fail. Now first of all, there are some few definitions which we have to concentrate upon, and definition number 1 talks about section number 2 subsection 1. As you can see that this definition belongs to a chartered accountant definition. So what do you mean by a chartered accountant definition? A chartered accountant is the one who is registered as a member in the register of members of the company. Are you getting the point? If your name is appearing in the register of the members of the company, then only you will be treated as a chartered accountant, right? Then second definition, we have section number 2, subsection 2. What do you mean by member deemed to be in practice? What do you mean by member deemed to be in practice? A member deemed to be in practice is the one who is a qualified chartered accountant registered with the ICAI. Along with that, either he is involved in the practice of accounting, or he is involved in the practice of auditing, or he is involved in the various other services like compilation and preparation of financial statements, compilation and preparation of financial information, certification of financial facts, or any other kind of professional services if you are giving. Now you can see that clause A I have covered if you are involved in the practice of accounting. Clause B I have covered if you are involved into the practice of auditing, preparation of financial statement, data records, compilation of financial information, verification, certificate on financial accounting. Clause C may presentation or certification of financial facts and renders any other professional services and assistance. But in the section number 2, subsection 2, there is one D point has also been added. Now, what is the D point, everyone? Any other such services as the council may allow. Again repeating, any other such services as the council may allow. Now, when we talk about the any other such services as the council may allow, there comes a new concept which you have to understand, that is called management consultancy and other services. So what is the name of the concept, everyone? Management consultancy and other services. Now what do you mean by MCOS? What do you mean by management consultancy and other services? Management consultancy and other services are those set of services which you can offer, but you cannot offer when you are already working as a statutory audit in an entity, or if you are working as a tax auditor in the entity, if you are working as a tax advisor in the entity, if you are working as a tax representative in the entity, if you are working as a liquidator, receiver, trustee, administrator, or if you are working as a receiver in the company. In these positions, if you are already holding in the company, again repeating, if you are doing statutory audit, tax audit, or you are representing for the income tax authority, if you are working as a receiver, you are working as an administrator, you are working as a trustee, you are working as a arbitrator, in all these positions, if you are already holding in a particular entity called company, you are not allowed to provide the MCOS services, management consultancy and other services at that point of time. But if you are not holding these particular positions which I have mentioned just now, then in that case management consultancy and other services are allowed. Now the question arises, sir, what do you mean by management consultancy and other services? Management consultancy and other services includes financial management services. It means helping the company in preparation of cash flow statement, fund flow statement. So basically I would love to say that it's better to understand it as a one of the each and every chapter of your financial management which you have done at intermediate level. So if you will carefully see, if you are helping the management, if you are helping the company, consulting the company in the cash flow statement, fund flow statement, capital budgeting, cost of capital decision, capital structure, preparing the feasibility study reports, these are called as financial management services, and they all are included under what? They all are included under financial management services. What is the second services? Management accounting services are also the part of MCOS. Under the management accounting, like helping the company in inventory management, material handling, market research, demand studies, and management accounting system, cost control, cost methods, and management decision making. These are all covered under what? These are covered under the management accounting services. Along with the management accounting services, some other types of audits also you can provide, like management audit, operational audit, quality audit, energy audit, environmental audit. These are also going to get covered under MCOS. MCOS also covers the policy making and trading, policy making and training services also. So what do you mean by policy making? Say for example, you are helping the company in the business policy, in the corporate planning, in the diversification or behavioral sciences, designing and conduct of training programs, etc., job description, work related studies, job evaluation, all that comes under what? All that comes under the policy making and trainings. And let me tell you one thing, training the employees of your client is also going to get covered under here. Then HR management services, which are coming as hiring, selection, recruitment of staff, setting up the wage and executive incentive plans. IT related services also you can provide under MCOS, like selection of hardware and software, electronic data processing, training to the employees on automated system, and most importantly, advisory and consultation services in connection with the prospectus. Now, what are the various services you can provide in connection with the prospectus? Consultant to issue, drafting of prospectus, formalities with respect to recognized stock exchange, compliance of LODR regulations, completing formalities with the SEBI, publicity for the issue, example ad media, arranging the ad media for them, or conference management, bankers to the issue, collection centers. All these are covered under what? All these are covered under this thing. Right? Now, consultants for selection. You can also work as a consultant for selection of what? You can work as a consultant for selection of underwriters. But remember, you cannot work as an underwriter, but you can, yes, be a consultant for the purpose of underwriting. You can suggest the company which underwriters they should hire, which should not. But you are not allowed to be the underwriter on your own. So remember, portfolio management services directly are not allowed. As a consultant to whom they should hire as a portfolio manager, that is allowed. Underwriting is also not allowed. Brokerage is not allowed. Remember it as a pub. So portfolio management, underwriting and brokerage directly are not allowed. But yes, you can give the consultation, right? Underwriting, management, printers, advertising agency, post-issue activities, dispatch of certificates, investment counseling, bank recovery agent consultancy. You are not allowed to be the bank recovery agent on your own. You can consult the banking sector in relation to bank recovery, right? Next one, consultancy services relating to insurance, financial advisory services, but under the IRDA Act, and acting as a registrar to the issue, share transfer agent. But remember one thing, when you are acting as a registrar to issue and as a share transfer agent, make sure that you are keeping the code of ethics in your mind. Remember, these three things are not allowed to be provided. You cannot be involved in portfolio management, you cannot be involved in underwriting, you cannot be involved in brokerage. Directly involvement is not allowed, but yes, you can be a consultant relating to pub. Next point. What is the section number 4 in the Code of Ethics? Section number 4 talks about register of members. Sir, what do you mean by register of members? A register of member is a member after qualifying your CA final examinations and after going through a requisite training. When you get qualified as a CA, it is required for you that you have to register yourself with the register of members, which is maintained by the ICAI. Right or not? The moment when you get qualified and when you register your name in that register, that is the moment when you can call yourself as an associate chartered accountant or associate CA. That is the reason you can see that you can use the word ACA. And right now in the video also, below my video, you can see that I have used the word called FCA. Now you can see that here I'm using my representation as an FCA Rohit Grover. Now reason being why I have written as FCA, after enrolled as an associate chartered accountant, after enrolled as an ACA in the register of member, which is maintained by the ICAI, if I will continuous do the practice for 5 years, again repeating, if I'll continuous do the practice for 5 years, then from my designation ACA, it will get converted into an FCA. Again repeating, after becoming an ACA, enrolled as an ACA in the register of members, which is maintained by the ICA, if you continue the practice for the next 5 years, you can enrolled as an FCA. So after making an application to ICA, you can tell to the ICA that my 5 years of practice is already over. From ACA, you can turn yourself into an FCA. But remember, on application and making the appropriate fees. But there is another method by which you can become an FCA. Remember, you enrolled as an ACA. After that, you held a certificate of practice. You continued the practice for 5 years. That is a very direct method of becoming an SCA. But if you are an ACA for minimum 5 years with ICAI without holding the certificate of practice, and you can make the ICAI believe that you have a requisite experience, what a 5 years practitioner does. If you can show that requisite experience to the ICAI, ICAI still may allow your name to be registered as an FCA in the register of members. Are you understanding the point? So again, I am repeating, there is one direct method, there is one indirect method. In the direct method, become an ACA. Go for a COP, Certificate of Practice, and register yourself as an FCA after 5 years of continuous practice. But there is one another method. What is the another method, sir? In the another method, you have to understand that first of all, you enroll yourself as an ACA. If you have not applied for a certificate of practice, but you are able to show the requisite experience to the council, council may allow you to become a member to become or enroll as an FCA, right? That is what section number 4. Next, section number 6 talks about what? Section number 6 talks about COP. COP, what do you mean by COP? Certificate of Practice. So, if you are a chartered accountant and if you want to practice, you must hold the certificate of practice. Without holding a certificate of practice, you cannot do practice, right? Section number 7, that is called designation as a chartered accountant. Once you become a qualified CA and once you enroll for your certificate of practice, you are only allowed to use the designation chartered accountant below your name. Sir, what about the other qualifications which I have, CSN, CMA or other ACCA qualification? Don't worry. The letters of those qualifications, the prefix of those qualifications like CS, CMA, full-fledged company secretary, full-fledged cost accountant, not allowed. Only one designation is allowed, that is called chartered accountant. Along with that, CS, CMA, MBA, right, BA, LLB, BA, BCom, these are allowed, but only and only one designation is allowed, that is called chartered accountant. That is what is being talked in the section number 7. Now, and remember one thing, when you are doing the chartered accountancy practice, there is one another course which you can practice along with that, that is called your LLB. If you are practicing CA and you want to practice the other profession also, there is only one profession which is allowed to be practiced along with the CA, that is called LLB. But for that also you need to obtain the permission from the Bar Council of India. Clear everyone? Next, section number 8. Section number 8 talks about the disabilities of the member. So what do you mean by the disabilities of the member? Now try to understand, if you have not completed the age of 21 years, you are not allowed to enroll yourself as a CA or as a member in the register. Second thing, if you have been a person of unsound mind, if you are insolvent, if you are discharged insolvent, but you have not obtained the certificate from the court that your insolvency was due to misfortune, it was not due to any misconduct. What are the 4? If you have not completed the age of 21 years, if you have if you are a person of unsound mind, if you are insolvent, if you are discharged insolvent but failed to obtain the certificate from central government, so you failed to obtain the certificate from the court that your insolvency was not due to any misconduct, it was due to the misfortune. 5th point, if you are guilty of professional misconduct or other misconduct, and most importantly, if you have been convicted for any offense of moral turpitude and you have served the conviction with some imprisonment. If any of these 6 situations are there, you are disabled to be a member. These are called as the 6 disabilities under section number 8. Now, what is section number 20? Section number 20 talks about removal of the member. Remember one thing, if the member is dead, your name will be removed from the member. Point number 1. If the member falls under any of the 5 disabilities under section number 8 we have done. Sir, we to have done 6 disabilities. Remove the 21 years wala disability. That is not applicable here. The extra 5 disabilities which we have done under the section number 8, or if the member is dead, or you have not paid your membership fees or COP fees for getting it renewed, or you yourself have applied voluntarily for the removal of your name. So these are the 8 cases under which your membership will be cancelled. That is called removal of the member. And remember one thing, it will be suspended. After that, if you want to pay your fees again, your membership can be restored again. Now, cancellation of COP. Cancellation of COP also fulfills the same criteria. Say for example, you are a person of unsound mind, insolvent, discharged insolvent, dead, voluntarily you applied, you have not paid your COP fees also annually on or before 30th September. All these clauses are equally applicable for the cancellation of COP also. But remember, COP and membership can be restored if you have paid your membership number, if you have paid your membership and paid your what? COP fees at the later stage. Clear everyone? Now, after that, we have to understand section number 27. Very important section everyone. That is called maintenance of branch office. Now, what does the ICAI say is that when you have one branch, when you have one head office and you are opening another branch, again repeating, when you have one office and you are opening another branch, at that point of time, it is mandatory for you that your other branch must be headed by a CA in practice or a qualified member of the institute. But there are some 3 exceptions given in this case. In case you are falling under any of these 3 exceptions, your second branch is not required to be headed by a member of institute. Exception number 1, if you have opened your second branch office in the same premises, like in the first floor and the fourth floor. If you have opened your second office in the same city, no requirement. If you have opened your second office within 50 kilometers from the end of the municipal limits of the first office. Again repeating, if you have opened your second office within 50 kilometers from the end of the municipal limits of the first city in which your first office is located. Now, let me show you one example. Now, look at this example, everyone. If you can carefully see this example, you will see that suppose this is the municipal limit of city A. This is the municipal limit of city A. Your office is here, right or not? I am putting the blue point. Your office is here, right? From the office, the end of the municipal limit is 12 kilometers. We have to ignore that, because 50 kilometers distance is not going to start from your office. 50 kilometers of distance is going to start from the end of your municipal limits of the city 1 in which your first office is located. So it means my 50 kilometers will start from this point. You can see that from this point to this point, how many kilometers are there? 35 kilometers are there. Now, city B has started here. What city B has started? Now, city B municipal limits have started. After entering into the city B, another 13 kilometers I have to go inside. Now, tell me, 35 kilometers plus 13 kilometers in total, how many kilometers? 48 kilometers. It means what? In this 48 kilometer means what? You need not head your another office with what? You need not head your another office with what? With another member of an institute. Did you all understand what I said? So this is what the main thing you have to understand as per relation to section number 27. So what is section number 27? They are saying that generally it is required that the second office must be headed by a chartered accountant in practice. But in case your second office is not headed by a chartered accountant in practice, what are the exceptions given to you? If you have opened the second office in the same premises, in the same city, and the second office is within 50 kilometers of your first office, municipal limits are ending. Your 50 kilometers are going to start from the end of the municipal limits of the city 1 in which your first office is located. Crystal clear, everyone? Yes. Now, there is another concept being talked in the section number 27. Sir, what is that concept? That concept talks about, sir, what if my office is in hilly area? Now try to understand, if your office is in hilly area and then in that hilly area there is a lot of like snowfall has taken place. So obviously the roads will be blocked, the transport will be blocked. So ICAI has given the exemption, or ICAI has given one relief to those chartered accountants whose offices are located in the hilly areas. Now what the ICAI is saying, do one thing, nearby locate any plain area, go there and open your second office. That second office also is not required, not going to be counted as your second office. It is going to be counted as a representative of your main office only, as a representative of your main office only. But remember, the second office which you are opening at the plain areas, the maximum time period for keeping it only and only 3 months. How many months are allowed? 3 months. And remember, your old office shall be kept open for correspondence and for postal services, and you are only allowed to hang your board in the second office in the plain area only and only for what? Only and only for 3 months, for which you are allowed to open the office. After that 3 months, once you are closing down your plain area office, you have to take the name board along with you. And remember, whenever you are opening the second office in the plain area, or whenever you are closing the second office in the plain area, you always have to intimate to whom? You have to intimate to the ICAI. Crystal clear, everyone? You have to intimate to the ICAI. Is it clear, everyone? Yes. So this was section number 27. Then section number 24 is there. If the person is there who is not a member, but falsely claiming to be a member, means what? He is not a member of ICAI, falsely claiming to be a member of ICAI. And suppose he is not a member of ICAI, falsely claiming to the outside world that I am a chartered accountant in practice. And there is one third condition also. You are a member of ICAI, but you are not holding COP. But you are falsely claiming to the outside world that you are a member as well as a COP holder. So three situations, try to understand. You are not a member, but you are telling to the outside world that you are a member. Point number two, you are not a member and you are telling to the outside world that you are a practicing member. Point number three, you are a member but not holding a COP, but you are falsely claiming to be a chartered accountant. To the outside world, you are claiming that yes, I am a chartered accountant in practice. Then in that case, what we have to do? In such case, you will be guilty under section number 24 and the penalty will be on first conviction up to ₹1,000 and subsequent conviction onwards, it will be up to 5,000 or imprisonment up to 6 months or both, right? And the second thing, section number 24 capital A may says that suppose you are not holding a CA degree, but to the outside world you are saying that yes, I have a degree which is equivalent to CA degree and which is issued by the council to me. Again, you are making a false claim, penalty will remain same. First conviction up to 1,000 and subsequent conviction up to 5,000. Clear, everyone? Next one, section number 25. Companies are not allowed to get engaged. Companies are not allowed to get engaged. It means chartered accountant in practice are not allowed to incorporate a company engaged in the practice of what? Engaged in the practice of accountancy. As you all know that we are not allowed to open a company of chartered accountants or the body corporate of chartered accountant under section 141 subsection 3. We know that that is the first disqualification. If you are opening it, again the penalty on the first conviction is 1,000 and on the second conviction onwards up to 5,000. Now section number 26. Signing the documents other than the member of institute. Remember one thing, if you are not a member of the institute and you are signing the documents in any professional capacity, then in that case on the behalf of a CA firm or on the behalf of a chartered accountant, then it is a kind of little bit more serious offense where the punishment will be minimum 5,000, maximum 1 lakh on the first conviction. Second conviction onwards, it will be 10,000, maximum 2 lakhs or imprisonment up to 1 year or both. Crystal clear, everyone? Again repeating, conviction up to rupees, fine up minimum 5,000, maximum 10,000, right? Minimum 5,000, maximum 1 lakh on the first conviction. Second conviction, it is minimum 10,000, maximum 2 lakhs or imprisonment up to 1 year or both. Now, next important thing is KYC of the client information. What do you mean by KYC of the client information? They are simply saying that when you maintain the client register, make sure that these information relating to your client should be present in your register. Sir, what are the information? Name of the entity, type of the entity, type of the engagement, PAN number of the company, DIN number of the director, SIN number of the company, name of the statutory parent auditor, name of your ultimate parent company, name of your associates and affiliates, right or not? And is there any compliance or non-compliance you found? So all that necessary KYC stands for know your client. So know your client information, prescribed guidelines are being given. So you can see that name of the entity, nature of the entity, business description, name of the ultimate parent company, name of the parent and affiliates, PAN and SIN number of the company, DIN number of directors, in which other companies that director is already a director, type of engagement, any non-compliance of laws and regulation, name of the ultimate parent auditor, and financial information. So these are the things you should have known about what? About this thing relating to KYC norm. So with that, our section based part is over, right everyone? Yes. So hi, welcome to the video again everyone. So now this is the in continuance of the previous video. In the previous video we have covered all the sections, right, which are required to be covered in the professional ethics. So now our major focus is on to cover the professional ethics, professional misconduct and other misconducts. Now everyone listen to this very carefully. What do you mean by professional misconduct and what do you mean by other misconduct? Now see, when we talk about the professional misconduct and other misconduct, professional misconducts are those misconducts which are done by either a member in practice or a member in service which is connected to their practicing profession or which is connected to their employment they are serving. Again, remember, when you are doing something unethical, when you are compromising your code of ethics, while being in practice and while being in employment, that will be considered as a professional ethics. Are you getting the point? But at the same point of time, remember, at the same point of time, when you do something unethical or when you do something disrespectful beyond your practice, beyond your employment, then in that case, it will be treated as other misconduct. So how to differentiate between the professional misconduct and other misconduct? Professional misconduct means when you are doing something which is connected with your profession and employment, it is called professional misconduct. When you do it something beyond your profession and misconduct, that is called other misconduct. Now, next important thing what you have to understand, as I already told you in the beginning, when we talk about the schedule, when we talk about the professional misconduct and other misconduct, it is broadly classified into 34 clauses. How many clauses, everyone? 34 clauses. Those 34 clauses are covered under the 7 parts. How many parts? 7 parts. Those 7 parts are covered under the 2 schedules. So remember, how you have to remember is, it is divided into 2 schedules. Schedule 1, Schedule 2. Repeat after me. It is divided into 2 schedules. Schedule 1, Schedule 2. Schedule 1 mein there are 4 parts. Part 1, Part 2, Part 3, Part 4. Part 1 of the Schedule 1 talks about the professional misconduct in relation to members in practice. Part 2 talks about professional misconduct in relation to members in service. Part 3 talks about professional misconduct in relation to members in practice as well as members in service. Part 4 talks about other misconduct in relation to members in service and members in practice. So first part talks about the professional misconduct for the members in practice. Second part talks about the professional misconduct for the members in service. Third part talks about the professional misconduct for the members in practice as well as members in service. And the fourth part talks about the other misconduct for the members in practice and members in service. These 4 parts put together are having 19 clauses. How many clauses, everyone? 19. Out of 34, 19 clauses we have to cover under the Schedule 1. Now, Part 1 covers 12 clauses, Part 2 covered 2 clauses, Part 3 covered 3 clauses, and Part 4 cover 3 clauses. Part 4 covers again 2 clauses. So 12 plus 2 plus 3 plus 2 makes it to 19 clauses. Now come back to the clause number 2. In the clause number 2, actually there are total 3 parts. Part 1 talks about the professional misconduct relating to members in practice. Part 2 talks about professional misconduct relating to members in practice as well as members in service. There is no separate part in the Schedule 2 for the members in service. And what is the Part 3? Part 3 is other misconduct to both members in practice and members in service. So when we talk about the Schedule 2, which is classified into 3 parts, what is Part 1? Professional misconduct to members in practice. Part 2, professional misconduct relating to members in practice as well as in service. And third one, professional misconduct relating to members in service as well as the other misconduct relating to members in service and members in practice. So how many clauses we have to cover? In total, 15 clauses are there in the Schedule 2. Sir, how these 15 clauses are classified into the parts? Part 1 of the Schedule 2 contains 10 clauses. Part 2 contains 4 clauses and last other misconduct part contains 1 clause. So 15 plus 19 in total 34 clauses you have to do. Did you all understand? 34 clauses you have to do. But we are going to talk about these clauses little bit late. Before that, we have to understand and we have to go to disciplinary mechanism. Very important part. Now question is, sir, what do you mean by disciplinary mechanism? Whenever any member in service or whenever any member in practice, listen to me for the next 10 minutes and this whole concept will go inside you. Whenever a member in practice or whenever a member in service does any professional misconduct or is guilty of any, not guilty you can say, does any other misconduct or professional misconduct, his complaint will be first entertained by one authority in the council, our ICAI council. That authority is known as DD. What do you mean by DD? Directorate Discipline. That is the Director of Discipline. Are you getting the point? The council has named it as Directorate Discipline. Sir, is he a number of persons? No, he is an individual member of the council along with the required staff, of course, and along with the required member. He is going to entertain your appeal. If anybody has made the complaint to the ICAI that there is a member in practice or a member in service who is guilty of professional misconduct or other misconduct, the appeal first goes in the hand of Directorate Discipline. Okay, sir. After going in the hands of Directorate Discipline will do the investigation. Okay, sir. After doing the investigation, if the Directorate Discipline thinks that the member in practice or the member in service is not guilty, the case will not be disposed there itself only. If the Directorate Discipline thinks that the member is not guilty, then not guilty के case में the case will be further forwarded to the Board of Discipline. There is another authority called Board of Discipline. So remember, first case went to the Directorate Discipline. Directorate Discipline did the investigation. Directorate Discipline thinks that your case is not, you are not guilty after the investigation. So your case will be forwarded to the Board of Discipline. Now, Board of Discipline, what the Board of Discipline will do? Board of Discipline will do the necessary investigation. If the Board of Discipline comes to know the fact that Directorate Discipline is saying something right, the member is not guilty, then the case will be what? Case will be closed there itself only. But if you think that case is going where? If the Board of Discipline thinks that case belongs to the Schedule 1, then the Board of Discipline will take the case on its own only. But if the Board of Discipline thinks that case belongs to the both schedules or Schedule 2, it will forward the case to the disciplinary committee. But if the Board of Discipline thinks that your case 1 and case 2 is not properly examined by the DD, the Board of Discipline can revert the case back to whom? It can revert the case back to the Directorate Discipline for the further investigation. So again, see this chart. You can see this chart. You can see that first of all, what is the first authority, everyone? DD. What do you mean by DD? Directorate Discipline. Directorate Discipline will do the investigation. If the we are talking about this part right now. If the Directorate Discipline thinks that you are not guilty of professional misconduct, then what will happen? Then in that case, your case will be forwarded to the BOD. What is BOD? Board of Discipline. Now, Board of Discipline, if agrees with the Directorate Discipline, then in that case, case will be closed. But if the Board of Discipline disagrees with the Directorate Discipline, he may revert the case back to the Directorate Discipline for the further investigation. Or if the case is belonging to Schedule 1, Board of Discipline only will take care of this case. Or if the case belongs to Schedule 2, then in that case, who will take care of that case? If the case belongs to Schedule 2 or both the schedules, case will be forwarded to the DC. What is DC, everyone? Disciplinary Committee. But now come to the left side. What is on the left side, sir? If the Directorate Discipline thinks that you are guilty, if the Directorate Discipline in the beginning thinks that you are guilty, then in that case, Directorate Discipline will see that are you guilty under Schedule 1 or you are guilty under Schedule 2 or both. If you are guilty under Schedule 1, your case will be forwarded to obviously whom? Board of Discipline. Now, Board of Discipline will take care of this case. Now, Board of Discipline will do the further investigation. If the Board of Discipline thinks that you are not guilty, according to Board of Discipline, you are not guilty, case will be closed. But if the Board of Discipline thinks that yes, you are guilty, then there are 3 powers given to the Board of Discipline. How many powers, everyone? 3 powers are given to the Board of Discipline. What are the 3 powers? They can reprimand the member, means warning to the member. They can impose the fine up to ₹1 lakh, and they can suspend your membership and COP up to 3 months. This is the power of whom? Board of Discipline. Now, on the other side, if the Directorate Discipline thinks that, the first one, DD thinks that case belongs to Schedule 2 or both, then the case will be forwarded to whom? Case will be forwarded to the DC. What do you mean by DC? Disciplinary Committee. Now, Disciplinary Committee will also do the further investigation. If the Disciplinary Committee, after doing the further investigation, comes to the conclusion that member is not guilty according to the DC, then the case will be closed there itself only. But if they think that member is guilty, then in that case, Disciplinary Committee also has the 3 powers. What are the 3 powers? it can reprimand the member. Now tell me, what was the fine I told you in the case of BOD? It was up to rupees 1 lakh. Here disciplinary committee can make the fine up to rupees 5 lakhs and suspension of your membership number or COP as it thinks fit. Means it can be definitely more than 3 months, but it can be permanent also. Now, member in service and member in practice who got the order against them from the BOD or the DC, Board of Discipline or the DC, if they are not satisfied with the order passed by the disciplinary committee or Board of Discipline, then within 90 days from the receipt of the order, they can file an appeal to the AA. What is AA? Appellate Authority. How many days, everyone? Within 90 days, they can file the appeal to the Appellate Authority. Now they have filed the appeal to the Appellate Authority. Now and one more thing, along with the BOD and along with the member in service and member in practice who are filing the complaint, if the DD is also not satisfied, remember, if the DD is also not satisfied with the order passed by whom? With the order passed by member or with the order passed by BOD and DC, DD can also file the appeal to the AA, Appellate Authority. So it means member in practice, member in service and DD, all of them can file the complaint to whom? AA. Within how many days? 90 days after the order is being passed. But say for example, you fail to file the complaint within 90 days, then what will happen? If you fail to file the complaint within 90 days, then additional 90 days will be given to you if there is a sufficient reason with you that this is the particular reason you were unable to file the case within the 90 days. Clear, everyone? Now case is in the hands of AA. What is AA? Appellate Authority. Now remember, this is an authority constituted by central government. AA has the 5 powers. What are the 5 powers? If it wants, it can set aside the orders of the BOD and DC. If they think that BOD and DC has not passed the right order, it can cancel their order. Point number 1. Point number 2, if the AA thinks that BOD and disciplinary committee has not performed their work properly, it can revert the case back to both of them to do the further investigation. Point number 3, if the AA wants, it can do the modification of the order. It may enhance or decrease the penalty. Case number 4, it can pass its own order also. It can, pass its own order also as it thinks fit. Right or not? If the appellate authority thinks that yes, this should be the actual punishment for that member in practice and member in service, then appellate authority has been given a special power to pass the order in such way also. So remember, this is what your disciplinary mechanism is there under the Chartered Accountants Act 1949. So let's quickly revise it. First, the complaint goes in the hands of DD. DD did the investigation. You are not guilty. Case is disposed. No. Case will be forwarded to the BOD. Now, case is forwarded to the BOD. What is happening when it is forwarded to the BOD? BOD will do the further investigation. If the BOD also agrees with the DD, member is not guilty, then the case will be shut down. But if the BOD disagrees with the DD and it found that the member is guilty, then in that case BOD will revert the case back to the DD to do the further investigation, or if it is belonging to Schedule 1, it will take care of the total case in his hand, or it is belonging to Schedule 2 or both, it will take care of that case and forward it to the DC, disciplinary committee. Next point. Sir, what if the DD itself thinks that it is guilty? Then the DD will see, is it Schedule 1 case or Schedule 2 or both case? If it is Schedule 1, it will be forwarded to BOD. BOD will do the investigation. If the BOD finds out that you are not guilty, then the case will be closed there itself only. And most importantly, if the BOD finds out that you are guilty, then 3 powers of the BOD: reprimand the member, fine up to 1 lakh, and suspension up to 3 months. But in case of DC also same thing. If the DC believes that if the DD believes that it is belonging to Schedule 2 or both, it will forward the case to the DC. If the DC will do the investigation and finds out that you are not guilty, case will be closed. But if you are found out to be guilty, DC, disciplinary committee, is also having the 3 things. What are the 3 things? It may reprimand the members, suspend you as it thinks fit, or fine up to rupees 5 lakhs. Right or not? Now, once the order of the BOD or DC is received, if the member in service or the member in practice or the DD is not satisfied with the order, case will be forwarded to the appellate authority. Appeal can be filed within 90 days, and once the case goes in the hands of AA, it is a final and conclusive case. Now, AA will listen both to the parties. If the AA believes that they have to set aside the order, they have to modify the order, they have to confirm the order, or they thinks that order shall be reverted back to BOD and DD because they have not done the proper investigation, it can forward the case back to them for the further investigation. So this is what do you mean by disciplinary mechanism. Now question is, sir, who is DD? DD is a member of the council, right, with the appropriate staff and member. And remember, DD also acts as a secretary of the BOD. The Secretary of Board of Discipline. Who is the Secretary of Board of Discipline? Directorate Discipline. Now question is, sir, what do you mean by Board of Discipline? Board of Discipline is a committee which is constituted by the council, in which there are total 4 members. Sir, 4 members, we came to know that 3 members. Yes, there are 3 members, but one secretary is also there. And who is the Secretary of Board of Discipline? The Secretary of the Board of Discipline is Directorate Discipline. Now question is, who are those 3 members? In the 3 members, one will be the presiding officer and one will be the member nominated by council, one will be the member nominated by the central government. The presiding officer is the person who is having the good experience in the field of law, disciplinary matters he might have handled, and good experience in the profession. But the one who is the nominated person by council, he should be the member of the council, and one person who is nominated by the central government, he is having a requisite qualification in the law, business, finance, accounting, etc. Economics, right? Next point. Now, sir, what do you mean by DC? DC stands for Disciplinary Committee. In the DC, there are total 5 members. Sir, how many members? 5 members. Sir, is there only one DC? No. If the council wants, it can make more than 1 DCs also. Sir, in the DC, you are saying that there are 5 members. Yes, I am saying that there are 5 members. So, who are those 5 members? 5 members, my first member is known as presiding officer. So who is the presiding officer? The vice president and the president of ICAI can only be the presiding officer of the DC. Now, sir, what about the remaining 2 members? 2 members are nominated by council, who are the members of the council, and 2 members are nominated by the central government, who are having the same qualification which we are expecting in BOD. Now, fourth council is known as AA. What is AA, sir? AA stands for Appellate Authority. AA stands for what? Appellate Authority. Sir, Appellate Authority is also constituted by council? No. Appellate Authority is directly constituted by the central government, having 5 members. How many members? 5 members. Sir, Appellate Authority mein who are the 5 members? One is chairperson, 2% nominated by ICAI, 2% nominated by central government. We'll come to these 4 persons later on. Let's talk about the chairperson. Sir, who is the chairperson of the Appellate Authority? The chairperson of Appellate Authority is not other than the retired or serving judge of High Court. If you are right now present the judge of High Court, or if you are a retired judge of High Court, you can very well become the member of what? You can very well become the, chairperson of the Appellate Authority. Now question is, sir, who are the 2 members which are nominated by council? Obviously they are nominated by the council, they are the members of the council, but they should have completed at least 1 full term and should not be the sitting member of any other committee of the ICAI. Now, sir, remaining 2 persons who are nominated by the central government, same qualification which is there in BOD, having the requisite knowledge in the law, economics, business, accounts, finance, and etc. Accounting and finance, etc. Now, sir, where is the head office of the AA is located? AA's head office is located in Delhi. Right now, what are the powers? I already told you: confirm, set aside, modify, revert the case, all that. So this is what the disciplinary mechanism which takes place in the professional misconduct and other misconduct. Clear, everyone? Hi everyone, how are you all? This is your faculty, CA Rohit Grover, for your subject called Advanced Auditing and Professional Ethics, paper number 3 in your Group 1 CA final. And as you all know that we are going through the RRB videos. So up to the previous video, what we have already recorded, like in the professional ethics, we are already done with the overview of the new code of ethics. We are also done with the, the no-cler provisions. We are also done with the disciplinary mechanism and sections which are required to be done in the code of ethics. Now today, we are going to start today with the very important topic called professional misconduct and other misconduct clauses. Now, if you remember in the yesterday's video, I told you that when we talk about the professional misconduct and other misconduct, they are broadly classified into 2 schedules. So what are the 2 schedules? Schedule 1, Schedule 2. Who takes care of your professional other misconducts in the Schedule 1? It will be taken care of by the Board of Discipline. And if it is Schedule 2 or both professional misconduct or other misconduct, that will be taken care of by your disciplinary committee. That we have already discussed in the previous video. Now, When we talk about the Schedule 1, it is broadly classified into 4 parts, and in the 4 parts, if you'll see, total 19 clauses are there. Sir, how the 19 clauses are divided? 19 clauses are divided into 4 parts. Now, what are the 19 clauses divided into 4 parts? That I already told you, part 1, part 2, part 3, part 4. Part 1 talks about the professional misconduct relating to members in practice. Part 2 talks about professional misconduct relating to members in service. Part 3 talks about professional misconduct relating to members in practice as well as in service. And part 4 talks about the other misconduct. Now, let us start with the first part, everyone. In the first part itself only, we have the 12 clauses. So, what is the first clause? Allowing any person, you can see that, what is the name of the clause? Allowing any person to practice in your name or in your firm's name other than a CA in practice and in partnership with the or employed by him. The very simple meaning of this clause is they are trying to tell you that do not allow the unqualified accountants to practice in your name. If you allow someone to practice in your name or in your firm's name and he is not a member in practice, along with that, he is not your partner or he is not your employee. Other way around of this clause, if we'll check that, yes, a CA in practice you can allow to practice in your name. You can allow another CA in practice to practice in your name and your firm's name, but that CA in practice to whom you are allowing, he should be either your partner or he should be your employee. But remember, 3 things are very important here. The person to whom you are allowing, he should be a CA in practice, and along with that, being a CA in practice, he should be either your partner or should be your employee. Other than that, if you are allowing someone to practice, then in that case, you are professional misconduct. You are guilty of professional misconduct. Who, sir, member in practice. So that such member in practice will be guilty of professional misconduct under clause number 1, part 1, schedule 1. So this is called 111. Write around clause 1. Always remember, you have to quote the clause 1, then part 1 and schedule 1, right? So we are done with the clause number 1. So it means you can see that a non-member is, if you are allowing a non-member, are you guilty? Yes. If you are allowing a member who is not holding a COP, yes. If you are allowing a member who is holding a COP but not your partner, yes, again you are guilty. If you are allowing a member who is holding a COP but not your employee, then also you are guilty. If you are a member holding a COP but he is your partner, not guilty. If you are allowing a member who is holding a COP and he is your employee, then also not guilty. So this brings an end to your clause number 1. Like that, we have the clause number 2, everyone. In the clause number 2, you have to understand that if you share and if you allow your partner to share, again repeating, if you share or if you allow your partner to share, sir, what? Any of your share of profits, your commission, your brokerage, which you have received from your professional business, either in India or outside India, other than your partner, other than your retired partner, other than legal representative of deceased partner, other than a member of the institute, and other than 53 capital A regulation recognized professionals. Remember one thing, you can only share your profits, your commission, your brokerage from your professional business, or you can allow your partner also to share all these things only and only with the other member of the institute, with the partner, with the retired partner, with the legal representative of the deceased partner, and to another person, that is called 53 capital A regulation based professional bodies. Now remember, sir, what is 53 capital A regulation says? You can share it with the CS, you can share it with the CMA, you can share it with an MBA, you can share it with the LLB, you can share it with the Bachelor of Engineering, you can share it with the Bachelor of Technology, you can share it with the Bachelor of Architecture, and you can share it with the Actuarial Scientist. These are the 8 professionals who are recognized under regulation number 53 capital A. So indirectly, you can only share your profit, brokerage and commission with your other member of the institute, your partner, retired partner, legal representative of the deceased partner, and the 53A regulation professionals. Who are those 8 people in 53A? CS, CMA, Actuarial Scientist, MBA, BE, BTech, BArch, and Actuarial Scientist. Right or not? So these are the 8 people with whom you can share. Other than that, if you are sharing, then in that case, you will be guilty under clause number 2. Who will be guilty? Member in practice, because part 1 talks about the 12 clauses under which member in practice only will be guilty of professional misconduct. I hope all of you understood. Now, in this particular clause, there is one another component you have to understand that, ki sir, suppose there is one sole proprietor. Listen to this point very carefully. Suppose there is one sole proprietor, chartered accountant in practice, and the death of that member has taken place. Whether the legal representative or the widow of that deceased member can sell the goodwill of that firm to any another member in practice or not? Answer is yes. So remember one thing, in case of the death of a particular member who was running a sole proprietorship firm, the widow or the legal representative of the deceased member is allowed to sell the goodwill of that firm to the another member in practice. But remember, it is only going to be kept in abeyance by the ICAI for 1 year. It means ICAI will preserve the name of this firm whose proprietor has died only for 1 year. After that 1 year, remember again, after that 1 year, you will not be allowed to sell. So it means you have a bracket of only 1 year from the date of the death. Remember, if the legal representative fight is going on, who is the legal guardian and who is not, and the case has went for 5 years. After 5 years, the judgment has come कि Mr. A is a legal representative, but Mr. B is not a legal representative. Then that 1 year of bracket just now I told you will start after the dispute is resolved between the two legal representatives. Again repeating, maximum time allowed to you to sell the goodwill of the deceased members to the another member in practice is 1 year, and make sure that that 1 year should start from the date of death. That is a direct case. Suppose in case the legal representative dispute is going on in the court and court has passed the judgment, then your 1 year will start from that day of judgment. Crystal clear, everyone? So that brings an end to your clause number 2 as well. So what we have understood in the clause number 2, you are not allowed to share, neither you can allow your partner to share what? The profits, the brokerage, the commission from your professional business. With whom you can share? You can only share it with the member of the institute, or with your partner or your retired partner or the legal representative of the deceased partner. But remember, you can only share it with the legal representative of the deceased partner if there is something provided in the partnership deed. And you can also share it with the 53A regulation professionals. Who are those? CS, CMA, MBA, actuarial scientists, LLB, BE, BTech, BArch. All these are the 8 people with whom you can share. Crystal clear, everyone? Yes. Now, say for example, the member who is willing to purchase your goodwill, first of all, that should be a member in practice. He should inform the institute his intention to purchase the goodwill of that deceased member's firm. Most importantly, he should enter into a sale agreement with the legal representative of the deceased member. He should also include the succession certificate in that legal representative, and in that legal agreement which is entering with the legal representative, the one who is buying is entering a contract with the legal representative of deceased member. Make sure that he should mention that how much sale consideration he is going to pay and in how many installments he is going to pay. So you can see that these are the small 1 to 9 small conditions which that member in practice who is willing to purchase that deceased member's goodwill has to comply with. Must be member in practice, must make a written application to ICAI within 1 year from the date of that with a copy of agreement of sale with the details of purchase consideration, attach the succession certificate. If agreement is signed by the one legal representative, make sure that you have to take the NOC from the another legal representative and give public advertisement inviting objections. You also have to give one newspaper advertisement as prescribed by the ICAI, so that if any public is having any objection on the buying of this particular goodwill of this particular firm, then in that case you have to give the public advertisement inviting objection. File the copy of advertisement with the regional council member and the with ICAI, and within 30 days of approval you have to file the form number 8 and you will be able to buy the goodwill of the deceased member. So in total we have done the 2 clauses in the part 1. Part 1 says that clause number 1 says that if you are allowing anybody to practice other than a member in practice who should be your partner and who should be your employee, then you are guilty. Remember, you can only allow a CA in practice, and that CA in practice should be your partner. and should be your employee. Other than that, if you are allowing someone else, you are guilty under 111, clause 1, part 1, schedule 1. When you are guilty under 211, you are guilty under 211 if you are sharing, you are allowing your partner to share what? Your profit, your brokerage, your commission from the professional business in India, outside India, with the person other than member of the institute, your partner, your retired partner, legal representative of the deceased partner, and most importantly, 53 capital A regulation professionals. I hope you all understood the clause number 2. Now let's come to the clause number 3. Now clause number 2 and clause number 3 are very similar to each other. Clause number 2 mein we were sharing, right? In the clause number 3 you are accepting. In the clause number 3 you were sharing, and in the clause number 2 you were sharing, and in the clause number 3 you are accepting. From whom? Persons other than the member in practice and the other professionals under 53B. Are you getting the point? So remember, clause 2 and clause 3 is all about, clause 2 is all about sharing and clause 3 is all about accepting. So with that, your clause number 3 is also over. Now see that, accepts or agrees to accept the part of profits of the professional business from a person other than the member of institute and other professionals prescribed by the council under 53A regulation. With these people only you can accept, other than that you can't accept their profession. Now the question arises, sir, why ICAI has put those restrictions? Why the ICAI is prohibiting you? Why the ICAI is finding you guilty of professional misconduct? Remember one thing, you are a chartered accountant in practice, you are a member in practice, you are a very reputed professional. You are not expected to accept someone's share of profit. Are you getting the point? You are very capable enough to earn on your own, so you are not expected to accept someone's shares of profit, and you should not make your living by accepting it from someone. That is what the major sole purpose of the ICAI in this particular case. I hope you all understood. Yes or no? Yes, sir. Now, clause number 4. Now, what do you mean by clause number 4, everyone? Think logically about the clause number 4. Clause number 4 is saying that if as a member in practice you enter into a partnership, you enter into a what? Partnership. With whom? You enter into a partnership. With whom? You enter into a partnership with the, if you want, you can enter a partnership with 53A regulation professionals. You can enter a partnership with another CA in practice, right? And you can enter a partnership with that particular CA who is a non-resident of India but recognized by the central government and council under section number 4, subsection 1, clause 5. Again repeating, there are total 10 people you can enter a partnership with. Other than those 10 people, if you will enter the partnership with someone else, you will be guilty of professional misconduct under clause number 4. Now, sir, who are those 10 people? You can enter a partnership with the other member in practice. You can enter a partnership with whom? You can see that you can enter a partnership with the other CA in practice. You can enter a partnership with the 53A regulation. Those 8 professionals which we had discussed in clause 2 and clause 3. You can also enter a partnership with a CA who is a non-resident but recognized by the central government and council under section number 4, subsection 1, clause 5 of the CA Act 1995. So these are the 10 people with whom you can enter a partnership with. Sir, can I enter a partnership with the ACA? Not allowed. Can I ACCA? Not allowed, sorry. Can I enter a partnership with the MBA? Yes. Can I enter a partnership with the BE? Yes. BTech? Yes. Actuarial scientist? Yes. CA? Yes. CMA? Yes. Bachelor of Architecture? Yes. Can I enter a partnership with another member in practice? Yes. Can I enter a partnership with that member who is a non-resident recognized by central government or council under section 4, subsection 1, clause 5? Yes. Other than that, sir, can I enter a partnership with the CPA of Australia? No. Can I enter a partnership with the CPA of America? No. Can I enter a partnership with the ACCA of UK, Canada? No. Even though ICAI is having so many MRNs, mutual recognition agreements, MRAs, with so many, like you have CPA Ireland, CPA Australia, you have Institute of Chartered Accountant of England and Wales, but you are not allowed to enter into partnership with them, either in India or outside India. Remember, India may be, Outside India, maybe you are not allowed. Did you get the point? So these are the things you have to understand in the clause number 4. If you are entering into a partnership with other than these 10 people, then you will be guilty under professional misconduct clause number 4. Now, what is clause number 5? Clause number 5 is securing professional business. Sir, I'm falling short of my professional business. My revenues are gone too low. Sir, can I accept the professional business from somebody else? Yes, you are allowed. You are allowed to take the professional business from your partner. You are allowed to take professional business from your employee. And you are also allowed to take professional business from 53 capital A regulation 8 professionals. Other than that, you are not allowed to take professional business from anybody else. I hope all of you understood. You are not allowed to take professional business from anybody else other than these 10 people. Sir, again repeat, who are those 10 people? From your employee, from your partner, and 53A professional. Other than that, you are not allowed to secure any kind of professional business. If you will try to secure, you will be guilty under 511. Sir, what is 511? Clause 5, Part 1, Schedule 1. So in total, 5 clauses we have done in the Part 1 out of 12. So clause number 1 talks about allowing someone to practice who is not a member in practice and who is also neither your partner nor your employee. Second one, sharing or allowing your partner to share any profits, any commission, brokerage in India, outside India, directly, indirectly, with a person other than the member of the institute, other than your partner, other than your retired partner, other than legal representative of the deceased partner, or other than the 53A regulation professionals recognized by Council in India. Clause number 4 clause number 3 में you are accepting from these persons, then also you are guilty. Clause number 4 में entering into a partnership with the 10 other than those 10 people. Sir, who are those 10 people? Can you please make us revise? Yes, you can enter it with a CA in practice, another CA who is a non-resident but recognized by central government and council under section 4 subsection 1 clause 5 and 53A regulation professional. Sir, what is the clause number 5? Securing the professional business from the person other than your employee allowed, other than your partner allowed, other than 53A professionals allowed, yes allowed. So with that, your 5 clauses professional misconduct relating to member in practice are over. Clear everyone? Okay, so we are done with the clause number 1, 2, 3, 4, 5. Now, next clause everyone, clause number 6. Remember, this is the most important clause. This and clause number 7 are the biggest one and the most important one. Our maximum time consumption among all the 34 clauses is going to be on clause number 6 and clause number 7. Now read. What is clause number 6? Clause number 6 says that please do not solicit. Now, what do you mean by solicit? You as a member in practice are not allowed to solicit the work from your client. You should not demand, request the work from the client either via circular or via advertisement or via interviews or via personal communication. You are prohibited from asking any kind of solicitation of work from your client. Are you getting the point? But you are allowed to solicit the work from the another practicing CA. You are allowed to solicit the work from the another practicing CA. Again repeating, you are allowed to solicit the work from the another practicing CA. It means there is no problem if you are asking it from your brother, another chartered accountant in practice. Are you getting the point? Now, from the client, not allowed. Sir, either via advertisement allowed, not allowed. Either via personal interview allowed, not allowed. Either via personal communication allowed, not allowed. Sir, either via circular allowed, not allowed. But from the another CA in practice, allowed. And yes, one more thing is allowed. If you are replying to the tenders where the requirement is there, that is also allowed. If you are replying to the tenders which is asking for the requirement of chartered accountants in practice, then you are also allowed to give that name. Are you getting the point? You are allowed to reply in that case. So what are the two things allowed? You are allowed to solicit the work from the another CA in practice. At the same point of time, you are allowed to do what? You are also allowed to make sure that you are replying to the tenders where the requirements of your particular qualification are there. Clear everyone? right? So what is the clause number 6, everyone? Again, what is the clause number 6? Clause number 6 says that do not solicit any work from your client either via circular, either via personal communication, or via advertisement, or via interview. But you are allowed to solicit the work from the another CA in practice, no problem. You are allowed to reply to the tenders which are asking for your prescribed qualification, no problem at all. Next problem. What are the advertisement rules you are allowed? They are saying that you can give the advertisement in the newspaper, but only for the bare statement of facts. Suppose your address is changing, or suppose, say for example, your phone number is changing. That kind of information you are allowed to give in the advertisement, right? Next one is advertisement in ICAI journal. They are saying that if you are giving in the advertisement in ICAI articles or ICAI newsletter or ICAI journal, your name is allowed, designation is allowed, address is allowed, contact number is allowed, email is allowed, but your name of the firm is not allowed. Name of the firm is not allowed. Next one, empanelment for the audit and professional work. Say for example, you are getting empaneled for some audit and professional work. When it is allowed, when you know that there is a requirement, then you can reply to that tender or empanelment. But remember, when you do not have the knowledge of requirement, say for example, I don't know whether RBI is asking for empanelment or not. I don't know whether C&AG is asking for the empanelment or not, but I am sending them a letter. Is there any requirement, sir? Now tell me, when I'm using these words, is there any requirement? Is it looking like a solicitation? Yes. So remember, when you have the knowledge of the empanelment, then if you are replying, no problem. But when you do not have the knowledge of empanelment, then if you are replying, then it is not allowed. Clear, everyone? Member making the inquiries again and again, not allowed. Next one, telephone directory rules. What they are saying, in case you are giving your details in the telephone directory, make sure that your name should come in the chartered accountants category only. In that directory only, in which town and city you are residing. It should be included in the normal type of letter, means extraordinary font size is not allowed. Next one, ordinary entry in the alphabetically manner is allowed. You are not allowed to keep your name at the above. Publicity advertisement not allowed. Abnormal and unreasonable payment for doing something extraordinary to your name in the telephone directory also not allowed. Not allowed to restrict any member's entry. You are paying the money, bhaiya, this member in practice, you should not include in the directory. If you are saying to the directory owner this, and I will give you extra payment, but do not allow this member to enter his name in the directory, not allowed. You can't restrict somebody. Also allowed to be mentioned in the trade directories. So remember, these are the directory, telephone directory rules you have to understand. Next one, responding to tenders. Now very, very important point I am going to tell you, try to understand. Remember, if the tenders have been given in the public, where only chartered accountants requirement is there, which is only and only opened for whom? Chartered accountants. If you are replying to such tenders, it is prohibited. But those tenders which are equally applicable to all the professionals and where audit fees is already prescribed, if you are replying to such kind of tenders, again repeating, which is open to all the professionals and where audit fees is already prescribed, if you are replying to such tenders, then there is no problem. You can reply. Now see, not allowed to respond to such tenders which are reserved only for the chartered accountants category, but allowed which is open for all the professionals, and auditor is what? Audit fees is what? Prescribed. I forgot to write the audit fees. Let me write. Yeah, audit fees is already written. Audit fees is prescribed, right? Next one, publication of books or articles. Remember one thing, when you are publishing any books or articles, your name and designation is allowed, but the name of the firm not allowed. Seeking the work from another CA, you all know that it is allowed. Next point, sir, section number 140 subsection 4, removal by the member. Remember one thing, under section number 140 subsection 4, when the member is removing you, you know that an opportunity of being heard will be given to you, which will be allowing you to send a letter of representation defending your removal. So that is allowed. Are you getting up? But remember one thing, do you remember that 140 subsection 4 also says that in case via that representation letter where you should defend your removal, but instead of defending your removal, you are trying to take a needless publicity and using the defamatory words against the company, in such situation you are not allowed. Clear, everyone? Yes, sir. Getting the work from another CA. If the member gets any work from the another CA who is also a member in practice, that is allowed. But remember one thing, suppose there is one member who is not into the practice of doing the tax audit. So one client came to him. He said that, sir, I'm looking for a tax audit. That member in practice referred tax audit to you. Now I'm doing the tax audit for the client which is referred by that member in practice, but that client is said that, sir, can you please do my statutory audit also? I loved your work. You are not allowed to accept the statutory audit because the statutory audit is originally done by that member. So it will be like backstabbing if you will accept the member, if you will accept the assignment which is originally carried out by another member in practice. Next one, while giving the public interviews, everyone, you are allowed to give your name, you are allowed to give your designation. And regarding the name of the firm, little bit confusion is there, because when we see that same thing under the clause number 7, it is saying that name of the firm is allowed. But here when we see it in the clause number 6, it is saying that name of the firm is not allowed. But I will suggest that right name of the firm is not allowed, and definitely address of the firm to not at all allowed. Did you get the point? The name is allowed, designation is allowed. What is not allowed? Firm name, yeah, firm name. I'm telling you now, firm name may be allowed, but address is not allowed. Are you getting the point? Address is not allowed. But remember one thing, your professional attainments so definitely not allowed. You are not allowed to do the advertisement via PO box numbers. Next one, website guidelines. So there are so many website guidelines, everyone. There is no format restriction. You can make any website of any color, of any format. So no format restrictions, no color restriction. But members can also create their own web pages if they want. Must run on pull technology, everyone. What do you mean by pull technology? Pull technology means if someone wants to know your services which are rendered by your firm, then in that case he should click the button and then the information should be coming on a pull manner. It should not pop up automatically. That is called push technology. But if he will click the button and after that he is getting the information, that is called pull technology. Right or not? So your website should run on the pull technology, not on the push technology. Not to circulate the information of your website via email. You are not allowed to solicit or ask the people to visit your website. That will again amount to solicitation. Next point. Allowed. What is allowed in your website? Members name, trade name, firm name, year of establishment is also allowed, but on a which manner? Pull manner. Members and firm's address, nature of services, again allowed on pull manner. Partner name, qualification, contact, email, year of qualification, area of experience, again in the pull manner. Employees, same as above. So all these rules which are applicable in these three cases are equally applicable to whom? Employees. Job vacancies allowed. Number of articles are also allowed. If someone wants to know that how many articles you have in your firm, it is also allowed, again in a which manner? Pull manner. Nature assignments handled, allowed, but again in a which manner? Pull manner. Right or not? Client details and fee charge, not allowed. You're not allowed to mention the list of the clients to whom you have served and the fees charged from them, but you are allowed in one very rare exceptional manner. If it is a requirement of a regulator, then it is allowed. Otherwise, not allowed. Clear, everyone? If the regulator, say for example, SEBI wants you to mention the list of your clients on the website, or say RBI wants it. If any regulator is asking, then allowed. But remember, while displaying the list of your clients and the fee charged by you, you have to write one disclaimer below, okay, I am giving this information because only and only if it is required by the regulator. You are not giving this information on your own in a willful manner. Crystal clear, everyone? Yes, sir. Next one. Sir, on your website, logo is allowed? Yes, logo is also allowed, but only the logo which is allowed by the ICAI, that blue and green color ka C and A and then tick is there, na? That logo is allowed. Your own self created logos are not allowed. Next one. Photo allowed? Yes. Which size, sir? Passport size photo is allowed, sir. Other than passport size photo is not allowed. Next one. Articles, updates, amendments allowed. You can keep that on your website. Bulletin boards allowed. Chat rooms are also allowed, but chat room should be only working among your clients and you and other members, right? Search engine is allowed. Yes, sir. Search engine is also allowed, but in the search engine only the you can search the things which are relating to our profession like CA, CMA, CPA, ACCA. If you are searching this, then only that search should be allowing you to go to that particular area. If you are searching YouTube, Instagram, Twitter, Tinder, not allowed. right? Sir, advices and suggestions to the clients are allowed. Yes, allowed. Sir, adequate secrecy to be maintained. Very much. That's the reason the list of clients and the fee charge is not allowed. Banner advertisement allowed? Not allowed. Information statement of unbecoming a CA means what? Suppose you are putting any information which is motivating the people to unbecome a CA. Unbecome means you are motivating someone not to become a chartered accountant. So that kind of thing is not allowed, right? Next one. Sir, publishing website allowed or not allowed? Not allowed. Publishing website on the, yes, on the stationery items allowed, on your professional documents very much allowed, right or not? Sorry, I forgot to tell you that. Shall remain up to date. Your website should always be up to date. Special stationery, etc. Suppose sometimes you are celebrating your silver jubilee, golden jubilee, or diamond jubilee, or at that point of time you made a special set of stationery, special set of visiting cards on which you have written we are 75 years old, 20 years old, 25 years old, or 50 years old. That is not allowed. That will indirectly tantamounting to solicitation. Yes, above list of guidelines is not exhaustive. Remember, other than these guidelines also, if the ICAI thinks that yes, you will be guilty of professional misconduct, ICAI can impose that penalty on you. Remember, these guidelines are not exhaustive list. This is just illustrative list. So all the things will be taken care of by ICAI on the case to case basis. Everyone clear? Everyone? Yes. Next point. So this was all about the clause number 6. So clause number 6 is very humongous clause where solicitation pe concentration is there. Now tell me one thing. 6 clauses you understood? Understood? Yes or no? Tell me yes or no. Yes, I know you understood. So what is the clause number 1? Allowing someone to practice. What is the clause number 2? Sharing. Clause number 3? Accepting. Clause number 4? Partnership. Clause number 5? Securing the professional work. Clause number 5? Soliciting from a client. But can you solicit from the practicing CA? Yes. Can you reply the tenders? Yes. If it is only and only open for all the categories. If it is only reserved for the chartered accountant category and the audit fees is not mentioned, then it is not allowed. Everyone crystal clear? Yes or no? Yes, sir. Now clause number 7, everyone. Very, 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 very important clause. Now, clause number 7 and clause number 6 are brother and sister. You know that. Clause number 6 may we just now understood that solicitation is not allowed. But in the clause number 7, you are not allowed to advertise your professional attainments. Remember, you are not allowed to advertise your professional attainments. You are not allowed to use any other designation other than chartered accountant. Yesterday in the section number 7, I already made you understand you are not allowed to use any other designation other than chartered accountant. If you are trying to use that, then you are guilty of professional misconduct. Clear, everyone? Yes or no? Yes or no? Yes, sir. We understood. So is it clear to all of you? Yes, sir. It is clear to all of us. Clear? Now, next thing which you have to understand here is, ki, sir, you are saying that advertising professional attainments are not allowed. That's what I'm saying. Yes, you heard me correct. But sir, solicitation ke first advertisement rules mein, you said that advertisement is allowed. Remember, in that advertisement, I told you only bare statement of facts are allowed. Means what? Change of your address or change of your telephone number or contact number. That kind of information is allowed. Other than that, nothing is allowed. Professional attainments, I am a member of parliament. I am a member of legislative council. Designation other than chartered accountant, like I'm a tax consultant, the expert in tax, or you can cost accountant, company secretary. No, only chartered accountant. So what about the other courses which I have already done? I'm the triple qualified CA, CS and CMA. What should I do? Sir, along with the chartered accountant, you are allowed to suffix the word CS and CMA, but you are not allowed to use a word called company secretary and cost accountant and tax accountant and expert or consultant or advisor. Something like that is not allowed. Clear? Member of parliament is also not allowed. You can imagine ki why, sir, member of parliament is not allowed? Because that gives the impression to the outside world that ki you are a very powerful person, and if someone would like to take any kind of panga with you or anyone would like to go against you, then in that case you may make his or her life very miserable. So that is the reason this thing is also not allowed. Clear, everyone? Everyone crystal clear? Yes, sir. We are 100% crystal clear. Now, Explanation. Advertisement in the form of write-up allowed. Yes, we have the write-up guidelines in the material which I have provided to you. In the material, you will find the write-up guidelines. Write-up means nothing but called giving the biodata of your firm. So for that, ICAI has kept some guidelines. It should not be misleading. It should be not be crossing the font size of 14. And name of the firm, address of the firm, residential address, contact number, email, fax, all that informations you can give in the write-up. Nothing more important than that. Next thing, sir, designation. No other designation other than chartered accountant is allowed. Tax consultant, cost consultant, etc. Allowed or not allowed? Not. CA in practice. Now remember, very important point. If you're a CA in practice and you want to practice in law, allowed? Sir, yes. 2 COPs are allowed. But listen to this thing very carefully. Along with CA, if you want to practice CMA and CS, that is also allowed, but without holding COP in those professions. But when it comes to CA and LLB, both are allowed with COP. Remember, both are allowed with what? COP. Are you understanding what I'm saying? So both are allowed with what? COP. But if you want to do a CA with a CS or CMA, that you can also practice. No problem. But you are not allowed to hold the COP of your sister professional bodies. Now see, practicing law by holding COP permitted by the Bar Council allowed, but a member in practice shall have a separate stationery and name place. Yes, very important. If you are a practicing CA and you also a practicing lawyer, then bhaiya, you have to have a separate stationery. You have to have a 2 name plates. You have to have a 2 visiting cards separately. One for the chartered accountant and one for the this advocate LLB practice. Next one, you can also practice CS and CMA by obtaining permission from the other sister institute. No requirement here for COP, but remember, designation only one is allowed, chartered accountant at one point of time. In case of chartered accountancy and law, you have to have 2 nameplates and 2 separate nameplates and 2 separate stationaries, right? Next one, year of establishment. Bhaiya, year of establishment is allowed in your website, but on a pull model, but not allowed on the visiting cards and letterheads, because year of establishment mein people can easily understand or compute ki how old you are. So they would like to give the more work to you than to the other professionals. So that doesn't, it looks like you are superiority or you are showing the superiority against the other people. So that is not allowed. Next point. Sir, publishing articles allowed. Publishing articles allowed. Name is allowed. Photo is allowed. Designation is allowed. But professional attainments not allowed. Payment for publishing the articles is not allowed. Advertisement for the client. Yes, you are allowed to advertise for the client. If you are advertising for the client for the sale and purchase of the property, allowed. If you are advertising for the client as a trustee, as a liquidator, as a receiver, then also allowed. Remember, and if you are advertising for your own business for the requirement of your own staff, if you are advertising for the requirement of the client staff, bare statement of advertisement is allowed. But remember, your professional attainment should not be coming out of that advertisement. Advertisement for a client wishing to sell and acquire property allowed. Advertisement for client staff requirement allowed. Advertisement for the trustee, receiver, liquidator allowed. Advertisement for your own staff recruitment allowed. Next one, celebration of candidate success. Yes. Very important point. Say for example, one of your article assistant in your office got the All India rank 1. Now he or she got the All India rank 1. You think that you are giving an advertisement that we congratulate our All India rank 1. It was only possible for him because he worked as an articles in our firm. That is allowed? No, that is completely amounting to soliciting your work. So that kind of advertisement is not at all allowed. Clear everyone? Yes. Next point. Sir, okay, reports and certificates allowed. Yes, base statement of reports and certificates are allowed. Next one, TV interviews, form appearance. Bhaiya, while giving the TV interview, your name and designation is allowed, your firm name. That is where I was telling you, firm name under the solicitation is allowed. But here, firm name and address of the firm and professional attainment not allowed. So I will suggest that better to write not allowed, because wherever the 7 is coming, 6 is definitely going to come. So appointment to the position of local and national authority, yes, your name and designation is allowed. Lectures and seminars, name and designation is allowed. Signboards by glow signs and large sized with the different color of with a very golden color or glowing signboards. These kind of signboards are not allowed. Large size signboards are also not allowed. Remember, directorship is allowed, yes. Remember, whenever any company is issuing the prospectus or public announcement or public offer document, mention or ensure that your name is being given, your designation is being given, that is called chartered accountant, but the name of the firm and your professional attainments is not allowed when you are working as a director in any particular company. Right? Logo, only ICAI logo is allowed. Photo and QR code, yes, photo is allowed on your website but not allowed on visiting card, but QR code, quick response code, is allowed on your visiting card. No problem with that. Next one, very, very important, networking rules, everyone. Which rules? Networking rules. Now, first of all, though, you have to understand, sir, what do you mean by network? Now, as I told you that the major devotion of the time will be on the clauses, will be attracted towards clause number 6 and 7 because there are a lot of things to discuss. I'm trying my level best to make sure that at least 90-95% of the clauses or means the content in those clauses I'll make you understand. Now, first of all, you have to understand what do you mean by networking. Sir, networking means what? Let's say, for example, let's talk about Deloitte or let's talk about EY. Let's talk about KPMG. These are the networks. In these networks, we join as a network firm. Right or not? Like say, for example, Deloitte has 10,000 plus network firms in its network. The Deloitte is a network. So whenever the audit comes to the Deloitte circulates the audit to its network firms. That is called networking. Clear, everyone? New networking guidelines have repealed the old network guidelines issued by the ICAI, but the cases and investigation, actually before these guidelines came, if I'm not wrong, in 2019 or 2018 when these new network guidelines came. At that point of time, what has happened? Old network guidelines were issued by the ICAI. They were repealed because the new guidelines came. But remember, if any old cases or old investigations were going under the old guidelines, they will still not get affected. Only and only new guidelines are going to replace the old guidelines, but the new one are still going to be in picture and they're replacing the old one. Clear, everyone? Just give me one moment. Yeah. So I hope you all understood everything about the networking meaning I told you. Now, what is network? Network is all about a big firm like Deloitte and EY and KPMG, where so many other firms will come and become a network firm of these networks, right or not? Now, question is, what is the purpose of making the network? The purpose of making the network is to cooperate with each other, and it is aimed at cost and profit sharing, common ownership, common quality control policies and procedure, common business strategies, common brand name, common use of professional resources. You will get a lot of help when you become a part of a network. Sir, I'm not specialist in some particular audit, but another network firm might be specialist. You can borrow the resources from the another network. You know that is what the benefit of being a part of network firm. Next one. Common professional resources include sharing of. Now, what do you mean by common professional resources? So we can share what with each other being a part of the network. You can share common info system, partner and staff, technical department, training courses, facilities, audit methodologies. Next one. What are the different types of networks which are allowed in India? A network can be a mutual entity, it can be a partnership firm, it can be a LLP, it can be a company, and it can be others. But remember, how you will differentiate the network from the other partnership firms, the sole proprietorship firm and LLPs. Networks are not allowed to use the word and associates and co. You might have seen that all the firms are basically ended with the word and associates and co. These two words are not allowed to be used by network. Now the question arises, sir, what the networks are going to use? Networks are going to use the word and affiliates. Suppose a network is an LLP, it will write ABC and affiliates LLP. Suppose a network is a company, it will write, remember, yes, very important point. As per the Chartered Accountants Act, we are allowed to make a company of chartered accountants, which is not allowed as per the Companies Act. Sir, you to said that making a body corporate or a company is not allowed under the Companies Act. Still, I am saying the same. But under the Chartered Accountants Act, MCC is allowed, management consultancy company is allowed, and by making that management consultancy company, you are only and only allowed to give which kind of services? You are allowed to give MCOS services under section 2, subsection 2, clause 4, which we have done yesterday. Management consultancy and other services. And for that, you need to hold a CCOP, Corporate Certificate of Practice. So yes, network can also be a company. If the network is formed as a company, then in the network's name, it will be written at ABC and Affiliates Private Limited. PQR and Affiliates Private Limited. So what the networks have to use? Networks are allowed to use only the word and affiliates, and co and associates not allowed. Clear, everyone? Formation of the network. Whenever you are making a network, make sure that you are giving the form number A for the name reservation. Sir, who will allot me the name? ICAI. ICAI's approval is required for the allotment of name. Filled with ICAI for the approval, once allotted, valid for 3 months. So your name approval will be valid for 3 months and can be accepted and rejected by the ICAI if it is undesirable, and will be cancelled on the expiry of what? 3 months. Name can be withdrawn by ICAI at any time if undesirable. Mere approval of the name cannot entitle you to practice. Bhaiya, only name reservation is not enough. Na? Along with the name reservation, you have to go and register with whom? ICAI. Right or no? You have to do the registration also with whom? ICAI. Next point. Sir, what is Form D? Form D, what is Form A? Over. Yes. What is Form D? Form D is for those networks who are having, those networks, listen, Form D is for those networks who are having foreign network. Form D is for those networks who are having foreign network firm listed. So listing of network with the entities outside what? India, whose network firms are listed from outside India, they shall file the declaration in form number D with the ICAI via authorized representative within 30 days from the date of what? Arrangement. What is form number B? As I told you that as form number A, approval of the name is valid for 3 months, you have to file the form number B to get your registration done with the ICAI. That is the main form to be filed with ICAI within 3 months and mandatory in nature. Form C, if you want to shift from one network to another network, generally, remember one thing, generally very important point I am telling you. Generally, I think I forgot to tell you somewhere else. It should be, yes, this point. A firm is not allowed to join more than one network. Bhaiya, one firm can only join one network. And remember, if my partners are common in some another firm, both the firms should be part of the same network only. Again repeating, suppose my Grover and Associates is there and somebody ABC and Associate is there, in which I am a common partner. I'm a partner in Grover and Associate also, AB and Associates, ABC and Associates also. If Grover and Associate is a part of Deloitte network, the ABC and Associate also has to be a part of Deloitte network because we are the common partners, and I'm not allowed to be a part of more than one network. But yes, am I allowed to change my network? Answer is yes. If I want to change my network, I have to file form number C with the ICAI within 30 days of the change on account of entry and exiting to the network. Ethical compliance, sir, just because you are a network, it doesn't mean that ethical requirements are not applicable to you. Ethical requirements are equally applicable to you. Everything is applicable, what is applicable to the network firm. That is what? Integrity, objectivity, independence, confidentiality, all those things. Ceiling limit on non-audit fees. Remember, if any network firm is doing a statutory audit, the other firms of the same network shall not collect more than 3 times of the total remuneration. Means what they are saying, if any network firm is doing the statutory audit, other firms of the same network collectively can charge maximum 3 times of the fee of the statutory audit. Suppose my firm, Grover and Associate, is doing one statutory audit, one company called ABC Limited. I belong to the Deloitte network. Other network firms which belong to the Deloitte network cannot charge more than collectively, all those firms which are also the part of Deloitte, collectively they cannot charge more than 3 times of my statutory audit fee. Rotation rules will remain same. Incoming auditor and outgoing auditor can never be from the same network. Obviously, I am the incoming auditor and outgoing auditor. I am the outgoing auditor and somebody is incoming auditor. We both belong to the same network. Not allowed. They should be from the 2 different networks. Advertisement rules as prescribed by the ICAI are equally applicable to network. 11th point says the framework of internal bylaws of network. Remember one thing, as a network, you have to frame your own bylaws relating to management, strategies relating to your development, relating to your meetings, disputes, settlements, issue of the newsletter. All for those managerial works, you have to develop your own bylaws, right? Next one, network shall use the word affiliates in its name and to differentiate it from the others like mutual entity, profit. Like this point I already told you. So with that, our two very major clauses are over. So what are the two major clauses are over today? Two major clauses which are over today. Point number 1, 6 and 7. The total 7 clauses are over. So what are the 7 clauses? Allowing someone to practice, clause number 1. Clause number 2, sharing. Clause number 3, accepting. Clause number 4, partnership. Clause number 5, securing professional work. Clause number 6, solicitation. And clause number 7, advertising your professional attainments. Clear, everyone? Now, we are going to proceed with our clause number 8. Sir, what is clause number 8? Can you see? Remember, if you are an incoming auditor, again repeating, if you are an incoming auditor and you are joining as a chartered accountant in practice as an auditor of one company, and in that company there was an outgoing auditor, it is the responsibility of the incoming auditor who is joining as a statutory auditor in place of outgoing auditor to communicate with the outgoing auditor to understand the reasons of his removal or resignation or replacement. Are you understanding the point? Remember, if you are an incoming auditor, you are going to communicate with the outgoing auditor. That is a mandatory requirement. If you fail to communicate with the outgoing auditor and fail to obtain certificate, fail to obtain NOC. What is NOC? No objection certificate from the outgoing auditor. Then you will be guilty of professional misconduct under 811, clause 8, part 1, schedule 1. Now, question is, sir, is it mandatory? Yes, it is mandatory for the member in practice if he is appointed as an auditor to communicate with the outgoing auditor and take NOC, right? Now, who is the previous auditor? Sir, last year audit has not happened. It doesn't matter. Previous auditor means whosoever has done the audit of that entity previously. It doesn't matter whether last year audit has taken place or not. Yes, objective behind this clause is to know the reasons behind the replacement of an auditor. Bhaiya, it is for your benefit only. If you are going to communicate with the old auditor, at least you will come to know that what was the reason the old auditor has discontinued this engagement. There might be a case that he was removed without the compliance of 140. There might be a case that he asked his audit fees, but the company did not pay him. The same thing may happen with you also. There might be a case that he wanted to give a modified report, but the company did not allow him to give the modified report. That can happen with you also. To try to understand, the basic idea behind communicating with the previous auditor is to understand the reasons why he left. Always remember why he left. That reasons you want to know. That's the reason you are communicating with the previous auditor. Clear, everyone? Yes, these are the 3 reasons. The old auditor was not removed by 140 and I'm not appointed by 139. Or say for example, your undisputed fees of the old auditor was not paid. Undisputed means which was agreed but still management is not ready to pay. Or when the old auditor wanted to issue a qualified report but did not allow. Now, next one, mode of communication. Remember, mode of communication always in writing. Either you have to do the hand delivery of the communication or you have to do the communication with the registered post with acknowledgement due. Council guidelines क्या बोल रहे हैं कि sir, when this communication is mandatory. If on every nature of audit, it is mandatory. Suppose if it is an audit assignment, someone is replaced by you or you are replacing someone, then it becomes mandatory. Change of auditor for the report purpose. Suppose the old chartered accountant was issuing the report and you are replacing him to issue a report, then it is mandatory. Next one, in case previous auditor was a chartered accountant, if the old auditor was a chartered accountant, if the old auditor was a chartered accountant and the new auditor, if the old auditor was a chartered accountant and the new auditor is also a chartered accountant, then also mandatory. When the last year auditor was a CA and the current year auditor is a joint auditor with that CA, so it is very much required to be communicating because last year he has done solely, this year he is doing the audit with you, so it is very much required to communicate with that. But when it is recommended, ICAI says that it is healthy practice if it is other than audit purposes, if it is a certification purposes, if the previous professional was other than a chartered accountant, in case the last year audit was different from the this year, in case communication with the person has been handled who has handled the different assignment where the work is related to the books of account, liquidator, trustee and receiver. In that ICAI says that it is recommended, not mandatory. It is recommended and a healthy practice to participate in that way. Now, incoming auditors shall wait not for any longer period of time. One important thing. What if the old auditor has not replied? If the old auditor has not replied, you just have to wait for the reasonable period of time. After that, you can continue to join the audit assignment. I hope all of you understood the concept of today. So this is what today's lecture on professional ethics, where the 8 clauses we have understood in 1 hour. So remember one thing, these 8 clauses are highly important. Only and only part 1 of the schedule 1 takes a time. I think in the tomorrow session, all the other clauses will be over. Your professional ethics will be over. After that, we'll be starting with the audit committee and corporate governance. There are 2 lectures of 45 minutes each I'll be delivering. And after that, we'll proceed with the audit of banks, audit of insurance, audit of NBFC. Like that, we'll be keep on doing. And already quality review is also pending. Quality review lecture also will record, right, everyone? So thank you so much for lending your patient ears in listening the class properly. I'll see you in the next video. Bye, everyone. Take care. So hello everyone, how are you all? Welcome back to another video on our CA final paper number 3 advanced auditing and professional ethics RRA batch for May and November 2022 students. So if you remember, up to the last video we have started with the professional ethics clauses, and in the clauses we have already covered the clauses up to 8 of the schedule 1 part 1. Now today we are going to start with the clause number 9. So what do you mean by clause number 9, everyone? Clause number 9 mein, there is one very important thing you have to understand, that ki whenever the old auditor gets removed or he's resigning or he's getting replaced, right, and the new auditor is coming. So try to understand, when the old auditor is going and the new auditor is coming, it is a responsibility that ki as a new auditor you have to check that ki compliance of section number 139 has been made or not. Now what it says, section number 139 of Companies Act. Section number 139 of the Companies Act talks about what? Appointment of an auditor. So whether to appoint you, whether the board resolution was passed or not if you are a first auditor, or whether the ordinary resolution in the AGM is passed or not if you are a subsequent auditor. And not only that, you have to check the compliance of section number 139. At the same point of time, you have to check the compliance of section number 140. Sir, why do we have to check the compliance of section number 140? Try to understand, 140 is applicable not on you, 140 is applicable on the outgoing auditor. Because if the outgoing auditor is going, he can either resign or he can be removed only with the compliance of section 140. So in the clause number 9, when an auditor gets appointed as an auditor, when a chartered accountant in practice, when a member in practice gets appointed as an auditor, he has to check that the outgoing auditor's compliance of 140 has taken place, and for the incoming auditor, compliance of section number 139 has taken place. Proper appointment for the incoming auditor and proper farewell, proper removal, resignation for the outgoing auditor. Clear, everyone? So this is what clause number 9. You can see that non-compliance of section number 139 and 140 of Companies Act at appointment and removal, reappointment, resignation of an auditor. The idea behind this clause is to ensure that before accepting an appointment, specifically ensure that compliance of 139 and compliance of 140 should take place. 139 for you and 140 for the outgoing auditor. Before replacing the old auditor, opportunity of being heard to be given. And you all know that if you are a first auditor, the board resolution has to be passed within the 30 days of incorporation. And if you are a subsequent auditor, ordinary resolution and the AGM by the members has to be passed for a tenure of 5 years, right? So that is what you have to check. So that is what the clause number 9. Now, next one, clause number 10. Now, clause number 10 is very, very important clause. Now, what they are saying that as a member in practice, when you are doing your practicing profession, remember one thing, you are not allowed to charge the percentage of fees. You are not allowed to charge the percentage of fees. Sir, what do you mean by percentage of fees? You are not allowed to charge the fees on the percentage of the profits or on the contingent events. Let me tell you one thing. Suppose, say for example, there is one member in practice. His client came to him for one tax assignment. And he said that, sir, please represent my case in the income tax authority. And you know what the client said? You know what the member said? Member said, yes, sir, of course, I'll represent your case. But if I lose, I will not take even a single fee from you. But if I'll take 10% of the profit saved by you. So here the member is charging his fees on the percentage of profits. Are you getting the point or not? Whatever the profits he will be helping the client to save, whatever the tax he will be helping the client to save, on that he is charging 10% or 20%. That is not allowed. And second thing, it is not allowed to charge your fee or your remuneration on an event which is contingent in nature. If you'll charge the fee on the percentage basis on the profits of the client or on the contingent basis, then in both the cases, you will be guilty of professional misconduct under clause number 10.1.1, clause 10, part 1, schedule 1. Now see what is written. Charges or offers to charge, accepts or offers to accept fee with respect to professional employment as a percentage of profit basis or on the contingent event or findings. Remember one thing, neither you are allowed to collect it on percentage of profit basis, nor you are allowed to charge it on the contingent event. But say regulation number 192 is very important in this clause. Now what is the regulation number 192 says that, ki bhaiya, if you are working as a receiver or liquidator, if you are working as an auditor of cooperative society, if you are working as a valuer of direct taxes, if you are working as a fundraising scheme, if you are engaged for the debt recovery services, if you are engaged for cost optimization services, if you are engaged for MCOS services which are permitted by the council, if you are if it is specified in the statute that yes, you can charge it on percentage basis or contingent event basis, if it is decided by the court or authority or any other services permitted by the council, in these cases this clause will not apply. Remember one thing, when you are being appointed as an auditor, let's take the one or two examples to make you understand. Now, what is the first 192 regulation saying? Working as a receiver or liquidator. Remember one thing, when you work as a liquidator, what is your job? Your job is to realize all the assets and make all the payments of the, liabilities. Now, would you like to realize your assets at the lower value or higher value? Obviously, sir, higher value. So, it means higher the value, you will be helping the company in realizing the assets, higher is the percentage you are allowed to charge. That is the reason, that is the biggest reason ki you are allowed. Right or not? So, if you are working as a liquidator, or if you are working as a solicitor, if you are working as a, liquidator, you are working as a receiver, you are working as an auditor of cooperative society, if you are working as a valuer of direct taxes, if you have been engaged for fundraising services, or if you are engaged for cost optimization, if you are engaged as a consultant for the debt recovery services, if it is written in the statute, if it is decided by the court, if it is the MCOS services which are permitted by the council, in that cases percentage is allowed, otherwise not allowed. If you are going to charge your fees on the percentage basis other than the matter specified in the regulation number 192, then in that case you will be guilty of professional misconduct under 10.1.1. What is one? Clause 10, part 1, schedule 1. Is it clear, everyone? The purpose of this clause is to ensure that it is a permission, it is a profession, not a business, because profession, in the profession, profit is not only the sole motive. If allowed, MIP may end up compromising his IOI, that is called integrity, objectivity and independence, and may carry out the unethical activities. That is the reason this clause has been imposed. Clear, everyone? Now, let us understand what is clause number 11. Clause number 11 is also very important. Remember one thing, what does the clause number 11 says? That clause number 11 says that if you are a member in practice, you want to engage into a business or a profession other than chartered accountancy, means you are already a practicing CA, you want to engage into other business or other profession, then in that case you need to take the permission of council, ICAI council. What they are saying, ki there are two bifurcations they have done. One is called general permission and one is called special permission. Again, I am telling you what is the clause. Ki you are a member in practice, you are already into the practice. Other than practice, you want to get engaged into any other services, any other profession, any other business. Then in that case, we have to understand here what? We have to understand here ki are you allowed or not? Answer is allowed, but with the due permission or the prior permission of whom? I say. Now, ICAI says that take the general permission from me, take the special permission from me. Sir, what do you mean by general permission? What do you mean by special permission? Now, try to understand what I'm going to tell you now. General permission means what? General permission means in such cases, the permission is already granted to you. You don't have to take the permission from ICAI. General permission means the permission is already granted. You don't have to take a separate permission from ICAI. Like say for example, if you want to get employment under the CA or a CA firm, if you want to get a private tutorship, if you want to do the authorship of books and articles, if you are holding the LIC license only for the purpose of renewal commission, if you are attending the classes and exams of any other competitive exam, if you are an MP, MLA or MLC, or means member of parliament, member of legislative assembly, etc. If you are working as a office bearer in the regional council, central councils on an honorarium basis, if you want to engage into notary public activities, magistrate activities, and what do you say, justice to peace activities, if you want to become a part-time tutorship under the ICAI organizations, if you want to become a valuer, paper setter, moderator, head examiner or any exams, if you want to do the editorship of the professional journals, if you want to act as a surveyor and loss assessor, if you want to do an agriculture land, you have an agriculture land and you want to do the agriculture activity, and if you want to become a consultant for recovery in the which sector? Banking sector. In all these cases, general permission is granted. Sir, what do you mean by that? You don't have to go to the ICAI and take the permission. Permission is already granted to you. Are you getting the point? Crystal clear? Yes or no? Yes, sir. Next point. Regulation number 191. Sir, what do you mean by regulation number 191? 191 regulation says that ki special permission of ICAI is required. Remember, you just concentrate on the general permission wala list. Other than general permission wala list, everything will come under the special permission wala list. This is the best way. Say for example, here it is written that I want to do the editorship in the professional journals. So in that case, general permission is required. But if you want to do the editorship is non-professional journals, then special permission is required. You want to get employed, what do you say, under a CA or a CA firm, general permission is required, means already granted. You can work as an employee in a CA and a CA firm even if you are a member in practice. But if you want to do the full-time employment under any other ABC company, then in that case, special permission is required. Are you getting the point? If you want to go for a part-time tutorship under the ICAI organization, then the general permission is there. But if you want to go for beyond ICAI, then the special permission is there. Are you understanding the point? So there are two regulations, regulation number 190 capital A and regulation number 191. 190 capital A says that the general permission of ICAI, which is already granted to you. So there's a list of 10 to 12 items. You just have to remember that. Other than that, it will automatically fall under what? Special resolution. But if you neither generally permitted or nor you are specifically permitted and you are engaging into any other business or profession, then in that case what will happen? You will be guilty of professional misconduct as a member in practice under 1111. Are you getting clause number 11, part 1, schedule 1? Clear everyone? Now, clause number 12, everyone. Clause number 12. One more important thing. Very, very important thing. Yes, very, 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 very important. If you are doing the attestation function, generally you are not allowed to do the attestation function if you are engaged in any business or profession listed above. Means what? If you are already engaged in any kind of business or profession, either it is generally permitted or specially permitted, you are not allowed to do the attestation purpose. But yes, attestation services you can do along with your teaching profession. Remember, your teaching profession dedicated hours in a week shall not be more than 25 hours in a week. Now see that allowed along with the lectureship and private tutorship, where the direct teaching hours shall not be greater than 25 hours a week. One more important thing you have to understand, that if you are doing any course under AMFI, sir, all Association of Mutual Funds of India. If you are doing any course under the Association of Mutual Funds of India, you are allowed, but you can't hold the membership of AMFI. If you want to do the membership of AMFI, you have to surrender your COP. Only course is allowed, not membership. So course is allowed, membership not allowed. Is it clear everyone? Yes. And if you are into the trading of securities, and if you are into the securities market or trading of the securities and shares business, then in that case only and only you can do it with the which permission? Special permission. So these are some of the things you should have known. Now let's wind up the part number 1 of professional ethics. Now we are on the last schedule, that is last clause. What is the last clause everyone? Clause number 12. Most of the students will get confused in this clause because they will correlate this clause with the clause number 1. What was clause number 1? Allowing someone to practice other than a member in practice who is neither your partner or nor your employee. That is allowing someone to practice but not allowing someone to sign. If you are allowing someone to sign other than your practicing partner and other than your other member in practice, means what? You are allowed to do the outsourcing of your assignment. Let's say, for example, let's make it this clause very simple. Clause number 12 says that if a member in practice allows a person to sign the financial statements, to sign the audit report other than his partner, it means other than you, who can sign the audit report and financial statements of your firm? So guys, you can sign, other than you, your partner can sign. Did you understand the point? Your employee can sign? No. Employee can practice who's a member in practice? Yes. You can allow him to practice. Sir, what is the difference between allowing someone to practice and allowing someone to sign? Allowing someone to practice means he can do the work, but he can't sign the audit report. But your partner can do the practice as well as sign the audit report. So other than you, who can sign the audit reports and financial statements ka examination? Your practicing partner can sign. That is a point number one. Point number two, sir, other than my practicing partner, is there anybody else also who can sign? Yes, another member in practice can sign to whom you have outsourced the work. Are you understanding the point? Other than your practicing partner, another member in practice can also sign whom you have outsourced the work. So it means other than you, who can sign on your behalf? Your practicing partner can sign and another member in practice to whom you have outsourced the work. Other than these two people, if you allow someone to sign, then in that case, you are guilty under 12.1.1, clause number 12, part 1, schedule 1. Now see, allowing other member in practice, allowing other than member in practice and the practicing partner to sign FS, BS, PNL and report on financial statements. See, other than you, only your practicing partner and other member in practice can sign the above documents. Whereas the matters relating to routine, yes. What are the routine matters generally takes place in the CA's office, like sir, vouching, raising the bills, collection of cash, counting of the cash, representing IT matters. All these kind of routine matters your staff can do, your employee can do. But on that signature also they can do. But they cannot sign the audit report. Your article assistant, your staff, your employee, even though he's a member in practice, can't. Other than you, only two people can sign. One is your practicing partner and second one is what? The other member in practice to whom you have outsourced the work. Clear everyone? So this is what clause number 12. So with that, our 12 clauses of part 1 is over. So let's quickly do the revision. Clause 1 talks about the allowing someone to practice. Clause 2 talks about sharing. Clause 3 talks about accepting. Clause 4 talks about partnership. Clause 5 talks about securing the professional business. Clause 6 talks about solicitation. Clause 7 talks about advertising your professional attainments and using the designation other than chartered accountant. Clause 8 talks about as an incoming auditor, it is your responsibility to take the communication with the outgoing auditor. Clause number 9 talks about non-compliance of 139, 140. We have started today's lecture with that. Clause number 10 says that if you are charging your fees on the percentage basis and on the contingent event, then you are guilty. Then clause number 11 says that if you want to get engaged in a profession other than the chartered accountancy, then in that case take the general special permission of ICAI. And clause number 12 says that if you are allowing someone other than a member in practice and other than your partner in practice to sign the financial statements and audit report in your name or in your firm name, then in that case you are guilty under 12.1.1. Remember one thing, only the part 1 of the schedule 1 takes a lot of time. Now in this lecture only, we'll try to cover the remaining clauses. Now part 2. What is part 2, everyone? Part 2 talks about the professional misconduct relating to members in service. Remember, what was clause number 2 and clause number 3 of the part 1? Sir, if I remember, clause number 2 was sharing and clause number 3 was accepting. Instead of member in practice, now these two clauses now insert in the member in service. That will become clause number 1 and clause number 2 of part 2. So see clause number 1. Clause number 1 is as a member in service if you are sharing, and a member in practice if you are accepting someone's salary. As a member in service if you are sharing your emoluments and salary benefits, or as a member in service if you are accepting someone's salary and someone's emoluments. In both the cases you are guilty of professional misconduct under clause number 1 and clause number 2. But remember, this particular part is applicable for members in service. So clause number 2 and clause number 3 of the part 1 became clause number 1 and clause number 2 of part 2. But clause number 1 and clause number 2 of part 2 is relating to members in service. So what was part number 1? Part number 1 mein clause number 2 and 3 was talking about sharing and accepting. And this one is saying sharing and accepting. Only two clauses are there. Both are applicable to member in service. So with this, your two clauses of part 2 is also over. Now, what is part 3, everyone? Professional misconduct relating to both. It means now in this, we are going to understand 3 clauses in which both will be guilty of professional misconduct. Sir, who both? Who both? Member in service, member in practice. Now, sir, what are these 3 clauses? Point number 1, you are not a fellow but acting as a fellow. Means, do you remember I told you on section number 4, register of members? When you become a member of a ICAI, you have to take a membership and you have to register as an associate chartered accountant. After the 5 years of continuous practice, you can turn yourself from an ACA to FCA. But you are not at all an FCA, but to the outside world, you are representing and acting as an FCA. It means you are guilty under clause number 1 of part number 3 of schedule number 1. So 131. Are you understanding the point? You are not a fellow, but acting as a fellow. So read it in combination with section number 24. Are you getting the point? Read it in combination with the section number 24. Is it correct, everyone? So not a fellow, but acting as a fellow. They're falsely claiming to be a member. One concept we have done. Are you getting the point? So it means here also you are falsely claiming na you are not at all a fellow, but to the outside world you are acting as a fellow. It means you are a member in practice. You might be having a COP, but you are not yet FCA. But to the outside world, you are representing that you are a fellow chartered accountant. You will be guilty under 131. That is clause 1, part 3, schedule 1. Next point, very, very important point. Let's say, for example, ICAI, Council, Committees of ICAI, DD, Directorate Discipline, Board of Discipline, Disciplinary Committee, Quality Review Board, Appellate Authority. They demanded some information from a member in practice or a member in service. Suppose you are filling up any particular form while doing anything relating to ICAI, and in that there are some mandatory fields written or there are some particular fields written where you have to provide the information, but you are not providing the information. You did not provide the information. That's why these people are asking from you now. So if the information, if the member in practice or a member in service fails to provide information to the ICAI, to the DD, to the BOD, to the DC, to the AA, and any ethical standard board, committee, anything relating to ICAI, let it be QRB, let it be appellate authority, you will be guilty under 231. Sir, what is 231? Part 2, clause 2, part 3, schedule 1. So, sir, what was clause number 1 of part 3? Not a fellow, acting as a fellow. What is the next one? Fail to provide the information demanded by ICAI, committees, council, DD, BOD, AA, DC, and QRB. And last, what is the, sir, clause number 3? Clause number 3 says that you are soliciting as per the guidelines of clause 6. Okay, sir, I am following clause 6. You are giving the advertisement of relating to your professional attainments as per clause number 7. So it means while giving the information as per clause number 6 and as per clause number 7. What is clause number 6? Solicitation. And what is clause number 7? Professional attainments advertisement. You are within those clauses. You are doing everything within the compliance of clause 6 and within the compliance of clause 7. But whatever the information you are giving, you know it to be false, but still you are giving it. It means you already know the fact that information provided by you is a false information. It is a which information? False information. But still you are giving that information. In such cases, you will be guilty under 331. Clause 3, part 3, schedule 1. Clear, everyone? So tell me, what are the 3 clauses in the part 3? Not a fellow, acting as a fellow. Fail to supply the information to the authorities. And what is the next one? In case you are complying with clause number 6 and clause number 7 guidelines, but while providing the information, you are providing the information knowing it to be false, then in that case, you are guilty under clause number 3, part number 3, schedule 1. Is it crystal clear? So in total, we have done the 17 clauses. Right now, 12 clauses of part 1 is over, 2 clauses of part 2 are over, 3 clauses of part 3 are over. Now again, we are going to move to the part number 4. With that, our schedule number 1 will be over. Now, what is part number 4? In the part number 4, sir, it is talking about 2 clauses. So what are the 2 clauses? Say, for example, as a member in practice or as a member in service, you are guilty of any offense where you were punished by a civil court or a criminal court in India or outside India with a imprisonment up to 6 months. Point number 1, you were guilty for some offense. Point number 2, convicted by the civil court or criminal court in India, outside India, with imprisonment up to 6 months, means maximum up to 6 months, then you will be guilty of other misconduct, not professional misconduct. Which misconduct, everyone? Other misconduct under 141, part 1, sorry, clause 1, part 4, schedule 1, 141. So then what is the clause number 2 is saying? Clause number 2 is saying that as a member in practice or as a member in service, if you are doing anything which is bringing disrespect to ICAI or disrespect to the profession or disrespect to the council, say for example, you are misutilizing the articles, or say for example, you are misusing your power to get a loan from the bank at the lower rate. Suppose you have opened a bank account, you are unable to meet the minimum average monthly balance requirements. These are those kind of things which are not connected with your profession, but yes, they are providing disrespect to ICAI. To dare you do anything which is providing disrespect to ICAI or council, in that case you will be guilty of what? You will be guilty of professional you will be guilty of other misconduct as a member in practice or as a member in service, and you will be held guilty under 241. What is 241? Clause 2, part 4, schedule 1. Did you all understand the 19 clauses? So let's just then do the quick revision of 19 clauses. Clause number 1 of part 1, from first clause I'm starting. Allowing someone to practice. Clause number 2, sharing. Clause number 3, accepting. Clause number 4, entering into partnership. Clause number 5, securing professional work. Clause number 6, solicitation. Clause number 7, advertising professional attainment. Clause number 8, non-communication with the previous auditor. Clause number 9, non-compliance with 139 and 140. Clause number 10, charging the fees on the percentage basis and contingent events. Clause number 11, want to engage into any profession other than CA in practice, then in that case general and special permission by ICAI. Clause number 12, allowing someone other than a member in practice or your partner to sign the financial statements and audit report. Clause number 1 of part 2, sharing and accepting, but by the member in service. 1 and 2 are over. Part 3, 3 clauses, sir. Not a fellow, acting as a fellow. Clause number 2, failed to supply the information to the required authorities. Clause number 3, you are doing the compliance, you are giving the information under clause number 6 and 7, that is solicitation and advertisement in professional attainments, but you are know that the information what you are providing is nothing but false, but still you are continuing to give it, then in that case you will be guilty under 331, clause 3, part 3, schedule 1. Clear everyone? And part 4, what is part 4? Clause number 1, you were guilty for an offense with an imprisonment in India, outside India by the civil court or the criminal court for an imprisonment up to 6 months. And if you are doing anything, which is providing disrespect to ICAI, your profession or council, then in that case, clause 2, you are guilty. So these are the 19 clauses in the schedule 1 under which you will be held guilty of professional misconduct. Now, schedule 2, everyone, let me tell you one thing. Schedule 2 is very easy. Only 15 clauses are there. So let's understand with the clause number 1 of part 1 of schedule 2. Now remember, we are jumped into schedule 2 and we are into the part 1 of schedule 2. Remember one thing, if you all remember, SA 200 and SQC 1 says that, and as per SA 220, every chartered accountant in practice is every member in practice is allowed or is under an obligation to maintain the confidentiality. So clause 1 is on that only. Clause 1 says that if you are disclosing the confidential and the sensitive information relating to your client to an outsider without taking the prior permission of your client or without any requirement of the law, then in that case you are guilty under clause 1, part 1, schedule 2. 112, clause 1, part 1, schedule 2. Remember, as a member in practice, you are under an obligation to keep your mouth shut, because when we do the audit or when we do any kind of assurance services to our client as a member in practice, so many times we come across some sensitive and confidential information of our client. It doesn't matter whether you are a present auditor or past auditor, are you serving or not, but that information is not allowed to be disclosed to anyone except with the prior permission of the client or there is a requirement of the law. And remember one thing, this provision relating to confidentiality we have borrowed from the Bar Council of India, where the advocates are going to maintain the confidentiality relating to their client. They are also under obligation not to open their mouth. Same provision applicable to whom? Auditor. Vakils. Same is applicable to the auditor. And at the same point of time, you are protected under section number 126 of the Evidence Act also. Okay? Even though you know that there is one sensitive confidential information which is required to be told to someone, but you are not allowed to speak about it until and unless your client permits or there is a requirement of the law. But remember, under what circumstances you can break this code of silence? In case you are personally yourself involved in any inspection or investigation, or you are under any peer review or quality review, or you are handling any particular case or some court cases going against you where you have to save yourself and disclose the information. In these exceptional circumstances, you are allowed to do that. Otherwise, you are not allowed to do. Are you getting the point? You have to maintain the confidentiality. All the points which I told you have been given over here. We can only do it with the prior permission of the client. Shall not be the information known to the remember one thing, if it's already a public information, then this clause won't be applicable. Then permission by the appropriate authority in the management of the client is required. Remember one thing, it is required to be authorized by an appropriate authority. Does not matter whether you are an auditor or not. Either you are a present auditor or a past auditor, right or not? Like barristers and attorneys, advocates are also protected in the 126. Same provision is equally applicable to the chartered accountants in practice. But if you are under any investigation, or if you are a member under any lawful pending, or under, I will write under peer review or quality review, under any kind of peer review or quality review, in such cases also you can break the code of silence, right? Now what is clause number 2? Clause number 2 says that you allowed your firm name and your name. Again repeating, clause 2 says that you allowed your firm name and your name to be associated with the report or a certificate. Your name or your firm name to be associated with the report or a certificate on examination of financial information of the client, which is neither examined by you, nor examined by your partner, nor examined by your employee, nor examined by any outsourced member in practice. So it means that is a clear-cut case कि you are associating your name with a particular report or a certificate on examination of financial information. Neither you have examined it, gross negligence, nor your employee has examined it, such a gross negligence, neither your partner has done it, nor any other member in practice has done it. Then in that case, you as a member in practice will be held guilty of professional misconduct under clause number 2, part 1 of schedule 2. So what they are saying that allowing your name, what they are saying, see, allowing your name or the name of the firm while issuing the certificate or report on examination of financial statement which is neither examined by the member, his partner, employee, or any other member in practice. So it is clear-cut case of gross negligence. Remember, explanation, this clause deals with the negligence on the part of MIP to allow the use of the firm names, issuing the reports and certificate which is neither examined by him nor anyone associated with him. So that means it is connected with the practice. Bhaiya, do not allow your name or your firm name to be associated with the reporter certificate which is neither examined by you nor by your partner or anybody else. Clear everyone? Yes sir. Clause number 3 says that say for example you and your firm is engaged in any assignment relating to forecast. Forecast in the sense, say for example, project reports. Let's take an example of project reports. Suppose any project report assurance service has come to your picture and you have accepted that. You have accepted that assignment of project report, and you all know that in the project report we give the future earnings ka forecast. Future earning forecast we present, but remember one thing, forecast means it is based upon some assumptions. It is based upon some sources of information, and there should always be a basis of forecast. But your report is looking like that कि you are giving the accurate information, you are vouching the accuracy. Suppose you have written that I assure bank that my client will definitely achieve this figure of profit in the next 5 years. You are giving a guarantee. Now tell me one thing. Can someone give the guarantee of future? No. Future is certain or uncertain? Uncertain. Forecast are certain or uncertain? Uncertain. So what does ICAI guideline says? ICAI says that whenever you are connected with any kind of forecast as per SA 34 SAE, Standard on Assurance Engagement 3400. Again repeating, Standard on Assurance Engagement 3400 says that if you are attached with any kind of forecast relating to financial figures, make sure that three things should be present in your report. What are your bases? What are your assumptions? And what is your source of information? What are your bases of forecast? What are your assumptions while taking this forecast? And what are your source of information? You give these three things, you are not guilty. But without these three things, you are giving an impression to the outside world that I am vouching the accuracy of these forecasts. According to me, this will definitely happen. In that case, your firm is guilty under clause number 3 of part 1 of schedule 2. Read this. Permitting the member of the firm's name in connection with the forecasted earnings of entity to be based upon future contingent financial transaction, giving impression as a member is vouching the accuracy of forecast. So what they are saying, explanation. This clause prohibits the member in practice to use his name or firm's name getting associated with the vouching accuracy of future forecast. It is expected that while preparation of forecast, a member is expected to make a disclosure of source of information, assumptions taken and basis of forecast in his project report. It is also being provided as per SAE. That's what I was talking about 3400 while dealing with the project reports and forecast statements. So simple and simple, this clause is that whenever you are associated with any kind of service which is giving the information on, what? Information on forecast and future profits, earnings and all. Remember, always you have to mention your assumptions. You always have to mention your basis of forecast, and make sure that you are always giving the sources of information. Otherwise, you will be held guilty of professional misconduct. Clear, everyone? Clause number 4. That we already know. In case there is one business unit or business enterprise in which you, your partner, your firm or your relative, your partner, your firm or a relative are financially interested or substantially interested, and you have been appointed as a statutory auditor for the same to express the opinion on their financial statement, then you are guilty. If you are already interested in one firm or any business or enterprise where you, your partner or your firm or your relatives put together individually or aggregately are holding substantial interest in that business, and you are accepting an assignment to express the opinion on their financial statements, then you are guilty under clause 4, part 1, schedule 2, because you are not allowed to be or express an opinion on the financial statements of an entity under which or in which you, your partner or your firm or your relatives are having the substantial interest. And what do you mean by substantial interest? At least to 20% voting. You are financially interested, how you can express an opinion on the same financial statements? So you will be guilty under clause number 4. What is clause number 5? Clause number 5 says that as a member in practice, you are doing the statutory audit of one client. You came across any material fact, you came across any kind of material fact or material information which is known to you. You already know that that information is very material and that fact is very material, but still you failed to disclose that in the financial statements. Management did not disclose, that is the management problem. Leave the management thing. You should have disclosed it, na? If the management did not do, you should have included the OMP paragraph in your report. If the management does not do its proper activity, you should have done it. But neither you did it, nor management did it. It's not that you were not aware of the fact, you were known of this material fact, but you failed to report. In what? In the financial statement or in your auditor's report. You are guilty under clause number 5, part 1, schedule 2. Clause number 6 is very similar to that. In the clause number 5, we are only talking about the material fact. In the clause number 6, it is material misstatement, everyone. Which statement, everyone? Material misstatement. What do you mean by material misstatement? Failed to report the material misstatement known to the auditor. Again, now look at the comparison between clause 5 and 6. In the clause number 5, it was material fact. In the clause number 6, it is material misstatement. Both are known to him. There also he failed, here also he failed. It means that is purely an act of gross negligence on the part of a member in practice. And remember, wherever the clause number 6 will come, clause 5 will automatically will come. Again repeating, wherever the clause number 6 will come, clause 5 automatically will come. Why? Because clause 6 talks about material misstatement. The word material is there now. It is important. And clause 5 talks about not material misstatement. Clause 5 talks about material fact. So what is material misstatement is definitely a material fact. But wherever the clause 5 will come, not necessary that clause 6 will come. Because clause 5 only and only talks about what? Material facts, not material misstatement. Are you getting the point? So wherever the 6 will come, 5 will automatically come. But wherever the 5 will come, may or may not be a possibility that 6 may come. Right? Now, clause number 7. Actually, clause number 7 is a mother clause. What is the name of the clause? Fails to be diligent and carried out his professional work in which manner? Gross negligent manner. Tell me one thing, what was clause number 1? Breaking the confidentiality. What was clause number 2? Without doing the examination of financial statement, you allowed your firm or firm's name to be attached with a report or certificate. Clause number 3, you are vouching the accuracy of the forecast earnings. Clause number 4, you are giving the expression of opinion on an entity where you, your partner, your firm or relative is interested, substantially interested. Clause number 5, fail to report the material facts. Clause number 6, fail to report the material misstatement. In all these 6 clauses, what is the common thing you found? Gross negligence. Therefore, clause number 7 can come with the 1, with the 2, with the 3, with the 4, with the 5, with the 6, and with the 8, with the 9, and with the 10 also. Are you understanding? Yes. So, clause number 8. So, clause number 8 is on your SA 500 series, SAAE, Sufficient and Appropriate Audit Evidence. While doing the audit, we are always being hired for expressing an opinion. And when we express an opinion, while expressing an opinion, what do we need? While expressing the opinion, we need conclusions. How do we get the conclusions? Conclusions are always based upon the evaluation of audit evidences. And if you fail to obtain the audit evidences while doing your audit assignment or assurance assignment, you are guilty of professional misconduct under clause number 8, under part number 1, under schedule 2. 812. Clear everyone? So if you fail to obtain sufficient information while doing your audit assignment or assurance assignment as a member in practice, you are guilty under 812. Now what is clause number 9? Suppose, let's say for example, you are doing the cash verification. Now you know that cash, inventory, investments, these are the very fraudulent areas. We can't expect an auditor to be relaxed in these areas. Because embezzlement of cash, misappropriation of inventory, overvaluation, undervaluation of investment is a very serious kind of window dressing acts. Serious kinds of frauds and errors may take place. But you failed to apply the audit procedures, you failed to apply the audit materiality, you failed to apply the audit planning, which you should have done, but you have not done. You should have done, but you have not done. It means you failed to draw the attention on your material departure, which you have gone from the GAS, generally accepted auditing procedures or auditing standards. You were required to follow some standards. Suppose you needed to do documentation, you did not do. As per 501, you needed to do the physical inspection of the inventory, but you did not do. So when you are not doing what you are supposed to do as per the generally accepted auditing procedures, then you are guilty under clause number 9. 912, clause 9, part 1, schedule 2. Now, what is clause number 10, sir? So clause number 10 is very simple. Say for example, your client has given you a money and your client is leaving India for the next 6-7 months. So client gave you the 30-40 lakhs of money. Now remember two things. If it is your advance of the remuneration, you can keep it in your bank account. If the client has told you to, Rohit, please make this payment in a short period of time, in the next 10 to 12 days or 15 days or 1 month maximum, this payment has to be made to the GST department. Take this 30 lakh rupees. I am moving out of India for the next 7 months. I will not be able to. Now tell me, within a short span of time, you have to make the payment. Then also you can keep that money in your bank account. But If the client has given you the money for other than your remuneration and fees or other than to be made in a short period of time, suppose the client has given you the payment for giving the token money for his house, which he is buying, and token money has to be given after 5 months. Suppose 1 crore rupees he has given to you. Are you allowed to keep it in your bank account? No, you have to open a separate bank account and keep that money there. In your bank account, under two circumstances, you can keep it. If it is relating to your remuneration and fees, or if it is related to be made into the very short period of time. If the payment is supposed to be made in a very short period of time, then you can, in that case, you can keep it, or otherwise you can keep it when it is your fees. So if the client, now see what they are saying, fails to keep the client's money in a separate bank account except where the money given was advance fees or remuneration or to be paid in a short span of time. So let me revise these 10 clauses for you. So clause number one talks about breaking the confidentiality. Clause number 2 talks about associating or giving your firm name or your name on the report or certificate on the examination of financial statement where neither you nor your partner nor any member in practice has done or employee has done any kind of examination. Clause number 3 may you are vouching the accuracy of what? Estimates. Clause number 4 may what you are doing? Clause number 4 may you are expressing an opinion on the financial statement of an entity where you, your partner, your relative are having a substantial interest. Clause number 5 may you fail to report the material facts. Clause number 6 may you fail to report the material misstatement. Clause number 7 may you are gross negligent. Clause number 8 may you did not obtain sufficient and appropriate adequate information or evidence. Clause number 9 may you fail to apply what you supposed to do. You fail to draw the attention towards your material departure from the generally accepted auditing practices. Clause number 10 may client's money you did not keep it in a separate bank account other than two conditions where you can keep it in your bank account if it is your advance or if it is required to be paid in a short period of time. So this is what part 1 of schedule 2. Now part 2 of schedule 2 again talks about professional misconduct to the both. Here 4 clauses are there. Clause number 1. If you are breaching any section of the Chartered Accountants Act, if you are breaching any regulation of the Chartered Accountants Act, if you are violating any guidelines of the Chartered Accountant Act, you will be guilty under clause number 1, part 2, schedule 2. Read. Violation of any section, any provision, any guideline, any regulation prescribed by the council from time to time. You dare to violate any section, you dare to violate any guideline, you dare to violate any kind of guidelines and regulation, you will be guilty under clause 1. Say for example, falsely claiming to be a member, you can write it here. Say for example, without holding a COP, you are doing a practice, you can put it here, right? You are violating. Say for example, your branch is away more than 50 kilometers away from your first office, but you did not get it headed by a CA, again this one. Right? Next one. Clause number 2. Clause number 2. Remember. Let's come back. Now see, very simple point. Clause number 1 of part 1 talks about what? Clause number 1 of part 1, sir, it was talking about if you break the confidentiality, being a member in practice, about the confidential and sensitive information which you have acquired during the course of your professional work. Same point. 100% same point. This point if will apply to the member in service. Suppose you are doing a job as a CA. You know your employees' secret and sensitive information. You know the company's secret and sensitive information. And you are breaking it as a member in service. That was relating to member in practice. This is relating to member in service. So see, disclosing any information which is confidential, sensitive, acquired in the course of employment without any requirement of the law or the prior consent of employer. Instead of client, you have to use the word called employer. That was relating to member in practice. This is relating to member in service. Now, clause number 3. Do you remember clause number 2 of part 3 of schedule 1? Sir, if I am not wrong, clause number 2, sir, not a fellow acting as a fellow. And the second one was, yes, sir, failed to provide the information to the council, to the ICAI, to the BOD, to the DC, to the AA, to the QRB. Yes, sir, I remember. There, you failed to give the information. Sir, where, sir, clause 2, part 3, schedule 1, There you failed to give the information. Here 322 clause 3 part 2 schedule 2 में you did not fail to give the information, you gave the information but knowing it to be false. There you failed to give the information, here you gave the information but knowing it to be false. Did you understand the difference? Yes or no? Yes. So when the 231 will be applicable? Sir, if I fail to give the information. When 322 will be applicable? If I given the information knowing it to be false. Clause number 3 is also over. Giving an information knowing it to be what? False. Right? Clause number 4. Client has given you the money. Do you remember clause number 10? Just now we have done. Client has given you the money. You have to keep it in a separate bank account other than the case where it is connected with your remuneration of fees or to be made in a shorter period of time. Right or not? Here, client's money you are defalcating. You are embezzling client's money. You are misutilizing. You are doing a fraud with the whose money? With the client's money. Then you are guilty under professional misconduct. You are guilty under professional misconduct under clause 4, part 2, schedule 2, 422. See, you are defalcating or embezzling the client's money received in your professional capacity. Then, bit similar to the clause number 10 of part 1. There you are not keeping it in a separate bank account. Here you are misutilizing it. That was still better. Here too you are misutilizing and defalcation and embezzlement you are doing. And sir, last clause though we already know. Sir, do we actually know? Yes, we actually know. Sir, what was the last clause? Please tell. If I am not wrong, part number 4, clause number 1 of schedule 1 talks about what? Sir, that was like if you are convicted for an offense by civil court or criminal court in India or outside India for an imprisonment up to 6 months. Here it is more than 6 months. What? Here it is more than 6 months. Other misconduct more than 6 months, then schedule 2. Up to 6 months, schedule 1. Now see, convicted for an offense by the civil court or criminal court with an imprisonment of more than what? 6 months. Agar less than 6 months hota to less than equal to 6 months. Other misconduct under part 1 of clause 4 of schedule 1. This is other misconduct under part 3 of schedule 2. Right everyone? So with that, our 34 clauses are over. Now, close your eyes, take a deep breath, speak along with me all the 34 clauses. Sir, clause number 1, allowing someone to practice. Clause number 2, sharing. Clause number 3, accepting. Clause number 4, entering into a partnership. Clause number 5, securing professional business. Clause number 6, solicitation. Clause number 7, advertisement of your professional attainments using the designation other than chartered accountant. Clause number 7, over. Clause number 8, non-communication with the previous auditor. Clause number 9, non-compliance of 139, 140. Clause number 10, charging your fees on percentage basis and contingent basis. Clause number 8, clause number 11, clause number 11. Yes, you want to engage into a business or profession other than CA in practice, take the prior permission of counsel in the special and general manner, 190 capital A and 191. Clause number 12, allowing someone other than member in practice to sign the financial statements or other than your partner to sign the financial statements and audit report. Sir, clause number 1 of part 2, same relating to clause number 2 and clause number 3, sharing and accepting, but not by member in practice now, member in service. Over. Clause number 1 of part 3, sir, not a fellow acting as a fellow. Clause number 2 of part 3, failed to supply the information to the required authorities. Clause number 3 of part 3, sir, I was following the clause number 6 and clause number 7, providing the information but given the information knowing it to be false. Clause number 4 of part 1, 2 clauses, schedule 1, 2 clauses. Civil or criminal court has punished you for an imprisonment up to 6 months, or you are doing any act which is disrespecting you, ICAI or profession. Clause number 2 over. 19 clauses gone. Now remaining 15 clauses. Clause number 1 of part 1 of schedule 2, breaking the confidentiality. Clause number 2, associating your name or your firm's name with a report or a certificate on financial information examination, which is neither done by you. Examination is neither done by you, nor your partner, nor an employee, nor any member in practice. Clause number 3, you are vouching the accuracy of the forecast and you are associating you and your firm's name with that. Clause number 4, expressing an opinion on an entity where you, your partner, your relative, or your firm is having a substantial interest. Clause number 5, sir, fails to disclose material facts. Clause number 6, sir, fails to disclose material misstatement. Clause number 7, gross negligence. Clause number 8, failed to obtain the sufficient information. Clause number 9, departed from the generally accepted auditing principles. Clause number 10, failed to keep the client's money in a separate bank account other than your fees or remuneration and used it and where the payment is required to be made in a short span of time. Okay, sir. Part 2, clause number 1, you violate the section, you violate the regulation, you violate the guideline of the CA Act, you will be guilty. Clause number 2, breaking the confidentiality clause by the member in service, not by the member in practice. Member in practice is covered in part 1, clause 1. Here, member in service. Clause number 3, in the 231, you fail to give the information, but in the 322, you are providing the information to the authorities but knowing it to be false. Clause number 4, defalcation and embezzlement of the client's money which you received in your professional capacity. And last clause, if you were convicted for a civil offense or a criminal offense by the civil court or the criminal court in India or outside India with imprisonment more than 6 months. Clear? All the 34 clauses perfectly blended in your head. So that's it for today. And I hope you enjoyed the 3 lectures on professional ethics. If I am not wrong, in the almost 3.5 hours mein, we have done the whole professional ethics. Am I correct? So do let me know with your feedback. Are you liking the classes or not? So thank you so much everyone for lending your patient ears for this class. I'll borrow it again in the next class. Bye everyone. Take care. All the best. So in the next videos, we are going to come up with some more important topics. Audit committee, corporate governance, audit of banks, right? So these kind of topics we'll come up with, right? Chalo, see you guys everyone. Bye-bye. Take care.